Yeah. So good morning, everyone. I hope you guys are all doing good. I hope you guys are all perfectly fine. I do wish and hope that you guys are preparing well for your upcoming exam. The preparation and all is going well without any obstacles. I guess everything is going as planned and as smooth as it should be. So, as I have announced it in the in the previous day, that through this series of videos, we are going to do the marathon. So final IDT marathon we are going to do. Now this marathon will be applicable for whom? So just I will give you a few instructions before going into the technical concept explanation, before I go into the technicalities, before I pick up the chapters and do the revision. So a few things which I would like to bring it before you, a few instructions I would like to give you, hardly some 2 to 3 minutes. I will give you the instructions. Thereafter, I will proceed further. So who can watch this marathon? Sir, this marathon is for whom? So this marathon is for those students who are preparing for final indirect tax laws, and this is going to be applicable for CA final students who are going to appear for May 2026 examination. Along with that, even if you are a CMS student who is going to appear for your final examination in June 2026, for you also this is going to be equally applicable. And all the amendments, so this thing whatever we are going to cover, all the amendments which are applicable for your attempt, everything has been covered in this material whatever we are going to use it. So that means along with amendments we are going to cover, you need not refer anything separately. So that's what one instruction I would like to give it to you here. And one more thing here, sir, where we can get all these resources. So throughout this marathon, I will be taking help of various resources. The first resources, I'm going to make use of this concepts notes. So throughout this marathon, we will be taking the support of this concept notes. So these concept notes, you can get it. So if you want hard copy, you can order it from our website. So the link of the link of the website, you will find it in the description. Or even if you could manage with a soft copy, this soft copy has been made available on our website. This soft copy has been already made available on our website free of cost. You need not pay anything for us. So both indirect tax laws, question bank and concept notes has already been uploaded on our website. Sir, which website? Just look at the description of this video. You will find one link. Just open that link and log in there. Go to free resources section. In the free resources section, go and select CA final there. So once you select CA final there, it will show you that indirect tax laws paper. So just open that indirect tax laws paper and there you will be able to find all the resources. So this concept notes, question bank, and even see for this marathon, I will be taking the help of some charts. So I have gathered, see in my regular class, in my EOB batch, I explain the concepts with the help of the charts. So which will give a better overview of the entire discussion, whatever we are having. So I'm going to take help of this charts at complex areas and to make the concept simple for you. And all this running notes, all this class notes, whatever I'm going to use it for this marathon, this also will be made available on the website. This will also be made available on the website. So you can access all the resources. It is going to be one common point for all your needs. Okay, right. So now, having said that, we are going into the technicalities. So at the final level of indirect tax laws, as you all are aware, we have a bunch of concepts. We have a very good number, a very good volume of the syllabus we have, which we are required to prepare. So all that majorly we are going to cover now. And before that, as you are already aware, in the indirect tax laws, we are supposed to cover two parts. One is a GST part, other one is customs part. Other one is customs. So majorly we are going to cover GST, which is very voluminous when compared with the customs. So but it actually contributes both. So IDT, when you are writing the exam, you are required to prepare for GST as well as the customs. Both collectively you are required to prepare. So we'll try to do the revision from both. We'll try to revise the concepts related to GST also. We'll try to revise the concepts related to customs also. Both we are going to do. You need not worry about it. So first what I will be doing is, customs will come back to that later. First we'll try to pick up the areas related to GST and we will try to do a quick revision. And as you see here, there are a very good number of chapters, a very good bunch of chapters we have. So one by one we will try to pick it up and we'll try to finish it off. So starting with, I'm going to start before I go into the technical discussion and all. So just let me give you one brief overview. So to make our discussion smoother, to make our understanding, to make our revision smoother, a little few things we need to have a quick understanding here. So some basic things I will try to introduce, then I will directly jump into the supply chapter. So few concepts which we are required to be aware if we want our discussion to be smooth. So GST is a kind of indirect taxation, we all are aware. So when GST will be imposed, or when GST will be paid, but when actually the government will impose a GST and collect the amount of GST. So for that, we need to understand one sequence. So there must be goods or services or both. There must be goods, or there must be either goods or services or both. So subject matter of the transaction should be either goods or services or both. And there must be some supply taking place. There must be a taxable event called supply under section number 7. So we are going to see in the supply chapter when an activity will be considered as supply, that anyhow we are going to see it, but I'm just giving you overview. So one basic overview, if you have if we have regarding the entire mechanism, our discussion will flow in a very seamless manner. So there must be goods, there must be services, there must be both, and these goods or services or both must have been supplied. The taxable event is supply. So if there is no supply, there is no GST. So first thing what we are required to do, first we need to determine whatever activity is there, is that falling under supply definition. Sir, when an activity will fall under supply definition and all, we will see in a short while, we are going to see. So there must be goods or services or both, and there must be a taxable event called supply should have taken place. And just because goods and services are there, and also a supply activity has been taken place, and whatever transaction is there that is grossly falling under the supply definition, even then also directly government will not come and impose a GST. First what they will do is, whatever supply they are doing, whatever supply you are doing, it should be a taxable supply. Whatever supply you are doing, it should be a taxable supply. Sir, what do you mean by taxable supply here? Taxable supply means which should not be an exempt supply. Which should not be exempt supply. So that supply should not have been exempted. Sir, what is the meaning of the term exempt supply? What is the meaning of the term exempt supply? So for the purpose of GST, except a few places, wherever I am saying exempt supply, wherever I am saying exempt supply. Let me put it this way. So the supply should be a taxable supply. So what is a taxable supply? So which is not an exempt supply. Let me put it like this. So it should not be an exempt supply. Sir, when an activity will be considered as exempt supply? An activity will be considered as exempt supply when it is nil rated supply. When it is nil rated supply, that means there is an item, there is a good, there is a service which you are supplying, and when you open that rate chart, against that you are able to find the rate as nil rated supplies. It also includes wholly exempted supplies. It also includes wholly exempted supplies. It also includes wholly exempted supplies. Then not just that, it also includes non-taxable supply. It also includes what? Non-taxable supply. So first, there must be goods, services or both, and a supply under whatever, there should be a taxable event called supply. So now you are coming under GST purview, but just because you are making a supply, tax will not be collected. That supply should be a taxable supply. Sir, what is taxable supply? It should not be an exempt supply. Sir, then what is exempt supply? Exempt supply could mean three things. What are they? Number one, it could be a nil rated supply. It could be a wholly exempted supply, or it could be a non-taxable supply. Sir, what is nil rated? As I have told, if you open the GST rate chart, you will be able to find some items in that HSN code will be there. Against some items, the rate will be mentioned as nil or zero. Then wholly exempt supply. So if you open the rate chart, there will be certain item against that a rate of tax will be there, but the government has released a notification. In that notification, they have told that whenever this good is getting supplied, this service is getting supplied, GST has been wholly exempted. Even though there is a rate in the rate chart, but the government has released a notification and told that goods and services are wholly exempted from GST. So that we call it as wholly exempted supplies. Then we have something called non-taxable supply. So all these three put together, we call them as exempt supplies. So now we have to dig deeper into, sir, what is a non-taxable supply? So non-taxable supplies means those supplies which are not at all leviable to GST. Non-taxable supplies are those supplies which are not at all leviable to GST. Sir, what will fall under non-taxable supply definition? What will fall under non-taxable supply definition? So let me give you here itself the necessary discussion. Number one is alcoholic liquor for human consumption. Alcoholic liquor for human consumption. That is, on that GST will not be applicable. Even though it is getting supplied, GST will not become applicable. Why? Because if I give you a little background here, the state governments have not given up their right to tax the alcoholic liquor for human consumption. Even today also on alcoholic liquor for human consumption, state governments will impose something called excise duty on its manufacture, and whenever it is getting supplied, VAT or GST will become applicable. So that's why alcoholic liquor for human consumption is kept outside of the GST purview. Not just that alcoholic liquor for human consumption, even undenatured extra neutral alcohol. Even undenatured extra neutral alcohol. Undenatured extra neutral alcohol plus rectified spirit. There is something called rectified spirit. So these two are actually raw materials. These two are actually raw materials for the purpose of manufacturing of alcoholic liquor for human consumption. Even on that also GST will not be imposed. Even on that also GST will not become imposed. So mainly alcoholic liquor for human consumption. Along with that, in under section 9, which is a charging section, they have also told that even undenatured extra neutral alcohol plus rectified spirit, which is getting used in the manufacture of that alcoholic liquor for human consumption, on that also GST will not be imposed. Then, sir, what is one more category of product which are non-taxable supply on which a GST will not become applicable? So what is that one more taxable supply on which a GST will not become applicable is, which is 5 petroleum products. They have identified 5 petroleum products. On that 5 petroleum products also there will be no GST. Sir, what are that 5 petroleum products? Number 1, petroleum crude. Then we have high speed diesel. Then we have motor spirit, nothing but petrol. Then we have aviation turbine fuel and natural gas. So like that, 5 petroleum products are there. On these 5 petroleum products also there is no GST. They are outside of the GST purview. Sir, why they are outside of the GST purview? Will they never come under GST purview? No, not like that. For the time being now, the government told, we will tell you a date. We will notify a date. From that date, we will start imposing GST on that 5 petroleum products. But till that date, there will be no GST imposed. What central government told? Currently, see, alcoholic liquor for human consumption now and never will come under GST purview. But when it comes to this 5 petroleum products, government told for the time being now we are not going to impose GST on it. If you in future we will notify a date. From that date we can impose a GST on that 5 petroleum products. But till that point of time they will fall under non-taxable supply. Okay, so this is what exempt supply is. So exempt supply means nil rated, wholly exempted supplies or non-taxable supply. So that means whenever there is good, whenever there is service, or there are both, and supply, an activity which has been done, an activity whatever you are doing, that is even qualifying as supply under section number 7, but just like that the government will not come and impose GST. Whatever supply you are making, so that should not be a nil rated, that should not be a wholly exempted supply, and even that should not be a non-taxable supply. Then only the triggering point will be there. Then so just being a supply, just being a taxable supply alone will not be enough. Just being a taxable supply alone will not be enough. Sir, what else is also required? So that supply, that taxable supply should be made by a taxable person. That taxable supply should be made by a taxable person. So there must be supply. Number 2, it should be a taxable supply. But just being a taxable supply alone will not be enough. That supply must be made by a taxable person. Sir, now who is taxable person? Who is a taxable person? The person who is already registered under GST law. Already registered person, or a person who is liable for registration. A person who is already registered, or a person who is liable for registration. So that person we are going to call them as taxable person. So just being a taxable supply alone will not be enough. Even that supply, even the taxable supply should be made by a taxable person. Then only collection will happen. Then only collection will happen. So who will be taxable person? Who is called as taxable person? So taxable person means a person who is already registered under GST law, or the person who is liable for registration but who has not yet taken registration. Even the person liable for registration also we call him as taxable persons. So these people are required to collect the amount of GST. Okay, so this is when actual collection will happen. So there should be a supply, that supply should be a taxable supply, and that supply should be made by a taxable person. Then supply will be collected. Then GST will be collected. And on what value GST will be collected? On what value GST will be collected? So what will be the amount of GST? So what will be amount of GST? What will be amount of GST? So that amount of GST will depend on something like this. So first we have to determine the value. After we have determined the value, on that value we have to multiply the rate of GST which is applicable for that value. So as you might have seen, always GST is a ad valorem duty. GST is a ad valorem taxation. So what do you mean by ad valorem? So you will determine the value, on that value you will multiply a percentage. By that you are going to arrive at the GST amount. So this is how you are required to calculate the amount of GST. So how to calculate the amount of GST? You have to determine the value of the supply, whatever supply you are making of goods or services. What is its value? You have to determine that value must be multiplied with the rate of GST applicable for that particular good or service. Sir, now how to determine this value, sir? How to determine this value? That's what we are going to learn in the value of supply chapter. That's what we are going to learn on value of supply chapter. Okay. So now one more thing here, sir, you are saying amount of GST you are required to calculate. How you will calculate? We will determine the value, and on that we are going to multiply the rate. But this GST which you are going to collect could be different types. This GST which you are collecting could be of different types. So as you might have, as this is a basic point which you are all aware. So, and this you should understand it to have a free discussion in going forward. So GST, there will be different types of GST which you might be required to collect. So now which GST you are required to collect, that will depend on two factors: whether whatever supply you are making, is it an interstate supply, or whatever supply you are making, is it an intra-state supply. Whatever supply you are making, is it an interstate supply, or whatever supply you are making, is it an intrastate supply. So if the supply is intrastate, the supply is intrastate, but when we are going to call it as intrastate supply, so if the location of the supplier and the place of supply, if they are falling within same state, or if they are falling within same union territory, if they're falling within same state, if they're falling within the same union territory, then we are going to call them as intrastate supplies. And whenever there is an intrastate supply, whenever you qualify a supply as intrastate supply, so then the GST which will be collected is either CGST will be collected, CGST and SGST or UTGST. Depending on whether you are registered with the state government or you are registered with the union territory government, either SGST or UTGST will get collected. So, but whatever it is, when the location of the supplier and the place of supply is falling within the same state or same union territory, will be liable to pay CGST, along with that SGST, equal amount of SGST or UTGST you will be liable to pay. Now here the question comes, sir, location of supplier, okay, we can find it out. How to determine the place of supply? For this we are going to have a dedicated chapter. A very good weightage will be there. Sir, how to determine this place of supply? So you are telling location of the supplier and the place of supply, if both are falling within the same state or union territory, then we are going to call it as intrastate. Agreed. Location of supplier, I can find it out easily only. But what do you mean by place of supply? How to determine that place of supply? For that we are going to have a dedicated chapter which we are about to see. Very good weightage will be there. I am going to do the revision of the chapter in an excellent manner. You need not worry about it. Okay, so then we have something called interstate supply. Sir, what is this interstate supply? If something is not an intrastate supply, I can call in a little way. So for the time being now, since we are here at the beginning, I will tell you a simple meaning here. So when the location of the supplier and the place of supply, if they are falling in two different states, if they are falling in two different union territories, if they are falling in one state and one union territory, and even international transactions like imports and exports, between two different countries, if the location of the supplier and place of supply is falling, then they will fall under interstate supply. Now in case if an activity has been qualified, if an activity has been classified as an interstate supply, in that case which GST will be imposed? IGST will be imposed, which is nothing but a collective amount of CGST along with SGST. The collective amount of CGST and SGST will be collected in the name of a single tax, which is IGST. So there will be IGST applicable. So here also, if you see whether it is an interstate supply or intrastate supply, the main factor in determination is place of supply. How to determine that place of supply, that we are going to see it in a dedicated chapter. Okay, right. So thereafter the question will come, okay sir, okay, so you have told how to calculate the amount of GST for which you are required to determine the value of supply. On that you have to multiply the rate. You told value we are going to discuss in the value of supply chapter, and you told there will be multiple kinds of GST. Which kind of GST you are required to impose, that depends on location of supplier and place of supply. You told place of supply we are going to discuss in our subsequent, we are going to have a dedicated chapter. What else we have? So what else we have is, okay sir, I determined my value. Okay, using the value of supply chapter rules and regulations, I calculated value of supply. Even I determined whether it is an interstate supply or intrastate supply. And accordingly, I have determined whether I am required to pay IGST, CGST, SGST, UTGST. That also I have determined it, sir. When I am required to pay. The next question which should come to you is, when I am required to pay. Okay, I will do all this calculation part. So after doing all this calculation part, I am liable to discharge this GST. No, there will be a point of time at which I am required to pay. So that question will come, when to pay the GST. Okay, you are doing supply, that is taxable. You are a taxable person. You have collected the GST also. So you determined value, you collected the GST, you determined whether it is interstate supply or intrastate supply. Now whatever amount of GST that you have collected, that is required to be paid. No sir, that I can't retain with me. No, I have to pay to the government. No, when I am liable to pay to the government. So that's what we are going to learn it as a part of a chapter called time of supply. So there will be a chapter called time of supply. In that time of supply chapter, we are going to learn what is that actual point of time at which you are required to make the payment. It is not like you are making a supply, immediately you are making the payment. If you go to the shopkeeper and purchase the item, do you think, if you purchase the item, do you think immediately he will collect the amount from you and immediately he will pay to the government? No, it's not going to happen. So they follow one periodical mechanism. There will be a certain duration, there will be monthly, quarterly, so like that some time of supply will be there. There will be a fixed time limit within which you are required to make the payment. There will be due date, something like that. So all that we are going to learn it as a part of our time of supply chapter. All that we are going to learn it as a part of our time of supply chapter. And if you are a registered person, so if you have taken the registration, if you are a taxable person, so time of supply will be there. So we will determine value of supply, we will determine place of supply, we will determine time of supply. Then one more important concept is, and one more thing which we need to understand is, in GST there are some common terms which we have to understand. Number one is outward supply. There is something called outward supply. Sir, what is an outward supply? Let us say I'm a business person. I will be making outward supplies. That means I will be selling my goods. I will be providing my services to others. Those will be called as my outward supplies. And on the outward supplies, whatever I have made, on whatever sales, on whatever services I am providing, there will be a liability. If I am a taxable person and whatever my outward supply is there, if that is not falling under exempt category, then I am liable to pay GST. I have a liability on my outward supplies. I have a liability to pay the amount of GST to the government. That we are going to call it as output tax liability. That I am going to call it as output tax liability. Now, when I'm a business person, let us say for example, I'm a person who is into business of selling electronics. So I will, when a customer comes to my shop, I will sell him the electronic. That is my outward supply. But to make that outward supply, I need some inward supplies also. No, I need to procure various goods and services, capital goods. Let us say if I'm an electronic store dealer, to sell that electronics to my customers, first I need to purchase my raw material or finished goods. So that raw material, finished goods, I have to purchase. So that is my that is one thing I have to procure. To run my shop, I need some services also. Let us say for example, to run my shop, I have taken a premises on rent. To run the shop, I have taken premises on rent. I need internet connection. I need the services of housekeeping. I need services of security. So when you are buying the goods for running your business, so then I call them as inputs. I call them as inputs. I might need services also for running my business, that I call them as input services. What do I call them? Input services. But for running my business, I need even capital goods also. What I need capital goods also, those assets which will be capitalized in my books of accounts. So let us say for example, in order to run my electronic store, I need a computer for doing the accounting, for maintaining a track of all this sales and things whatever I have done. So I need one laptop, I need one air conditioner in my store. So these are all capital goods. So like this, in order to run my business, I need inputs, I need input services, I need capital goods. All of this collectively we are going to call them as inward supplies. What I'm going to do it, I'm going to call them as inward supplies. I'm going to call it as inward supplies. So now on these inward supplies, when you procured inputs, when you procured input services, when you procured capital goods, you would also have paid GST. You would also have paid GST. Like the way when you are selling, you are collecting the GST from your customers. No, in the same manner, when you are purchasing also, your supplier might have collected the amount of GST from you. So that I call it as input tax. That I call it as what? Input tax. And there is a concept called, you can take the credit of that input tax, whatever GST that you have paid on your inward supplies, whatever GST that you have paid on your inputs, whatever GST that you have paid on your input services, whatever GST that you have paid on your capital goods, that GST you can take it as credit. That you can take it as credit, that you can use it. What do you mean by taking the credit is that you can use it for the purpose of discharging your output tax liability. So let us say if you have 1 lakh worth of output tax liability, but on your inward supplies, if you have 80,000 rupees of GST that you have paid, that you can adjust it against your output tax liability. You can use it for discharging of your output tax liability. Now there will be a lot of discussion regarding this input tax credit. Sir, when I will become eligible? Sir, who is eligible to take the ITC? What conditions are required to be taken for for availing ITC? Sir, in case if I have inputs which I'm using it for business purposes, non-business purposes, which I'm using for taxable purposes, non-taxable purposes, can I take full ITC? No. You're required to do something called apportionment, that we are going to learn. Sir, there are certain items on which ITC is blocked. There are certain circumstances, even though you are using that for business purposes and all, ITC will be blocked. There is something called 17 subsection 5, blocked credit. So like that, numerous provisions, very important and very interesting provisions are there associated with that input tax credit. So that we are going to learn it as a part of our input tax credit chapter. That we are going to learn it as a part of our input tax credit chapter. Okay, sir, there will be input tax credit, there will be output tax liability. Sir, that you are telling that this will be adjusted. Your input tax credit, you can use it for the purpose of making payment of output tax liability. Sir, there should be a mechanism for that. No, sir. For doing that adjustment, there should be one ledger which should keep a track of all my liabilities. There should be a ledger which should keep track of all my credits. So like that, there will be some ledgers like input tax credit. If you take that, will go and get created to something called electronic credit ledger. Electronic credit ledger. So like that, I will have liabilities. All my liabilities will be debited to the electronic liability register. And if it excess amount I'm required to pay, I have 1 lakh rupees of output tax liability, but I have 80,000 rupees of ITC. The remaining 20,000 I have to pay it in cash. For making all that payments, I will have something called electronic cash ledger. So like that, one entire payment system should be there. And how I can use that ITC for output tax liability, in what manner I have to use it, for all that we need some system. So what is a system for making payment? What is a system for discharging of all your taxes? For that, we are going to learn a chapter called payment of taxes. For that, we are going to learn a chapter called payment of taxes. So in the payment of taxes, we will learn what is a system, what mechanism you have to follow, where your liabilities will be kept a track, where you will have a track of your input tax credit, where you will have a track of all your cash payments, what you have made, how to adjust it, how to settle it. So that all we are required to learn. So which is something which we are going to learn it as a part of our payment of taxes chapter. Right. So then, coming to the next few points here. So payment of taxes also will be there. Thereafter, once you are a registered person, it will not be an easy task for you. Once you are a registered person, it will not be an easy task for you. You are required to do multiple compliances. You are required to do multiple compliances. So number one, the various compliances, if I have to list out, the first and foremost compliance which you are required to do is you are required to file the returns. So sometimes there will be monthly return, sometimes there will be quarterly return, sometimes there will be annual return. If you are a composition dealer, different return. If you are an e-commerce operator, another return. If you are a TDS deductor, another return. So like that, multiple return mechanism we have. So all that returns are explained in the returns chapter. Then not just that, you are required to maintain accounts and records. The moment you are a registered person, you are required to maintain accounts and records also. So I need to maintain books, I need to maintain accounts, what business I'm doing, what is my revenue, what are my purchases, what is my stock, so what is the revenue generated out of it. So like that, even I'm required to maintain some accounts and records. And in order to provide the proof of all the transactions, so you will be doing multiple transactions, the government needs proof of all the transactions. So you will be required to issue various documents also. If you are a registered person, if you are doing business, you will be required to issue multiple kinds of documents. Sir, what are that multiple kinds of documents? There will be something called tax invoice, there will be something called debit note, there will be something called credit note, and there will be something called e-way bill, there will be something called delivery challan. So like that, multiple documents also you are required to issue, which will provide the evidence, which will provide the audit trail that transactions have actually taken place. So like that, there are various documents also which will be required to be issued. So that for that we have a dedicated chapter: tax invoice, debit and credit notes, and e-way bill. Okay, so like that, these are all talking about your compliances. Now let us say you are a big businessman, so you started your business, you have grown your business. Now what you are doing is you are doing exports. You are into export business now, you are doing exports, or you are making supplies to SEZ units, those units which are located in SEZ. To them you are making supply. You have grown bigger now, you are a registered person, you have started small, you have grown bigger, now you have started exporting, you have started making supplies to SEZ. In case if you are making exports or SEZ supplies, you are contributing to the exports of the country. When you are a contributing factor in the exports of the country, government will like you, government will love you if you are doing exports. Why? Because you will be increasing the forex reserves of the country. So as a finance student, we all must be aware of it. Imports are good or exports are good? Exports are always good. Exports will always strengthen our currency. So if you are a person who is contributing, if you are doing the business, if you are doing manufacturing, if you are doing trading, or if you are exporting, after you have grown bigger, you have started exporting, or if you have made supplies to SEZ, so those supplies we are going to call them as zero rated supplies. Sir, why zero rated supplies? Why? Because government wants to benefit you. They are liking you. You are making exports, you are making SEZ supplies, you are contributing for foreign reserves of the country. For that, government will give you some benefits. One of the most common benefit which you will get in these cases is refunds. What you are going to get? You are going to get something called refunds of what, sir? Refunds of whatever GST that you have paid. Whatever GST that you have paid, that refunds you are going to get it. So when that refund will be issued, what I can get refund, in which circumstances I can claim the refund, how to claim that refund, what process I have to follow, everything we are going to learn in a chapter called refunds. So in the refund chapter, we'll get to know. Especially these are the refunds associated with exports, SEZ units, or inverted duty structure. So like that, some special cases are there where you will be eligible for refund, that we are going to see it here. Next. Okay, now we have started big. Now we have become a very big businessman. See, when the person's business grows, his greed also grows. When the person's business grows, his greed also grows. He becomes more and more greedy. When we start looking at more money, we even think of more and more money. And also think of a businessman. See, when you are doing the business, when you are doing the turnover, when you are generating revenue, when you are seeing profits, when your cash box is full of money, it is always a very good feeling. When there is a lot of money in your bank account, everyday revenue, lakhs and crores of revenue you are generating, and also so much of profit is getting credited to your bank accounts and all, so it looks very tempting, it feels very good when you are making money. But along with all this, whenever you have started making money, you are also liable to make the payment of taxes. So here is where the actual pain will come. When you are generating money, you are very happy, but you are generating all this money using the infrastructure which is provided by this country. So you have to contribute to that infrastructure. How you have to contribute to that infrastructure? By way of paying taxes. So GST is also a kind of tax, but this is where actual trouble will start. Now, some business people, what they will try to do is, to avoid these taxes, they commit some kind of offenses. Sir, what do you mean by offenses? Offenses means they try to do some violations. They commit some violations. They try to escape the taxes. So like that, they will do offenses. For doing that offenses, in case if you are caught for doing that offenses, if the government has to find out, if the GST department has to find out that offenses, for that they need to do some assessments. So there are different kinds of assessments under GST. There is something called self-assessment, which is the common one. Then there will be something called scrutiny assessment. Thereafter, something called provisional assessment. So like that, multiple assessments will be there. And also, government can conduct audit. GST department can conduct audit. If they find that you are doing some kind of offenses, they can do audit. There is something called special audit. There is something called departmental audit. And they will have power for inspection. The department can come for inspection to your premises. They can do the search. They can seize, they can confiscate. So all this recovery mechanisms, all this machinery provisions are applicable. So all these machinery provisions are also covered as a part of your syllabus. Like audit and assessment, we have one chapter where we will learn about what and all are different assessments which will happen in the audit, which will happen in GST, what and all different kinds of audit department will order for. And also they can do inspection, how they can do inspection, how they can do search, how they can do seizure, how they can do confiscation. So you have committed offenses. To find out that department is having this machinery provisions, thereafter if you are caught, what will happen? Penalties will be there. Prosecution will be there, you have to undergo consequences. So all that, the penalty provisions, penal provisions and all will become applicable. Able to understand? So this is what your overall structure. If I have to tell you, if you look at the index, I tried to cover major things here. So there are few more things here and there, so that all you keep it aside, but this is what the major structure. So I told you practically how the GST system works, and whatever chapters, whatever content that we are going to learn as a part of this GST subject at the CA final level, we are trying to learn this overall system. So different chapters. So like as you could see here, there will be something called supply chapter. So first taxable event itself is supply. So how to determine the supply? We have supply chapter. Then I told taxable supply. For that you should know what is exempted. In order to know what is exempted, we have to see the exemption chapter. Then taxable person. I am saying registered or liable for registration. In order to know who is liable for registration, who is not registered, who is not liable for registration, we have to look at the registration chapter. To calculate the value, to calculate the amount of GST, we need to calculate value of supply. To determine whether it is interstate supply, intrastate supply, we need to determine place of supply. To know when to make the payment, we have to determine time of supply. Thereafter, when I can avail input tax credit, how to use that input tax credit, and what is the manner of utilization. For that, we need to learn input tax credit chapter. And how to make these payments, how to discharge these payments, what mechanism I have to follow, how I can use that input tax credit. For that, we have a chapter called payment of taxes. What returns you are required to file, we have returns chapter. What accounts and records you are required to maintain, we have accounts and records chapter. What documents you are required to issue, tax invoice, debit notes and credit notes chapter. And in which circumstances will you be eligible for refund, we have a refund chapter. And when you will be considered to have offenses, and what penalties will be applicable, what prosecutions will become applicable. Then what machinery provisions are applicable for GST department? Like what kind of assessments they can do, what kind of audits they can do, how they can do inspection, search, seizure. All these are nothing but our curriculum, nothing but our syllabus. This is what our complete syllabus is all about. Okay, clear and comfortable, everybody? Right. Now, so since I have given you entire overview of the GST, now one more thing I would like to tell you, one more basic concept I would like to explain. Thereafter, I will pick up the chapters and I will do the revision. See, all this is very important, my dear students. Till now, this half an hour of time, whatever I have spent in giving you that overall structure, this is very, very important, because this is what actually will give you that smooth flow when we are going forward and having a discussion. So you need that connection. So all that connections I have given it at a single place, so that going forward you will not face a trouble in connecting the dots. And one more point I would like to say it here. So there are different mechanisms. There are different kind of charges under GST. So GST is required to be collected by the government. Ultimately, the GST revenue has to go to whom? Government. Government wants that GST revenue. Now, who will pay that amount of GST? From whom the government will collect the amount of GST? That is a big question here. Definitely, government wants GST. There is no doubt about it. Whatever GST the government is imposing, that revenue should finally go to the government. But through whom the department is going to collect that revenue? Through whom? The government. Who is that person who has to actually go and deposit that amount of GST with the government? So we have three kinds of mechanism. Broadly two, but I will say there are three kinds of mechanism. One is forward charge mechanism. Sir, what is forward charge mechanism? As we all are aware, in any business transaction, in any supply under GST, there will be two people. One is supplier and the other one is recipient. Now, supplier is making a supply to the recipient. Let us say 1 lakh worth of supply has been made. On that, just 1 minute. So 1 lakh worth of supply has been made. On that, applicable amount of GST is 18,000. So 1 lakh 18,000. So in majority of the cases, what will happen is supplier will make the supply to the recipient. Now recipient will pay the entire value along with the GST. Supplier will retain the value portion. Whatever amount of GST has been collected, that amount of GST is required to be deposited with the government. This is what usually will happen. This is what you are experiencing in your day-to-day life. Today, when you go into the practical world, when you purchase some item, you are paying the consideration. When you are paying that amount, you are paying along with GST. What that supplier will do, he will keep that value component, that GST component, he will pay to the government. So this is what major of the cases it will happen. This is what in the GST terminology, we are going to call it as forward charge mechanism. So what is forward charge mechanism? Supplier only will collect the amount of GST from the recipient and deposit that with the government. This is what usually will happen. Next, there will be one more mechanism called RCM, reverse charge mechanism. So in the reverse charge mechanism, what will happen is here also there will be supplier, there will be recipient. Supplier will make a supply. Let us say 1 lakh worth of supply has been made. That is a taxable supply. But here they will not ask the supplier. In RCM, the department will not ask the supplier to collect the amount of GST from the recipient and pay it. They will directly ask the recipient only to calculate the amount of GST, and recipient is only required to pay the amount of GST to the government. Recipient is only required to pay the amount of GST directly to the government. This we call it as reverse charge. Why? Because it is reverse to the usual process. The usual process is forward charge mechanism. Supplier will collect the amount of GST and pay to the government. Now they are doing the reverse of it, reverse charge. So what they are saying, dear recipient, in case if you are receiving certain supplies on which RCM is applicable, they will give a notification. Government will release a notification which services, which goods are getting covered under RCM. Government will release a notification. So in case if such supply is happening which is notified under RCM, in those cases, supplier will collect only the amount of consideration from the recipient, but GST amount is required to be directly deposited by the recipient to the government. So this is what we are going to call it as a reverse charge mechanism. But one thing you have to be very careful here, be it forward charge mechanism, be it reverse charge mechanism, only the person who is depositing the amount of GST with the government is changing, but the person who is bearing the taxes is going to remain the same. Whether it is forward charge mechanism, whether it is reverse charge mechanism, the person whoever is paying the tax to the government is different. Or if I rephrase it, the person from whom the department is collecting the amount of tax is different. If forward charge mechanism, supplier; if reverse charge mechanism, recipient. But in both the cases, if you pay close attention, the person whoever is bearing the tax is same. The burden of tax is on same. So who is that person who is bearing the burden? In both the cases, it is recipient only. In both the cases, it is recipient only. Why? Because in the forward charge mechanism also, if the supplier is paying the amount of GST, that supplier is not paying the money from his own pocket. He is collecting it from the recipient and paying it. Similarly, in case of reverse charge mechanism, recipient is directly paying the amount of GST to the government out of his own pocket. So like that, we have two mechanisms. Now we have one more mechanism. We have one more mechanism under 9 subsection 5. So what does this 9 subsection 5 says is, if there are some suppliers, there is a recipient. If the supplier is making supply of certain notified services to the recipient, not directly but through the e-commerce operator. There is a supplier who is making some supply of services, not goods. If the supplier is making supply of services through, not all services, there are some services which are notified. 6 services are there which are notified. So if there is a supplier of service, if he is making the supply of such notified services, not directly to the recipient, but he is making supply of services through the e-commerce operator. So today e-commerce operator has become the part and parcel of our life. Let us say, for example, there is one cab driver. He is providing passenger transportation services, but he is not doing it directly. He has listed his cab on Ola. So on Ola, you will book a ride. So here, who is the service provider? Cab driver. Who is the recipient? You. But this service is not getting provided directly. This service is getting provided through Ola, Uber, Rapido. So that we call them as e-commerce operator. So the government has notified certain services. If these services are getting provided by the suppliers through the e-commerce operator, neither the supplier will pay the amount of GST, not even recipient will pay the amount of GST to the government. They have put the responsibility on the e-commerce operator. On whom they have put the responsibility? The government has put the responsibility on the e-commerce operator to pay the amount of GST to the government. So this is what 9 subsection 5 charge mechanism. So we have two usual methods, forward charge mechanism, reverse charge mechanism, but there is one more mechanism, 9 subsection 5 mechanism, where they are putting the responsibility of making the payment of GST to the government on the mediator, who is e-commerce operator. Able to understand? So there is a supplier, there are certain services which are notified. If those services are getting provided through the e-commerce operator, neither the supplier will collect the amount of GST, nor the recipient will directly pay the amount of GST to the government, but here the responsibility has been put on the e-commerce operator. So e-commerce operator is required to collect the amount of GST and pay it to the government. But once again, here also e-commerce operator will not pay it from his own pocket. E-commerce operator will not make the payment of that GST to the government out of his own pocket. He will actually collect it. From whom he will collect it, sir? He will collect it from recipient only. So he will collect it from the recipient and pay to the government. But here also, if you see, even under 9 subsection 5 also, the person who is ultimately bearing the height of the taxes is recipient only. So you take any mechanism, forward charge mechanism, reverse charge mechanism, or even if you take the 9 subsection 5 mechanism, the person who is depositing the amount of GST with the government is only changing, but the person who is bearing the burden of the taxes is going to remain common in all the circumstances. Clear? Who is recipient? Recipient is ultimately bearing the heat of the taxes. So right. So this is what regarding the basic things which we are all required to have a good understanding, to have to do the further revision in a clean manner, without any obstacles. Okay, right. So now, having said that, having given you all the introduction, so now what we will try to do is, we will try to pick up the chapter called supply. We'll try to pick up a chapter called supply under GST, and that chapter we'll try to quickly revise now. Okay. So many of these things regarding supply under GST, you might have already learned it at the CA inter level. But once again, these are very important. On this supply aspects also, there will be a question in the exam. So we have to understand it. So supply under GST, we are going to learn now. Right. So all that required introduction I have given. So now we are directly proceeding ahead with supply under GST. So now, when I say supply under GST, what is the scope of this chapter is? In this chapter, we have to learn two sections. One is section number 7, which is talking about what is considered as supply, what is not considered as supply, and also whether it will be considered as supply of goods or will it be considered as supply of services. So all the supply related discussion has been contained in section number 7. Then also we are required to cover section number 8. Section number 8 will talk about a concept called composite supply, mixed supply. Section number 8 will talk about a concept called composite supply and mixed supply. So two sections if we could cover, one is section number 7 and other one is section number 8, then we would have completed the supply under GST revision. So let us try to do it. I'll try to start with section number 7. Right. So what is the structure of the section number 7? Let me give you a brief here. So you see this section number 7 is broadly divided into various subsections, but the relevant things what we are required to learn is, so first we have section 7 subsection 1. Section 7, subsection 1, which will actually talk about what activities will be included in supply. What is included in supply definition, when an activity will be considered as supply. Then we have 7 subsection 1a. 7 subsection 1a we have. So 7 subsection 1a says that once an activity has been classified as supply, once an activity is falling under supply as per section 7 subsection 1, whether will it be considered as supply of goods or supply of services, that guidance has been provided under 1a. Then we have 7 subsection 2. Then we have 7 subsection 2, which is mainly talking about what are those activities which are neither considered as supply of goods, not even considered as supply of services. We have 7 subsection 2, which is talking about those transactions which are not at all considered as supply. They will neither be considered as supply of goods, not even considered as supply of services. Which means what? If an activity is falling under 7 subsection 2, it is not supply. If it is not supply, there is no question of GST on the transaction. If it is not at all qualifying as supply, there is no question of charging the GST on the transaction. So like that, we have 7 subsection 1, which is talking about what will be included in the supply definition. We have 7 subsection 1a, which is talking about once an activity has been classified as supply, once an activity is fulfilling the criteria of supply, whether it will fall under supply of goods or supply of services. And 7 subsection 2 will talk about what are those activities which are not at all considered as supply. If it is not falling under supply definition, there will not be any question of GST at all. So first I will start with 7 subsection 1. In that 7 subsection 1 also, so 7 subsection mainly will be talking about which activities will qualify as supply. So now in this 7 subsection 1, we have various clauses. So we have 7 subsection 1 clause A. So 7 subsection 1 clause A says that an activity will get qualified as supply when the subject matter of that transaction is either goods or services or both. And there should be some form of supply. There should be some form of supply. Number 3, there must be consideration. There must be consideration. Number 4, it must be in the course or furtherance of business. It must be in the course or furtherance of business. So when all these conditions are satisfied, it will qualify as supply under section 7 subsection 1 clause A. So what they are trying to say here, 7 subsection 1 clause A, an activity will get qualified as supply when all these conditions are present. What are all that conditions? Condition number 1, the subject matter of the transaction should be either goods or services or both, and there should be some form of supply, and there must be consideration. It must be in the course or furtherance of the business. Now we have to elaborate on this. Sir, what is the meaning of the goods, sir? What is the meaning of the goods? So goods means anything other than goods means every kind of movable property. Every kind of movable property, we call it as goods. So then what is movable property, sir? Other than immobile property. Other than immobile property. Sir, what is immobile property? Land, buildings, things attached to or forming part of the earth, benefits arising out of land. So all that will fall under immobile properties. Immobile properties are not goods. Only movable property will be goods. Let us say a computer, good. A mic, this microphone, good. The pen which I use, good. This shirt is a good. So motor vehicle is a good. So like that, any kind of mobile property will be considered as goods. However, they specifically say that goods does not include money and securities. Goods does not include money and securities. So money will not fall under goods definition. Securities also will not fall under goods definition. Sir, what is money? Money means either Indian currency, Indian legal tender money, or foreign currency, or any other kind of instrument which is recognized by RBI for the purpose of settlement of obligation. Like it could be a check, it could be a promissory note, it could be a demand draft, it could be a traveler's check. So like that, it could be any instrument which is recognized by the RBI for the purpose of settlement of obligations. All that we call it as money. Money will not fall under goods definition. When I say goods, goods does not include money. However, if you are keeping any currency for its numismatic value, if you are keeping any currency for its numismatic value, sir, what do you mean by keeping the currency for numismatic value? Let us say you have one coin which is used to be in circulation during British Empire. You have one currency coin which used to be in circulation during British Empire. So that coins, some people will have this habit of collecting the coins. So that coin you have kept it. Now that coin you did not keep it for settlement of obligation. That coin you have kept it for its numismatic value, for its intrinsic value you have kept that coin. Okay, so this currency which is held for its numismatic value, it will not be falling under money definition. If it is not falling under money definition, it will fall under goods definition. So goods does not include money. Money means what I have told, but I am specifically saying that currency which is held for its numismatic value is not money. If currency held for numismatic value is not money, then it will fall under goods definition. All other usual currency will be money, not goods. But currency held for its numismatic value is not money. That means it will fall under goods definition. Similarly, goods does not include securities also. Sir, what are securities? The shares, debentures, equity, bonds, mutual fund units. So like that, all this will be considered as securities. Even securities are also outside of the goods definition. Okay. But they specifically say that goods include actionable claims. What they have specifically mentioned, goods include actionable claims. When I say goods, goods will include actionable claims. Sir, what are actionable claims? An right of unsecured debt, or a right in the goods which are not currently in your possession. Simply, if I have to put it, arrears of land, arrears of rent will be an actionable claim. Lottery, betting, gambling. So all this will form part of actionable claims, and they have specifically told that money goods include actionable claims also. When I say goods, goods will include actionable claims also. Not just that, they have also told that goods include things which are forming part of the land, things which are attached to the earth, which are agreed to be severed, or cut at the time of making supply or before making supply. Let us say I have a tree. I am growing red sandalwood. I have trees. Trees are some red sandalwood trees are there. Trees are something which are permanently attached to the earth. That is an immobile property. But if I undertook a contract, I entered into an agreement where I told I will make the supply of this tree, sandalwood tree. I will cut the tree and I will make a supply. Now it will become good. Now it will become good. So practically speaking, things which are attached to earth, things which are permanently fastened to the earth, they will fall under immobile property definition. If they are falling under immobile property definition, they are not goods. But in case if I have agreed to supply, in case if I have agreed to transfer the goods which are attached to the earth or forming part of the earth, by severing them, by separating them. So if I agreed to separate them from the earth and if I agreed to supply it, then it will fall under goods definition. Okay, so this much you have to remember it here. So what is the meaning of the goods? Goods means anything which is movable property, does not include money and securities. It also includes actionable claims, but it does not include but it also includes things which are attached to the earth or forming part of the earth, which are agreed to be severed, which are agreed to be cut either at the time of making supply or before making supply. Next, sir, what is services? The definition of services is very huge. The definition of services is very broad. When I say huge, not in terms of the volume of the definition, but meaning. So the term services has been defined in a very comprehensive manner, very, what I have to say, not comprehensive, in a very indirect manner. So what they have told is services means anything other than goods. Anything other than goods, other than money, other than securities. So that means if something is not falling under goods definition, if something is not falling under money, if something is not falling under securities, then all that will fall under services. Something other than goods is what? Service. So let us say, for example, if I'm giving my immobile property on rent, if I have a building, I'm giving that building on rent. Will it fall under goods definition? No. If it doesn't fall under goods definition, it will fall under services. Okay, so services is defined in a very inclusive manner. If something is other than goods, that will fall under services definition. However, money and securities are neither goods nor services. That's what the summary here. So they're excluding the money and securities from the goods definition also. Now they're excluding that. Now they're excluding money and securities from the services definition also. So the summary of this is money and securities are neither goods nor services. If they're neither goods nor services, they're outside of the GST purview. Okay, right. So now one more thing I would like to say it here. In the services, they have specifically told one thing. See, money is not service, not good. But activities relating to use of money for which a separate consideration in the form of interest or discount is charged. Now that interest or discount will be considered as supply of service. Sir, what is the meaning of this? Let us say I'm a person, you are my friend. You came to me and told, hey, I need one amount. I'm in some difficult situation. Financially, I'm facing a difficult situation. I need some money. I gave you some 1 lakh rupees. Thereafter, you are returning me 1 lakh rupees. So I gave the money for use. I am not charging any extra consideration. I gave you 1 lakh rupees. I am receiving 1 lakh rupees. No supply here. But let us say you are my friend. You came to me. You asked me for 1 lakh rupees of amount. I told, okay, I will give you that 1 lakh rupees for your use. But please do return it back when your usage is over. Return back that 1 lakh rupees along with 10,000 rupees of interest. return back 1 lakh rupees along with 10,000 rupees of interest. Now that interest, that separate consideration, whatever I'm charging, no, that in the form of interest or discount, in case of bills and all, there will be discount. So that separate consideration, if you are giving money for use, for which if you are charging that separate consideration in the form of interest or discount, so that interest or discount will be considered as supply of service, not the value of the loan amount. Similarly, I told that, one more thing here, one more point regarding money. So the activities relating to conversion of money from one form to another form, from one currency to another currency, from one denomination to another denomination, for which you are charging a separate consideration, that also will be considered as supply of service. So if the transaction is purely in money, not a good, not a service. But if you are giving money for use, for which you are charging a separate consideration, supply of service. If you are converting the money from one form to one form to another form, let us say you have a cash, you take it to the bank, and bank has given you DD for that, for which they will charge a separate consideration in the form of charges, some 100 rupees, 150 rupees, they will charge DD charges. That 100 rupees, 150 rupees will be considered as supply of service. Or you are converting the money from one currency to another currency. You have INR, you take it to a forex dealer, you convert it into USD, for which he will charge some commission. So that separate commission will be considered as supply of service. You are converting the currency from one denomination to another denomination. Let us say, for example, you have a 500 rupee note that you are converting it to 100 rupee notes, for which, let us say, for example, that person is charging some separate consideration. That separate consideration part will be considered as supply of services. Understood? Clear? And one more thing which will be specifically included in the services definition is, see, I told transactions in securities are neither supply of goods nor supply of services, but transactions relating to facilitating or arranging the supply of securities. The person, whoever is providing the activities in relation to facilitation or arranging of transactions in securities, their activities will be considered as supply of services. Sir, whom they are referring to? Stockbrokers. So what the stockbrokers will do? They are mediators. They are facilitating or arranging. They are acting as a mediators for arranging the transactions relating to supply of shares, sale and purchase of the shares, bonds, etc. That is happening through one stockbroker. So their services, for which this stockbrokers will charge from you some commission, annual fees, etc. That is supply of service. If I sell the share to you, you are buying the share from me, that is not supply. That is not goods, not services. But I'm talking about that stockbroker who are providing the services in relation to facilitation or arranging of the transactions in securities. That will fall under services definition. That will fall under services definition. Understood? So this is what the meaning of the goods. This is what the meaning of services. So first, in order to qualify as supply under section 7 subsection 1 clause A, there must be either goods or services. So we have seen what is goods, what is services. Then those goods and services, some form of supply should have taken place. Just having goods or services alone will not be enough. Let us say I have opened a store in which I have kept all the goods which I wanted to sell. Just because I have opened the store and I have loaded my shop with all the stock, that doesn't mean government will come and impose GST. So just having the goods and services will just having the goods and services alone will not be enough. So you need some form of supply also should take place. Sir, what form of supply should take place? This supply could be of any form. It could be sale, it could be transfer, it could be barter, it could be exchange, it could be disposal, it could be license, it could be lease, it could be rental. Any form of supply should have taken place. Sale, transfer, exchange, barter, supply, lease, rental, whatever you want to name it. So just having the goods or services or both alone will not be enough. Some form of supply also should have taken place. And there must be consideration. There must be what? Consideration. Sir, what do you mean by consideration? There must be something in return. There must be something in return. Sir, consideration should always be in the form of money only? Not required. Consideration need not be always only in form of money. Even it could be a non-monetary consideration also. When I say consideration, something in return, that something in return should not always be only in terms of monetary consideration. It could be a non-monetary consideration also. Even if you are getting something in return in barter transaction, let us say I'm teaching you the class, in return I'm getting some professional service from you. So that is also a valid consideration. And not just goods or cash, even the monetary value of doing an act, forbearing from an act also will be considered as consideration. So if I made you some supply, in return you are agreeing to do something. or if I made you some supply, in return you are agreeing not to do something, that monetary value of that equivalent monetary value of doing or not doing some activity in return for that supply is also a consideration. So consideration should be consideration can be monetary, consideration could be non-monetary, consideration could be even doing or not doing an act in return also could be a consideration. So something should be in return, then only there will be supply under section 7 subsection 1 clause A. Okay, so there should be consideration. Quid pro quo must be there. Then thereafter, so one more point regarding this consideration I would like to say here: consideration need not always come from the recipient. Consideration can also come from third party also. If I'm teaching you the class, you are the recipient, you are listening to the class. Now you are only not required to pay me the fees. Even your parent also can pay me the fee or not. Yes. So like that, consideration need not always flow from the recipient. Consideration can also flow from a third party. Okay, next. Now, depending on this consideration, so let me ask you a few questions here. See, there will be charitable institutions, no? There will be charitable institutions. They will receive donations, no? From the donors, they will receive donations. Can we say there is a consideration here? Can we say there is a consideration here? So let us say, for example, this charitable institute is receiving a donation from the donor. Okay, they are receiving donation, but what this donor is getting in return? There is a donor who came and donated some 1 lakh rupees of money to a charitable institution or to a religious place. He donated 1 lakh rupees. He donated 1 lakh rupees. Okay, charitable institution is getting the consideration. But what is consideration for the other person? What is consideration for the other person? There is no consideration here. There is no quid pro quo. That's why this activity will not qualify as supply. Donations received by charitable institution, donations received by religious institution. Since there is no quid pro quo for both the parties, that's why these activities will not qualify as supply. But however, let me put you a scenario. Let us say there is a charitable institution to which a person has come. He gave a donation, 10,000 rupees. In return, the charitable institution is promoting him. Like what they are promoting? Let us say this person has given donation. Now using that donation, they have purchased one electronic good. Let us say they purchased some water purifier in the charitable institution, and on that water purifier they have attached one big sticker. This water purifier was donated by so and so person who is a top furniture dealer in this state, in this town. His contact and his address is like this, like that. One sticker has been attached. Then it will lead to providing of advertisement services. In that case, this person is getting something in return. So you gave 10,000 rupees of donation. Now they are doing advertisement for you, where they are telling your name, that your business, what you do. So all that, if it is getting presented, then it will be a quid pro quo. Then it can be considered as supply of service. Understood. But here one more point you have to remember. These are all circulars. Whatever I'm explaining, these are all circulars. But one point here you have to remember: just a display of the name without mentioning any business. Just if they have mentioned something like donated by so and so person, that doesn't mean they are providing advertising services. If a charitable institution has received a donation and on that article whatever they have purchased, just some name was engraved, donated by so and so person, no reference to business, nothing is there, that is a kind gesture, that cannot be considered as quid pro quo. But like as I've told, if they are mentioning the name, his business, what he will do, where his office is there, where his shop is there, if all that details are getting presented on the articles whatever they have donated, then it will lead to quid pro quo. On that it will be considered as supply. Understood? Clear? Right. So this is one thing. Charitable institution, important circular from the exam point of view. Then one more important circular here is, there will be artist. There will be an artist. He will send his artwork. Let us say he drew one painting. That artwork was sent to art gallery for exhibition. Art gallery for exhibition. He have sent that. He has sent that artwork. Now, if he has sent that artwork for exhibition to the art gallery, he will not get anything for that. For display of his advertisement at the art gallery, he will not receive any consideration. So since there is no consideration, this activity of sending the artwork by an artist to the art gallery for exhibition, can it be considered as supply? No, it is not supply. It is not supply. When actual supply will take place at this art gallery, if a customer has walked in, he will look at the gallery, he will look at the paintings which are presented there. If he liked one particular painting and he has purchased, let us say this artist painting is also exhibited at the art gallery. A person has walked in, he liked that painting, he paid the consideration and he purchased it. And this is the place where actual supply has taken place, because this is where the consideration is coming. So just sending the artwork for exhibition, here there is no consideration, no supply. But in case if a customer has liked it and he has purchased it, then actual supply will take place. And one more point here regarding no claim bonus. one more important point regarding one more important circular. See, when it comes to supply chapter, registration chapter, these kind of chapters, no, at the CA final level, they don't ask questions generally from this all the basic provisions, but they will ask questions from the circulars. That's why I'm keeping more emphasis on the circular. Listen, no claim bonus. There is an insurance company. Now, this insurance company has sold an insurance policy, vehicle insurance, motor car insurance, they have sold to a insured. Insured is the recipient. The person whoever has taken the insurance policy is an insured. Now, in the motor insurance, there will be one thing. What is that is? So they sold insurance policy to you. If you are not making any claim, if you are not making any claim, you will enjoy something called no claim bonus. Next year, when you come and renew your insurance policy, we will have to collect the insurance premium. No, in that they will give you reduction. No claim bonus, they will get it. So let us say this person has taken vehicle insurance, but he did not make any claim. Next year, he is coming for renewing the policy. So while renewing the policy, this insurance company told, sir, 10,000 rupees is the actual premium. But since in the last year you did not make any claim, no. So we will give you no claim bonus amounting to 2,000 rupees. So you will be required to pay 8,000 rupees only. You will be required to pay 8,000 rupees only. So like that, there will be no claim bonus arrangement. So here, one of the PO has done one interesting interpretation. He told that there are two transactions here. Insurance company is paying, insurance company is providing service. Insurance services they are providing, for which insured is paying them 10,000 rupees. For which insured is paying them 10,000 rupees. So supply of service, along with this 10,000 rupees, GST also should be collected. Now what they are saying is, this insured is there, no? Insured is getting 2,000 rupees. No claim bonus is discount, no. So what the proper officer is interpreting is, so he is paying, this insured is paying 10,000 for services he has availed. In return, insurance company is paying 2,000 rupees. By reducing means what? Giving it back only, no. So insurance company is giving 2,000 rupees. In return, this insured is not making a claim. This insured is not making a claim. So that is also consideration. He is receiving 2,000 rupees for which he has agreed not to claim, for which he is not making any claim. Since he did not make any claim of his insurance policy in the previous year, that's why he is receiving this 2,000 rupees. Now PO has started investigation. PO has started implementing. So this insured is providing the services of not making a claim, for which he is receiving 2,000 rupees of consideration. So he is making supply of services. Just 2,000 rupees collection of no claim bonus and all will not be enough. He has to collect on this 2,000 rupees along with GST also. Along with GST, he has to collect it. PO started over interpretation. So like that, these POs have started harassing these insurance, these insureds, where they have started claiming that when the insured is getting the no claim bonus, he is actually not making any claim, for which he is receiving that no claim bonus, that is supply of service. On that 2,000 rupees also GST will become applicable. So like that, proper officers have started harassing, but the department gave the clarity, no, don't harass them. It is not a supply. It is not a supply. No claim bonus is not a supply for anything. So that's what they have clarified it here. One more circular, you will be able to find it here. So if I come to the material, yeah, see here, no claim bonus offered by the insurance company. So summary only I will read. No claim bonus is not consideration for a supply, and hence no GST applies. No supply of services by insured to the insurance company in lieu of no claim bonus offered by insurance company. Okay, right. So this is what regarding consideration. Now we have one more thing. So what we are actually discussing, when an activity will qualify as supply under section 7 subsection 1 clause A. They say there must be goods or services or both. There must be some form of supply. There must be consideration, and it must be in the course or furtherance of business. It must be in the course or furtherance of the business. If you are not doing it in the course or furtherance of the business, it will not qualify as supply. Able to understand? Clear and comfortable here? So let us say, for example, if you are a student, so once you are done with your exams, you are selling your old books. You are selling your old books. So goods are there, some form of supply sale is happening, there is consideration also. That means, are you liable to pay GST? No, because it is not in the course or furtherance of the business. So in order to qualify as supply under section 7 subsection 1 clause A, it must be in the course or furtherance of business. So this is what regarding section 7 subsection 1 clause A, when an activity will get qualified as supply. So tell me, there must be goods, there must be services, or both. Some form of supply should have taken place. There must be a consideration, and it must be in the course or furtherance of the business. When all these conditions are satisfied, it will qualify as supply under section 7 subsection 1. Now we have few more cases where an activity will get qualified as supply. Section 7 subsection 1 clause AA, like that one section we have. So here also they are telling one activity which will qualify as supply. So what is that one activity they are qualifying it as supply? So they say that if there is an person other than individual, if there is a person who is other than individual. Sir, what do you mean by person other than individual? So it could be a partnership firm, it could be a club, it could be a society, whatever it is. So if there is a person who is other than individual, if they are doing some activity, if they are doing some activity or if they are doing some transaction to its own members or to its constituents, a person other than individual, if they are performing some activity or doing some transaction not to outsiders, to their own members, or members are doing some activities or transactions to the person whom they have created in return for consideration, which could be a single payment, deferred payment, whatever it is. Now 7 subsection 1 clause A has told that it will also get qualified as supply. Will also get qualified as supply. So what they are trying to say here, let us say a group of people came forward, created a club. So these members will contribute to the club. In return, club will provide them the services. No, previously there used to be a case law which used to say that this club or society and its members both are one and the same. This club is nothing but a entity which is created by its own members. So there used to be one case law which used to say that this club and its members both are one and the same. So there is no supply happening to any outsider. There is no service tax. Like that one previous case law used to be there. Now GST department doesn't want to lose revenue on this. So that's why they have brought one clause saying that this person other than individual, when they are doing some activity or transaction to its own members, or members are doing the transaction or activity to the person whom they have created for a consideration. So we will not treat both as same person. We will treat both as distinct persons only. Person other than individual and its members both will be treated as different persons, not the same persons. And if any transaction has taken place between them, that will be qualified as supply, and on that GST will be imposed. So this is what section 7 subsection 1 clause A has told. Then we have section 7 subsection 1 clause B, which says that if you are importing the services, for a consideration, whether or not in the course or furtherance of the business condition, you are not required to check. If you are importing the services and if there is a consideration for that import, you are importing some services, and for that import, if there is a consideration, you need not check the business condition. That will always be considered as supply. Okay, so regarding import of services, I have one more point here, but I will explain that with the help of chat. So one more point regarding import I have to cover. So once I cover that one more point regarding import, that I will come back and refer to this. So but for the time being now, you please remember that when you are importing the services, if there is a consideration, whether or not in the course or furtherance of the business, it will always get qualified as supply. And here also what will happen is RCM will become applicable. Just in the introduction I have told what is RCM. So here supplier is located outside of India. Recipient is in India who is importing the service. So here RCM will become applicable. Since you are a recipient importing the services, you will only be liable to pay the amount of GST to the government. So this is what 7 subsection 1 clause B. Now comes section 7 subsection 1 clause C. So section 7 subsection 1 clause C, I'm going to call it as deemed supply. Section 7 subsection 1 clause C, this I'm going to call it as deemed supply. Sir, what is the meaning of this deemed supply? So if you see till now, either under section 7 subsection 1 clause A or clause AA or clause B, in all the cases, if in order to qualify as supply, till now whatever clauses we have seen under section 7 subsection 1, so in order to qualify as supply in all the previous clauses, there must be consideration. Only when there is a consideration, it will qualify as supply. But now the GST department said, the GST Act says that we are bringing one more section, section 7 subsection 1 clause C. Here we will specify certain activities. And when these activities are done, even without consideration also, we will deem it as supply. So they are specifying certain activities, and if those activities are done even without consideration, even if there is no consideration for certain specified activities, still we will deem it as supply. And on that you will be liable to pay the amount of GST. Okay, sir, what are those deemed supplies? What are those activities? Even if done without consideration, they will be deemed as supply. In order to know that, we have to go to schedule 1. And in that schedule 1, 4 activities are there. Para 1, para 2, para 3, para 4. So like that 4 activities are there. So those are the 4 activities. Even if done without consideration, they will be deemed as supply, on which GST will become applicable. So let us see what are that 4 activities which will be deemed as supply even if done without consideration. Right. So let me come here. Deemed supplies even if done without consideration. Number 1, permanent transfer or disposal of a business asset on which ITC has been availed. So first activity, what they say here, if you are permanently transferring a business asset, permanently transferring or disposing a business asset on which you have availed input tax credit. Sir, what is a business asset here? When I say business asset here, it could be any asset. I'm not just referring to capital goods. It could be a current assets also. Even stock is also a business asset. So any business asset on which you have availed input tax credit. Let us say, for example, there is one capital good or there is some stock on which you have taken input tax credit. Later, if you are permanently transferring or disposing it off. Later, if you are permanently transferring or disposing it off, even without consideration, still it will be deemed to be supply and you will be liable to pay GST. So let us say, for example, I'm a chartered accountant, I'm a registered person. I have purchased one laptop on which I have taken input tax credit. Business asset, I have taken input tax credit on that. But later what I am doing is I am permanently transferring or disposing it without any consideration. Let us say one of my friend came and asked, boss, this thing I want. So I want a laptop. Or let us say, for example, my relative, one student is there, he's coming and asking me, I need a laptop for my studies. So what I thought is, okay, anyhow, this laptop I have purchased it for my business. I have taken ITC, but now no longer it is becoming relevant for me. My work and all have improved, but this laptop is unable to support me. So what I thought, let me give it to my relative without any consideration. Let me donate it without any consideration. So even though there is no consideration, but still this activity will be deemed as supply. So this is what para number 1 of schedule 1 says, permanent transfer or disposal of a business asset on which you have availed the input tax credit. So in order to qualify as supply, there are few conditions here. Number 1, the transfer of that business asset should be permanent. It should not be a temporary transfer. The transfer should be permanent. Number 2, that permanent transfer or disposal of a business asset should be such a business asset on which you have availed input tax credit. So which means if there is a business asset on which I have not taken ITC, or if there is a business asset on which ITC is blocked, that's why I did not take. So there could be a circumstances where you could have purchased a business asset on which you would not have availed ITC, or ITC is blocked. So if that asset on which you have not availed ITC, if later you are permanently transferring or disposing that business asset, still it will be deemed as supply without consideration? No. So in order to qualify as supply under section 7 subsection 1 clause C, read with para number 1 schedule 1, permanent transfer, the transfer should be permanent and business asset should be such a business asset. Business asset should be such a business asset which is on which ITC has been availed. Only when these two conditions are satisfied, then only it will qualify as supply, even without consideration. Okay, next. So it also covers transfer of business assets from holding to subsidiary company. Even transferring of business assets from holding to subsidiary company also will get covered here, even if it is done without consideration and ITC has been availed on that. Next, para number 2 of schedule 1. One more activity which will be deemed to be supply even if done without consideration. So what is that? Supply between related persons or distinct persons. So if there is any supply of goods or services, they are saying supply, which means there could be supply of goods or there could be supply of services. So if there is supply of goods or services either between related persons or between distinct persons under section number 25, listen to the terms carefully what I speak. They say if there is any supply of goods or supply of services either between distinct persons under section number 25 or between related persons, even without consideration, still it will be deemed to be supply. But in order to understand this in a better manner, first we need to know who are related persons. What do you mean by distinct persons under section number 25? So first I will talk about, sir, who will fall under related persons. Number 1, such persons are officers or directors of one another's business. If there are persons who are officers or directors of one another's business, they will be deemed to be related. Even under this clause, they have told that directors of the company are also considered to be related. Directors and the company are deemed to be related. There is a circular which says that directors of the company and the company in which they are directors are related. Next one. Such persons are legally recognized partners. If they are partners, if they are legally recognized partners in a partnership firm, not business partner, they are legally recognized partners. That means if they are partners in a partnership firm, then also they will be deemed to be related. If they are employee and employer, always related. A third person controls or owns or holds directly or indirectly greater than or equal to 25% of the voting shares or stock of both of them. So let us say there is a Limited, there is a B Limited. a third person, let us say some third person is there who is holding greater than or equal to 25% of shares in A Limited also, who is holding greater than or equal to 25% of voting stock or shares in B Limited also, then A Limited and B Limited will be considered to be related. So if a third person is holding greater than or equal to, whether directly or indirectly holding greater than or equal to 25% of the either voting stock or shares of two entities, that two entities will be deemed to be related. Next, control, we have 3 points. So one of them controls the other, or a third party controls both of them, or both of them collectively control a third party. Then also they will be deemed to be related. So regarding control, 3 points we have: one of them controls the other, third person controls both of them, or they both together control a third party. And also they are members of the same family. Members of the same family also will be considered to be related. But now a question come here: what do you mean by family? What do you mean by family? They did not give you the freedom to decide who is your family, who is not your family. They have already defined it. Only these people will be considered as your family members. So who will be considered as members of same family? Number one, spouse and children of the person. If I'm a person, my spouse and my children, we will be deemed to be related. Whether they are dependent on me, not dependent on me, doesn't matter. Spouse and children, always related. Then parents, grandparents, brothers, sisters of the person, if they are wholly or mainly dependent on the said person. Extra 4 relationships they have added: parents, grandparents, brothers, sisters. Only when they are wholly or mainly dependent on me, then only they will be considered to be related. So spouse and children, whether or not they are dependent on me, always related. And parents, grandparents, brothers and sisters, only when they are wholly or mainly dependent on me, then only I will consider them as related. Okay, right. Or one of them is a sole agent, sole distributor, sole concessionaire of the other. So these are all the people who will be considered as related. And between these related persons, if any supply of goods or supply of services is happening, even without consideration, it will be deemed to be supply. On that GST will be payable. Sir, how I will pay the GST, sir? If there is no consideration, then on what value I will pay GST? That we will see it in the valuation rules. How to calculate the amount, you have to keep it aside. Just you have to decide here whether an activity will be supply or not. So if you are deeming it as supply, how you will calculate the amount of GST, on what value you will pay the GST, that we will see it anyhow in our subsequent discussion. In the value of supply chapter, we are going to talk about it. Next. Okay, so related persons, who are they? We have seen. Now, who are distinct persons? Who are distinct persons? Let us try to understand who are the distinct persons also. This is very important. Throughout this GST, if I have to put it in simple terms, throughout the GST, we are going to use this phrase distinct persons under section number 25. So it is very, very important for us to have a very good clarity about who are these distinct persons. Right. So I will give you one scenario here. Let us say there is a person who is having the place of business in Karnataka. There is a person who is doing the business in Karnataka. Let us say he is having a business in Bangalore. He's doing either single business or multiple businesses. Let us say he's having a place of business in Bangalore. He's also doing some business in Mysore. So he is having 2 places of business within the same state. So if a business person is having more than 1 place of business within one state, is there any mandatory requirement to get separate registration for each of the units? Is there any mandatory requirement to get separate registration for both of the units? Not required. GST Act will permit you to operate multiple places of businesses within the same state or union territory under single registration you can do. Under single registration you can operate. When you are having multiple places of businesses within the same state, I am saying, if you are having place of business in multiple states, in each state you have to get yourself registered. Let us say you are having a place of business in Karnataka, you are having a place of business in Tamil Nadu also. Then definitely you have to obtain registration with the Tamil Nadu government, you have to obtain registration with the Karnataka government also. If you are having multiple places of business in multiple states, at every place, at every state, wherever you are having place of business, you are required to get separate registration with that respective state government. Now, I am not talking about it. I am talking about a case where a person is operating in one state only, but within the same state is having multiple places of business. Can he operate them under single registration? Yes. If you want, you can operate them under single registration. Whether that could be same business, different line of business, doesn't matter. But in case, if you voluntarily go and say, sir, I'm having multiple places of businesses within the same state only, but for each place of business, I want separate registration. I want separate registration. Sir, agreed. I can operate them under single registration, but I want each of my place of business separate registration. I want separate registration for my Bangalore business also. I want separate registration for my Mysore business also. If I go and request, will the department give me separate registration? Yes, they will give separate registration. So in that case, let us say you have taken separate registration. You have taken separate registration. For your Bangalore location, separate registration you have taken. For your Mysore registration also, you have taken separate registration. So since you have taken two separate registrations, you both will be treated as distinct persons. Sir, both are my businesses only, they are under same pan only, sir. I will give the same pan to get the registration. Under same pan I have obtained multiple registrations, sir. These are both belonging to my place only, both are belonging to me only, both are my units only. Still they will be deemed as distinct person. And if any supply of goods or services is happening between these distinct persons, even without consideration, like stock transfers and all, if they are happening, generally stock transfers will not happen without any consideration, still it will be deemed to be supply. Still it will be deemed to be supply. So this is what distinct persons. So simply if I have to put it, if there are more than one registrations under same pan, if there are more than one registration under same pan, whether within the same state or in different state. So let us say you are having a registered place of business in Tamil Nadu, you are having a registered place of business in Karnataka. So you are registered in multiple states under same pan. So if you are making any supply of goods or services between these persons without any registration, still it will be, without any consideration, still it will be deemed to be supply. Or even within the same state also, if you are getting multiple registrations, then also there are multiple registrations under same pan number, they will be treated as distinct persons. And any supply of the goods or services between the distinct persons, even without consideration, also will be deemed to be supply. Okay, next, there is one more case here. There is something called establishments of distinct persons. There will be something called establishments of distinct person. Sir, what is establishments of distinct person? Let us say I'm a business person in Karnataka. In Bangalore I have electronics store. In Bangalore I have electronics store. Now in Tamil Nadu I run a petrol pump. In Tamil Nadu I am running a petrol pump, where in that petrol pump I will sell only diesel and petrol. So just now, as I have told, it is a non-taxable supply. Diesel and petrol is a non-taxable supply. So I am registered with Karnataka government because I am running an electronic store there. In Tamil Nadu, I am running a petrol pump, or I am running a bar. In a bar where I will sell alcoholic liquor for human consumption, or a petrol pump where I am selling petrol and diesel. So this is a non-taxable supply. Will I take any registration? No, I will not take any registration, because in Tamil Nadu I am running a petrol pump. I am not making any taxable supply. So I will not take any registration in the Tamil Nadu state. So now you are having a registered place of business in one state. You are having another establishment in another state, unregistered. Even these two also will be treated as establishments of distinct persons. Even these two also will be treated as establishments of distinct persons. So that means these are also distinct persons only. If any supply of goods or services is happening between these two entities, even without consideration, still it will be deemed to be supply. Not just that, even international establishments also. Let us say I'm having a company in India. I have a branch office. I have an establishment outside of India. I have a branch office outside of India. Even they also will be treated as distinct persons under section number 25. Okay, right. So we have understood what is a related person, what is a distinct person. But what is the purpose of learning this related person and distinct person? Because under para number 2 of schedule 1, they have told that if any supply of goods or services is happening, between distinct persons or related persons, even without consideration, it will be deemed to be a supply. Okay, right. Now let us come to para number 3. Sir, what does para number 3 say? But however, for this para number 2, before we go to para number 3, one more small point I would like to clarify. Let us say employer employee. As I have told, they are always related, no? In the related person definition, if you see, they told employer and employee, they are related persons. Let us say employer is giving a gift to employee. Employer is giving a gift to employee. When I am saying gift, there will not be any consideration, no? Common sense. If I am collecting any consideration, why I will call it as gift? I will not call it as gift, no. So if I am saying it as gift, definitely that will be without consideration only. So employer has given a gift to employee. So practically speaking, it is also a supply of goods without consideration between related persons. It should be deemed as supply, no? Yes. But here department has given relaxation. So what relaxation they have given is the gift given by employer to employee up to a value of 50,000 rupees per employee per financial year. Per employee per financial year. If the value of the gift given by employer to the employee is only up to 50,000 rupees, then it will not be qualified as supply. However, if the employer has given a gift to the employee for an amount exceeding 50,000 rupees, let us say, for example, an employer has given an iPhone as a gift to employee whose value is 60,000 rupees. So here, gift given by employer to the employee has exceeded 50,000 rupees. No, then it will be considered as supply. Sir, what will be considered as supply? Amount excess to 50,000. That is, will 10,000 be considered as supplied, or entire 60,000 will be considered as supply? Entire 60,000, not just 10,000. Not just the amount exceeding 50,000 rupees, entire value of the gift will be deemed to be supply. Okay, so this is what regarding para number 2 of schedule 1. Now coming to the next point, we'll talk about para number 3. Sir, what is para number 3? Let us say there is a principal. Now principal has supplied the goods to the agent without consideration, and this agent is going to make further supply. This agent is going to make further supply to the final consumer. So here what they have told is the goods is supplied by the principal to the agent without consideration, that also will be deemed to be supply. The goods supplied by the principal to the agent without consideration will be deemed to be supply. Similarly, let us say sometimes what will happen is there is a supplier. Now there is one principal also. This principal needed some raw material or needed some machinery, but he doesn't know how to purchase it. So that's why he appointed one agent. Now he will procure the goods from the supplier, and agent will supply the same goods to his principal. So agent is making supply of goods. So here one point here, just give me 1 minute. So principal is making supply of goods to the agent, or agent is making the supply of goods to the principal. Without consideration, still it will be deemed as supply. Even though there is no consideration, still these transactions will be deemed as supply. So supply of goods only. One more point you have to remember. For para number 3, they spoke only about supply of goods. For related persons and distinct persons, they told every kind of supply, be it supply of goods, be it supply of services. Just 1 minute. Just 1 minute. Okay. So para number 2. So in case of para number 2, they have told whether it is supply of goods or supply of services between related persons or distinct persons, it will be deemed as supply. Whereas in case of para number 3, that is between principal and agent, only they are talking about supply of goods. Supply of goods by principal to the agent, or supply of goods by agent to the principal. Without consideration, it will be deemed as supply. But they say one condition, only which agents will get covered. Only which agents will get covered under para number 3? Only those agents will get covered under para number 3 who are issuing the invoice in their own name. Who are issuing the invoice in their own name. Agent must give the invoice in his own name. So principal has made the supply of goods to the agent. Agent will make further supply to the final consumer. No. So for this transaction, agent should have given the invoice in his own name. Similarly, supplier will make the supply to the agent. No. Agent will make supply to the principal. No. Here also invoice should be given in the name of the agent. Then only they will get it covered here. Okay. So this is what para number 3. Now we have para number 4. Last activity under schedule 1, which will be deemed as supply even if done without consideration. So what is that one more last activity which will be deemed as supply even if done without consideration? So that is import of services. Once again, import of services. Even import of services without consideration also will be deemed to be supply. But when, sir, import of services without consideration will be deemed to be supply when it is obtained from when it is obtained from our own establishment outside of India, and it must be in the course or furtherance of business. So I will tell you, don't worry. So we have import of services getting treated as supply in 2 cases. One is under 7 subsection 1 clause B, where you are importing the services for consideration. Then under section 7 subsection 1 clause C, read with para number 4 schedule 1, import of services even without consideration is also getting treated as supply. So let us try to understand this comprehensive scenario with the help of one chart. See here, this is what the chart here will try to understand. So just let me take this. Right, see here. So in case of import of services, if at all they are asking a question regarding import of services, how you are supposed to answer, whether it is falling under supply or not, how you will answer. How we will answer is, in case if it is import of services, first we have to check, is it for consideration or without consideration? If it is consideration, if there is a consideration, if you are importing the services and there is a clear consideration for that, it will always be treated as supply under section 7 subsection 1 clause B. It will always be treated as supply under section 7 subsection 1 clause B. If you are importing the services for consideration, always a supply under section 7 subsection 1 clause B. Next, sir, if you are importing the services without consideration, there is no consideration, you have imported, but still there is a chance of getting treated as supply. When, sir? So if it is without consideration, you have to ask a question: is it from related person or your own establishment outside of India? Are you importing that services from your related person or your own establishment outside of India? If the answer is no, no sir, I'm importing the services from a third party who is not my related person, who is not my own establishment outside of India, don't check anything, it is not at all a supply. On the other hand, if the answer is yes, yes sir, I am importing the services for which there is no consideration, it is also from related person, or it is from my own establishment outside of India, then you have to ask one more question: is it in the course or furtherance of the business? If the answer is no, no sir, I'm importing the services without consideration from my related person or own establishment outside of India, but it is not in the course or furtherance of my business, sir, not treated as supply. On the other hand, if it is in the course or furtherance of the business, it will be a supply under section 7 subsection 1 clause C, read with para number 4 schedule 1. Read with para number 4 schedule 1. So this is what one comprehensive chart in which it is talking about import of services. So if they have given any question regarding import of services, whether it will qualify as supply or will not qualify as supply, that you have to judge it with the help of this chart. So how to judge it? First you check whether it is with consideration. If consideration, always supply. If not consideration, two questions you have to ask: is it from related person or our own establishment outside of India? If the answer is yes, check whether it is in the course or furtherance of your business. If the answer is yes, then it will be qualified as supply under section 7 subsection 1 clause C. Okay, so these are the 4 paragraphs which will be deemed as supply even if done without consideration. Clear? So once again, if you come back, what we are actually discussing, right? So we have covered section 7 subsection 1. What will get included in the supply definition that we have covered. So then we have to understand, so once an activity has been qualified as supply, whether it will fall under supply of goods or will it fall under supply of services. So once an activity has been qualified as supply under section 7 subsection 1, we need to decide whether it will fall under supply of goods or will it fall under supply of services. Sir, why this is important? This is very important. Why? Because unless and until you determine whether it is supply of goods or supply of services, you will not be able to determine the rates. So that's why you need to determine whether an activity is falling under supply of goods or supply of services. Now that guidance has been given under schedule 2. So if you go to schedule 2 is a schedule which is identifying the activity, and they're telling whether that activity will fall under supply of goods or that activity will fall under supply of services. That guidance has been given under 7 subsection 1A, read along with schedule 2. So if you come here, you will be able to find it. There are some circulars. I will explain about the circulars in a while. As I have told, circulars are very important here, right? So if you see here, they have given schedule 2. In that schedule 2, they have listed down all the activities. What will be the activity and whether it will be treated as supply of goods or supply of services. So like that list has been given. So it is just a list which is saying what is the activity, whether it will be considered as supply of goods or supply of services. So this I would request you to refer to it. This you have a look at it once, you will be able to easily understand it. So just there is no purpose in revising this, because it will be wasting our productive time. Even if I have to revise it also, what I should do, I should read this activity and what is it, so that anyhow you can do it. And also this part is not that important from the CA final examination point of view. So whether an activity will be qualified as supply of goods or it will fall under supply of services, that has been given under schedule 2. So just you refer to that schedule 2 once. Now, what is the most important thing is that I will cover it now, which is going to be which activities will not qualify as supply. This is important. From here, the questions will come. From here, there will be connected questions also tested. From here, there will be some questions which will be connected and tested. Okay. So let us see what are they. What are those activities which will not be considered as supply? Let me try to make you understand it. So for this, we have to go to schedule 3. Once again, if you come to the material, right? So non-supplies in schedule 3, which activities will not qualify as supply? So there are various places where they have given activities which will not qualify as supply. So one thing they have given is schedule 3. They have given schedule 3. In that schedule 3, they have listed down the activities which will not qualify as supply, neither supply of goods, not even supply of services. Then they have identified some activities which are not qualified as supplies by way of a notification. They have even released a notification. By way of notification also, they have identified few activities which will not qualify as supplies. And even they have given some circulars. Through that circulars also, they have clarified which activities will not get qualified as supply. So we'll try to cover one by one. So first we will start with schedule 3. Sir, what are those activities which are given under schedule 3 which will not be considered as supply at all? See, if they are not getting considered as supply, if they are not getting considered as supply, if there is no supply, there is no question of GST only. So what are those activities which will not qualify as supply? One by one we will see. Number 1, services by an employee to the employer in the course or in relation to his employment. See, you find, let us say for example, you qualified your CA final examination, you got a job with some company, you go there, you get appointed as an employee and you provide the services to the employer. In return, employer will pay you salary every month. See, if you look at the scenario, services provided by employee to the employer for which he is receiving the consideration. That means it is getting covered under section 7 subsection 1 clause A. Service is there, supply is there, consideration is there in the course or furtherance of business also. So when all these conditions are satisfied, the supplier, the employee, along with his salary, should also be collecting the GST, no? Logical or not? So I told section 7 subsection 1 clause A, whenever there is a supply for a consideration and in the course or furtherance of the business, you should be collecting GST on it. So just look at the employees who are working with the company. They are providing services. Consideration is also there. That is also their usual activity. It is in the course or furtherance of the business. But did you hear at any time the employee collecting along with the salary GST also from the employer? No, it will not happen. Why, sir? It is falling under supply definition? No. Yes, even though it is falling under supply definition under section 7 subsection 1, but it is the first activity which is mentioned under schedule 3. So schedule 3 says that this activity is neither supply of goods, not even supply of services. They want to keep this out of the GST purview. That is the reason why the employees are providing the services to their employer, collecting the salary, but along with the salary, they are not collecting GST because that activity has been kept outside of the GST purview by way of schedule 3. They don't want to treat it as supply. And when I say services provided by employer to the employee to the employer, it could be a regular employee, it could be a casual labor, any service, any employee, if he is providing, he could be a regular employee, he could be a casual labor. So any employee providing services to the employer in the course of his employment will be not treated as supply. But it should be in the course of employment. If the employee is doing something beyond the course of his employment for which he is receiving consideration, then it will be treated as supply. On that, GST will be liable to be paid. Okay, next. So if you see here there are some important points. Services provided outside the ambit of employment for consideration. If you are doing something which is outside your ambit of employment, then there is no relaxation. Only whatever services which you are providing as an employee to the employer in the course of employment are only not treated as supply. If you are doing something outside the ambit of employment for a consideration, it will be treated as supply. Sir, what are that activities which will be done outside of the employment? So if you see it here, services provided on contract basis between two parties, principal to principal. So if some transaction is happening on principal to principal basis, not on employment basis, then it will be treated as supply. And payments made to an employee for not joining competing business, very important. If a company is paying some amount to an employee for not joining a competing business, that is not in the course of employment, they are giving the money for not joining competitive business, that will be treated as supply. Next, an independent director receiving the sitting fees. If there is a person who is an independent director, if he is receiving sitting fees, not salary, that sitting fees is subjected to TDS under section 194J. That is not the service provided in relation to an employment. That is a professional service. That is also treated as supply. On that also GST will come. Okay, next. So this is the first activity mentioned under schedule 3. Second activity, which is neither considered as supply of goods, not even considered as supply of services. Services by any court or tribunal established under any law for the time being in force. So whatever services which are getting provided by court, which are getting provided by tribunal, which is established under any law for the time being in force, not at all a supply. So when I say court or tribunal, it will also include Consumer Dispute Redressal Commission also. So a doubt has come, sir, you are saying services provided by court or tribunal is not a supply. When I say court or tribunal, will it also include Consumer Dispute Redressal Commission? Yes, even Consumer Dispute Redressal Commissions also are considered equivalent to courts or tribunals only. Even their services are also not treated as supply. Then services provided by members of parliament, MPs, MLAs, members of panchayats, members of municipalities, members of other local authorities, not a supply. So, or people who are performing any duties in pursuance of any provisions of the constitution, like Prime Minister of India, President of India, Chief Election Commissioner of India. So these are all the people who are providing the services as per the provisions of the constitution. Their activities also are not read as supply. Then duties performed by any person acting as a chairperson or a member or a director in any body established by central government or state government or local authority. So like GST council chairman, like that, CBIC board chairman. So like that, these people who are holding a position as a chairperson or member of any body which is established by the central government, state government or local authority, even their services are also not read as supply. Next one, services of funeral, burial, crematorium or mortuary, including the transportation of deceased. See, when the person is alive, the government is anyhow harassing him in the name of various taxes. At least when the person expires, let him die in peace. Services related to funeral, burial, crematorium or mortuary, including the transportation of the deceased person, are not read as supply. But here you have to pay any close attention. Only services related to funeral, burial, crematorium or mortuary. If you are buying any goods for funeral, burial, crematorium, they might be taxable. The not supply related things are covering only services in relation to funeral, burial, crematorium or mortuary. Only services are covering it here. Then sale of land and sale of building. So here is one important point which you have to remember: sale of land and sale of building. Listen carefully. Right. See, sale of land. If someone is selling the land, there is a piece of land, that land is getting sold. Sir, land is an immobile property. No, land will not fall under goods definition. No, if it is not falling under goods, there is no supply only. Why once again it is mentioned under schedule 3? You are mistaken. Okay, land is not falling under goods, but land could fall under services. No. Why? Because how we have defined the term services, anything other than goods, money and securities will be falling under services definition. So land is an immobile property. Land might not be goods, but something other than goods will fall under services. Land might be services. So if there is a person who is owning the land, that seller is selling a piece of land to the buyer. Now they told that this activity we don't want to qualify it as supply. This activity we will not treat it as supply. Why, sir? See, when it is sale of land and all, anyhow there will be stamp duty, registration charges. So all that anyhow will be imposed. So that's why government wants to keep this out of the GST purview. So sale of land will be outside of the GST purview. It is not at all a supply. Sir, now what about sale of building, sir? What about sale of building? When I say sale of building, it could be individual building, it could be a flat in an apartment. So like that, what about sale of building, sir? So when it comes to sale of building, it is also exempted, but there is, in some cases it will be taxable also. So in case of sale of building, if the building is getting sold or if a flat in an apartment is getting sold, sir, whether it will be a supply or it will not be a supply, that depends actually. How to determine is, first you have to determine one cutoff date. There is something called cutoff date you have to determine. Listen carefully, the same system you follow. So you have to determine cutoff date. Sir, what is this cutoff date? How to calculate this? Cutoff date is date of issuance of completion certificate. Date of issuance of completion certificate by competent authority, or date of first occupation. Date of completion certificate or date of first occupation, whichever is earlier, that date you have to determine. That date I call it as cutoff date. Let us say completion certificate was issued on 15th of October, whereas date of first occupation is 20th of October, whichever is earlier. So which one is earlier? 15th of October is earlier. So you determine that cutoff date. Sir, how to determine cutoff date? Date of issuance of completion certificate or date of first occupation, whichever is earlier. So in my example, which one is earlier? 15th of October is earlier. So this will be the cutoff date. Now you have to check when the consideration is getting received. If the entire 100% of the consideration is getting received after this cutoff date, it is not at all a supply. Neither supply of goods, not even supply of services. It is outside of the GST purview. But even if part of the consideration is received prior to this cutoff date, let us say a flat in an apartment is getting sold for 2 CR. If entire 2 crores is received after this cutoff date only, it is not a supply, no GST at all. But however, let us say 10% advance was given even prior to it. Let us say 20 lakh rupees of advance was given before cutoff date. The remaining 1.8 CR was given after the cutoff date. Now it will not be falling under schedule 3. It will be treated as supply of construction service. it will be treated as supply of construction service, and entire value, entire 2 crores will be considered as supply of services. On that, GST also will be imposed. Clear? So even if 1 rupee of the consideration is received before the cutoff date, entire value will be considered as supply of construction services, on which the GST has to be collected by that builder. Understood? So this is what regarding sale of building. So when it comes to sale of land, no conditions attached. Sale of land, whether normal land, developed land, even sale of developed land is also falling under Schedule 3 only. So, but when it comes to sale of building, you need to follow this system. You need to determine cutoff date. You need to check when the consideration has been received. If the entire 100% of the consideration is received after the cutoff date, it is not a supply. Even if part of the consideration is received before the cutoff date, entire value will be considered as supply of construction services, and applicable rate of GST will become applicable. Understood? So this you have to remember, important. Then let us come back here. Few more activities. Actionable claims. Even actionable claims are also kept outside of the GST purview, other than specified actionable claims. They have specified certain actionable claims. Only that supply of specified actionable claims only are considered as supply. Other than specified actionable claims, whatever other actionable claims are there, they are not treated as supply. Which means these specified actionable claims are only treated as supply. What are that specified actionable claims? Betting, casinos, gambling, horse racing, lottery, online money gaming. So these are the only specified actionable claims. They will only be treated as supply. All other remaining actionable claims, if they are getting supplied, they will be not treated as supply. If they are not treated as supply, there is no question of imposing the GST only. Okay, so that's what they say here. Actionable claims other than specified actionable claims, which means only these specified actionable claims are treated as supply. Apart from that, if any other actionable claims are getting supplied, they are not treated as supply, and there is no GST on that. Then thereafter, merchant trading. So supply of goods from a place in non-taxable territory to another place in the non-taxable territory. So you are supplying the goods from a place in non-taxable territory to another place who is in non-taxable territory. It is outside of the GST purview. Let us say, for example, you are a person in China here. You are supplying the goods from a non-taxable territory. So from US, you are buying some goods. From US, you are sending some goods to China. Or from China, you are sending some goods to US. So this is what we call it as merchant trading. These transactions are not at all treated as supply. There will be no GST on that. So that's what they say. Supply of goods from a place in a non-taxable territory. From a place which is in non-taxable territory, if you are supplying to another place in the non-taxable territory without such goods entering into India, those goods are not entering India. Those goods are not entering India. From a place outside of India to another place outside of India without entering into India, that is also not a supply. Next, inbound sales. Sir, what is inbound sales? Like in customs, we say whenever you have imported the goods, either you can keep that goods in the warehouse or you can clear for home consumption. So let us say you are importing the goods and that imported goods are kept in the customs warehouse. When the goods are lying in the customs warehouse, you can sell that goods. That we call it as inbound sales. So say supply of warehoused goods to any person before clearance for home consumption, that is not treated as supply. Why? Because that will get on that IGST will be paid under Customs Act. So that's why they don't want GST under the GST Act. So supply of warehoused goods. You have imported the goods. Those goods are lying in the customs warehouse. When the goods are still lying in the customs warehouse, you supplied it. You supplied the goods when they are still lying in the warehouse. That we call it as inbound sales. So that supply of warehoused goods will neither be considered as supply of goods, not even considered as supply of services. Similarly, supply of goods warehoused in SEZ or in a free trade warehousing zone to any person before clearance for exports or to DTA. Even in the SEZs also, even in the free trade zones also, there will be warehouse. When the goods are lying in the free trade zone, when the goods are lying in the SEZ warehouse, before they are cleared for exports, before they are cleared for domestic tariff area, when the goods are still lying in the warehouse of that SEZ, when the goods are still lying in the warehouse of that free trade warehousing zone, when the goods are lying in that warehouse and if you made a supply, even that supply is also not treated as even that activity is also not treated as supply. Next, high sea sales. Sir, beyond 12 nautical miles. Beyond 12 nautical miles or beyond 200 nautical miles. So if the goods are getting supplied, when the goods have not yet entered India, see this is what is this high sea waters and all, we will talk about it in the customs. Customs we are going to have an elaborated discussion. So there is something called high sea sales. That means when the goods have not yet entered into India, if the sale is happening, you are importing. The goods did not reach India. The goods did not enter India yet. They did not enter the territorial waters yet. So still you can sell. So when the goods are still lying in the high seas, at that point of time only if you are supplying, At that point of time only, if you made a supply, even that also we will not treat it as supply. High C sales, supply of goods by consignee to any person by endorsement of document of title after the goods have been dispatched from the port of origin located outside of India, but before clearance for home consumption. That means when the goods are still lying in the high seas, if I made supply, that will be neither considered as supply of goods, not even considered as supply of services. Okay, next. Then we have two activities, para number 9 and para number 10. Important. These are recent amendments. Let us try to understand it. These are some recent amendments. We'll try to understand this. So, insurance sector related non-supplies. See, there will be something called co-insurance. There will be something called co-insurance arrangements. Let us say there is one person who needs insurance, who needs a stock insurance. He need 10,000 crores worth of stock insurance policy. Now he approached insurance company A and he asked, sir, I want you to sell me insurance policy in which you are required to in which you are required to insure my stock amounting to 10,000 CR. But this person, this insurance company A doesn't want to take the full risk. So what they have told, they went to another company, insurance company B, they have entered. They told, boss, one of the customer has approached me and they have asked me to give a 10,000 crores of policy, but we are not ready to take that much amount of risk. Let us do one thing. We will take the risk amounting to 6,000 crores. We will take 60% of the risk. You take 40% of the risk. Collectively, we will sell the insurance policy to the insured. So initially this company approached insurance company A only, but this A company has approached insurance company B and told, boss, we will share the risk. I will assure 60%, you will assure 40%. So here insurance company A will be called as lead insurer, whereas insurance company B will be called as co-insurer. Okay, so both collectively has agreed to sell the insurance policy. This entire agreement I call it as co-insurance agreement. They both have collectively agreed to supply insurance services to cover the stock of entire 10,000 crores. Let us say, for example, for selling this policy, the insurance premium which they are charging is 10 CR. The 10 CR rupees of insurance premium they are charging. So on this 10 crore rupees of insurance premium, even IGST also will be collected. So let us say IGST, which is applicable on this entire insurance premium, is 1.8 CR. So or IGST, CGST, SGST, whatever you want to call it, you can call it. But for simplicity, I'm saying 18% of GST, total 11.8 CR has been collected. Practically what will happen is this insurance premium will be collected by the lead insurer. Lead insurer will collect this total 11.8 crores. Out of that, 10 crores they will retain and this 1.8 crores will be paid to the government directly. So 1.8 crores amount of GST will be paid to the government. Now, this lead insurer has collected total how much premium? 10 CR. Can he retain that entire 10 crores worth of insurance premium? No. Why? Because he has co-insurance agreement. No, he is taking only 60% of the risk. So he will retain out of that 10 crores, he will retain 6 crore rupees only. The balance of 4 crore rupees is required to be remitted because it is a co-insurance agreement. No. So 10 crores they have collected, but they are taking only 60% of the risk. 6 crore rupees of insurance premium only they will retain. 4 crores will be shared with the co-insurer. So now what happened is, now some proper officers have started thinking that, so this insurance company is paying consideration for 4 crore rupees to the co-insurer. In return, insurance company B is providing services to insurance company A. Now, these proper officers have even started asking GST on that 4 crore rupees of co-insurance premium shared. So this lead insurer has shared out of the total premium, he shared 4 crore rupees, and proper officers have also started asking GST on that 4 crore rupees of sharing of insurance premium also. But department gave a clarification by way of amending schedule 3 and have added new paragraph saying that this sharing of co-insurance premium between the lead insurer and the co-insurer, this will not be treated as supply. On this 4 crore rupees, we don't want GST. Why, sir? Why? Because this 4 crores is nothing but a part of this 10 crores only on which a GST is already paid. So this 4 crores is not some separate consideration. This 4 crores is actually a part of the total premium of 10 crores. And on the total premium, anyhow 1.8 CR full amount has been subjected to GST and the government has already got it. So from that 10 crores on which a GST has already been fully paid, from that only the share is happening. So once again, if the government starts taxing this 4 crore rupees, it will be a double taxation. So that's why what the government told is sharing of insurance premium by the lead insurer with the co-insurer will not be treated as supply. On that, we will not impose any kind of GST. Okay, right. Next, coming to the one more last clause. So one more last clause we have, last paragraph we have under schedule 3, which will not be treated as supply. That also we'll try to do it. So what is that last paragraph which will not be treated as supply is, so now it is reinsurance. Okay, let us say there is a company, insurance company A, which is a main insurer, So what they have done is they have already sold insurance policy amounting to 10,000, providing a coverage of 10,000 crores, for which they have collected 10 crore rupees of premium. Initially, they did not approach any co-insurer. Insurance company A single-handedly they sold 10,000 crores of insurance policy for an insurance premium of 10 crores, on which they have paid GST also 1.8 CR. Total 11.8 crore rupees they have collected. Out of that, insurance company has retained that 10 crore rupees. 1.8 crore rupees was 1.8 crore rupees was paid to the government. Now, after they have sold the insurance policy, let us say they are feeling that they have taken more risk. So what they can do, they can go to another insurance company and they can reinsure. So here it is not co-insurance. Co-insurance means both collectively at the first place only, they both will come collectively and sell the insurance policy. But here first insurance company A has already sold the insurance policy, but they are feeling that they have taken extra risk. Now what they are doing is they are going to insurance company B and they are asking them, sir, you please provide us reinsurance. You please provide us reinsurance services. So you please reinsure 30% of our risk. You please reinsure 30% of our risk. We will give you some premium. Let us say, for example, they told, sir, you please take up some risk. We will give you some 4 crore rupees. So for that 4 crore rupees, you please take up the reinsurance. We want you to provide reinsurance services. So now here insurance company B is providing reinsurance services for which they are receiving the consideration of 4 CR. Sir, will that reinsurance commission, will that reinsurance premium, will that be subjected to GST? Yes. It is now separate supply of service. It is not just a sharing. Insurance company B is providing the services to insurance company A for which they are receiving 4 crore rupees of consideration. Sir, on that, will GST come? Yes, because it is a fresh supply of service. So on this 4 CR along with the GST they will collect. So 4 into 18% if I do, it will come to 0.72. So 4 into 0.72, total 4.72 crores has been collected. Now insurance company will remit that 0.72 lakhs, 0.72 crores to the government as GST for their insurance services. But here is one more thing which will happen. Now, since insurance company A gave business to insurance company B, no, initially it was whose client? Insurance company A's client. Now they are going and giving the reinsurance business to insurance company B or not, for which insurance company A will get ceding commission. They will get something called ceding commission. Sir, we gave the business to you, no, we want ceding commission. And this ceding commission will be generally a percentage of that reinsurance premium. Sir, you are providing service, okay, but we gave you the business, no. For that, we want ceding commission. Let us say ceding commission is 10% of the insurance premium, reinsurance premium. That means 40 lakh rupees of ceding commission they will get. So now insurance company is required to pay ceding commission, 40 lakhs worth of ceding commission for providing the services, for giving business. In return, insurance company is giving reinsurance business, right? So now on this 40 lakh rupees also, will it be subjected to GST? The answer is no. That's what para number 10 says. So ceding commission, on that ceding commission, it will not be treated as supply. Why, sir? Why? Because that ceding commission is part of this 4 crores only. No. The ceding commission, which this initial insurance company is getting, is part of that reinsurance premium 4 crore rupees. And this entire reinsurance premium of 4 crore rupees is already subjected to GST. From that only part you are getting it as ceding commission. So that's why department told even on the ceding commission also will not treat it as supply. We don't want GST on it. Okay, that's all. So these are the 2 points. One is sharing of insurance premium between lead insurer and co-insurer, and other one is receipt of the ceding commission by the original insurer from the reinsurer. Okay, so both are not treated as supply. So with the help of these examples, I hope you are able to understand. So 9 and 10 also we have covered. Para number 9 and 10. So these are activities which are not treated as supply by way of schedule 3. Then there are some activities which will not be treated as supply even by way of notification. Government has released a notification, and through that notification also they have told that certain activities will not be treated as supply. What are they? Number 1, activities in relation to panchayat or municipality functions. So panchayats and municipalities, they are also treated as, they are also government entities. Whatever activities they are doing, they will also fall under business definition. But whatever activity panchayat is doing or whatever activity municipality is doing in relation to any function entrusted to them under article 243G or 243W, article 243G or 243W. So what is happening here? Cover page, is it CA or CMA inter? And in caption final, is this actually inter or final? This is a final marathon here. This is a final IDT marathon. So it is IDT. We are doing IDT marathon only, not CA inter. Listen, for final only we are doing it, right? So whatever activity a panchayat is doing, whatever activity a municipality is doing in relation to any function which is entrusted to them under Article 243G or Article 243W of the Constitution, they are not treated as supply. They are not treated as supply. On that, panchayat and municipality will not be liable to pay any GST. So municipality or panchayat, whatever functions they are doing in relation to any function which is entrusted to them under Article 243G or 243W of the Constitution, they will be not treated as supply at all. Similarly, state government will provide the services of grant of alcoholic liquor for license, alcoholic liquor license. So if you want to open a bar in any state, for that case, what you need to do is first you have to approach the government, state government, and you have to apply for license. State government will give you license to operate a bar, then only you can open that bar. So this service is provided by state government by way of grant of license for alcoholic liquor for human consumption. So that services provided by the state government are not treated as supply. On that, GST will not be applicable. But here the relaxation is there only for supply of services of grant of license for alcoholic liquor for human consumption. Apart from that, state government might grant various other licenses also. They will be treated as supply. Only supply of services related to grant of license for alcoholic liquor for human consumption, that is only not treated as supply. Other licenses like mining licenses, etc., they will all be treated as supply. On that, GST will come. Okay, now there are some circulars. By way of some circulars also, the department has clarified that some activities are not going to treat as supply. There are some circulars also. By way of circulars also, they have clarified certain activities not as supply. So this I will try to explain in a quick manner. So interstate movement of various modes of conveyance and interstate movements of rigs, tools and spares on wheels. Sir, what is it? One simple example I will tell you. Let us say there is a TCI Freight. TCI Freight is a GTA company. No, they are having places of business all over India. Let us say they are having a place of business in Bangalore. They are also having a place of business in Chennai. They are also having an office in Chennai. Now, TCI Freight will provide the transportation of goods and services, right? Now, every day, let us say from Bangalore, there will be a truck. So this truck will be loaded with the goods which are required to be transported. And this truck will go to Chennai office of TCI Freight. There the goods will be unloaded. There the delivery will happen. Okay. Now, what one PO has done is, see, these two are registered persons of the same entity under same PAN. They have taken registration with Karnataka government. They have also taken registration with Tamil Nadu government. Both are under same PAN. So practically, since there are multiple registrations under same PAN, they both will be treated as distinct persons. Distinct persons under section number 25. So if they are distinct persons, any supply of goods between distinct persons without consideration, should it be deemed as supply or not? So what one useless PO has done the interpretation is, sir, he determined the entire value of the truck. He determined entire value of the truck and he told that this entire value of the truck, this truck is going from Bangalore to Chennai between distinct persons without consideration. He determined the entire value of the truck and he told that entire value of the truck I will deem it as supply under para number 2 schedule 1, supply between distinct persons or related persons without consideration. So entire value of the truck he has determined and he invoked 7 subsection 1 clause C. He treated it as supply and he asked these people to pay the GST on the entire value of the truck. Entire value of the truck. Very interesting interpretation, no? Yes, very interesting interpretation, very good interpretation, but it is nothing short of harassment. It is equal to harassment only. It is equal to harassment only. So that's why what they have told is any interstate movement of conveyances like trucks, or if you take buses, even bus transportation service providers also have same kind of activity. Every day a bus will start from their office in Bangalore, that will go to Chennai where passengers will be loaded. Here also what he can do, he can determine the value of the bus and he can say bus has been supplied and ask them to pay the GST. So like this harassments are happening. So like that any conveyances, interstate movement of conveyance. So if you read it here, interstate movement of various modes of conveyance between distinct persons. Sir, what could be that conveyance? That could be train, buses, trucks, tankers, trailers, vessels, containers, aircrafts. For the purpose of carrying goods or passengers or both. If there is any interstate movement of conveyance is happening, like any bus, train, truck, if interstate movement is happening between distinct person. For what purpose? For carrying goods or for carrying passengers, or if that interstate movement is happening for repairs and maintenance. Let us say, for example, this TCI Freight, there is one truck there. Their truck has got damaged. Now, this TCI Freight is having a repair center only at Chennai. So now this truck is going from Bangalore to Chennai to get repaired. So like that, interstate movement of conveyance is happening either for carrying goods or passengers or for repairs and maintenance, except in cases where such movement is for further supply. This point I will come back to that later. So if there is any interstate movement is happening of conveyances for carrying goods or passengers or for repairs and maintenance, it shall be treated neither as supply of goods, not even supply of services, and it will not be liable to GST. It will not be liable to GST except when that movement is happening for further supply of the same conveyance. Let us say, for example, Ashok Leyland is there. Ashok Leyland is there. Now this Ashok Leyland is they have a factory in Gujarat. So in the factory, they have manufactured buses. Now these buses are taken to Delhi, where showroom is there. From that showroom, these trucks will be sold. So here also interstate movement of conveyance is happening. But here the interstate movement of conveyance is happening not for carrying passengers or transportation of goods, not for repairs and maintenance, but here that interstate movement of conveyance is happening for making further supply. In that case, you can treat it as supply of goods. In that case, you can invoke section 7 subsection 1 clause C para number 2 schedule 1. You can invoke it and you can treat it as supply even without consideration, and you can impose a GST on it. Understood? So that's what they try to say it here. However, applicable IGST will be applicable on repairs. On whatever repairs and maintenance value is there, on that GST you can impose it, but not on the entire value of the truck or conveyance or whatever it is. The same explanation of this circular will become applicable for interstate movement of rigs, tools, spares and all goods on wheels. Whatever explanation the circular I have given now, the same explanation will become applicable even for interstate movement of rigs, tools and spares also. Sir, what is it? Let us say, for example, I am a builder. Let us say I am a builder. I am having multiple places of business. I do construction at multiple places. I am doing construction in Bangalore. I am also doing construction in Chennai. So at Bangalore location, I have a truck. I have one crane. Sorry, not truck. I have one crane. So this crane I was using at the construction site in Bangalore. So now here the construction got over. Now I am taking that crane from my Bangalore location to Chennai, where the new construction is happening. Now once again pivoted the interpretation. Both are distinct persons. This crane is getting transported from Bangalore to Chennai under same pan. So he determined the value of the crane and he told that this entire value of the crane is supplied between distinct persons without consideration. On that you are required to pay the GST. So it is also unnecessary harassment. So what the department has told is, whatever explanation we have given for conveyance, same explanation will become applicable here. So if there is any interstate movement of rigs, tools or wheels like cranes and all between distinct persons for the purpose of repairs or for the purpose of any other thing other than making further supply, then in that case you should not treat it as supply. So whatever explanation they have given it in the case of interstate movement of conveyances, the same explanation they have given it even for interstate movement of rigs, tools and cranes, etc. Clear? So these are some activities which are not treated as supply by way of circular. So we have covered what are the activities which are not treated as supply under schedule 3. What are the activities which are not treated as supply under schedule 3 we are done. Under notification, which activities are not treated as supply, that also we are done. Which activities will not be treated as supply by way of circulars, that also we have covered it. Okay, now so with this we have completed mostly section number 7. Section number 7, all the important portions I have covered. But a few things I would like to tell you here. A few circulars I would like to explain here. A few circulars which are very important from the examination perspective, I have to explain it here. One is profit petroleum, cost petroleum. Profit petroleum, cost petroleum. Regarding this, one issue is there that I have to explain. Let us say, for example, there is one oil refining company, Reliance Industries Limited. Now, for this Reliance Industries Limited, the government has given license to do the exploration. Like for example, wherever there are this oil reserves are there, so their exploration should happen. Let us say, for example, in the ocean, in one river, there is some oil reserves are there, crude reserves are there. So the government can't go and explore, whether they have to do some activity and they have to dig that ocean, and there they will find out whether there is a crude or not. But government will not be able to do that activity. So government has given the license for Reliance Industries Limited to do the exploration. Now Reliance will do exploration. After doing exploration, let us say, for example, they found the crude reserves. They found crude reserves. Now whatever crude reserves they have explored, that they will sell, no? That they will sell. So after they have sold that crude proceeds and all, from that they will have revenue, they will have receipts. Now the agreement between the government and Reliance will be such that government will give the license to the Reliance to do the exploration. Now Reliance will do the exploration and extract that crude and all. Thereafter they will supply. From that they will get the revenue. First revenue will be used by the Reliance to adjust their cost, to recover their cost. for doing this exploration activity, they will incur cost. No, let us say, for example, they recovered, they explored the crude, they got crude, they extracted the crude, and they made a supply. Let us say total 1000 crores worth of crude they are able to supply. Now, the agreement between government and Reliance will be something like this. First, out of the revenue, whatever Reliance has generated, they will use it to recover the cost. Let us say for exploring this entire activity, they have incurred 400 crores of cost. Now, out of total revenue, whatever they have generated, first they will try to recover the cost. This we call it as cost petroleum. This we call it as cost petroleum. So, first 1000 crores they have totally recovered, out of which 400 crores is for recovery of the cost. So, this we call it as cost petroleum. Remaining we have no excess amount is there, no, this 600 crores we have. So, this will be called as profit petroleum. This will be called as profit petroleum. So first we will talk about cost petroleum. So Reliance Industries Limited did the exploration, extracted the crude, sold it, and out of that, first they are recovering that proceeds against that cost petroleum to recover their own cost. So will this 400 crores of cost petroleum, which is recovered by Reliance, can it be treated as supply? No. The department has given a circular clarifying that cost petroleum will not be considered as supply. Why? Because the Reliance, when they are collecting the cost petroleum, they are recovering their own cost. They are not making supply to anybody. They're not making supply to anybody. So recovery of cost petroleum is not a supply. On that, GST will not come, because by recovering the cost, you are not making supply to anybody. You are recovering your own cost. Now, the agreement will be remaining profit petroleum will be there, no? So in the profit petroleum, there will be agreement. Since the government has given license to Reliance to do the exploration, so out of the 600 crores, let us say government says 30% share should go to the government, 70% should be retained by the Reliance. So now, as per the agreement, out of this profit petroleum, 30% should go to the government, no? 30%, that means if you do it here, 180 crore rupees should go to government. So no? These are 18, yeah. 180 crores should go to the government. So Reliance will pay 180 crore rupees to the government for grant of license. Reliance will pay a share of profit petroleum to the government for grant of license here. So this is supply of service. Government is making supply of service to the Reliance by way of granting of license for exploration, for which they are receiving the consideration in the form of share of profit petroleum. So here it is supply of service. Share of profit petroleum is a supply of service provided by government to the Reliance. But even though it is supply, it is exempted. Even though it is supply, even though it is supply of service, it is exempted. That we will see it in the exemptions chapter. It will be exempted. Okay. So 2 points which I want to clarify here. Cost petroleum, not at all a supply. Why? Because the company is recovering their own cost. They are not making supply to anybody. So cost petroleum is not a supply at all. Profit petroleum, share of profit petroleum with the government is a supply of service. The government is granting you license for exploration of natural reserves, for which they are getting the consideration in the form of share of profit petroleum. That is consideration for supply of license. Yes, that is a supply of service only, but that is exempted supply. On that, GST will not become applicable. It is exempted supply. So cost petroleum is not at all supply. Share of profit petroleum is a supply, but it is an exempt supply. Okay, so this is one circular. Next. One more circular I would like to explain it here. One more important circular I will try to explain. Why? Because for CFNL, especially from the supply chapter and all, not the main provisions, circulars are very important. Right. So one more circular I will explain. Joint venture. Cash calls in the joint venture. Let us say, for example, 4 people are there. A, B, C and D. All of them have collectively created a joint venture. They have collectively created a joint venture. So now for this joint venture, when operating member is there, D is operating. So 4 people are there, 4 individual persons are there, A, B, C and D. They collectively came and created the joint venture. Now this joint venture, someone has to operate. No, one of the members of the joint venture, D himself is operating member. He is operating the joint venture. Now what happened is, each of this person has contributed their share. A, B, C and D contributed. Let us say each of them contributed 10 lakh rupees. Total 40 lakh rupees of money has been accumulated with the joint venture. Now using that 40 lakh rupees, this operating member purchased a plant and machinery. Did some manufacturing activity. Did the business. Thereafter, that whatever profit they have made, that was shared with all these 4 members. So in case of this example, 4 people have come forward, created a joint venture. They all contributed the capital. In the name of the joint venture, they purchased one new plant and machinery, did the activity, and they are sharing the proceeds. Now whatever 10 lakh rupees each member is contributing to that joint venture, can it be treated as consideration for supply of service by joint venture? No. No, it is not supply of service. Why? Because it is purely a transaction in money. So members are contributing to the joint venturing, doing the business and sharing the proceeds. So this is purely a transaction in money. It is not supply of service. It is not at all a supply, first of all. It is not a supply. It is just a transaction in money. Now, let me tell you another case. Let us say, listen carefully, minute details are there here. A, B, C, and D. 4 people are there. They collectively created a joint venture. For this joint venture, operating member is one of the joint venture member. D is operating this joint venture. Now, what is happening is these people are creating a joint venture. Now, in this joint venture, D is using his own machinery. D is already having his own machinery. D is using his own machinery, and using that own machinery, he's doing that production or manufacturing, some activity he's doing. Now, whatever cost that has been incurred for the purpose of running his own machinery, that is getting recovered from the members of the joint venture. Sir, will that be treated as supply of service? Yes. In that case, it will be treated as supply of service. So here, the point of difference here is, here it is a supply, and on that transaction, GST will become applicable. Whatever amount that is collected from A, whatever amount that is collected from B, whatever amount that is collected from C and all, for running the joint venture, where D is using his own machinery for the purpose of running it. He's not purchasing any new machinery in the joint venture's name. D, one of the operating member, is using his own machinery and he's providing the services for which he's collecting the amount from other joint venture members. This is the consideration for supply, and on that consideration, GST will come. Okay, so this is one more important point. More we have understood in a detailed manner with the even more elaborated examples in our regular batch, but this is the gist of that circular. Okay, right. So what is the summary here? One simple logic you have to remember: when members of the joint venture are contributing the money in the name of the joint venture, when another new machinery has been brought, that is getting used for operations, and thereafter the shares, thereafter the revenue sharings are getting, thereafter the revenue shares are happening. That is not supply. That is purely a transaction in money. On the other hand, members of the joint venture have come forward. There is one operating member, but this operating member is not making any purchase of new machinery. This operating member is having his own machinery. He is using it. Thereafter, he is recovering the money from other joint venture members. That will be the supply of service, and on that GST will become applicable. Clear? Right. So like these two important circulars are there. So that also we have covered it. So now I will try to wind up this supply chapter by explaining one more section. Section 8 also will try to cover. Section 8, which is talking about composite supply and mixed supply. Quickly, we will try to do it. So on this, direct questions will not be there, but it will have linkages. On that, direct questions will not be there, but there will be linkages. Sir, what is a composite supply, sir? So composite supply means when you are getting a supply in which 2 or more taxable supplies of goods or services or any combination thereof you are getting. In a single supply, if you are getting not just one single supply, you are getting a combination of taxable supplies as a part of a single supply. That I call it as composite supply, provided if they are naturally bundled and supplied in conjunction with each other. So one very good example, whatever example I have used in the class, the same example I will use it here. Let us say you are going and purchasing a laptop with the vendor from the electronic store. Now he will ask you some price. For that price, he will supply you laptop bag, and also laptop charger. So as a part of the single supply, you are getting more than one taxable supply. So you are getting laptop charger, you are getting a laptop, you're also getting a bag. Yes or no? So like this, you are getting a combination of taxable supplies as a part of a single supply. So now this combination, whatever you are getting as a single supply, you are getting a combination. So this will either fall under composite supply or this will fall under mixed supply. Sir, when composite supply, when mixed supply, one simple logic: if you are getting a combination of taxable supplies for a single price, that will be treated as composite supply when they are naturally bundled with each other. When they are naturally bundled. So you are getting more than one supply. You are getting a combination of goods or services as a package. This will fall either under composite supply or under mixed supply. When composite supplies are very simple, if they are naturally bundled in the ordinary course of business, then I will call it as composite supply. Sir, when I can say it as naturally bundled? Very simple. Number one, the supplies are combined. Whatever supplies that are combined are of such a nature that one of them is a principal supply, whereas the other one is an ancillary supply. Out of the combination, whatever you have got, if you are able to decide that one of them is a principal supply, whereas the others are ancillary supplies. So if you take the same laptop example, you are getting laptop, charger, bag. So you tell me, in this package, are you able to identify any one such supply which is a principal supply, which is a main supply? Yes, you are able to identify. Which one is that? Laptop. Laptop is a principal supply. Yes or no? Laptop is a principal supply, whereas charger, bag, these are all ancillary. To make my principal supply more enjoyable, they have been provided. So then you can call them as naturally bundled. Or one more way of identification of composite supply is, everybody in the market is doing it, not just this vendor. If you go to any other vendor, every supplier will give you, if you're going and buying a laptop, every supplier will give you a bag. Along with that, he will also give you a charger. Or as a recipient, you are expecting them as a package. As a recipient, you generally expect that as a package. As a recipient, you don't want to buy the charger, laptop, bag separately. You always expect it as a package. Then also it can be called as naturally bundled. So like that, there will be few factors. Considering all that factors, you have to decide if you are getting a combination of supplies as a single package, are they naturally bundled or not? You have to check. So one important rule to decide whether it is naturally bundled or not is, if that combination is in such a manner that out of that, one element is a principal supply, one element is a main supply, remaining supplies are ancillary to it. Then we can call them as naturally bundled. And if they are naturally bundled, they will be treated as composite supply. And what will be the tax treatment, sir, if they are treated as composite supply? If they are treated as composite supply, what will be the tax treatment is, whatever is the rate of, whatever there is a principal supply is there, that entire supply will be treated as principal supply only. So now in my laptop charger bag example, what is the principal supply? Laptop, no? So that entire supply will be deemed as supply of laptop only. So whatever rate that is applicable for my principal supply, the same rate will be applied on the total value. So let us say they are selling that for 1,20,000. For this 1,20,000, you are getting a laptop also, you are getting a charger also, you are getting a bag also. Let us say laptop attracts 18%, charger attracts 12%, bag attracts 5% only. But this entire 1 lakh, since it is a composite supply, this entire 1,20,000 will be treated as supply of principal supply, which is laptop only. Whatever rate that is applicable for laptop, that rate will become, 18%. Whatever rate that is applicable for laptop on this entire 1,20,000 rupees, that 18% rate only will become applicable. Understood? Then, sir, when mixed supply, in case if you are getting a combination, but if it is not naturally bundled, if it is what? Not naturally bundled, if it is artificially bundled, then we will classify it as mixed supply. Sir, what do you mean by not naturally bundled? Not naturally bundled, that means every product is having its own significance. Like if I have to give you one example, one common example, which I use it in the classroom as well. Let us say one Diwali package. Cadbury is selling one Diwali package where it will have 4 compartments. One will contain sweets, one will contain chocolates, one will contain crackers, one will contain dry fruits. Like that, for one single price, you are getting one package. Now, for you are getting multiple supplies, you are getting a combination. You tell me, out of this combination, is there anything which is principal supply? No. Every product is having its own significance. There is no principal supply, there is no ancillary supplies. Since every product is having their own importance, here it is not naturally bundled. I can't classify it under composite supply. I have to bring it under mixed supply. So if it is not getting naturally bundled, it will be treated as mixed supply. Sir, if it is treated as mixed supply, what will be the tax treatment, sir? Very simple. So multiple products are there. No, in my package, 4 products are there, A, B, C, D. They are all artificially bundled. Determine individual rates. Let us say product A attracts 18%, product B attracts 5%, product C attracts 40%, product D is going to attract only 12%. So like that, artificial bundling has happened. Now this package is getting sold for 50,000 rupees. They say that this entire 50,000 treated as supply of that particular product which attracts the highest rate of GST. So which product is attracting highest rate of GST? C. So this entire 50,000 will be deemed to be the value for making a supply of product to C only. Whatever rate, whatever highest rate is there, that rate will be multiplied on the entire value. That rate will be multiplied on entire value. So entire 50,000 rupees will attract the GST at the rate of 40%. Able to understand? So this is what composite supply and mixed supply. Not that important. They will not ask a direct question from composite and mixed supply, but you have to have this discussion at the back of your mind. Why? Because this composite supply, mixed supply also, we are going to use it till our last chapter. At all chapters, it will have significance. Understood? So this is what important content from section number 8. So we have covered only supply chapter here, but before that we have understood the overall structure of the GST, overall system of the GST we have understood. Thereafter we have covered the supply chapter. What is supply, what is not supply, so all that things we have covered it. Right, so with this I'm going to wind up this supply chapter. So now what we will try to do, So how much time is left? So till 12 we are supposed to have it. So we'll do one thing. We'll try to wind up our session today here. Here itself we'll try to wind up the session being the first day. So we'll wind up the session here because anyhow I have only half an hour of time left. Even if I continue also, I will have to stop the registration chapter somewhere in between. I would have to stop. So that's why I don't want to have the breaks even in the marathon as well. So that's why. Okay, good morning everyone. I hope you guys are all doing good. I hope you guys are all perfectly fine. I do wish and hope that your preparation is going on well. So now welcome back to one more day of this final IDT marathon. So without any delay further, let us go into the topic. Let us start our revision without any delay. So in the previous session, what we have completed is first I gave you the entire overview and some basic things which we need to have a hold in order to have seamless discussion going forward. So some essential things and all we have covered. Thereafter, we took the supply chapter and that supply chapter also we have revised successfully. Right. So now what we are going to do is, since we are done with the intro and also the supply chapter revision, so now the next chapter which we are going to pick up for revision is going to be registration. So registration chapter we are going to pick up for a revision. So where this registration chapter fall into the entire GSA system, like if you remember the yesterday's intro session, whatever we had, in that I have told you that even though goods and services or both are there, even though supply has taken place, that supply should be a taxable supply and that supply should be weighed by a taxable person, then only GST will become applicable. So like that I have give you one structure, right? So there I have told what is the meaning of taxable person. There I mentioned that taxable person means the person who is already registered under GST law or the person who is liable to get registered under GST law, that we call that person we call him as taxable person. So now the question will come, sir, when a person will become liable for registration? When a person will become liable for registration, that's what we are going to see it in this chapter. Now see, once again, before I go into the chapter, let me give you one caution. There will not be a straightforward question from this chapter, but from this chapter there will be linkages. Definitely in many questions you will be able to find the linkages with this chapter, registration, when a person will become liable or not. So there will be linkages with this chapter in questions which you are going to face in your exam, and also there will be MCQs. There could be dedicated MCQs regarding this registration chapter, but definitely one aspect relating to the registration chapter will be compulsorily tested in your exam, not as a standalone question. So they might not ask you one standalone question from the registration chapter, just giving you a scenario where they will ask you whether a person will be liable to be registered or not. Like that they will not ask you, but connection will be there. Definitely in the comprehensive question or in other questions there will be connections, 100% connections will be there. MCQs also could be tested. So having said that, so I'm not going to go into all that procedural formalities and all. So we are going to see the relevant things which are relevant for your relevant at the final level, that we will try to cover it quickly. Right. So first I would like to start with when a person will become liable for registration. Right. So here I have one summary. From the summary I will take the help and I will try to do it. Just give me 1 minute. Right. So first, I will be starting with when a person will become liable to register under section number 22. See, as a part of this registration chapter, there are some important sections which we have to learn. So the three important sections which you have to learn is section number 22, section number 23, section number 24. Section number 22 will talk about the usual circumstances when a person will become liable for registration. When a person will become liable for registration in the usual circumstances. So then that we are going to see it in the section number 22. Then 23 will talk about the persons who are not liable for taking registration, the person who are the people who are exempted from taking registration. Then we have section number 24, which talks about the persons who are liable for taking compulsory registration. So these three are the main sections which we are going to cover. Section number 2, section number 22, when a person usually will become liable for registration. Section number 23, who are the people who are not liable for registration. Then we have section number 24, which is talking about the persons who are liable for compulsory registration. So first I will be addressing section number 22. So under section number 22, when a person will become liable for registration. So this is what I have given. So under section number 22, a person will become liable for registration. They say that a person will become liable for registration when their aggregate turnover exceeds the applicable threshold limit. When the person's aggregate turnover exceeds the applicable threshold limit. So one important thing which we have to learn here is, sir, what is the meaning of aggregate turnover? So they are saying that as a person, as a business person, you will become liable for registration under GST Act when your aggregate turnover exceeds a certain limit. We are keeping one limit. When your aggregate turnover exceeds a specified limit, then you will be liable for registration. Now a doubt will come, sir, what is the aggregate turnover? So this definition is very important at various instances in order to determine eligibility, applicability. At various instances, whenever a person's eligibility or applicability for certain things has to be decided, under GST Act, they will always try to link that applicability with the aggregate turnover. So it is very important for us to know what is aggregate turnover, what will be included, what will not be included in the aggregate turnover. So just we will have a quick look here. Sir, what will get included in the aggregate turnover? It includes all taxable supplies. All kinds of taxable supplies will be included in the aggregate turnover. Even it includes exempt supplies. Like in the previous session I have told, sir, what is the meaning of exempt supply? It includes nil rated supply. It includes wholly exempted supplies. It is also going to include non-taxable supply. So even exempt supplies also you are required to include in your aggregate turnover. Export of goods or services or both. In case if a taxable person, in case if a business person is doing exports also, even that exports also will be included in the aggregate turnover. And interstate supplies of the persons having same pan, like if you remember para number 2 of the schedule 1, so supply between related person, distinct persons, we have seen, no. So like that, in case if you are making any supply to a person under same pan, so to your distinct person, if you are making interstate supply, that will also be included in your aggregate turnover. So these are all that will be included in aggregate turnover. So 4 things will be included. Tell me what are that 4 things which will be included. Number 1, all taxable supplies. Thereafter, exempt supplies, exports, interstate supplies between the persons having the same pan. However, while calculating that aggregate turnover, what things you are required to exclude? See, when I say aggregate turnover, that aggregate turnover is a figure exclusive of taxes. So that's why if any CGST, SGST, UTGST, IGST, cess is there. So whatever taxes under GST Act and GST compensation says, that taxes you have to exclude it. Why? Because when I say aggregate turnover, we are calculating the turnover exclusive of taxes. So that's why exclude the tax component. And also value of inward supplies on which a tax is payable under RCM. Sir, what they are trying to say, let us say for example, there is a supplier, there is a recipient, some supply has taken place and this supply is notified under reverse charge mechanism. On this supply, GST is required to be paid by the recipient under reverse charge mechanism. Let us say 1 lakh worth of supply has taken place, but it is getting covered under RCM. So on this supply of 1 lakh, 18% is the applicable rate of GST. That GST is paid by the recipient to the government. So this 1 lakh rupees of supply has taken place, no? Now the question is, this 1 lakh rupees worth of supply, which is getting covered under RCM, should it be included in the supplier's turnover or should it be included in the recipient's turnover? So I'm asking you a question. In case if there is a supply which has taken place, which is getting covered under RCM, where the recipient will be liable to pay the GST under reverse charge mechanism, this supply will be included in whose turnover? Will it be included in the supplier's turnover or will it be included in the recipient's turnover? It has to be included in the supplier's turnover only. So when we say aggregate turnover, we are talking about the outward supplies, not inward supplies. Maybe here the recipient is liable to pay the GST on that inward supply under RCM, but it will not get included in the recipient's turnover. It has to be included in the supplier's turnover only. Okay, so that's why value of inward supplies. So inward supplies on which a recipient is liable to pay under RCM, that should not be included in the recipient's turnover. It should be included in the supplier's turnover. So these 2 items are required to be excluded. Sir, what else, sir? When I say aggregate turnover, it has to be calculated on all India basis. So if you are having multiple places of business in multiple states, state-wise you have to do the calculation, then you have to aggregate all that state levels turnover. So on all India basis, you have to compute that aggregate turnover. Then it includes all supplies made by taxable person, whether on his own account or on behalf of principals. So it also includes, if you are an agent, whether you are making the supply on your own account or you are making the supply on behalf of your principal, it will be included in your turnover only. And also value of goods after completion of job work. Let us say if you are a principal and you have sent some goods for job work to the job worker. So now that job work has been completed. Thereafter, from the job worker's premises, directly it is getting supplied to the customers. So you are a principal, you sent some goods to the job worker. Now once the job work gets completed, the goods are directly sent from job worker's premises to the customer. So now that sale has happened from the job worker's premises directly. That will be included in whose turnover? That will be included in the principal's turnover only, not job worker's turnover. This is also one more minute point which you need to keep in mind while calculating aggregate turnover. So in case if a principal has sent the goods to the job worker for job work, and after completion of the job work, if the goods are getting sold directly from the job worker's premises, agreed that sale is happening from the job worker's premises, but that will be included in the principal's turnover, not the job worker's turnover. Clear? So this is how you are required to calculate aggregate turnover. Now why we have understood aggregate turnover? Why? Because section number 22 says that you will be liable for registration only when your aggregate turnover exceeds the applicable threshold limit. So we have seen how to calculate the aggregate turnover. So once we have calculated the aggregate turnover, that aggregate turnover is required to be compared with the applicable threshold limit. Sir, what is that applicable threshold limit? What threshold limit will be applicable? What is that limit in which case if your turnover exceeds that limit, you will be liable for registration? So here I have one format here, the same thing which you are required to follow. So what is the applicable threshold limit? So in case where first you have to calculate aggregate turnover, then you have to check that whether the taxable supply, is the business person making a taxable supply from MMNT. Is a business person making a taxable supply from MMNT? Sir, what is MMNT? So here I have given the breakup. If you can refer to the materials if you want. So Manipur, Mizoram, Nagaland, Tripura. Manipur, Mizoram, Nagaland, Tripura. So you need to check first. Once you have calculated aggregate turnover, then you need to check whether is he making any taxable supply from MMNT. Yes, he is making the taxable supply from MMNT. Then applicable threshold limit will be 10 lakh rupees only. Then applicable threshold limit will be 10 lakh rupees. That means if you have calculated aggregate turnover, thereafter you have checked is his aggregate, is he making any taxable supply? Yes, he is making a taxable supply from Manipur. Then the applicable threshold limit will be 10 only. That means if his aggregate turnover exceeds that 10 lakh rupees, whether he is engaged in supply of goods, whether he is engaged in supply of services, or he is engaged in supply of both. So in case if he is making a taxable supply from MMNT, the applicable threshold limit is going to be 10 lakh rupees only. So that means if his aggregate turnover exceeds 10 lakh rupees, he will be liable to take registration. He will be liable to take registration. And where he will take registration, sir? In every state or union territory from wherever he is making a taxable supply. So GST registration is going to be state specific. It is not something like centralized registration where you will take one registration which will be applicable all over India. Like that, it is not that. GST is a state-wise registration. So once you are, in case if you are making taxable supply from MMNT, if your aggregate turnover exceeds the 10 lakh rupees, in every state and union territory from wherever you are making a taxable supply, you are liable to take registration. Then, okay, sir, I have calculated my aggregate turnover. Then I check the first condition. Is he making any taxable supply from MMNT? The answer is no. No, sir, he is not making any taxable supply from MMNT. Then what will happen? Next thing what you need to check is, okay, he's not making taxable supply. Now you come to the second point. Then you need to check whether is he making any taxable supply from UP Mats. You need to check whether he is making any taxable supply from UP Mats. Sir, what is UP Mats? UP Mats means 6 states they have told us here. So if I have to tell you the full form of mnemonic which I have used, Uttarakhand, Puducherry, then we have Meghalaya, Arunachal Pradesh, Telangana, Sikkim. So whether in case if you are not making, so only when the first point is not satisfied, then we will come to the second point. So first we will check whether he is making any taxable supply from MMNT. No. If I get the answer as no, no sir, he is not making any taxable supply from MMNT, then you come to the second point. You need to check whether he is making any taxable supply from UP Mats. Uttarakhand, Puducherry, Meghalaya, Uttarakhand, Puducherry, Meghalaya, and Arunachal Pradesh, Tripura, and Sikkim. Sorry, Telangana and Sikkim. So, in case if he is making any taxable supply from any of these 6 states, if the answer is yes, then the applicable threshold limit is going to be 20. So, whether you are engaged in supply of goods, or you are engaged in supply of services, or you are engaged in supply of both. So in case if you are not making taxable supply from MMNT, but you are making taxable supply from UP Mats, then the applicable threshold limit is going to be supply, whether you are engaged in supply of goods, or you are engaged in supply of services, or you are engaged in supply of both. The applicable threshold limit is going to be 20. In case if your aggregate turnover exceeds the 20 lakh rupees of threshold limit, you will become liable for registration, sir, where I have to get registered. Once again, same in every state or union territory from wherever you are making taxable supply, in all that states or union territories, you have to take the registration. Next, no sir, first condition is also not satisfied, second condition is also not satisfied. I am not making any taxable supply from MMNT, sir. I am also not making any taxable supply from UP Mats also, sir. I am not making any taxable supply from MMNT. I am also not making any taxable supply from UP Mats. Sir, then what? Then directly you come to the third point. That means you are making taxable supply from other states other than MMNT, other than UP Mats. So in those circumstances, I need to check, am I exclusively engaged in supply of goods? Is the person exclusively engaged in supply of goods? Then the threshold limit is going to be 40. Then the threshold limit is going to be 40. So if you are not making any taxable supply from MMNT, if you are not making any taxable supply from UP Mats, that means you are making taxable supply from other states. But if you are exclusively engaged in supply of goods only, you are not making any supply of services, if you are exclusively engaged in supply of goods only, then what will happen? So that applicable threshold limit is going to be 40 lakh rupees. If your aggregate turnover exceeds applicable threshold limit of 40 lakh rupees, then only you become liable for registration. But that enhanced threshold limit of 40 lakh rupees will become applicable only for those business person who are exclusively engaged in the supply of goods only. If you are exclusively engaged in supply of the goods, then only that enhanced threshold limit of 40 will become applicable. In case if you are making supply of services, or if you are making supply of both, that means if you are engaged in supply of services also or supply of goods and services both, then the applicable threshold limit is going to be 20 only. So you will be eligible to enjoy the enhanced threshold limit only when you are exclusively engaged in supply of goods. In case if you are engaged in supply of services, or if you are engaged in supply of both, then the applicable threshold limit will get reduced to 20 lakh rupees only. And here there are a few more things which we need to understand it here. In case if you are not making taxable supply from MMNT, in case if you are not making taxable supply from UP Mats, even though you are exclusively engaged in supply of goods, generally speaking, you will be eligible to enjoy the enhanced threshold limit of 40, but there are some exceptions. That means even though you are exclusively engaged in supply of goods also, even though you are not making any taxable supply from MMNT, even though you are not making any taxable supply from UP Mats, but still in some circumstances you can't enjoy that enhanced threshold limit of 40, your threshold limit will reduce to 20 lakh rupees only. Sir, what are that exceptions? Where even though I'm engaged in supply of the goods, I can't enjoy the enhanced threshold limit of 40. My applicable threshold limit will get restricted only to 20. When, sir? So what are that exceptions? Number one, in case if you are a person liable for compulsory registration. So we are going to see section number 24. There they have given a list of people who are liable for compulsory registration. So in case if you are a person liable for compulsory registration under section number 24, no limit, nothing will be seen for you. Directly you become liable for registration. Similarly, if you are a person engaged in making supplies, so they use the phrase here, if you are a person engaged in making supplies. When I say making supplies, it could be either manufacturing or it could be trading. So if you are a person engaged in making supplies of what, sir? These specified products. What are they? Ice cream, pan masala, tobacco and tobacco products, fly ash, bricks, blocks or aggregate, bricks of fossil mills or siliceous earth, building bricks, earthen or roofing tiles. So if you are either engaged in manufacturing, sir, I am not manufacturing, I am only doing trading. Yes, still. So if you are engaged in making supplies of any of these 7 products, then you become ineligible for enhanced threshold limit of 40. Your applicable threshold limit will get reduced to 20 lakh rupees only. Okay, next, a few more exceptions. In case if you are making any interstate supply, then you anyhow will become compulsorily liable for registration. If you are making an interstate supply, so then also you become ineligible for enhanced threshold limit of 40. But this we need not read it separately. Why? Because if you are making any interstate supply, automatically you will get covered under section number 24. You become anyhow liable for compulsory registration. Thereafter, in case if you are a person who has taken voluntary registration, so let us say you are not liable for registration, your turnover did not exceed the applicable threshold limit, but you voluntarily went and took the registration, then what is the purpose of seeing any limit for you? Not required. So these are the exceptions. This is very important. So sometimes you will not be engaged in making any taxable supply from MMNT. You are not engaged in making any taxable supply from UP Mats. You are exclusively engaged in supply of the goods also. Practically speaking, you should be eligible for enhanced threshold limit of 40. But in some circumstances, that 40 lakh rupees of limit will not become applicable. Only your applicable threshold limit will get reduced to 20 lakh rupees. So what are that circumstances? These are the exceptions for enhanced threshold limit of 40. Okay, right. So this is what, simply if I have to put it, 22 subsection 1 says. So these are the circumstances when a person will become liable for registration under section 22 subsection 1. Okay, so few more things if I have to talk under section number 22. Few more things if I have to talk under section number 22. There are other subsections also. 22 subsection 3. Sorry, 22 subsection 2. So 22 subsection 1 talks about the turnover limit. When a person's aggregate turnover exceeds the applicable threshold limit, then he will become liable for registration. Under section number 22, we have various other subsections also which are talking about cases where a person will become liable for registration. So first, if you see 22 subsection 2, they say that every person who on day immediately preceding the appointed day. Sir, what is appointed day? The day on which GST has came into force. That is on 1st of July 2017. So though the day on which immediately preceding the appointed day, that means as on 30th of June, as on 30th of June 2017, if a person is already registered or if is already holding a license under any existing indirect tax law, if a person is already registered or holding some license under already existing indirect tax laws, then with effect from the appointed day, that means with effect from 1st of July 2017, you become liable for registration under the GST Act. No turnover limit, nothing will be seen. Since you are already registered under existing indirect tax laws, you become liable for registration under GST automatically. Similarly, on transfer of business, in case if the business is getting transferred, when I say transfer, it could be succession, it could be ownership change, or it could be even death of a sole proprietor. That means his business is getting taken over by his legal representatives. So in case of transfer of business as a going concern, then what will happen? Then the transferee will cancel his registration and the transferor is liable to take new registration. In case of transfer of business, the person, whoever is transferring the business, the transferor will cancel his registration and the transferee to whom the business is getting transferred, he has to take a fresh registration. Next, and similarly, in case of business transfer because of amalgamation or demerger because of an order of court or tribunal, if amalgamation is happening, two companies are getting amalgamated into one, or demerger is happening, one company is getting split into two. So if this amalgamation or demerger is happening because of order of a court or tribunal, in that case is also the transferee. In case of amalgamation, the amalgamated companies. In case of demerger, the resulting companies, who they will be the transferee, they must register with effect from the date of issuance of registration certificate of ROC, certificate of incorporation. So that newly amalgamated company or that newly resulting companies, with effect from the issuance of ROC's certificate of incorporation, from that date the transferee will become liable for registration. Clear? Right. So this is what regarding section number 22, usual circumstances where a person will become liable for registration. Now we will see section number 24. Sir, what is section number 24 talking about? Section number 24 is talking about the instances where a person will become liable for compulsory registration. So when I say compulsory registration, your turnover limit and all these things will not be seen. You become liable for compulsory registration irrespective of your turnover. Nothing will be seen here. You have to take compulsory registration in case if you are falling under section number 24. Sir, who are that people who are liable to take compulsory registration? Number one, if you are a person making any interstate taxable supply. First category of persons who are liable for compulsory registration, who are they? If you are making interstate taxable supply, sir, you are located in one state, but if you are making a supply to another state, that means if you are making any interstate taxable supply, you become liable for compulsory registration. But the government has given some relaxation. Initially they told the person whoever is making interstate taxable supply, they are liable for compulsory registration, but they have given some relaxations. Sir, what are that relaxations? First relaxation, they told, in case if you are making interstate supply of taxable services. You are making interstate supply, but you are not making interstate supply of the goods, you are making interstate supply of services. Okay, we will not make you liable for compulsory registration. You continue to enjoy that applicable threshold limit of 20 lakh rupees. We will not make you liable for compulsory registration. So initially what they told, the person, if you are a person making interstate taxable supply, you are liable for compulsory registration. But later they are giving relaxation. What relaxation they have given? Okay, no problem. In case if you are making interstate taxable supply of services, you can enjoy the threshold limit of 20. That means if you are making interstate supply of goods, then no threshold limit, nothing, you become liable for compulsory registration. So that is one relaxation. Thereafter, they have given one more relaxation for the person whoever is making interstate supply of goods also, but not for everybody. But for whom, sir? If you are a person making interstate taxable supplies of notified handicraft goods or notified handmade products up to 20 lakh rupees, you are not liable for registration. So let us say if you are a person who is making interstate supply of goods. So practically what they have told, only they have given relaxation for interstate supply of services. Sir, but I'm a person, I'm making interstate supply of goods, sir. I'm making interstate supply of goods. Generally, I become liable for compulsory registration. But department is saying, in case if you are making interstate supply of goods, but that goods whatever you are supplying are notified handicraft goods or notified handmade goods, which are predominantly made by hand. You are making interstate supply of goods, agreed. Generally, you should become liable for compulsory registration. But in case if the goods whatever you are making a interstate supply, the goods whatever you are making an interstate supply, if they are either notified handicraft goods or if they are notified handmade goods which are predominantly made by hand, then we will let you enjoy that threshold limit of 20 or 10 in case of MMNT, and remaining in all other circumstances 20. So you need not take compulsory registration. So to protect that or the handicraft industry, handmade products industry, they have given that relaxation. But however, that person will be required to fulfill some conditions. The person whoever is making that interstate supply of notified handmade or handicraft goods, he is required to fulfill some conditions. Sir, what are that? Number one, his aggregate turnover should not exceed 20 or 10. So if his aggregate turnover anyhow exceeds 20 or 10, he become liable for registration. And he must have a PAN. He must have a PAN and he must generate an e-way bill. E-way bill is compulsory without any limit. Generally, e-way bill will become applicable only when the threshold, only when the consignment value is more than 50,000. But in case of this person who is making interstate supply of notified handicraft goods or handmade goods and who is enjoying the relaxation of not taking registration, so that person must have a PAN and he must compulsorily generate the e-way bill without any consignment value limit. Even if he is transporting 10,000 worth of goods of notified handicraft products also interstate, he is liable to generate an e-way bill. Okay, right. So this is the first category of persons who are liable for compulsory registration and related exemptions. Next one, second category of persons who are liable for compulsory registration, they told CTPs, making taxable supply. If you are a casual taxable person and if you are making a taxable supply, then also you are liable for compulsory registration. So as you all are aware, CTP, what do you mean by CTP? A person who doesn't have a fixed place of business in one state. So casually he is coming to another state, making a supply and he will go back to another state. That person we call him as CTP. So in case of CTPs also, they told in case of CTP making taxable supply, you are liable for compulsory registration. But however, even for one kind of CTP, they have given relaxation. So practically speaking, a CTP is liable for compulsory registration. But what they have told, even for CTP also, they have given relaxation. What relaxation? If you are such a CTP who is making interstate supply of notified handicraft goods or notified handmade products, then you are not liable for registration unless and until your aggregate turnover exceeds that 20 lakh rupees or 10 lakh rupees. So whatever relaxation they have given to a normal person who is making interstate supply of notified handmade products and notified handmade goods, the same relaxation even they have given it for CTP who is making interstate supply of notified handmade products or notified handicraft goods. So they need not they did not get liable for compulsory registration unless and until their aggregate turnover exceeds 20 lakh rupees or 10 lakh rupees. But here also these CTPs also must have a PAN and they must have generated the e-way bill. That condition will be applicable here as well. Right. So second category of person who is liable for compulsory registration we have covered. Then third category of persons who are liable for compulsory registration is if you are a person who is required to pay tax under reverse charge mechanism on inward supplies. So what they are saying, if you are a recipient, if you are receiving some inward supplies, when I say inward supplies, it could be supply of goods also, it could be supply of services also. So if you are a recipient on your inward supplies, if you are liable to pay GST under reverse charge mechanism, if you are a recipient on your inward supplies, if you are liable to pay GST under reverse charge mechanism, then this recipient is liable to take compulsory registration. His turnover limit and all will not be checked. Because in case of RCM, recipient is liable to pay the amount of GST to the government. If recipient is liable to pay the amount of GST to the government, he is required to be registered. So that's why they have told if you are a recipient who is receiving inward supplies on which you are liable to pay the GST under reverse charge mechanism, you are liable, that recipient is liable for compulsory registration. So this recipient is required to get compulsory registration. Now there is one relaxation given for supplier. There is one relaxation given for supplier. So what relaxation they have given is if you are such a supplier, if you are making various outward supplies, but all that outward supplies are getting covered under RCM. If you are a supplier, if you are making various outward supplies, but if all your outward supplies are getting covered under RCM, that means you are making all outward supplies. On all that outward supplies, your recipients are only discharging the GST under reverse charge mechanism. You don't have single outward supply on which you are required to pay the GST under forward charge mechanism. You are not having a single outward supply where you are required to collect the amount of GST from your recipient and pay it to the government. Then what is the purpose of granting you registration? Not required, no. So that's why they have given relaxation to these suppliers. Recipients will be liable to pay. Recipients who are liable to pay GST under RCM, they are required to undergo compulsory registration. But they have given relaxation to the supplier. If you are such a supplier who is making outward supplies, but all your outward supplies are getting covered under RCM, you don't have a single outward supply on which you are required to collect the GST and pay to the government. No need for any registration. So that's what the exception they have given to the supplier. So we can go and refer to this A point here. So persons making only reverse charge supplies, they are talking from the supplier's perspective. If you are having only outward taxable supplies which are covered under RCM, then as a supplier you are not required to take any registration. Thereafter, NRTP, if you are an NRTP making a taxable supply, you are liable for compulsory registration. CTP, NRTP, we'll see in a short while. Some procedure is there that we'll talk about it. So CTPs and NRTPs they are liable to undertake compulsory registration. Then we have e-commerce operator. So today e-commerce business has become part and parcel of our life. So even they have put the responsibility of compulsory registration on the e-commerce operator. Even the e-commerce operators are also liable to take compulsory registration. But which kind of e-commerce operators, sir? So they have spoke about two kinds of e-commerce operators. Who are they? So those e-commerce operators who are required to collect TCS under section number 52. If you are such an e-commerce operator who is required to collect TCS under section number 52, we will see who are that e-commerce operator who are required to collect TCS under section number 52 in the TCS chapter. Okay. Then e-commerce operator dedicated chapter we have, there we will see. Similarly, if you are an e-commerce operator who is required to pay tax on notified services under 9 subsection 5, like in the previous session I have told, there is one more mechanism. One is forward charge mechanism, one is reverse charge mechanism, and one more mechanism is 9 subsection 5 mechanism, where neither the supplier nor the recipient will pay the amount of GST. E-commerce operator will directly pay the amount of GST, yes or no? So if you are such an e-commerce operator who is required to pay GST under 9 subsection 5, or if you are such an e-commerce operator who is required to collect TCS under section number 52, you will be liable for compulsory registration. Not just to the e-commerce operator, what they have told is even the suppliers who are making supplies through the e-commerce operator who is required to collect TCS under section number 52. Anyhow, that e-commerce operator who is required to collect TCS under section number 52, he will get himself liable for compulsory registration. But not just the e-commerce operator, the suppliers who are making supply of goods or services through the e-commerce operator who is required to collect TCS under section number 52, even these suppliers are also liable for compulsory registration. Even these suppliers, even that suppliers of goods and services who are making supplies through the e-commerce operator is also liable to get compulsory registration. But however, they have given relaxation. But however, what they have told, they have given some exceptions to these suppliers who are making supply of goods or services through the e-commerce operator. For them, they have given registry. For them, they have given relaxation. Sir, what relaxation they have given? Whatever relaxations that are available for normal suppliers, the same relaxations have been given for them as well. Sir, what relaxations are given for normal suppliers? That means if you are a supplier making supply of services through the e-commerce operator, and if you are making interstate supply of services or intrastate supply of services, then you are not liable for registration. That is a normal relaxation given to a usual supplier, no? So same relaxation they have given. So if you are a person making supply of services through the e-commerce operator, okay, we will consider you. You are not liable for registration up to 20 lakh rupees or 10 lakh rupees, whether you are making interstate supplies or intrastate supplies. Sir, if I am a person engaged in supply of goods, sir, in case if you are a person engaged in supply of goods and you are making supply through the e-commerce operator, then also you are not liable for any registration, provided your aggregate turnover does not exceed that 40, 20 or 10, depending on the applicable threshold limit. And also, you should not make interstate supply here. You should not make interstate supply. If you are a supplier of goods, supplying the goods through e-commerce operator, you should not make interstate supply. Why? Because if you are a normal person making interstate supply, you will become liable for compulsory registration. No, the same thing they are bringing it here also. So even through the e-commerce operator also, if you are making only intrastate supplies, if your aggregate turnover is up to 40, 20 or 10, you are not liable for registration. But in case of supplier of services who is providing services through the e-commerce operator, whether you are engaged in interstate supplies or intrastate supplies, you can enjoy the threshold limit of 20 or 10. Okay, right. So that's what exceptions you will be able to find it here. So point E and F. So anyhow, this you will get more clarity when we cover the e-commerce operator chapter. So that's what this E and F points are talking about. Then, so let us come to a few more categories of the persons who are liable to undergo compulsory registration. Number one, persons who are required to deduct TDS under section number 51, whether or not separately registered under this act. So those people who are required to deduct TDS under section number 51. Sir, who are that people who are liable to deduct TDS? That also we are going to see. So in the payment of taxes chapter, we are going to have one topic regarding TDS. There we will see who are that people who are liable to deduct TDS. So, but if you are a person who is liable to deduct TDS under section number 51, you are liable to undergo compulsory registration without any limit. Next, persons who make taxable supply of goods or services on behalf of other taxable person, whether as an agent or otherwise. So they are saying that, let us say, if you are an agent, if you are making supply on behalf of principal, if you are making a supply on behalf of principal, then you will become liable for compulsory registration. This agent will become liable for compulsory registration. But when, sir? Only when two conditions are fulfilled. Number one, whatever supply he is making on behalf of his principal, that supply should be a taxable supply. And his principal on whose behalf you are making supply, that should be a taxable person. That principal should be a taxable person. So then only agent will become liable for compulsory registration. So they are saying agent will become liable for compulsory registration, but only those agents. But agent will become liable for compulsory registration only in two circumstances. What are the two conditions? Number one, so whatever supply that agent is making, that supply must be a taxable supply. On whose behalf he is making that supply as an agent, that principal must be a taxable person. So only those agents who are making a taxable supply on behalf of a taxable person, then only those agents will become liable for compulsory registration. Next one. Other categories of the persons who are liable for compulsory registration. Every person supplying OIDR services, online information database access and retrieval services, from a place outside of India to a person in India other than registered person. Netflix, Amazon Prime, these are the people who are providing OIDR services to the people in India from a place outside of India. Netflix is outside of India. From a place outside of India, they are providing OIDR services to India, to a people located in India who are not registered. Let us say like you and me, we are taking Netflix subscription. So a person, OIDR service provider located outside of India, they are providing services to a person in India who is unregistered. So even that Netflix is also required to take compulsory registration. Then ISD, input service distributor, whether or not separately registered under GST. In the input tax credit chapter, I'm going to tell you about this ISD. So even input service distributors are also liable to get compulsorily registered. And every person supplying online money gaming from a place outside of India to a person in India. If you are a person providing online money gaming services from place outside of India to a person in India, liable for compulsory registration. Or so these are all till now notified, or any other class of persons or persons as may be notified by the government on the recommendations of the council. So till here the list is already notified, but they have one more residuary power. They have reserved one more power. So by way of this point number 11, the government is reserving the power in future. If the government wants to notify any new persons or other class of persons in order to be liable for compulsory registration, they can bring new people also under this category. Okay, right. So this is what regarding the persons who are liable for registration compulsorily, and related relaxations also we have seen. Now what we will try to do is section number 23 we will try to do. So what section number 23 will say is the person who are not liable for registration. It will specifically talk about the persons who are not liable for registration. Sir, who are that people who are not liable for registration? Number one, if you are a person exclusively engaged in business of supplying goods and or services which are not liable to tax or wholly exempt from tax. Let us say you are a business person, you are making only exempt supplies. You are making only exempt supplies. When I say exempt supplies, you are making only wholly exempted supplies. Let us say you are supplying only X are wholly exempted. So your turnover is 100 crores, not liable to pay, not liable to take registration, because whatever supply you are making, that is purely a exempt supply. Or let us say you are running a bar, where you are running a bar where you are selling only alcoholic liquor for human consumption. So that alcohol in that bar, you are selling only alcoholic liquor for human consumption. Your aggregate turnover has exceeded 5 crores. Still you are not liable to take registration. Why? Because wholly you are engaged in non-taxable supply. Similarly, if you are exclusively engaged in only nil rated supplies also, then also you are not liable for taking registration, irrespective of your whatever your turnover is. So that's what they say. If you are a person who is exclusively engaged in business of supplying goods or services which are not liable to tax or which are wholly exempt from tax, no need to take registration. Unnecessary, no. The logic here is the registration is unnecessary. Even if you take registration also, you're not going to pay any amount to the GST. Then what is the purpose of having the registration? That's it. Next, one more category of the person who has been exempted from taking registration is if you are an agriculturist, to the extent of supply of produce out of cultivation of land. If you are an agriculturist and if you are making supply out of produce out of cultivation of land, so whatever produce you had from cultivation of land, that only you are making a supply, then you will be exempted from taking registration, no matter how much amount of turnover you have made from that produce out of land. But here, sir, who is agriculturist? That we have to remember. Not everybody. The agriculturist status will be given only for individual or HUF. So who will be able to enjoy that status of agriculturist? Individual or HUF. So only individual or HUF will be exempted from taking registration. So if, let us say for example, if they created a partnership firm where a group of people have become partners and in the name of the partnership firm they are carrying out agricultural activity, can they enjoy this relaxation from taking registration? No. Why? Because in the definition of agriculturist, they have told that only individual person or HUF, they will only be recognized as agriculturist. So what is agriculturist? So it is an individual or HUF who undertakes cultivation of land either by their own labor. By their own labor they are doing the cultivation, or by labor of their family, or by servants on wages payable in cash or kind, or by hired labor under personal supervision or personal supervision of any of the members of the family. And one more point you are required to remember here. See, if the agriculturist is making supply out of produce out of cultivation of land, then only he will be exempted from registration. In case if the agriculturist, in addition to making supply out of cultivation of land, if he is making any other supply, then he will become liable for registration. Let us say for example, there is an agriculturist, he is having cultivation out of land. In addition to that, he is also making supply of rice. Rice is not an agricultural produce. Paddy is an agricultural produce, but rice is not an agricultural produce. So along with supplying paddy, he is also supplying some rice. So now he is not just making supply out of cultivation of land, he is also making supply other than out of cultivation of land. Then he will become liable for registration if his aggregate turnover exceeds the applicable threshold limit. So like this, two people have been specifically exempted from taking registration. Number one, if you are a person who is exclusively engaged in making wholly exempt supplies or non-taxable supplies. Number two, if you are an agriculturist to the extent of supply out of produce out of cultivation of land. Right. Next one. So this is what regarding section number 23. Fine. So now what we will try to do is section number 25, 26, 27 will talk about procedural formalities. Don't worry, they will not ask you procedural formalities at the CFN level, but there are few important things from this 25, 26, 27 that I will try to cover. So what is that is number one, when and where, or what is the time limit within which you have to apply for registration? What is the time limit within which you are required to apply for registration? In case if you are liable for registration under section number 22 or 24. So let me put it this way. In case if you are a person liable for registration under section number 22 or 24, let us say for example, so if you are a person liable for registration under section number 22 or 24, let us say if your aggregate turnover has exceeded the applicable threshold limit. So on one particular day, let us say for example, on 15th of January, your aggregate turnover has exceeded the applicable threshold limit, or you become liable for registration under section number 24. Let us say you are making interstate supply. Because of making interstate supply, you become liable for compulsory registration. So whenever you made that interstate supply, that will be the date when you become liable for registration. So on one fine day, you become liable for registration. Let us say on 15th of January, you become liable for registration. Now, what is the maximum time limit within which you are required to make an application for registration? So you are required to make an application for registration within 30 days. Within 30 days, you are required to make an application for registration. Sir, can't I make an application for registration beyond 30 days? No, you can even make an application for registration even beyond 30 days also, no issue. But what will happen is you will lose some benefits. So you must make an application for registration within 30 days. Let us say, for example, this person is making an application for registration on 30th of January. When he became liable for registration, 15th of January. When he is making application for registration, 30th of January. So within the time limit or beyond the time limit? Within the time limit. So within 30 days, he made an application for registration. Thereafter, procedural formalities and all will happen. And on one fine day, you will get your registration certificate. You will get your registration certificate. So let us say you got your registration certificate on 15th of February. That means you got your GSTIN number here on 15th of February 2020, 2000 something. So you got your registration certificate. So even though you got your GSTIN here, even though this is the date of grant of registration, but your registration will be effective retrospectively. Your registration will be effective retrospectively. So from this date itself, the registration will be deemed to have been effective. From the date when, whichever date you become liable for registration, from that date itself, it will be effective. Okay, so you got your GSTN number here, but still that GSTN will be effective retrospectively. So that means whatever supplies you have made from 15th of January till 15th of February, from the date you become liable for registration till the date you got the registration certificate, even for this duration also, you are liable to pay GST. But during this duration, since you don't have GSTIN, would you have collected GST? During this duration, you got your GSTIN number here, no. So, but from 15th of January, you become liable. So, from 15th of January till 15th of February, whatever supplies you have made, on that you would not have collected GST. So, you would not have collected GST. No issue. Now, what you can do is you can give something called revised tax invoices. You can give something called revised tax invoices. So you can give revised tax invoices charging the GST amount separately, and you can collect the amount and you can pay it. So like that, here revised tax invoices will be permitted. Okay, so whatever it is, this will be the position in case if you are making an application for registration within 30 days. If you have submitted the application within 30 days, this will be the case. Now, sir, what if I make an application beyond 30 days? What if I made an application beyond 30 days? Let us say, for example, you become liable for registration on 15th of January. You are submitting your application for registration on 28th of February. So this is the date when you become liable. This is the date when you made an application within 30 days or beyond 30 days, beyond 30 days. Then on one fine day, verification and all will happen and they will give you registration certificate. Let us say they granted your registration certificate on 15th of March. So this is where you got your GSTIN. So when this registration will be effective, from here only it will be effective. There will be no retrospective effect. From here only your registration will be effective. You will not have any retrospective effectiveness of the registration. So from this date itself, your registration will be effective. But when your liability will start from here only. See, whenever you become liable, from that date only your liability to pay GST will start. But you would have made the supplies from 15th of January till 15th of March. On that, are you liable to pay GST? Yes. But would you have collected GST? No, because you got your GSTIN only on 15th of March. Sir, can I issue revised tax invoice? No, you will lose your power to issue the revised tax invoices. You will lose your power to issue the revised tax invoices. Okay. And one more advantage is if you make the application within 30 days, one more advantage is one day before, that means you become liable for registration on 15th of January. No. So one day before, since you made an application within 30 days, one more benefit will be there. One day before the date you become liable for registration, that means on 14th of January, whatever stock of inputs, whatever inputs are there, which are in the form of stock, only inputs. That means whatever input goods you have, which are either in the form of stock, either in the form of semi-finished goods, either in the form of finished goods, that you can take ITC. That you can take ITC by submitting one form GST ITC 01. This anyhow we will see it in the ITC chapter, but I am connecting all the relevant provisions at one place. So in case if you become liable for registration and if you are submitting your application within 30 days and you got the registration certificate, one day before you become liable for registration, on that date, whatever inputs which are contained in stock, whatever inputs which are contained in semi-finished goods, whatever inputs which are contained in the finished goods, so on that you have to calculate the amount of GST on that whatever ITC, whatever GST is attributable, that you can take it as ITC. But in case if you have made the application beyond 30 days, you will lose that right to claim the GST on your stock. You can't claim the GST available on your stock. That right also you will lose it. So that's why if you want to enjoy all these benefits of revised tax invoice or availing the ITC on stock, which is there before I become liable for registration, if you want to enjoy all these benefits, you have to comply with the law. You have to submit an application for registration within 30 days from the date you become liable. Understood? Right. Next. So let us proceed further. Fine. And one more case here. In case of CTP or NRTP. In case of CTP and NRTP, you here usual time limit of 30 days from the date you become liable will not become applicable. CTP and NRTP, they are required to submit an application for registration 5 days prior to the commencement of business. So for CTP and NRTP, there is no 30 days of time limit will be given. CTP and NRTP, they are required to submit an application for registration 5 days, at least 5 days prior to the commencement of the business. Next. So one more point here. Sir, if I'm a person making supply from territorial waters, if I'm a person making supply from territorial waters, sir, what is this territorial waters and all? So let us try to understand the definition of India. What is the definition of India under the GST Act? So this we have to understand. So what is the definition of India? Definition of India means entire territory of India. Under GST Act, I'm saying. Under GST Act, what is the meaning of India? So under GST Act, what is the meaning of India? Means entire territory of India, entire landmass of India. Not just that, it includes even territorial waters also. Sir, what is territorial waters? From the coastal line, if you go up to 12 nautical miles, that I call it as territorial waters. Even that territorial waters also will fall under India definition. Below that, whatever soil, seabed is there, that will also fall under India definition. Not just that, it includes also exclusive economic zone. It includes also exclusive economic zone. Sir, what is exclusive economic zone? From the coastal line, if you go up to 200 nautical miles, from the coastal line, if you go up to 200 nautical miles, that area we call it as exclusive economic zone. That exclusive economic zone also will fall under India definition. Below that, whatever landmass we have, whatever soil we have, that we call it as continental shelf. What do we call it? Continental shelf we call it. Even that continental shelf also will fall under India definition. So what is included in India definition? It includes the territory of India. It includes the territorial waters, which will extend up to 12 nautical miles, and seabed subsoil below it. It also includes exclusive economic zone, and exclusive economic zones will fetch up to 200 nautical miles. And it also includes the continental shelf, land mass below that exclusive economic zone, that will also fall under India definition. Not just that, the airspace above territory and territorial waters. The airspace above territory of India and territorial waters, even that airspace above the territory of India and territorial waters, that will also fall under India definition. So now what they are saying is, let us say, now why I have explained you this is, let us say for example, in the 12 nautical miles, in the territorial waters, there is a person who is making a taxable supply. So who will generally make a taxable supply in the territorial waters is casinos. If you go to the Goa and all, within 12 nautical miles, you will be able to find some cruise ships. Inside that cruise ships, they will be running this casinos, where they will provide a bunch of services. There will be restaurant, there will be this actionable claims and all will be provided. So now this person is liable to take registration. This person is liable to take registration, but where he's located? He's located in the territorial waters. They don't have any place of business on land. They will have their place of business in water. In the territorial waters, they have this cruise ship which will be anchored, and in that cruise ship, they will provide that crew or restaurant services, casino services, and all. So now they become liable for registration. Here they are also required to submit an application for registration. But with whom they will submit an application for registration? With whom they will submit an application for registration. So here the act says these people who are located in territorial waters, they are required to submit an application for registration with the nearest state or union territory to the coastal line. So to the coastal, whichever is the nearest state or union territory to the from the coastal line, that will be with that state or union territory, they have to submit an application for registration. Let us say this casino is located in the territorial waters of Goa. So the nearest coastal line or territory is Goa. So they have to submit an application for registration with Goa. Goa is here. Don't say that, sir, you are saying territorial waters here. Here there is no Goa, no. Just for example sake I am saying. So let us say this vessel is located here. This vessel is located here. So whatever is the nearest coastal state or union territory, with that state or union territory, they have to submit an application for registration. Okay. But here also the time limit will be 30 days only from the date on which they become liable for registration. Next, as we have already told you, it is a state-wise registration and all these points we have already covered. So few more procedural formalities which I want to cover is, there is something called UIN. There is one more special registration called UIN. So what is this UIN is? See, we have UN bodies, United Nation bodies, we have multilateral financial organizations we have, and thereafter we have this foreign embassies, US embassy, US consulates, like that we have some specified international organizations. Now, whatever outward supplies which are provided by these UN bodies, multilateral financial organizations, or these foreign embassies or consulates, their outward supplies are exempted. Their outward supplies are exempted, but they will receive various inward supplies. No, these UN bodies, multilateral financial organizations, or this foreign embassies or consulate to run their operations in India, they receive various inward supplies. They might purchase the goods, they might purchase the services, they might need capital goods. Now, the government wants to give refund of GST, whatever they have paid on their inputs also. On their outward supplies, anyhow, they are exempted. Even the government wants to give refund of all the GST, whatever they have paid on their inputs, on their inward supplies also. Now, for that purpose of claiming of the refund of their GST on inward supplies, for these organizations like UN bodies, multilateral financial organizations, or these foreign embassies or consulates, for them, for the purpose of granting refund to them, they will also be given one separate registration with UIN, unique identity number. They will have a separate registration number, which we call them as UIN, not regular registration. So this UIN will be granted to these bodies for the purpose of claiming refund of whatever GST they have paid on their inputs. Okay, so for that they will give UIN, and this is a centralized. This is not like GST, which is a state-wise registration. UIN registration will be centralized registration. It will be at one place. If you have taken registration, that will be valid all over India. So UIN registration is centralized. Next, procedure for registration and all, I am not going through enough, because that they will not ask you at the CFN level. Mostly they should not ask it. Next. So finally, you will get the registration certificate and all. So it will contain GSTN, and that GSTN number you have to present it at your principal place of business, at your additional place of business, on your name boards, everywhere you have to present it. So this effective date of registration also I have covered. Now I will talk about CTP and RTP provisions. CTP and RTP provisions. So quickly, if I have to give you a brief, CTP means what? If a person from India only, but he is coming to some another state where he is not having any fixed place of business, there he will make a taxable supply and he will go back. Like let us say, for example, expos are happening, circus is happening, where people from other states will come and they will do some business in one particular state and they will go back. So this person will become CTP for that state where he doesn't have any fixed place of business. Now, who is NRTP? NRTP means a person outside of India coming to India, doing some business, and he is going back. Let us say IPL players, IPL season now. So this IPL season is all in this IPL season also, foreign players are coming to India, participate in that IPL event, and they will go back. They don't have any fixed place of business in India. They might also fall under NRTP definition. So like that, CTP and NRTP. For CTP and NRTP, they have separate registration requirements. So when it comes to normal person, I told within 30 days from the date you become liable for registration, you are required to submit an application for registration. But that 30 days of time limit relaxation is not applicable for CTP and NRTP. CTP and NRTP are required to submit their application for registration even 5 days prior to the commencement of their business. Even 5 days prior to the commencement of the business itself, they are required to make an application for registration. Not just that, even they are required to make an advance deposit of tax. Even CTP and NRTP, if they have to get themselves registered, they have to make an advance deposit of tax. That means how long they are going to do the business in that respective state, or in case of NRTP, how long, what amount of supplies they could make in this duration. They have to estimate their tax liability, and they have to make an advance deposit of the tax. Then only government will give them CTP and NRTP registration. And how long their registration will remain valid, sir? Their registration will remain valid for how much duration? So if you see here, validity of the registration period as specified in the registration application, or 90 days from the effective date of registration. So maximum CTP or NRTP will be given a registration validity up to 90 days. If he wants only for shorter duration, let us say he wants for 30 days only, the department will give that registration effective for 30 days. If he wants for 45 days, 45 days only. But if he wants 150 days, no, department will restrict that to 90 days only. So either period specified in the registration application, or 90 days from the date of grant of registration, whichever is later. However, this 90 days of time limit can be further extended by 90 more days. So initially, you will get a maximum time limit of 90 days. Your registration will remain effective for 90 days. If there is any valid reason, if you feel that if you want to extend your CTP or NRTP registration, you can make an application to the commissioner, and they can extend that validity of the registration by 90 more days. By 90 more days, that registration period can be extended. Okay. And even for that extension also, you have to make an advance deposit of tax. Let us say initially you took the registration for 90 days. Now you are asking for extension for 60 more days. You have to make an application. Sir, I want to extend my CTP and RTP registration by 60 more days. Now you have to make an application. Sir, I want to extend my registration for 60 days. But they will extend that registration validity. Once again, you have to estimate what will be your tax liability for the coming 60 days, and you have to make an advance deposit of tax for that 60 days of tax liability. Then only they will grant you that extension. Even for extension also, you are required to make an advance deposit of tax. Next. Any special points here? There should be one rule. Rule 10A is there. Rule 10A. This is also one more frequently tested point, which is having connection with multiple places. So rule 10A, like that one rule is there. Sir, what is that rule 10A? Rule 10A is regarding furnishing the bank account details. Rule 10A is regarding furnishing bank account details. So along with your application, whenever you are submitting the application, generally registration application will try to submit in GST REG 01. The application through which we have to claim the application through which we are required to submit an application for registration is GST REG 01. So in that GST REG 01, they will ask you so many details: your principal place of business, your additional place of business, your HSN code details, what activities you are doing. So like that, multiple details are required to be entered in that GST REG 01. So now what they try to say here is, in that GST REG 01, when you are submitting, you are not required to furnish the bank account details. At the time of submitting an application for registration, you are not required to furnish the bank account details. Even after you get the registration certificate also, you are permitted to furnish bank account details. Even after getting the registration certificate also, you can furnish the bank account details. Sir, but how long, sir? How long means within 30 days. Within 30 days from the date of grant of registration certificate, you are required to furnish the bank account details. Or before you file the first return, before you file the GSTR1 or IFF, whichever is earlier, sorry. So maximum within 30 days from the date of grant of registration, you can furnish your bank account details. Sir, what will happen if I get the registration certificate, but if I did not furnish the bank account details within 30 days from the date of grant of registration certificate, then what will happen? Then your registration will be liable to be cancelled. So if you want to stop your registration from getting cancelled, you have to furnish your bank account details maximum within 30 days from the date of grant of registration certificate. Understood? Right. So this is one more rule, rule 10A, which is going to be important. Thereafter, amendment related procedural formalities will be there. So like this, I have already given you one chart. You can just have a quick look at it. So in case if you have already got the registration certificate, but if you want to amend some details in your registration certificate, what you want to do, you want to amend your details in the registration certificate. Can I get it done? Yes. So there will be two kinds of amendments which you can do. One is core areas, one is core fields amendment, and other one is non-core field amendment. Sir, what is a core field amendment? Name of business without change in PAN, addition or deletion of stakeholders, and also principal place of business, additional place of business. These kind of details you can update it. These are core fields. And for core fields, you have to submit an application for amendment. PO should accept it. PO should approve it. Then only the changes will be affected. And whatever other fields are there, those are non-core fields. So when you want to amend your non-core fields, no PO approval, nothing. You just submit an application, the details will get automatically amended. So this much you have to remember. So when you want to amend your details in the registration certificate, can you do it? Yes, you can do it. There will be two kinds of fields: core fields, non-core fields. For core fields, you need approval of the proper officer. He has to sanction, he has to grant you approval. Yes, these fields can be updated. In case of non-core fields, no approval, nothing will be required. Just you submit an application, the details will get automatically amended. No approval, nothing. So procedure, you can refer to it. Now comes the next point from this registration chapter: cancellation of registration. Cancellation. Section number 29 will talk about cancellation of registration. Section number 30 will talk about revocation of cancellation of registration. Section number 29 is going to talk about cancellation of registration, when your registration will be liable to be cancelled. Sir, what do you mean by cancelling registration? So you are no longer registered person. That means your registration is going to get cancelled. So when your registration will get cancelled, what is the procedure for cancellation and all? That is contained in section number 29. Now, section number 29 will talk about two circumstances where a person can voluntarily come forward and cancel his registration, or the cases where proper officer on suo motu basis he will cancel the registration. The cancellation of registration can happen in two cases. What are the two cases? Number one, the registered person voluntarily, he himself can come forward and cancel his registration. Second case, suo motu cancellation by the proper officer. That means the registered person doesn't come voluntarily to cancel his registration, but the proper officer himself on his own motion, he is cancelling the registration certificate. That is what we call it as suo motu cancellation by the department. So like that, in two cases, cancellation can happen, either voluntary cancellation by the registered person or suo motu cancellation by the proper officer. So let us see that circumstances where the registered person either himself can cancel or his legal heirs can cancel or PO can cancel. So genuine cases where registration will be cancelled. So either you yourself can cancel it or PO can cancel it. What are that circumstances? Number one, business discontinued. You are no longer continuing your business. You are discontinuing your business. You don't need registration. You can cancel your registration. Or that business is getting transferred fully for any reason, including the death of the proprietor. So you are transferring your business as a going concern to another person. Then also what you can do, you can cancel your registration. Amalgamated with another other legal entity. Amalgamation is happening. Then also this old entity will cancel its registration. New entity will get the registration. Or demerger is happening, or any other manner of disposing it off. Or if there is a change in constitution of business, let us say till now you are a proprietorship firm, but that proprietorship firm is getting converted into partnership firm. Now what will happen? In this case, PAN will change. PAN card will change. So this proprietorship firm has to cancel the registration and partnership firm has to get the new registration. Or taxable person is no longer liable to be registered under section number 22 or 24 who intends to opt out of voluntary registration. Or if you feel that you are no longer liable for registration either under section number 22 or 24, then also you can apply for cancellation of registration. So these are genuine circumstances where either the registered person himself or his legal heirs or the PO can cancel registration. So these are all the genuine cases. Now let us come to the extreme circumstances where the proper officer himself can cancel the registration on his own. The PO, without any initiation, without any request, without any initiation from the registered person's side, the PO himself can initiate cancellation proceedings. The proper officer himself will proceed ahead and cancel the registration. So when do you think that proper officer will take that extreme step? When do you think PO will take extreme step of cancellation of registration? When you have done some violations. So what are that violations? So there are some circumstances where the registration can be cancelled by the proper officer, including a retrospective date also. Even retrospective cancellation he can do, and after giving an opportunity of being heard. Sir, what are that extreme circumstances where the PO can cancel the registration even retrospectively? See here, these are all the prescribed violations. A registered person has contravened the prescribed provisions. Not all provisions, there are certain prescribed provisions are there. If you are a registered person, you are violating that prescribed provisions. So what are that prescribed violations? If I do, my registration will get cancelled. So these are the prescribed contraventions which make a registered person liable to be cancelled, which are mentioned in rule number 21. Sir, who are they? So number one, if they are not conducting any business from the declared place of business, so they have taken the registration, they have declared their place of business, but from that place of business, they are not doing any business. Or they are issuing invoices or bills without making supply of goods or services. Or if they are violating the provisions of section 177, anti-profiteering. If they are violating the provisions of rule 10A, they are not furnishing the bank account details. If they are availing ITC violating the provisions of section number 16, the person is taking input tax credit but violating the conditions. Even without fulfilling the conditions given under section number 16, he is claiming the ITC. Or furnishes details of outward supplies in GSTR1 as in excess of outward supplies declared in GSTR3B. So what he is doing is in his GSTR1 or 1A, he is declaring more outward supplies than the outward supplies which he is declaring in the GSTR3B. So that means he is trying to declare more outward supplies in his GSTR1. That means he is trying to pass on more credit to the recipients. But in his GSTR3B, when actual payment of GST has to happen, in that GSTR3B, he is declaring lesser outward supply. So more outward supplies in GSTR1s when compared with the GSTR3B. Next, if he violates the provisions of Rule 86B, what is this Rule 86B? We are going to see it in the input tax credit chapter. That 1% rule violation he is doing. Some big taxpayers, they can utilize only 1% of their output tax liability as ITC. He is violating it. Or he violates the fourth or third provisions to 23 sub rule 1. That means he is not filing the returns after revocation of cancellation. Anyhow, we will that is related to revocation point. But just remember that if he is violating the provisions of third and fourth provision to rule 23 sub rule 1, or he is required to file returns under 39(1) for each month or part thereof for a continuous period of 6 months and for continuous period of 2 tax periods. Sir, what is it? So let us say if you are a regular tax person. If you are a registered person, as I have told, one of the most important compliance which will happen if you are a registered person, one of the most important compliance which you have to do is you have to file the returns. Let us say you are a regular person, you are a registered person and you are under regular scheme. You did not opt for composition levy. And if you are remaining under regular scheme also, you are required to file returns. But there will be two options. Either you could be a monthly return filer, or you could be a quarterly return filer. Even those people who are registered, who are under regular scheme, they will have two options. Either they can file monthly returns or they can file quarterly returns. In case if you are a monthly return filer, if you did not file your return for 6 continuous months, in case if you did not file your return for 6 continuous months, then your registration will be cancelled by the proper officer on suo motu basis. Without any request from you, he will cancel the registration on his own. On the other hand, if you are a registered person but you are already registered, and you are a regular person but you have opted for quarterly scheme, if you did not file your returns for 2 quarters, if you did not file your returns for 2 quarters, then also PO will on suo motu basis will cancel your registration. Clear? So this is in the case of regular scheme. Sir, what about composition dealer, sir? In case if you are a composition dealer, if you are a registered person but you have opted for composition levy, you are required to file one annual return in GSTR 4. If you are not filing that annual return beyond 3 months from the due date, if you are not filing your annual return beyond 3 months from due date is actually 30th of June following the end of the financial year. This due date is over. From the due date, 3 months is also over. Still, if you are not filing your annual return and if you are a composition dealer, then also your registration will be liable to be cancelled. Understood? So even default returns, even if you are a person who is making default in returns, then also your registration will be liable to be cancelled. So these 2 points are with regard to regular return filers. Sir, you told about composition, no? Where it is told? Here it is told. So if you are a composition taxpayer who has not furnished a return for a financial year beyond 3 months from due date of furnishing the return. So this is in case of composition scheme. And one more case where a person's registration will be cancelled on suo motu basis by the proper officer is if you are a voluntarily registered person. If you are not liable for registration, you voluntarily came forward. Even though you are not liable, you voluntarily came forward and applied for registration. But after getting the voluntary registration, you are not commencing your business within 6 months. You applied for registration by yourself, you voluntarily came forward and you asked for registration, we gave you registration, but after getting registration you are not commencing your business. 6 months is also over but you are not commencing the business, then also PO on suo motu basis can cancel the registration. Or you got your registration, after that if the department finds out that you got your registration by means of fraud, willful misstatement or suppression of facts, if the department finds out that you are obtaining your registration by means of fraud, willful misstatement or suppression of facts, then also PO can cancel the registration on his suo motu basis. Understood? So these circumstances you have to remember. Why? Because at the final level they will ask you comprehensive questions where you will be required to take what action should be taken. So they will give you one scenario and they will ask you in this case what and all actions can be taken by the department. So if it is falling under any of these prescribed violations, you have to write that PO on suo motu basis can even cancel his registration also. Like that some linkage will be there. So that's why you have to remember what are the circumstances where the proper officer on suo motu basis he can cancel the registration of the registered person. Okay. Right. So these are the circumstances. Now, after that, what I will tell you is, right. So amount payable on cancellation of registration. This is important. So in case if the registration is getting cancelled either voluntarily or on suo motu basis by the proper officer, you will be liable to pay some amount. So what will be that amount payable on cancellation of registration? So they say that in case if your registration is getting cancelled, either debit the electronic credit or cash ledger by what amount? By amount equal to ITC in respect of stock of inputs and inputs contained in semi-finished goods or finished goods stock on day immediately preceding the date of cancellation. I will talk about inputs and capital goods separately. So let us say if your registration is getting cancelled, then in respect you will be liable to pay some amount. What is the amount you are required to pay? In case of inputs, you will be liable to pay whatever ITC which is attributable to the inputs which are contained in stock or finished goods or semi-finished goods or tax on such transaction value. If you supply that inputs, there will be transaction value, no? So on that transaction value there will be tax, no? So tax on transaction value, whichever is higher, that much amount you will be liable to pay on inputs. Inputs means goods. So that too on which date? Inputs on 1 day before the date of cancellation of registration. 1 day before that effective date of registration, effective date of cancellation. So that's what they say here. So if you come to this point, what will be the amount payable? ITC in respect of stock of inputs and inputs contained in semi-finished goods or finished goods on immediately preceding the date of cancellation, and output tax payable on such goods, whichever is higher, that much amount you will be liable to pay. Whichever is higher, that much amount you will be liable to pay on cancellation. On the other hand, with respect to capital goods, Here also you will be liable to pay if you are canceling your registration. If some capital goods are there with you on day before the cancellation, if some capital goods are still there, even in respect of that capital goods also, you are liable to pay some amount. How much amount you are required to pay? ITC. But here it is not ITC, reduced ITC. ITC reduced. How to calculate that reduced ITC? Take full ITC from the date of purchase, from the date of invoice till the date of we will assume the useful life as 5 years, that is 60 months. We will imagine the useful life as 60 months, and you determine what is the remaining useful life. What is the remaining useful life? Let us say, for example, I purchased a capital goods long ago. Till date of cancellation, I have used it for 40 months. I will take the useful life as 60. That means how many remaining months are there? 20. Total ITC I have availed is 1 lakh rupees. So 1 lakh into 20 divided by 60. So like that you have to calculate the reduced ITC. In case of capital goods, the amount which you are required to pay on cancellation, how you have to calculate it? It will be ITC on that capital goods, but not full ITC, reduced ITC. How to calculate that reduced ITC? Take useful life as 60 months, determine what is the remaining useful life, multiply that with the ITC amount, you will get the reduced ITC. Or output tax payable. If you supply that capital goods, there will be output tax payable, no? So that output tax payable, whichever is higher, that much amount you are required to pay in respect of capital goods. So whenever you are cancelling your registration, you will be liable to pay the amount on your inputs also. You will be liable to pay the some amount with respect to your capital goods also. And this payment, this amount can be paid either by using the electronic credit ledger or cash ledger. If you have enough of balance in your electronic credit ledger, you can discharge this payment using electronic credit ledger. If you don't have enough of balance in your electronic credit ledger, you have to deposit the cash and discharge this liability. And in case of cancellation, how this liability discharge will happen? This liability discharge will happen by way of final return. In case if your registration is cancelled, you will be liable to file one return called final return. Through your final return, you will be required to discharge this liability with respect to inputs and capital goods. Through your final return, you will be required to do it. Okay, so these connections are important. Please do keep it at the back of your mind. Next. So this is what regarding procedure for cancellation and all. Now revocation. We will talk about revocation. Revocation of cancellation of registration. Sir, what is this revocation of cancellation of registration? Let us say, for example, your registration has been cancelled suo moto by the proper officer. You did not make a application for voluntary cancellation. If you yourself are going and submitting an application, sir, please cancel my registration, there is no way you are going to get it back. If you voluntarily went ahead and asked for cancellation of registration, you can't get it back. But in case if the PO on his suo moto basis, if the proper officer on his suo moto basis, if he has cancelled your registration, then you will be given one more opportunity to get your registration back. If proper officer on suo moto basis, if he has cancelled your registration, then they will be given one more opportunity for you to get back your registration. That process we call it as a revocation of cancellation of registration. So you are required to submit an application. Sir, dear proper officer, you have cancelled my registration. Please give me one more opportunity. I want my registration back. Like that, you can make an application for revocation of cancellation of registration. Sir, what is the time limit within which you have to submit that application for revocation of cancellation? You can submit that application for revocation of cancellation within 90 days from the date of service of the cancellation order. They will serve you a cancellation order, no? So from the date of that cancellation order within 90 days. Now many people will get confused here. One more point which they will test it at the final level I am telling you is, let us say for example, you got your cancellation order. You got your cancellation order on 30th of April. You got your cancellation order. That is the date of service of the cancellation order. Now, in that cancellation order, they will tell you what is the effective date of cancellation, from which date your cancellation will become effective. That date they will mention in the cancellation order. Let us say the date of service of cancellation order. You got your cancellation order on 30th of April. But in that order, they told that effectively my registration has been cancelled retrospectively. Can they do it, sir? Yes. The effective date of cancellation will be determined by the proper officer, which could be retrospectively also. So let us say in that cancellation order, they told that effective date of cancellation of registration is 1st of January. With effect from 1st of January itself, they are cancelling the registration. So now you want to get your registration back. Within how many days you are required to submit an application? Within 90 days from the date of service of cancellation of order, not from the effective date of cancellation. Whenever you will get that order of cancellation, you will be served with the order of cancellation, no? So whenever you are getting that order of cancellation, whenever that service of order of cancellation has happened, from that date of service of order of cancellation, within 30 days, within 90 days, you are required to submit an application for revocation of cancellation. Okay, so this time limit you have to remember. So you can make an application within 90 days from the date of service of the cancellation order, not within 90 days from the effective date of cancellation, 90 days from the date of service of cancellation order. However, this 90 days period can be extended by commissioner or an officer authorized by him not below the rank of AC or GC for a further period of 180 days. For a further period of 180 days. So he can make an application within 90 days usual time limit, but if there is a valid reason, that 90 days of time limit can be extended by further 180 days. That means total you will have 270 days. 90 days without any extension, but if within 90 days also if you did not submit that application for revocation of cancellation, you make a, if there is a valid reason for that, you go and make an application to the commissioner. He can extend that time limit by 180 days more. That means maximum you can have 270 days for submitting an application for revocation of cancellation. So you will submit the application. So once you submit the application, that PO will take up your application, and after he's taking up the application, he will, if he feels that okay, for this person registration we have to give it back, then he will grant that revocation of cancellation of registration within 30 days from the date of receipt of application. If he files whatever application you have made is valid, and if he feels that, if he's convinced that okay, for this person we have to grant him the registration once again, let him give back his registration, like that, if the PO has convinced, then he will revoke your cancellation. That means he will give your registration back. If he's not satisfied, if he feels that even after you submitted the application, if he feels that no, this fellow doesn't deserve to get his registration back, he will give you an opportunity of being heard. Thereafter he will cancel, he will reject your revocation application. He will not give you a registration back, but he will give you opportunity of being heard before cancelling your application. Okay, so this is what regarding revocation of cancellation of registration. Understood? Clear and comfortable, everybody? So this is what regarding major topics which are relevant, which will have a connection in the questions whatever you are going to write in your final examination at the CA final level. So with this, I am now trying to wind up this registration chapter. So I will wind up the registration chapter now. So next chapter, what we will try to do is, we will try to do charge of GST. The next chapter which we will pick up for revision is going to be charge of GST. Very, very important. There will be a compulsory question from this chapter, charge of GST also, that we will try to pick up and we'll try to do it. Right. So let us talk about now charge of GST chapter. See what exactly we are going to learn in this charge of GST chapter is. So as I have told, we have broadly different kinds of mechanism by which the revenue of GST will go to the government. So one is forward charge mechanism and the other one is reverse charge mechanism. So now in this chapter, we are going to have a look at those goods or services which are notified on which RCM will become applicable. So RCM will not become applicable on each and every product or on each and every service, and even that choice has not been given to either the supplier or recipient to decide who will pay the GST to the government. It is not like something which a mutual agreement. So because of a mutual agreement between the supplier and recipient, they can't decide who will pay the amount of GST. So the government has released a notification. In that notification, they have notified certain goods or services on which RCM will become applicable. And whenever those goods and services which are notified are getting supplied, their recipient is only required to discharge the amount of GST. So let us see what are that cases. Right. So if you come to the goods here, so there are different kinds of goods which are taxable under RCM. So there are different categories of the goods which have been notified, which are taxable under RCM. So just you can have a quick look here, like cashew nuts, not shelled peeled, BD wrappers, tobacco leaves, and essential oils, silk yarn, raw cotton, lottery is also getting covered under reverse charge mechanism. Used vehicles, seized and confiscated goods, old and used goods, waste and scrap, PLC, priority sector lending certificates, and even metal scrap. So metal scrap when supplied by an unregistered. Here there is a slight mistake. You have to change it to unregistered. So even in case of supply of metal scrap, where the supplier is unregistered person and the recipient is registered person, then also RCM will become applicable. So slight change here, a small correction is required in this material. So here in case of supply of metal scrap, if the supplier is unregistered and the recipient is registered, then also that will get covered under RCM. So these are bunch of goods which have been notified which will get covered under reverse charge mechanism. But this is not the important part. The most important part is the services which are getting covered under reverse charge mechanism. We have to talk about the services which will get covered under reverse charge mechanism. So we will take up one by one each service we will try to do, and we will try to cover it. So first category of service which is covered under reverse charge mechanism is services by way GTA in respect of transportation of goods by road. So whatever services which GTAs are providing in relation to transportation of goods, and if the recipient is a specified recipient, then those services will get covered under RCM. So now what I will try to do is, for this GTA concept, there are exemptions also. For this GTA concept, there are some exemptions also. There are some forward charge. There are some reverse charge mechanisms also. All that I will try to cover it in one go. Okay. So all that I will try to do it in one go. Just give me 1 minute. Yes. So if you come here in GTA completely will try to cover it in one go. If you see here, in case of services of transportation by road, see this entire chat is relating to exemption. In case of goods transportation services, what and all are the exemptions? For that, we have one comprehensive chart. I will come back and revisit this chart when we are discussing exemptions. When we discuss the exemptions chapter, we will come back and revisit this chart fully, but I'm going to only explain a small aspect. GTA, I'm going to explain. This I will not come and cover it once again. So from this entire comprehensive chart, I'm going to cover only GTA part. What will be the taxability and what will be the charge of mechanism, whether forward charge, reverse charge in case of services provided by GTA, what will be the mechanism? So that we will try to see it here. Okay. So in case of services provided by GTA, so we need to first check what are the goods which are getting transported. So in case the goods are getting transported by way of a goods transport agency, but the goods which are getting transported falls under random category. The GTA is providing the services of transportation of goods, but the goods which are getting transported, they fall under random category. Sir, what is random? Relief material for victims, calamities, man-made disasters, accidents. A for agricultural produce. N for newspapers or magazines which are registered. D for defense or military equipment. O for organic manure. M for milk, salt and food grains. So if the GTA is providing the services of transportation by road, and if the goods which are getting transported falls under random category, any of the 6 category, then it will always be exempt. No one will pay the GST, neither forward charge mechanism nor reverse charge mechanism. These things are always exempted. However, no sir, the GTA is providing the services by way of transportation of goods, but the goods are not falling under random category. Then we'll go to the next step. So what is the next step? We have to check, okay, other goods are getting transported, but is the recipient falling under specified recipient? Is the recipient falling under specified recipient? Sir, who is that specified recipient? A factory, which is registered under Factories Act. A society registered under Societies Registration Act. Cooperative society registered under Cooperative Societies Act. Body corporate registered under any act. Partnership firm including LLP and association of persons, whether or not registered. So these people, factory, society, cooperative society, body corporate, partnership firm and AOP. So if these are the specified recipients, whether they are registered under GST or not doesn't matter. But if the recipient falls under any of this category like factory, society, cooperative society, body corporate, partnership firm including LLP and AOP, and also any other registered person. Registered person means what? A person who is registered under GST, other registered person including registered CTP, or if the recipient is a CTP, casual taxable person who is registered. So if the recipient falls under any of this specified recipients category, then it will be taxable under reverse charge mechanism. These recipients will be liable to pay the amount of GST with the government. Sir, who are that specified recipients, sir? A factory, society, cooperative society, body corporate, partnership firm, whether or not registered, and a GST registered person including a registered CTP. So if the recipients falls under any of the specified recipients category, then that GTA services will be taxable and it will be payable under RCM. These recipients are required to discharge it under reverse charge mechanism. Okay, next. But however, if the recipient is a registered person, but the recipient of the GTA services is a department or establishment of central government or state government or union territory or local authority or government agency who has taken registration only for deducting TDS under section number 51, but not for making any taxable supply. See, what did I say? If the recipient is a registered person, then RCM will become applicable, no? But one exception is there. What is it, one exception? Recipient is registered, but the recipient is a department or establishment of central government or state government or local authority or government agency, but they have taken registration only for deducting TDS under section number 51, but not for making any taxable supply. then what will happen? Then that service is exempted. No RCM, no FCM, then that service will be exempted. Sir, any other recipients, if the recipient of GTA services is any other recipient, then in all that circumstances it will be exempt. If the recipient is any other recipient apart from the specified recipients, if any other recipient has received the GTA services, then it will be exempt. Okay, so this is one comprehensive chart which is covering all kinds of GTA services, when exempted, when taxable, when RCM, and all. So once again, if I try to quickly revise it, in case of services provided by GTA by way of transportation of roads, first we have to check, is the goods which are getting transported falling under random category? If the goods are falling under random category, directly exempt, no one will pay the GST. Then we need to check, sir, goods are not random, but is the recipient falling under specified recipient? So that list of specified recipients I have given here. So if the recipient falling under specified recipient, yes. If the answer is yes, then it will be taxable under RCM. Recipient only will pay the amount of GST. But one exception, recipient is registered, but the recipient is department or establishment of central government, state government, local authority, government agency who has taken registration only for the purpose of deducting TDS under section number 51, but not for making any taxable supply. Then it will be exempt. No one will pay the GST. So recipient is other recipients, sir. Other than the specified recipient, if recipient is some other recipient, sir, then it is completely exempt. No one will pay the amount of GST. Understood? So now coming to this RCM point. I told that if the recipient is a specified recipient, then they will pay the GST under RCM, no? If the recipient is a specified recipient, then they will pay the GST under RCM, no? But here also they have given one option. To the GTA. Now, if the GTA takes the registration and if they exercise, even they can exercise the option to pay the GST under forward charge mechanism also. What one more option they have given? So if the recipient falls under any of the specified recipients, RCM, no. But here there are some exceptions given. Even RCM will not become applicable. When, sir? When that GTA, when that goods transport agency has come forward, they have taken the registration and they exercised the option. They are coming forward and saying, sir, if even though this service is getting covered under RCM, but we want to pay the GST under forward charge mechanism, sir. We will come forward and we will pay the GST under forward charge mechanism, sir. If they could make that declaration, then forward charge mechanism will become applicable. If the GTA comes forward, in these cases, even though RCM will become applicable, if the GTA comes forward and exercises the option to pay the GST under forward charge mechanism, if they have taken registration, then RCM, then FCM only will become applicable. So here, if you read it, notwithstanding content, nothing contained in this entry shall apply. That means RCM shall not apply. When, sir? When supplier, who is supplier, sir? GTA service provider. When GTA is registered and they have exercised the option to pay GST on, to pay tax on GTA services under forward charge mechanism, and they will issue the tax invoice, and in that invoice also they are making declaration. What declaration? So they will give the tax invoice, no? GTA will give tax invoice, no? In that tax invoice, they're making a declaration. So even though our services are getting covered under RCM, we are exercising the option to pay the GST under forward charge mechanism. Like that, they have to give a declaration. If they could take the registration, they exercise the option and they make a declaration, then GTA service provider only will pay the amount of GST under forward charge mechanism. Able to understand? And in case if the GTA wants to pay tax under forward charge mechanism, if the GTA exercises the option to pay, GTA has exercised the option to pay tax under forward charge mechanism, sir, what will be the rate of GST? See, in case if the GTA does not exercise the option to pay under forward charge mechanism, then recipient will pay. Recipient has to pay if the recipient falls under specified recipient, and if the GTA has not taken registration, if they have not exercised the option to pay GST under forward charge mechanism, then RCM will become applicable. See, in case if the recipient is required to pay GST under RCM in respect of GTA services, what will be the rate of GST? 5%. 5%. If the recipient is paying the GST under reverse charge mechanism, the rate of GST is going to be 5% only. 5% only. But in case if the GTA has exercised the option to pay the tax under forward charge mechanism, then what will be the rate of GST? There are two options available for the GTA service provider who wants to pay the GST under forward charge mechanism. Sir, what are the two options? One is not 12%, 18%. There is an amendment here, 18%. See, initially the institute has released a supplementary material. In the supplementary material, they did not include this. So taking that supplementary material, I have done all this material. I have included all the changes which are applicable. All the amendments are included here. But after some period of time, they changed the supplementary material. They uploaded another version of supplementary material. In that supplementary material, they have added this point. This 12%, they have changed it to 18%. So that's why this was not yet changed, but now I am changing it, 18%. Okay, so this we have taken care in the class. Those who have attended our class, though for them we have already clarified it. But since in the marathon some other students also will be there, no, for their sake we are keeping it here. So in case if the GTA exercises the option to pay tax under forward charge mechanism, it will have two options. Either it can pay 18% GST or 5%. So if you are paying 5%, you are not liable to ITC. You can't take ITC. You can discharge your tax liability at the rate of 5%, but you can't take ITC. But in case if you want your ITC on your input services, you have to pay the GST at the rate of 18%. Previously it used to be 12%, but now it is 18%. Understood? Clear and comfortable, right? So this is what regarding GTA services: when taxable, when not taxable, when exempted, when RCM, when FCM, everything I have comprehensively covered. So first category of service which is getting covered under RCM we have covered. Then 2 and 3, second and third point is talking about legal services. Legal services, when they will get covered under RCM, even for that legal services also we have an exemption. So when RCM, when exemptions, for this also I have a chart here. Let us try to cover it with the help of the chart. So if you come here, right. So legal service related exemptions, as you could see here. See, in case if the services are provided by advocate other than senior advocate or form of advocates. So when I say legal services could be provided by an advocate. Individual advocate can provide it, or senior advocate can provide that legal services, or even the advocates can create a firm. Through that firm of advocates also they can provide the legal services. So when we say legal services can be provided either by a individual advocate, or they could be provided by a senior advocate. Sir, who is senior advocate? Not who is senior citizen. Senior advocate is an advocate with certain years of experience and is recognized by the Bar Council as a senior advocate. Or these advocates can come forward and create a firm of advocates. Like we auditors are creating audit firms, even this firm of advocates also can be created, and through that also they can provide the services, right? So now advocate, firm of advocate, this we will club into one category. Services provided by advocate or form of advocates, when they will be taxable, when they will be exempted, when RCM. That is this chart. Senior advocate alone we have separate chart, because there is a little change between the individual advocate, form of advocates, and services provided by senior advocate. There are minute changes. So that's why what we are doing. So in the first chart, we are talking about services provided by advocate and form of advocates other than senior advocate. Then we have second chart where it will talk about services provided only by senior advocate. Okay. So first we will see what about the status of services provided by an individual advocate other than senior advocate or form of advocates. So here what they have told us, if one individual advocate or form of advocates other than senior advocate provide the services to another advocates or form of advocate. If an individual advocate or a form of advocates provide the services to another advocate or form of advocates, those are always exempted. No one will pay the amount of GST. Similarly, in case if the individual advocate or form of advocates, if they are providing the legal services to a central government, state government, union territory, local authority, and government entity, then also it is exempted. That means if the recipient is government and government related entities, exempt. If the recipient is a non-business entity, if an individual advocate or form of advocates, if they are providing legal services to a non-business entity, like divorce case they are fighting or family disputes they are fighting, those services are also exempt. No one will pay the amount of GST. Then, sir, this individual advocate or form of advocates other than senior advocate, they are providing services, sir. Recipient is a business entity, sir, but that business entity is also a small business entity. So legal services are provided by individual advocate or form of advocates to a business entity, and that business entity is a small business entity, sir. How to identify small business entity? Recipient is such a business entity whose aggregate turnover is does not equal to applicable threshold limit in the preceding financial year. So recipient is a business entity, sir, but it is such a recipient, but it is such a business entity, but it is such a business entity which is a small business entity, sir, whose aggregate turnover does not exceed the applicable threshold limit in the preceding financial year, sir. So that they are identifying it as small business entity, and even they have given exemption for them also. So only in one case it will be taxable here. Legal services, only in one case it will become taxable. What is that one more case which is left out? Recipient is a business entity and their aggregate turnover is more than applicable threshold limit in the preceding financial year. Big business entities. The recipient is a business entity, and that business entity is such a business entity whose aggregate turnover is more than applicable threshold limit in the preceding financial year, sir. So this is the only last left out case. So in that case it will be taxable. In the last case it will be taxable under reverse charge mechanism. In the last case it will be taxable, and also when it is taxable it will be taxable under reverse charge mechanism. Able to understand? So this is what the status of services provided by individual advocate or form of advocates other than senior advocate. Sir, now what about services provided by the senior advocate? What about services provided by the senior advocate? Here also more or less the things are going to remain the same. In case if the services are provided by senior advocate, if the recipient is central government, state government, union territory, local authority, government entity, exempt. If the recipient is a non-business entity, exempt. If the recipient is a business entity but small business entity, how to identify small business entity? Which is having an aggregate turnover less than or equal to applicable threshold limit in the preceding financial year, then also it is exempt. And if the recipient, who is left out? If the recipient is a large business entity, sir, what is large business entity? Which is having an aggregate turnover more than applicable threshold limit in the preceding financial year. Here it includes even the recipient who is an individual or form of advocates, then it will be taxable under reverse charge mechanism. So if you see the difference between the first chart and second chart here, in the first chart, the services provided by individual advocate or form of advocates to another advocate or form of advocates is also exempt. But that relaxation they have not given here in the case of senior advocate. That means if the senior advocate is providing the service to another advocate or form of advocates, those services will become taxable. So that's what it is getting covered here in the last. Okay, so this point is not specifically given for senior advocate. That's the only difference. Remaining all will remain the same. Okay, right. So this is what regarding services provided by either individual advocates or form of advocates. Now even arbitral tribunals also provide the services. Arbitral tribunals also will provide services. So when it comes to arbitral tribunal, when taxable, when exempted, even services provided by arbitral tribunal where the recipient is central government, state government, union territory, local authority, government entity, exempt. To a non-business entity, exempt. To a business entity but a small business entity whose aggregate turnover is less than or equal to applicable threshold limit in the preceding financial year, then also exempt. But if the recipient is such a business entity whose aggregate turnover is more than applicable threshold limit in the preceding financial year, then it will be taxable under reverse charge mechanism. So this is what regarding arbitral tribunal services. Okay, right. So legal services also we have covered. The next bunch of services which are covered under RCM, legal services we have covered. Now coming to next category of service which is covered under RCM, sponsorship services. Sponsorship services also are getting covered under RCM, but sponsorship services will get covered under RCM only when the supplier should be other than body corporate. Supplier should be other than body corporate. Recipient must be either a body corporate or partnership firm. When I say partnership firm, it includes LLP also. For the purpose of GST, wherever I am saying partnership firm, that includes LLP as well. So sponsorship service, tell me when it will get covered under RCM. Sponsorship services will get covered under RCM only when the supplier is other than body corporate and the recipient is either body corporate or partnership firm. Both conditions must be fulfilled. Supplier should be other than body corporate, recipient should be either a body corporate or partnership firm including LLP. Then only RCM will become applicable. So then we have 5 and 6. I think 5A. These are all related to government related services. So for government related services, I will currently keep them on hold now. Why? Because I have a comprehensive chart. For government services or for services which are provided by government, I have a very comprehensive chart regarding services provided by government in exemptions. So there are very bunch of services which government will provide. In many cases, it will not be supply. In some cases, it will be supply. Even in that cases also, in many cases, it will be exempted. If it is taxable in few cases under forward charge mechanism, in few cases under reverse charge mechanism. So like that, we have one complete bunch. So I have consolidated all that discussion regarding government services into this comprehensive chart. This I will try to explain. This we will try to revise along with the exemptions chapter, not now. So that's why what I will ask you to do is, for the time being now, this 5 and 5A, you keep it on hold. This I will talk about it later. This will try to cover it along with exemptions. Then we have renting related services. 5AA, 5AB. These two are there, which are talking about renting related services. This also, I will try to explain it now only with the help of one chart. Listen carefully. Yes, renting of immobile property. Just 1 minute. So this is the chart relating to renting of immobile property. So this I will try to explain. Exemptions and when RCM, when FCM, that I will try to complete in one go. Right, see here. So renting of immobile property, when taxable, when exempted, when RCM, when FCM. So all that along with the exemptions, I'm covering it here. See it here. So in case of renting of immobile property, is happening. First, we need to check, is a renting of immobile property is a residential dwelling or other than residential dwelling. Sir, what is residential dwelling? Residential dwelling means a place which is meant for residential purposes. 1 BHK flat, 2 BHK flat, which is fit for staying for your residential purposes, that we call it as residential dwelling. So in case if there is service of renting of immobile property, if someone is providing the services of renting of immobile property, first we should check whether that immobile property is a residential dwelling or other than residential dwelling. If renting of immobile property is happening, but if it is a residential dwelling is being rented. So in case of renting of residential dwelling, if the residential dwelling is getting rented out for residential purposes only, renting of residential dwelling is happening, and that renting is also happening for residential purposes. Let us say, for example, one 2 BHK flat is there. That 2 BHK flat has been taken on rent for residential purposes only. And if the recipient is an unregistered person, renting of residential dwelling for residential purposes, if the recipient is unregistered person, exempt. Recipient is unregistered person, exempt. And if the recipient is a registered person, sir, recipient is a registered person, he is taking that residential dwelling on rent for residential purposes only. And if the recipient is a registered person, he is an individual and he is using his for his own residence, not for any office purposes. And rent also he is paying on his own account, not from his business. So renting of residential dwelling where the recipient is registered, but if the recipient is an individual person, he is using that property for his own residence and also he is incurring the expenses on his own account. When these three conditions are satisfied, then also it is exempt. In all other cases, what will be other cases? Other cases will be where the recipient of residential dwelling is a registered person. He is doing it for residential purposes only, but the recipient is a registered person but not individual. Like a partnership firm has taken a 2 BHK flat on rent, or a company has taken a 2 BHK flat on rent. That flat also they are using it for residential purposes of their guest only. In that cases, exemptions will not become applicable. In those cases, it will be taxable under reverse charge mechanism. In those cases, it will be taxable under reverse charge mechanism. So once again, if I tell you, first you need to check whenever renting of immobile property is there, you need to check, is it a residential dwelling? If it is a residential dwelling, then you need to check for what purposes. If it is for residential purposes or commercial purposes. If it is for residential purposes, if the recipient is unregistered, let us exempt it. If the recipient is a registered person but is an individual using it for his own residence on his own account, then also exempt. In all other cases, it will be taxable under reverse charge mechanism. Okay, next. But in case if the residential dwelling is getting rented out, but for commercial purposes, 2 BHK flat only, but you are giving it on rent for commercial purposes. For commercial purposes, you are giving it. 2 BHK flat, one audit firm is taking to run their audit firm. So that is a residential dwelling for commercial purposes. In case of renting of residential dwelling for commercial purposes, it will be taxable. It will be taxable. If the recipient is registered, then reverse charge mechanism. If the recipient is unregistered, then forward charge mechanism. If the recipient is registered, RCM. If the recipient is unregistered, then forward charge mechanism. Supplier will collect the amount of GST. But here also, supplier will collect the amount of GST only when his aggregate turnover exceeds the applicable threshold limit. So here under forward charge mechanism, I am saying, so that means supplier only should collect the amount of GST. But supplier will collect the amount of GST only when he is registered or liable for registration. But here also one small star mark I have kept. What is it? In case if the recipient is unregistered, a residential dwelling is given on rent, but for commercial purposes. But if it is for accommodation services, like hostel services, accommodation services, where monthly rent is less than or equal to 20,000 rupees and minimum period of stay is 90 days, then it will be exempt. Then it will be what? Exempt. So even though residential dwelling, you are using it for commercial purposes, but that you are giving it for registered, you are using it for commercial purposes. But if the recipient is unregistered person, let us say for example, paying guest, I'm an unregistered person. I went to a 2 BHK flat. There is one 2 BHK flat. I went to Hyderabad. In the Hyderabad, I wanted to stay. I wanted to stay in a PG. I'm an unregistered person. I'm an employee of some company. I'm an unregistered person. I want a PG. So I went to one flat. A 2 BHK flat is there. That flat owner is giving that as PG. So that is getting used for commercial purposes. That is a 2 BHK flat, but getting used for commercial purposes. So he is giving that PG on rent to me. I am an unregistered person. But in case if the monthly rent is less than or equal to 20,000 rupees, if the minimum period of stay is for 90 days, then that is exempted. So this is what will happen in case of renting of residential dwelling for commercial purposes. Now this is regarding residential dwelling. Now come to other category of renting. So renting of immobile property other than residential dwelling, like shops I am giving on rent, land I am giving it on rent. So that is what other than residential dwelling. In case if it is renting other than residential dwelling, if the supplier is unregistered person, recipient is registered person. If the supplier is unregistered person, but the recipient is registered person, then in that case, RCM, recipient only will liable to pay the amount of GST. In all other cases, whatever could be the other case, see if the supplier is registered, recipient is unregistered, then I told RCM. In all other cases, it will be covered under forward charge mechanism. In all other cases, it will be covered under forward charge mechanism. But here also, this exemption will become applicable if it is an accommodation service. If the monthly rent is less than or equal to 20,000, minimum period of stay is 90 days, then it could be exempted. Understood? Clear and comfortable? So this is what regarding renting of immobile properties when RCM, when FCM, when exempted. So everything I tried to summarize it here in the form of this chart. This could be a one single point of reference for you. For quick revision, you can use this chart. Okay, clear? So once the marathon gets over, I will upload this marathon notes on the website. So from there you can refer it. Okay, right? So this is what regarding renting of immobile property. So here, along with this point, even I have clarified the exemptions also. I have clarified. So everything we have covered in one single chart. Right? So let us come back. Next category of services which are covered under RCM. So we have two more cases regarding construction related activities. For construction services also, two activities related to RCM are there. What are they? Services by way of TDRs, services by way of transfer of development rights, or FSI for construction of a project. Let us say you are a person, you are transferring the TDRs or FSIs for construction of a project, and the recipient is a promoter. Promoter is receiving it. This will get covered under RCM. Promoter only will pay the amount of GST on the transfer of TDRs or FSI. Similarly, any person, supplier is any person, and the service which is getting supplied is long-term lease of land. If I am a owner of a land, I am giving a long-term lease of land. Sir, what is long-term lease? When we will consider as long-term lease, when the lease is given for greater than or equal to 30 years, against consideration in the form of upfront premium, which we call it as premium, salami, cost, price, development charges, or by any name, whatever you call, or by periodic rent. Either you are getting upfront amount, or you are getting periodic rent for that. In that cases also, promoter only will pay the amount of GST under reverse charge mechanism. Okay, so two cases related to real estate sector. One is transfer of TDRs or FSIs. The promoter only will pay the GST under RCM. Long-term lease of land greater than or equal to 30 years for either upfront amount or for periodic rent. So that also will be paid by the promoter only under reverse charge mechanism. Okay, next. So these are all related to real estate sector. I will say 5A, 5AB, 5B, 5C. All these are related to the immobile properties. Now we will come to the next one. Next category of service which will get covered under RCM. So directorship services. Services provided by a director of a company or body corporate to a company or body corporate located in taxable territory, that will get covered under reverse charge mechanism. Sir, what they are trying to say here? Let us say there is a company X Limited. Now they have appointed one director. So he is providing director services, directorship services also you can say. So he is acting as a director for that company. In return, this director will be getting remuneration from that company. So companies will appoint directors. For that directors, they have to pay them remuneration. So the service here, the service provider is a director. Service recipient is that company or body corporate located in the taxable territory. Now they are saying this will get covered under reverse charge mechanism. So here, who is the supplier? Director. Who is the recipient? That company or body corporate. So now they are saying this will get covered under RCM. Company only will pay the amount of GST on that remuneration to the government. But here there is one small thing which we have to understand it here. Now some companies are arguing. So when director is providing us services, when director is providing the services to us, he is an employee. Some companies have started arguing when the director is providing the services, he is an employee of our company. So services provided by the employee to the employer in the course of employment, that is getting covered under Schedule 3, which is neither supply of goods nor supply of services. It is completely outside of the GST purview, which we have read yesterday in the supply chapter. Which we have read yesterday in the supply chapter, saying that in case of services provided by employer to the employee to the employer in the course of employment is neither supply of goods, not even supply of services. So companies started arguing services provided by director are in the capacity of employee in the employment, so they are not supply only. But it is not actually the case. Why? Because agreed that some directors will be in the capacity of an employee. Let us say managing director, whole-time director, they will be working full-time with the company. They are like employees. For them, whatever salary that is whatever remuneration that is getting paid, that is having the nature of salary. But there will be some independent directors who will not be working like employees. Once in a while, they will come and participate in the board meeting. In return, they are going to get the sitting fee, which is not in the nature of salary. So like that, confusion was coming. Which director will be considered as employment? Which director is not considered in the course of employment? That confusion was coming. So department has given a circular saying that, so one single thing which will sort out all this issue, whenever remuneration is getting paid to the director, check under which section of the Income Tax Act TDS is getting deducted. What simply the circular has told, whenever the remuneration is getting paid to the director, check. So whenever you are paying remuneration to the director, you are required to deduct TDS under Income Tax Act. No. So you check under which section the company is deducting the TDS for remuneration. In case if the remuneration paid to the director is subjected to TDS under section 192, if the remuneration paid to the director is subjected to TDS under section 192, that is a salary. That is a remuneration paid to the director in the capacity of an employee under the contract of employment. That is not supply. If it is not supply, no GST on that component. Neither the company nor the director, no one will pay the amount of GST on it. However, if the remuneration paid by the company to the director is subjected to TDS under section 194J, it was subjected to TDS under section 194J, then it is a remuneration not paid for employment. It is a remuneration paid for professional services. It will not go to schedule 3. That means it will not get covered under schedule 3. If it is not getting covered under schedule 3, it will fall under supply definition. If it falls under supply definition, then GST will become applicable. Here RCM will become applicable. Company will only pay the amount of GST under reverse charge mechanism. Understood? So here the deciding factor, whether RCM will become applicable, RCM will not become applicable, whether supply, not a supply, all that is based on one single point. Whenever the company is paying remuneration to the director, under which section TDS is deducted under Income Tax Act. If the TDS is deducted under section 192, it is salary, not a supply, outside of the GST purview. If it is deducted to TDS under section 194J, it is a professional service, it will be a supply, GST will be applicable, RCM will become applicable. Company is only liable to pay the amount of GST under RCM. Understood? So this is what regarding directorship services. Now let us come to other kind of services. Now we will talk about financial sector. When I say financial sector, banking and all will come here. Banking, insurance, all the services are there that we will try to cover in one go. So when it comes to financial sector, services supplied by an insurance agent. Insurance agents will provide the services, no? So services provided by insurance agent, where the supplier is an insurance agent, and who is the recipient? Insurance company. So insurance agent is providing the services to the insurance company, no? So that services provided by insurance agent to an insurance company will be covered under reverse charge mechanism. So for selling the insurance policies, insurance company will pay him some commission, no? On that commission, who will be liable to pay the amount of GST? Insurance company only. So being the recipient, they are only liable to pay the amount of GST under RCM. Next, recovery agent services. If someone is providing the services of recovery agent, who is the supplier? Recovery agent is a supplier. Who is the recipient? If the recipient is a banking company, financial institution, or even an NBFC, which is located in the taxable territory, it will get covered under RCM. So recovery agent providing the services, providing recovery services to a banking company, financial institution, NBFC located in the taxable territory, covered under reverse charge mechanism. Next, 9(9)A, I will come back to that later. Next one, I will see this one, 10th one. 10th is also related to the financial sector only. So members of overseeing committee, RBI will have a committee called overseeing committee. In that overseeing committee, some industry experts will be appointed as members. These members of overseeing committee will provide the services to the RBI, where RBI will pay them some remuneration. So members of overseeing committee will provide the services to the RBI, for which RBI will pay them the remuneration. So who is the supplier? Members of overseeing committee. Who is the recipient? RBI. I am saying this will get covered under RCM. That means who will pay the GST? RBI being the recipient of the services, they are liable to pay the amount of GST to the government. So members of overseeing committee supplying services to the RBI. Next, services provided by direct selling agents. And which direct selling agent? Individual direct selling agent. Services provided by individual direct selling agent to a banking company or NBFC located in the taxable territory will get covered under reverse charge mechanism. So direct selling agents services will get covered under RCM only when the supplier is a individual. Now many students often get confused here. If you look at the recovery services will get covered under RCM irrespective of what is the status of the supplier. So that recovery services could be provided by individual, that recovery services could be provided by partnership firm, that recovery services could be provided by body corporate, it will always get covered under RCM. But when it comes to direct selling agent services provided by direct selling agents to a banking company or NBFC located in the taxable territory, that will get covered under RCM only when the DSA is an individual, who should not be a body corporate or partnership firm or LLP. Only services provided by individual DSAs will get covered under RCM, which means if a body corporate or partnership firm, if they are providing the DSA services to the banking company or NBFC located in taxable territory, then RCM will not become applicable, FCM only will become applicable. But for recovery services, there is no such restriction. Recovery services could be provided by anybody. individual, body, corporate, LLP, partnership form. In all the cases, RCM will become applicable. But for direct selling agents, only when the supplier is individual, then only RCM will become applicable. Next, we have something called business facilitator, business correspondent. Related to this business facilitator, business correspondent, there are some exemptions also. Let us try to understand it. Right. So just give me 1 minute. Yeah, this one. See, these are all some things which we have used in our regular class. So that I am accumulating it all at one place for our easy revision. Right. So there will be two kinds of services in relation to banking industry. One is business facilitator services, other one is business correspondent services. See, I'm not going into detail who will be business correspondent, who will be business facilitator. I'm not going into the detailed manner that we have given in the material. When you have a free time, you can read it. But there will be two kinds of service providers who will provide services to banking company. One is business facilitator and the other one is business correspondent. So now if you see here, in respect of rural area accounts, in case if the services are provided in relation to the accounts of a rural area, there is a rural area, to that rural area accounts, in relation to rural area accounts, if the services of business facilitator or business correspondent is getting provided, in that case, services provided by business facilitator to the banking company in relation to accounts of rural area, exempt, no GST. Not just that, if this business facilitator is having an agent, that agent of business facilitator will provide the services to business facilitator in relation to rural area accounts, exempted. Same thing will become applicable for business correspondent also. So services provided by business correspondent to the banking company in relation to the rural area accounts, exempt. Services provided by agent of business correspondent to a business correspondent in relation to rural area accounts, exempt. So what I want to say here is, in relation to accounts of the rural area, services provided by the business facilitator or business correspondent or their intermediaries like agents, everything is exempt. Now we will get urban areas. Sir, what about urban areas? What about services provided by business correspondent, business facilitator and their agents in relation to urban area accounts? So in that cases, what they say here is, in case of urban area accounts, services provided by business facilitator to the banking company, BCom here means banking company, services provided by business facilitator to the banking company in relation to urban area accounts, it will be taxable, and it will be taxable under reverse charge mechanism. That means banking company only will pay the amount of GST under RCM in relation to services provided by business facilitator to the banking company in relation to urban area accounts, that is taxable, and RCM will become applicable. Now these business facilitators will have agents. Now these agents will provide services to the business facilitator in relation to urban area accounts, that will be taxable under forward charge mechanism only. That means this agents only will collect the amount of GST and pay it to the government. Okay, so two wings here: services provided by business facilitator to the banking company in relation to urban area accounts, taxable under reverse charge mechanism. Now services provided by agent of business facilitator to the business facilitator in relation to urban area accounts will be taxable under forward charge mechanism. Now, if you come to business correspondent, reverse is the case. Services provided by business correspondent to a banking company in relation to urban area accounts, it will be taxable under forward charge mechanism. That means in this case, this business correspondent only will pay the amount of GST to the government since being a supplier. But however, agent of business correspondent, if they are providing services to the business correspondent in relation to urban area accounts, this will get covered under RCM. Being the recipient, business correspondent will pay the amount of GST with the government. Understood? Clear? So whatever we have read for business facilitator, that will be exact reverse in the case of business correspondent. Understood? But one point here, in relation to rural area accounts, the services of everybody in this chain is exempted, but only it will be taxable in the case of accounts related to urban area. But here also, in few cases RCM, in few cases FCM. So that's what I have tried to keep it here in this diagram. Okay, so kindly do refer it. So here also I have explained that RCM, FCM, business correspondent, business facilitator in the banking industry, along with RCM cases, along with exemptions, all I have covered in one go. Next. Okay, so this also we are done. Then what else is left out? That's all. I think these are all the services related to banking and financial sector. So that bunch we have covered. Now we will talk about some copyright related services. There are some copyright. There are some copyright related services, intellectual property rights, IPR related services, which are also covered under RCM. Let us try to see when. So first one, services by way of transfer or permitting use or enjoyment of a copyright covered under 13(1) of the Copyright Act relating to original dramatic, musical or artistic works. And who is service provider? Service provider is music composer, photographer, artist or the like. And what service he is providing? He is providing the services by way of transfer or permitting use or enjoyment of a copyright. To whom that service is getting provided? The service recipient is music company, producer or the like, located in the taxable territory. This will get covered under reverse charge mechanism. Sir, what they are trying to say it here? Simply, if I have to put it, let us say I'm a music composer. I'm a music composer. I composed one song. For this song, I have taken copyright. So one day, one music company has approached me. Let us say, for example, T Series has approached me. So T Series approached me and told, sir, you please permit us to use your copyright. You have composed a song. For that, you have taken a copyright. No, you do one thing. You please give us right. You please transfer that copyright to us. You please permit us to use or enjoy that copyright, so that we will use that song somewhere. Either we'll post it in our social media platforms or we'll release some albums, whatever it is. You please transfer that copyrights or permit us to use or enjoy that copyright. In return, the music company is paying them some remuneration, generally in the form of royalties they will pay. So here, who is the service provider? Service provider is music composer. Who is the recipient? Music company. What service is getting provided? Permitting or transferring or permitting use or enjoyment of a copyright. So now they are saying this will get covered under RCM. RCM means what? Recipient, being a music company is a recipient, they will only be liable to pay the amount of GST to the government under reverse charge mechanism. Same thing will happen even to the artist also. Let us say I have drawn one painting. So for that painting, I have taken copyright. So some company, some producer came to me and told, sir, you have taken a copyright for your artistic work. No, you please temporarily transfer or permit use or enjoyment of copyright for that. We will pay you some remuneration. This also will get covered under RCM. The same thing will become applicable even in the case of a photographer also. Let us say I am a photographer. I have taken one wildlife photography, one wild animals photographs I have taken. For that photographs also I have taken copyright. One day, let us say, for example, some magazine company approached me and they asked me to transfer that copyright or permit use or enjoyment of that copyright related to that photographs, in which they will pay me remuneration. So here also supplier is that photographer, recipient is that magazine company. Here also it will get covered under RCM. On that, whatever GST is applicable, that is required to be paid by that recipient only, magazine company or producer in our example. So this is what they try to say it here. Understood? Right. So this is one kind of copyright. Another one, the same thing they have told even for author also. So here what they are trying to say here is, let us say I'm an author. I wrote one book. I wrote one novel. So for that novel also I will take a copyright. So I wrote one book. For that book I have taken a copyright. So one day what happened is, one publisher approached me. Let us say, for example, Penguin, that is one big publisher in India. They have approached me and told, sir, you have written a novel, no? So for that you have already taken a copyright. You do one thing, you transfer that copyright to us, or you permit us to use or enjoy that copyright. What we will do is, we will publish your book. If you transfer the copyright to us, we will publish your book, we will sell it, and in return we will give you some remuneration. So here I am an author. I am providing the services in relation to temporary transfer or permitting use or enjoyment of a copyright in relation to an literary work to a recipient. Who is recipient? Publisher. Now they are saying this will also get covered under RCM. This will also get covered under RCM. So on that services, whatever I have provided by way of permitting or transferring or permitting use or enjoyment of my copyright in relation to original literary works to a publisher who is a recipient, this is also getting covered under RCM. So here the publisher only will pay the amount of GST under reverse charge mechanism. However, in this author's case, there is one relaxation provided. In this case, for authors, only for authors, not for music composers, not for artists, and not for photographers. For them, always reverse charge mechanism. In relation to music company, artist or photograph, where the services they are providing it to music company, producer or the like, this will always be RCM. No ifs and buts. No options, nothing. Always RCM. Government is saying RCM, compulsorily they have to pay it under RCM only. But for others, there is one option given. So for others, if they are temporarily transferring or permitting use or enjoyment of that copyright in relation to some literary works, generally it will get covered under RCM. But here they have given one option to the author. If the author willfully comes forward and says, sir, I will take the registration. And I will only pay the amount of GST. I will pay the amount of GST under forward charge mechanism. I will only give the invoice. In that invoice, I will do the declaration also. In that invoice, I will give the declaration also. Sir, I will, even though my services are getting covered under RCM, I have exercised my option to pay the GST under forward charge mechanism. That's why I'm paying it. Like that, he will give declaration on the tax invoice also. And he should do a promise that he will follow the same for 1 year. He will not withdraw. He will not be given the permission to withdraw within 1 year. That means if he has exercised the option to pay the tax under forward charge mechanism today, tomorrow he can't come and say, no, I want to go back to reverse charge mechanism only. No, he can't say that. He has to stay in that option for 1 year. So if all that conditions are fulfilled, then RCM will not become applicable. Forward charge mechanism will become applicable. But as I have told, very important, this option is given only for author, not for music composer, artist, or photographer. So if you see it here, right? So however, an author can choose to pay tax under forward charge if he is registered and he filed a declaration exercising option to pay GST under forward charge and comply with all the provisions, and shall not withdraw. Very important. He shall not withdraw the said option within period of 1 year from the date of exercising such option. And also he makes a declaration on invoice issued by him in the prescribed form. So whatever invoice he will give, no, in case if he has opted to pay the GST under forward charge mechanism, he'll give tax invoice, right? On that tax invoice, he is also required to make a declaration. What declaration he has to make? That he has exercised the option to pay the GST under forward charge mechanism. The declaration he is required to give. So this is what regarding intellectual property rights. Now we have bunch of other services which will get covered under RCM. Let us try to cover them as well. So security services. Even security services are also getting covered under RCM. When I say security services is a very broad term. Many things will come under that security services purview. But they're not talking about all that security services. Only which security services they are specifically talking here is security services provided by way of supply of security personnel. So what they say, which kind of security services? Security services provided by way of security personnel. So by way of supplying the security personnel, like for example, today we have security agencies. If you need security guards for your office, they will supply the security personnel. They will supply the security guards to you. So only those security services will get covered under RCM. Sir, installation of CCTV cameras, that is also a security service, but that will not get covered under RCM. Not all security services will get covered under RCM. They are specifically talking about only those security services which are provided by way of supply of security personnel. If you are providing the security services by way of supplying of security personnel, then only that will get covered under RCM. But not all security services provided by way of supplying security personnel. Even for RCM to become applicable, two more conditions they are saying. Supplier should be other than body corporate. The person, whoever is providing that security services, should be other than body corporate. Recipient must be a registered person. Recipient is a registered person, registered under GST Act. Then only RCM will become applicable. So tell me, when security services will get covered under RCM? Security services or those services which are provided by way of security personnel. Supplier should be other than body corporate. Recipient must be a registered person. Then RCM will become applicable. However, nothing contained in this entry shall apply. So that means RCM will not apply. When, sir? When the recipient is a registered person, but that recipient is a department or establishment of central government, state government, union territory, local authority, government agency who has taken registration only for deducting TDS, but not for making any taxable supply. GTA, one relaxation we have seen, no? Same relaxation they are giving it here. So recipient is registered. Supplier is other than body corporate. Security services by way of supply of security personnel. But recipient is such a registered person who has taken registration only for deducting TDS under section number 51, but not for making any taxable supply. Then RCM will not become applicable. See, when I say RCM not becoming applicable, don't take it as exempted. When I say RCM is not applicable, then other implication is FCM will become applicable. When I say RCM is not applicable, don't go with the notion that it is exempted. No, when RCM is not applicable, go with the notion that FCM will become applicable there. Similarly, if the recipient is registered person only, but he has opted to pay the tax under composition scheme. Recipient is a registered person receiving security services from other than body corporate, practically speaking RCM. But however, if the recipient has opted to pay the tax under composition scheme, recipient is registered, but he is paying the tax under composition scheme. Recipient is registered, but he is paying the tax under composition scheme. Then also, if he is paying the tax under composition scheme, then also what will happen? RCM will not become applicable. Here one more small point has been missed out. Even, just 1 minute. Here also. See, in case of renting of immobile property other than residential dwelling. So one small point has been missed out here in the chat. Just give me 1 minute. Yeah, here. Already I have included in the chat. Even in case of renting of other than residential dwelling also, if the supplier is registered, but the recipient is registered, recipient should be other than composition dealer. Even in case of renting of immobile property other than residential dwelling also, if the supplier is unregistered, recipient is registered, but other than composition dealer, then only RCM will become applicable. So this one small thing in the bracket, I have missed it out. I have already included that in the chat, but I missed out to explain it. So recipient is registered person, but he is not a composition dealer. Then only RCM will become applicable. Right. Next, come back. Okay, security services also we have covered. Then finally, we have renting of motor vehicle. Let us try to complete this also. Renting of motor vehicle. Fine. So renting of motor vehicle. If someone is providing services of renting of motor vehicle, that will also get covered under RCM. Renting of motor vehicle also will get covered under RCM, but in order to get covered under RCM, there are some conditions which are required to be fulfilled. Renting of motor vehicles designed to carry passengers, that I will tell you. Renting of motor vehicles, when the service of renting of motor vehicle is getting provided by a supplier to the recipient, then also they will get covered under RCM. But when, sir, motor vehicle should be such a motor vehicle designed to carry passengers. Motor vehicle should be such a motor vehicle which should be designed to carry passengers, not goods. If you are renting motor vehicle designed to carry goods, no RCM, forward charge mechanism. So RCM will become applicable only when you are renting a motor vehicle which is designed to carry passengers. And cost of fuel must be included in the consideration. Cost of fuel must be included in the consideration. Cost of fuel must be included in the consideration. And few more conditions. Supplier should be other than body corporate. Supplier should be other than body corporate, and recipient must be body corporate. Supplier should be other than body corporate and recipient should be body corporate. If all these conditions are satisfied, then renting of motor vehicle services also will get covered under reverse charge mechanism. So listen carefully. So when the renting of motor vehicles will get covered under reverse charge mechanism, in order to get covered under RCM, there are various conditions which are required to be fulfilled. Number one, that motor vehicle which is getting rented out, that should be designed to carry passengers. Then cost of fuel must be included in the consideration. Supplier should be other than body corporate. Recipient must be body corporate. If all these conditions are satisfied, then RCM will become applicable. Recipient will be liable to pay the GST under reverse charge mechanism. But here also there is an option given to the supplier. If the supplier wants to pay the GST under forward charge mechanism, he can exercise the option and pay the GST under forward charge mechanism. But here also for the supplier, an option has been given. If he wants to make the payment of GST under forward charge mechanism, yes, he can pay the GST under forward charge mechanism. Here also, if the recipient is only paying the GST under forward charge mechanism and the reverse charge mechanism, the applicable rate of GST will be 5%. In case if the recipient is paying the GST under reverse charge mechanism, the rate of GST which is required to be paid is 5%. In case if the supplier wants to pay the GST under forward charge mechanism, here also two options are available. One, if you don't want full ITC, with restriction on ITC, you can pay the GST at the rate of 5% on your outward supplies. Another option which is available is 18%. If you want to take full ITC, you have to pay 18% of GST. Previously, the rate used to be 12%, but now it has been changed to 18. The rate is 18. This correction also you are required to make. This is also same that supplementary issue. So if you see here I have given 12%, but it's not 12%, it should be 18%. If he wants to pay the GST under forward charge mechanism, it should not be 12, it should be 18%. So 9% CGST, 9% SGST. Okay, so it should be 9%. So this is the only change which you are required to do in your material. One is at the GTA place and the other one is at the renting of motor vehicles. Okay, right. So this is what regarding renting of motor vehicle when RCM will become applicable. Next we have one more service. Which will get covered under RCM. So one more service which will get covered under RCM is lending of securities. In case of supply of services of lending of securities under security lending scheme. So who is the supplier? Supplier will be that person whoever is lending the securities. Who will be the recipient? Recipient will be the borrower, whoever is borrowing the securities. So under SEBI, we have one scheme called security lending scheme, where if I am a person holding the shares, I can lend my shares to a borrower. in return for some consideration. I will lend the shares and I will get some consideration. So this we call it as security lending scheme. This is also classified as supply of service. Now, who is the supplier? In this case, lender. Whoever is lending the securities, that person will be a supplier. Who is the recipient? Borrower. Whoever is borrowing the securities, he will become the recipient. Now they are saying this service also will get covered under RCM. That means borrower will be liable to pay the GST under reverse charge mechanism. Borrower will be liable to pay the GST under reverse charge mechanism on that services so received. Understood? Next. We have one more thing. Under IGST purposes also, there are some services which are covered under RCM. But this I will not tell you now. Along with exemptions, I will try to cover. Why? Because for that also I have one chart. For that also I have a chart, so that I will try to cover it along with this. So in case of services supplied by a person located in non-taxable territory, that means in case of international transactions, in case of supply of services between countries, what will be the taxability, how you are required to, when exempted, when taxable, when RCM, when FCM. So like this, I have one chart in case of international supply of services that I will try to cover it in the exemptions. Now I will try to keep it on hold. This is not discussed. This I will keep it on hold. This I will try to cover it along with exemptions. So just let me write it here so that I will not skip it. To be discussed in exemptions. Okay, right. So these are all the various services which have been notified under reverse charge mechanism. These are all the various services which are notified under reverse charge mechanism. Then we have some usual discussion talking about the classification rates and all. So we'll keep that discussion for that discussion is very usual discussion, very normal discussion. You need not worry about it. So just you can refer to that. So one more aspect under charge of GST which I would like to cover now is composition levy. There is one more concept which is covered under the same chapter, under the chapter charge of GST. So we have one more concept called composition levy under section number 10 of the CGST Act. Very small chapter, very small topic. Within a short span of time we could complete it. Let us try to do this composition levy. Let us try to do this composition levy. So rarely they ask a question from here, but if at all they are asking in MCQs, they might test it, not as a standalone question, but they might test a question from in the form of MCQs. So that's why we'll try to quickly cover this composition levy. Will not take much of a time. We can complete in very short amount of time. So let us try to do it. Sir, what exactly is this composition levy? Fine. So composition levy. Sir, what is this composition levy? See, just now in the registration chapter, as I have told, not all business persons are required to get themselves registered under GST Act. Just now, one point which we have clarified is not all business persons are required to get themselves registered under GST Act. Only when their aggregate turnover exceeds the applicable threshold limit, then only they become liable for registration. See, the moment you are a registered person, there are so many compliances which you are required to do. There are so many compliances which are required to do. But what the government has thought is, let us do one thing. You are a person liable for registration and you have taken registration also. But after taking registration also, we will give you one more simplified scheme. Even after taking registration also, we'll give you one more simplified scheme. For small persons, not for big persons, for small persons, we will give you one more relaxation in the name called composition scheme. In case if you have opted for composition scheme, you will be given some compliance benefits. You will be relaxed from some compliances. What are they? You are not required to file monthly returns or quarterly returns, only one annual return. You will not be required to maintain some records, some stock records and tax records you will not be required to maintain. And you will be given an option to pay the GST at a very much a discounted rate. You need not pay the GST at the usual rates which are applicable on that goods or services, whatever you are supplying. So you can have an option to pay the GST at a discounted rate. At a very much a discounted rate, you can make the payment of the GST. So like that, some options have been given. So now, who are that people who can opt for composition scheme? Let us see. So basically, we have two kinds of composition scheme. One is composition scheme under 10 subsection 1 and 2, and the other one is composition scheme under 10 subsection 2A. So the composition scheme under 10 subsection 1 and 2 is applicable for those people who are engaged in supply of goods and also restaurant service providers. So initially we have only one kind of composition scheme, 10 subsection 1 and 2. Who can avail that composition scheme under 10 subsection 1 and 2? Only those people who are engaged in supply of the goods and those people who are engaged in restaurant services. They can only opt for composition scheme under 10 subsection 1 and 2. Thereafter, one more composition scheme they have brought up, which we call it as composition scheme under 10 subsection 2A. This I will come back to that later. First, we will try to complete what is the usual composition scheme we have. I will talk about another composition scheme under 10 subsection 2A at a later point of time. So, but whatever it is, the composition scheme under 10 subsection 1 and 2, it is initially applicable for whom? Only for those people who are engaged in goods. That means either you are a manufacturer or you are a trader. You must be either manufacturing the goods or you must be dealing in goods, trading in goods. Then you will become eligible for composition scheme under 10 subsection 1 and 2. Or if you are a restaurant service provider, you are a what? You are a restaurant service provider. Then also you become eligible for composition levy. So, but when these people also, when this manufacturer, trader, restaurant service also will become eligible for composition levy when their aggregate turnover in the preceding financial year is up to the prescribed limit. If these people, if their aggregate turnover is less than certain limit in the preceding financial year, then in the current year they become eligible for composition levy. Sir, what is that limit, sir? 1.5 crores. 1.5 crores. If you are a registered person, if your aggregate turnover in the preceding financial year does not exceed 1.5 crores, then in the current year you become eligible for composition levy. Last year's turnover you have to check. If in the preceding financial year, if your aggregate turnover does not exceed 1.5 CR, then in the current year you become eligible for composition levy. And in the current year, you can remain under composition scheme up to your turnover of 1.5 CR. So if your aggregate turnover in the preceding financial year is less than or equal to 1.5 CR, then in the current year you become eligible for composition levy. And in the current year, you can be remaining under composition scheme only up to a turnover of 1.5 CR. Up to your turnover remaining within the limit of 1.5 CR, you can remain under composition scheme. In the current year, if your turnover exceeds 1.5 CR, then you have to automatically come out of the composition scheme and regular scheme will become applicable. So this is what the limit, 1.5 CR. But some states, some special category states told, no, we don't want 1.5 CR. We will make the people registered in our state to be eligible for composition levy only if their aggregate turnover in the preceding financial year is 75 lakhs. And we will permit them to remain under composition scheme in the current year only up to a turnover of 75 lakhs. The government usually gave a limit of 1.5 CR. So some special category states came forward and told, no, we don't want 1.5 CR amount of limit for composition levy. 75 lakh rupees of limit will be enough. That means if a business person, if a registered person, if his aggregate turnover in the preceding financial year does not exceed 75 lakh rupees, then in the current year they become eligible for composition levy up to an amount of 75 lakh. Sir, which are that special category states who told we want 75 lakh rupees of limit? That will be enough? Arunachal Pradesh, Uttarakhand, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura. So for this I generally give some thing called mantis, something like that. One mnemonic you can develop it using this first letters of this first alphabets of this states. So you can work out some mnemonic. So these special category states told, no, we don't want 1.5 CR limit. We want 75 lakh rupees of limit. That will be enough. So whatever it is, if your aggregate turnover in the preceding financial year is 1.5 CR or 75 lakhs, then in the current year you become eligible for composition levy and you can remain under composition levy in the current year up to a turnover of 1.5 CR or 75 lakhs. Okay, right. So we have seen who is eligible. Now we will try to understand in case if you are eligible for composition levy and in case if you have opted for composition levy, what will be the rate of GST which you are required to pay? What will be rate of GST which you are required to pay in case if you become eligible for composition levy under 10 subsection 1 and 2 and you wanted to pay GST under composition scheme? What will be the rate of GST you are required to pay? If you are a manufacturer, you will be required to pay 1% of your total turnover in a state or union territory. If you are a manufacturer, you will be required to pay 1% of your total turnover in a state or union territory. In each state, in each union territory, you have to determine what is your total turnover. When I say total turnover, on your taxable as well as exempt turnover. In each state, you have to calculate what is your taxable turnover, what is your exempt turnover. Both you have to add it up together. On that total turnover, 1% you will be required to pay. 0.5% CGST, 0.5% SGST. If you are a restaurant service provider, you will be liable to pay 5% of your turnover in a state or union territory. And here also total turnover. So what do you mean by that? In every state or union territory, you have to calculate what is your taxable turnover, what is your exempt turnover. On the total amount, you will be liable to pay 5%. But however, if you are a trader, if you are not manufacturer, if you are not restaurant service provider, if you are a trader, you are also liable to pay 1%. But as a trader, you will be liable to pay only 1% on your taxable turnover. You will be liable to pay 1% only on taxable turnover. On your exempt turnover, you will not be liable to pay that 1%. Very important, minute detail here. So in case if you are a manufacturer, you will be liable to pay 1% of your total turnover in a state or union territory. In every state and union territory, how much turnover you are making. So total turnover, your taxable turnover, exempt turnover, both you have to add it up together. And on your total turnover, on taxable as well as exempted, you will be liable to pay 1%. And this payment you have to make quarterly. And this payment you have to make every quarter, once in every quarter. So let us say, for example, April to June quarter, you have to determine turnover in each state or union territory. What is your total turnover in each state or union territory? On that 1% you are required to pay. Same in the case of restaurant service provider, also 5% of the total turnover. But in case if you are a trader, here also you are required to pay 1%, but not on total turnover. You will be liable to pay 1% only on the taxable turnover. On exempt turnover, you will not be required to pay it. Understood? And this amount, this discounted rate of tax, whatever you are paying, this discounted rate of tax, whatever you are paying, this discounted rate of tax, you have to compulsorily pay it through electronic cash ledger only. This you have to pay it compulsorily through electronic cash ledger. That means you can't take ITC for that. So this whatever 1% you are calculating, 5% you are calculating, and another 1% you are calculating, this liability you have to pay it compulsorily in cash. You can't use ITC for that. So that means whatever GST you are required to pay under composition scheme, you have to compulsorily pay it in cash. You can't use ITC. You can't collect it also. You should not collect that whatever 1%, 5% you are paying, that you can't collect it. You can't collect. You have to pay it from your own pocket. Can't collect from recipient. This amount of tax, you cannot collect it from recipient also. And one more thing, in case if you are a composition dealer, you can't issue tax invoice. You have to issue something called bill of supply without collecting any tax, without charging any tax. Only value you have to collect, and that whatever 1%, 5% you are required to pay, that you have to pay it from your own pocket. And even the person whoever is purchasing from the composition dealer, he can't avail ITC also. Recipient can't avail ITC. You can't use ITC for discharging your liability. If someone has bought from you, they also can't take ITC, and you can't collect that GST amount from your customer, and you can't issue tax invoice. You have to issue something called bill of supply. Understood? Then see, even though your aggregate turnover is within that limit, within that 1.5 CR or 75 lakh rupees, still some people are ineligible for composition levy. Let us try to understand who are that people not eligible for composition scheme under 10 subsection 1 and 2. Who are that people who are not eligible for composition scheme for goods? That means under 10 subsection 1 and 2. I am only talking about first composition scheme. We have another composition scheme also, that will come back to that later. I am talking about the first category of composition scheme. So who is not eligible for composition scheme under 10 subsection 1 and 2? Number 1, if you are a supplier engaged in making any supply of goods or services not leviable to tax. That means if you are making a non-taxable supply. If you are supplying that alcoholic liquor for human consumption or that 5 petroleum products, if you are making such supplies which are not leviable to tax, if you are making a non-taxable supply, you will not be eligible for making composition levy. You cannot opt for composition levy. Supplier engaged in making any interstate outward supplies. If you are making any interstate outward supplies, then also you can't be eligible for composition levy. Sir, what about if I receive interstate inward supplies? Interstate outward supplies means I can't sell to other states. What if I receive supplies from other states? Will I also become ineligible? No. The restriction is only on making interstate outward supplies. That means you can have interstate inward supplies, still you will become eligible for composition levy. But in case if you are making interstate outward supplies, you are not eligible for composition levy. One more restriction. A person supplying any services through e-commerce operator required to collect TCS under section number 52. In case if you are such a person, you are making supply of services through a e-commerce operator who is required to collect TCS under section number 52, then also you become ineligible. But if you pay close attention here, restriction is on only providing services through e-commerce operator. That means if you are making supply of goods through e-commerce operator, still you become eligible for composition levy. In case if you are making supply of services through e-commerce operator, and that to that e-commerce operator who is required to collect TCS under section number 52, through that e-commerce operator, if you are making supply of services, then you will be not eligible for composition levy. And also, if you are a manufacturer of supplied goods, see here, manufacturer, you should not be engaged in manufacturing of certain goods in case if you want to opt for composition levy. So they are putting restriction only on manufacture. That means can I do trading? Yes, you can do trading. Restriction is only on manufacture. So if you are engaged in manufacturing of the certain specified goods, they have specified certain goods, and if you are engaged in manufacturing of that specified goods, then you become ineligible for composition levy. Manufacturing is only restricted, but trading is permitted. Sir, what are that goods which I should not manufacture, sir? Ice cream and other edibles, pan masala, tobacco products, aerated waters, fly ash bricks, fly ash aggregate, fly ash blocks, bricks of fossil mills or similar siliceous earth, building bricks, earthen or roofing tiles. Sir, is this list sounding familiar? Yes, this list is sounding familiar. Where we have seen just now in the registration chapter, when a person can't enjoy that enhanced threshold limit of 40. Even if you are exclusively engaged in supply of goods, when you can't enjoy that enhanced threshold limit of 40, we have seen you should not be making supplies, trading and manufacturing. Should not be either doing trading or manufacturing of the 7 products. What are they? Same 7, excluding the aerated waters. The same list excluding aerated waters. You should not be either trading or manufacturing if you want to enjoy that enhanced threshold limit of 40. But for composition scheme under 10 subsection 1 and 2, if you want to obtain, if you want to levy, you have to not manufacture. You can do trading, but you should not manufacture. What you should not manufacture? The same 7 products. To that one item will get added to the list, which is aerated water. To that one item will get added to the list, aerated water. You should not be doing manufacturing. You can trade. But to enjoy the enhanced threshold limit of 40, you should not be either trading or you should not be manufacturing 7 products, excluding the aerated waters. Clear? Right. So this is one more person who is not eligible for composition levy, and one more person, supplier, who is an either CTP or NRTP. If you are a CTP or NRTP, then also you become ineligible for composition levy under 10(1) or 2. And supplier of services, save as otherwise provided in 10 subsection 1. That means you should not be engaged in making any supply of services other than restaurant services. So this composition scheme for 10 subsection 1 and 2, it has been made applicable only for manufacturers, restaurant service providers, traders. So that means apart from restaurant services, if you are providing any other services, then you become ineligible for composition levy under 10 subsection 1 and 2. Okay, so 10 subsection 1 and 2 composition scheme is becoming applicable only for manufacturers, traders, restaurant service providers. If you are providing any other service, apart from this, apart from restaurant services, if you are providing any other services, then you become ineligible for composition levy under 10(1) and 2. But here there is a problem. Some people have started facing problem. Let us say, for example, I'm an electronic stores, I'm an electronic goods dealer. Mainly, I'm dealing in electronic goods only. I sell goods. But some minimal amount of service also I'm providing. Some very minimal amount of service also I'm providing. Let us say, for example, whatever electronic goods I have sold, if any customer gets any service problem, I will fix it for some charge. So I'm primarily engaged in goods, but I'm doing a minimum supply. I'm doing a very marginal supply. But just because I'm making a marginal supply, practically speaking, I become ineligible for composition levy under 10(1) and 2. Just now, as I've told, apart from restaurant services, you should not provide any other service. If I'm providing any other service, like in this case, I'm doing service, repair, small portion of my total turnover, small portion I'm doing service. But since I'm making a supply of service other than restaurant services, I become ineligible for composition levy under 10 subsection 1 and 2. But it is unnecessary restriction or not? It is an unnecessary trouble or not? I'm facing difficulty here or not? So that's why what the act has considered is, we'll do one thing. If you are a person primarily engaged in goods only, but if you are making marginal supply of services, if you are making marginal supply, very minimum amount of supply of service you are doing, other than restaurant services, some other services you are providing, but that is a very marginal amount, then we will still make you eligible to opt for composition levy under 10 subsection 1 and 2. If you are making marginal supply of services, very minimal amount of service you are supplying, still we will make you eligible for composition levy under 10 subsection 1 and 2. But how to determine that marginal supply, sir? What can be considered as marginal? Because if the government leaves it to the choice, everybody will have their own definition. So when we can consider that supply of service is very, very marginal. So that act did not give the freedom for you to decide. The act itself has told it what will be considered as marginal supply. See here. So when it will be considered as marginal supply, 10% of the turnover in a state or union territory in the preceding financial year, or 5 lakh rupees, whichever is higher. How much amount of marginal supply I can do? 10% of the turnover in a state or union territory in the preceding financial year, or 5 lakh rupees, whichever is higher, that much amount of marginal supply I can do. Let us say, for example, my turnover in the preceding financial year, is 100 crore rupees, 100 lakhs, sorry. In the preceding financial year, my turnover is 100 lakh rupees. So now in the current year, I can do marginal supply of services and can still remain under composition scheme. How much supply I can make? 10% of turnover in the preceding financial year. What is 10% of turnover in the preceding financial year? 10% of 100 lakhs. It will come to 10 lakh rupees or 5 lakh rupees, whichever is higher. So in the current year, I can make marginal supply of services up to a limit of 10 lakh rupees. Still, I can remain under composition scheme. Understood? Clear? If my limit exceed, that means in case in the current year, if I have exceeded my marginal supply, let us say, for example, I have exceeded that limit of 10, immediately I have to come out of the composition scheme. I have to come under the regular scheme. Understood? So this is what the brief regarding composition levy under 10 subsection 1 and 2. Under 10 subsection 1 and 2, this is what the composition scheme. But, so just 1 minute, light has went off. Okay, what happened? Come on. Okay. So this is what the composition scheme under. Just 1 minute. So this is what the composition scheme under 10 subsection 1 and 2. But now what happened is, over a period of time, this government has given this simplified scheme only primarily for people who are manufacturers, who are traders, and restaurant service providers. Then remaining service sectors, that means mainly service sector or those people who are doing equal amount of goods and services, they are all kept out of the composition levy. Why? Because just now, as I have told, composition scheme under 10 subsection 1 and 2, it was restricted only for manufacturers, only for traders, restaurant service providers, and minimal service providers. But what about others, sir? For them, there was no composition scheme. Mainly for service sector, there was no composition scheme. Or those people who are doing good amount of goods and services, both they are doing, for them also composition scheme is not there. So these people went to the government and requested, sir, we also want some composition scheme. For those purposes, for those people, the people who are ineligible for composition scheme under 10 subsection 1 and 2, if you are a person not eligible for composition scheme under 10 subsection 1 and 2, don't worry. We will give you one more option, that we will call it as composition scheme for services. We'll give you one more option of composition scheme, that is composition scheme under 10 subsection 2A, that we will call it as composition scheme for services. Those people who are ineligible for composition levy under 10, 1 and 2, for you are giving one more option. There is one more composition scheme for you. You can opt for composition scheme for services under section 10 subsection 2A. Sir, who will become eligible? Sir, what is the eligibility criteria? See, for 10, 1 and 2, they told that if your aggregate turnover in the preceding financial year does not cross either 1.5 crores or 75 lakhs, no? But in order to be eligible for composition levy under 10 subsection 2A, your aggregate turnover in the preceding financial year should not exceed 50 lakh rupees. Your aggregate turnover should not exceed 50 lakh rupees in the preceding financial year, and you can remain under composition scheme under 10 subsection 2A up to a turnover of 50 lakh rupees in the current financial year. So what is the limit for opting for composition scheme under 10 subsection 2A? 50 lakh rupees, your aggregate. Here there is no separate limit for special category states. For 10 subsection 2A, we have a universal time limit all over India, 50 lakh rupees. So if your aggregate turnover in the preceding financial year is not exceeding 50 lakh rupees, then in the current year, you can opt for composition scheme under 10 subsection 2A, and you can remain under composition scheme only up to a turnover of 50 lakh rupees in the current financial year. Understood? Now, sir, in case if a person has opted for composition scheme under 10 subsection 2A, what will be the rate of GST they are required to pay? You told for composition scheme under 10, 1 and 2, the rate of GST is 1%, 5%. But what will be the rate of GST if a person opts for composition scheme under 10 subsection 2A? What will be the rate of GST? So if you come here, if you are a person opting for composition scheme under 10 subsection 2A, the rate of GST will be 6%. 6%, 3% CGST, 3% SGST. Effective rate will be 6% of total turnover. Once again, not just on the taxable turnover, 6% of turnover of supplies of goods and services in a state or union territory. So 6% of your total turnover, both the taxable and exempt, you will be liable to pay under composition scheme. And even under 10 subsection 2A also, who are the persons not eligible for composition scheme under 10 subsection 2A is same list here. If you are making non-taxable supply, if you are making interstate outward supplies, if you are making supply of services through e-commerce operator required to collect TCS under section number 52, if you are manufacturer of notified goods, if you are a CTP or NRTP, then you become ineligible for composition levy even under 10 2A also. Then there are some conditions and restrictions which are required to be fulfilled by composition dealers. Whether you are opting for composition scheme under 10 subsection 1 and 2 or you are opting for composition scheme under 10 subsection 2A, there are some conditions and restrictions which are applicable for you. Sir, what are they? So persons opting for composition levy has to comply with the following conditions. Whether you are opting for composition scheme under 10 subsection 1 and 2 or you are opting for composition scheme under 10 subsection 2A. For both composition dealers, there are some conditions which they have to comply with. Sir, what are they? Number 1, they shall pay the tax under 9 subsection 3 or 9 subsection 4, that is RCM. If you are a composition dealer, okay, you will pay at a discounted rate on your outward supplies. But in case if you are liable to pay GST under reverse charge mechanism, you must discharge your liability under reverse charge mechanism at the usual rate, not at the discounted rate. Let us say if you are receiving legal services, legal services are getting covered under RCM. So now you are a composition dealer, but still you are liable to pay GST under RCM. Now that RCM, you have to pay it at the usual rate. Let us say legal services are attracting GST at the rate of 18%. Your RCM liability, you must discharge it at the rate of 18%. Now you can't say, sir, I will pay 1%, 5%, 6%. You can't say it. Understood? So that's what they say here. In case if you are liable to pay GST under reverse charge mechanism, that you must discharge it at the usual rate, not at the discounted rate. And you should not be a CTP or NRTP. Anyhow, CTP, NRTP will not be eligible for composition levy only. And you must mention the words composition taxable person not eligible to collect a tax on supplies on top of your bill of supply. You will issue a bill of supply. On that bill of supply, at the top of the bill of supply, you have to mention that I'm a composition dealer. I'm not required to collect a tax. I'm not authorized to collect the tax. That you have to mention. And you have to mention the words composition taxable person on every notice, signboard displayed at a prominent place of his additional place of business and principal place of business. So at every principal place of business, at every additional place of business, you have to declare that you are a composition dealer. So like that, you have to mention. And tax on goods held in stock are liable to RCM should be paid. So under 9 subsection 4, RCM liabilities will be there. That also you have to discharge. And registered person should not engage in manufacturing. So this also I have told, these products you should not manufacture. Then there are some procedural formalities, how you can opt for composition scheme, how you can withdraw from the composition scheme. That procedural formalities are there that you can have a look at it. So on procedural formalities, they mainly ask a question at the inter level. At final level, on composition levy, they might not ask procedural formalities, but this conceptual understanding, whatever we had, that is important at the final level. Okay, so this is what related to composition levy. So I think we are approaching the time as mentioned. So it's almost 11:53. So only 7 or 8 minutes are left. So now we will try to wind up the today's session. So we'll try to wind up the today's session, and what and all we have covered. So mainly 3 topics we have covered in the today's session. We are done with the registration revision. Then we are done with the charge. Along with the charge, we are also done with the composition. So 3 major topics we have covered: registration, charge, and composition. So these 3 topics we have covered for today. Remaining chapters we'll try to do it tomorrow. So from the next session onwards, we'll try to do the remaining chapters. So that's all for now. See you in the next revision session. Take care. Bye. So today on this day 3, so since we are done with intro, supply, registration, and also charge and composition, so now the next bunch of chapters which are going to be very, very important from the examination perspective, from which there will be a compulsory question. So that bunch of chapters we are going to take up now. So 3 chapters will fall into that category. So one is time of supply, value of supply, place of supply, TOS, VOS, POS. So these 3 chapters we are going to pick up for revision now. Okay, so without any delay further, first I will try to pick up the time of supply chapter. So first we'll try to revise the time of supply chapter, very small chapter, very simple one only. We'll try to complete it quickly, will not take much of a time, very small chapter. So once we are done with the time of supply chapter, we are going to take place of supply, we are going to take the value of supply, then place of supply. Those 2 chapters will take some amount of time. So let us try to understand what exactly is this time of supply chapter talking about. So if you have attended the introduction session, I have already told you in the introduction session. So first, goods or services must be there. A taxable event called supply should have taken place, and that supply should be a taxable supply, and that supply should be made by a taxable person. Then only GST will be imposed. Now, okay sir, GST will be imposed, but what is the point of time at which I am required to make the payment? When I am required to make the payment, what is the point at which I will be liable to make the payment? It is not something like a business person on transaction to transaction basis, he will collect the amount of GST and pay to the government. It will not happen. It is not going to happen. So you don't expect the businessman on a daily basis, he will do hundreds of transactions. Do you think after completion of each and every transaction, he will transfer that amount of GST to the government? No. So there will be a certain time limit. There will be a certain time frame within which you are required to make that payment of GST to the government. So what is that time frame when you will be liable to pay the amount of GST? So that is something which is getting clarified by the time of supply chapter. So without any delay further, let us try to understand what is that time of supply. And when it comes to time of supply chapter, we are required to cover only 2 sections. One is section number 12, which is talking about how to determine the time of supply in case of supply of goods. Then we have section number 13, which is talking about how to determine the time of supply in case of supply of services. Thereafter, we are also required to discuss one more thing, which is regarding section number 14. What will happen if there is a change in rate of tax? So this section number 14, I will come back to that later. So first, primarily, we have 2 sections which are required to be covered as a part of this chapter. One is section number 12 and the other one is section number 13. So what is section number 12 talking about? What is section number 13 talking about? So section number 12 is talking about how to determine time of supply in case of supply of the goods. Section number 13 is going to talk about how to determine the time of supply in case of supply of services. Now we have various subsections. We have 12 subsection 1, 12 subsection 2, 12 subsection 3, 12 subsection 4, and even we have 13 subsection 1, 13 subsection 2, 13 subsection 3, 13 subsection 4. So each subsection will be talking about different cases and how to determine the place of supply. So various subsections are there, both under 12 subsection 1 and 13 subsection 1. We have various subsections. Each subsection will be talking about different instance and how to determine the time of supply in that instance. So we will try to pick one by one and we'll try to finish it off. Sir, what does 12 subsection 1 say? So coming to 12 subsection 1, which says that the liability to pay tax on goods shall arise at the time of supply as determined in terms of the provisions of the section. So which means 12 subsection is going to talk about applicability. So what they are saying is whenever you are making the supply of goods, you have to determine the time of supply as per the provisions of section number 12. So they are talking about the scope of section number 12. Similarly, even if you refer 13 subsection 1 also, they will talk about that section says that whenever you are making supply of services, the time of supply you have to determine it by following the provisions of section number 13. So subsection 1 is going to talk about applicability of the section. So subsection 1 of 12 subsection 1 says if you are making supply of the goods, determine the time of supply as per the provisions of section number 12. Section number 13 says if you are making supply of services, determine the time of supply as per the provisions of section number 13. So it is talking about applicability. So now we will come to 12 subsection 2. Sir, what is 12 subsection 2 talking about? In case of supply of goods under forward charge mechanism. In case if you are a registered person and if you are making supply of goods under forward charge mechanism, what will be the time of supply? So you are a supplier, you are making some supply and that supply is covered under FCM only. So what is FCM? So in case of forward charge mechanism, as we all are aware, supplier will collect the amount of GST from the recipient and he is required to deposit that GST amount with the government. That is what forward charge mechanism no. Supplier will collect the amount of GST from the recipient and deposit that amount with the government. So this is what forward charge mechanism. So in case of forward charge mechanism, as a supplier, when you will be liable to pay the amount of GST. So this I will try to explain it in one simple manner. So it is talking about forward charge mechanism. Subsection 2 is talking about forward charge mechanism. So in case of forward charge mechanism, how to determine the time of supply, sorry. So now I will tell you there is a detailed provision there, but I will try to summarize it in one simple manner. See, in case if the supplier of goods is either a composition dealer, if he is a composition dealer, or he is supplier of specified actionable claims, or if he is a supplier of specified actionable claims. In that case, the time of supply will be earlier of 3 dates. In case if you are a composition dealer or if you are a person who is making supply of specified actionable claims. Sir, what are that specified actionable claims? That we have already covered it in the supply chapter. So there are 6 specified actionable claims are there. Only that supply of specified actionable claims will fall under supply. Remaining all actionable claims are neither supply of goods, not even supply of services. So if you are a composition dealer, if you are a registered person making taxable supply, but you are a composition dealer or if you are a supplier of specified actionable claims. So time of supply will be earlier of 3 dates. Sir, what are they? Date of invoice, or last date or due date. Last date for issuance of invoice or due date for issuance of invoice, or date of receipt of payment. Date of receipt of payment, whichever is earlier. That's what they say here. So in case if you are a composition dealer or if you are a supplier of specified actionable claim, so what will be the time of supply, sir? Earlier of 3 dates. Date of invoice, if you are giving the invoice, that invoice, or due date for issuance of invoice, what will be the due date for issuance of invoice, that date, or date of receipt of payment, whichever is earlier. So earlier of these 3 dates will be considered as the time of supply. That will become the time of supply. In case of others, sir, I am a supplier of goods, sir, but I am not a composition dealer, and even I am not making supply of specified actionable claims. In this case, what they have told is ignore the date of receipt of payment. Ignore the date of receipt of payment. Time of supply will be date of invoice or last date for invoice. Last date for issuance of invoice as per provisions of section number 31. So whichever is earlier, that only will become the time of supply. Understood? So in case of others other than composition dealer and specified actionable claim dealer, so they have asked us to ignore the date of receipt of payment. Even if you receive the payment in advance also, you will not be liable to pay the GST at the time of receiving advance. When in case if you are a registered person making supply of the goods, but you are not a composition dealer, but you are not, and also you are not engaged in making of supply of specified actionable claims. So like this you have to remember. So for these 2 people, earlier of the 3 dates. For all other people, earlier of only 2 dates, date of invoice or last date for issuance of invoice. Okay, so this is what 12 subsection 2 says, how to determine the time of supply of goods under forward charge mechanism. So they have given so much of elaborated points here, but I tried to summarize it here in a one simple, whatever they are able to find it in the lengthy paragraphs, I try to summarize it here in a one simple form. So now one more thing I have to clarify it here. Sir, you are saying date of receipt of payment, no? What will be considered as date of receipt of payment? What will be considered as date of receipt of payment? So date of receipt of payment means the act says that, the explanation says that date of receipt of payment means the date on which amount has been recorded in the books of accounts, or date on which amount has been credited in the books of accounts, whichever is earlier. So what they have told, what do you mean by date of receipt of payment? Date on which amount has been recorded in your books of accounts. So when you receive the amount and all, you will write an entry in the books of accounts, no? So date on which entry has been recorded in the books of accounts, or date on which your bank account has been credited. You are a supplier, no? So you will receive the amount, no? Amount will get credited. So date on which amount is recorded in the books of accounts, or date on which amount is credited in the bank account, whichever is earlier, that will become the date of receipt of payment. Understood? So this is what forward charge mechanism. Now, similarly, we have 13 subsection 2, which is also talking about how to determine the time of supply in case of supply of services under forward charge. How to determine the time of supply in case of supply of services under forward charge, that is contained in 13 subsection 2. Let us see what they say. So for supply of services which are liable to pay tax under forward charge mechanism, the time of supply will be earlier of the 3 dates. So they have mentioned dates, they have mentioned some dates. So within that within that dates, whichever is earlier, you are required to determine the time of supply. So it depends on two cases. Number one, if the invoice is issued within the prescribed time limit. In case if you are making supply of services and you are required to give invoice. So if you refer to section number 31, time limit for issuance of invoices, you can issue in case of supply of services, you can issue the invoice within 45 days. Within 45 days in case of banks, financial institutions, etc. In case of all other entities, you are required to issue the invoice within 30 days from the date of provision of service. So time limit for issuance of invoice, that will be there in the tax invoice chapter. So in case if you are giving the invoice within the prescribed time limit, then date of issuance of the invoice or date of receipt of the payment, whichever is earlier. In case if you are issuing the invoice within the prescribed time limit, date of issuance of the invoice or date of receipt of the payment, whichever is earlier. Sir, what if invoice is not issued within the prescribed time limit? Let us say I am making supply of services under forward charge mechanism, but I am not giving the invoice within that prescribed time limit. So let us say I am a chartered accountant. I made the provision of service. 30 days from the date of provision of service is also over, but still I did not give invoice. That means you are not giving the invoice within the prescribed time limit. Sir, then what will be the time of supply, sir? They say in that circumstances, the time of supply will be date of provision of service or the date of receipt of payment, whichever is earlier. Date on which you have provided the service or the date of receipt of consideration or the date of receipt of payment, whichever is earlier. Understood? So one more point they say here, in case if the above methods are not applicable, if you are unable to determine the time of supply according to the above rules, let us say for example, date of provision of service is not available, date of invoice is not available, date of receipt of payment is also not available. So because of some reason, if you are unable to determine the time of supply as per above methods, then the time of supply will be the date on which recipient of service shows receipt of the service in his books of accounts. So in case as a supplier, you are making supply of service. From your records, we are not able to find out what is the time at which you have provided the service. What is the date of receipt of payment? You did not issue any invoice also. In that case, the date of in that case, time of supply will be considered as date on which your recipient has recorded that service in the books of accounts. So date on which the recipient of service shows the receipt of the service in his books of accounts. That will be considered as time of supply. Understood? So this is what regarding 13 subsection 2. So we have covered what is the time of supply in case of forward charge mechanism in case of supply of goods. We have also covered what is the time of supply in case of supply of services under forward charge mechanism. Clear everybody till here? Next. Now let us come to subsection 3. Subsection 3. See, wherever necessary, there only I will draw the charts. Remaining I will try to read it from the material. Sir, what does subsection 3 talk about? Subsection 3 will talk about even 12 subsection 3 and also if you take 13 subsection 3. So subsection 3 is going to talk about how to determine the time of supply in case of supply of goods or services under reverse charge mechanism. 12 subsection 2 is talking about forward charge mechanism. No, 12 subsection 3 will talk about in case if you are making supply of goods, but you are a recipient who is liable to pay the GST under reverse charge mechanism, what will be the time of supply? Similarly, if you go to 13 subsection 3, in case if you are receiving the services which are taxable under reverse charge mechanism, as a recipient, you are required to discharge that amount of GST with the government. So what will be considered as time of supply? That is covered under 13 subsection 3. So let us try to understand what will be the case in case of supply of the goods, and then we'll try to understand what will be the case in case of supply of services. So first I will talk about 12 subsection 3, time of supply under reverse charge. They simply say that earlier of 3 dates. They have given 3 dates, earlier of 3 dates they are saying it. Sir, which are the 3 dates? The date on which goods are received. Date on which you are receiving that goods. Number 2, date on which payment is recorded in the books of accounts of the recipient. Or date on which the same is debited in his bank account, whichever is earlier. Simply if I have to put a date of payment. Date of payment, when you are making the payment, because here you are a recipient. In case of reverse charge mechanism, recipient is liable to pay the amount of GST. Recipient will not collect the amount, recipient will pay the amount. That's why they use the term debited here. So date of payment, if I have to simply put it, and what will be the date of payment? Date on which payment is recorded in the books of accounts of the recipient, or date on which the bank account of the recipient has been debited. Okay. And next, one more thing, date immediately following 30 days from the date of issuance of the invoice. Date following 30 days, that means 31st day. Don't write 31st day in the exam. For revision I am using it. So date following 30 days from the date of issuance of the invoice. Your supplier will give invoice, no, from the date of invoice, 31st day. 31st day, but you have to write in the exam date immediately following 30 days from the date of issuance of the invoice. This only you are required to write it. 31st, for understanding, for remembering, I'm giving you a shortcut there. Able to understand? So in case of supply of goods under reverse charge mechanism, the time of supply will be earlier of 3 dates. Very simple here. 3 dates, whichever is earlier. Number 1, date on which goods are received. Number 2, date of payment. And what will be date of payment? Date on which the payment is recorded in the books of accounts of the recipient, or date on which his bank account has been debited. Number 3, 31st day from the date of issuance of invoice by the supplier. Whichever is earlier, you have to calculate all these 3 dates. Whichever is earlier, that will become the time of supply in case of supply of goods under reverse charge mechanism. However, they have told one note point here. If it is not possible to determine the time of supply by using these parameters, because of some reason, if you are not able to determine the time of supply as per the above 3 things, then the time of supply will be date of entry of goods in the books of accounts of the recipient. So let us say, for example, the date on which you have received the goods, that date is not available, or you made the payment in cash, so payment entry you did not record, even debit in the bank account is also not there, or the supplier has not given you any invoice. So in any of these circumstances, if you are unable to determine the time of supply according to the above rule, then what simply they are saying is date of entry of goods. Date of entry of goods, date on which that goods have been recorded in the books of accounts of the recipient, when they have been entered in the recipient's premises. The date of entry of goods in the books of accounts of the recipient of the supply will become the time of supply. So if you are able to determine according to this, determine. But in case if you are unable to determine the time of supply according to the above rule, the date of entry of goods in the books of accounts of the recipient of supply will become the time of supply. Understood? So this is what 12 subsection 3 says. Now 13 subsection 3 will also be there. 13 subsection 3 will talk about what? So 13 subsection 3 will talk about what will be the time of supply in case of supply of services under reverse charge. Let us see what they are trying to say here. So time of supply of services under reverse charge will be earlier of the following. So here also they say 3 dates. What are they? Date of payment, date on which you have made the payment. So once again, sir, what do you mean by date of payment? Same. Date on which payment is recorded in the books of accounts, or date on which bank account has been debited, because here also it is recipient. Recipient will pay. It is a bank account will get debited. So date of payment, which will be nothing but date on which payment is recorded in the books of accounts, or date on which payment is debited from the bank account, whichever is earlier, or date immediately following 60 days from the date of issuance of the invoice. So this I will simply put it as 61st day from the date of invoice. So if the supplier is registered person, he will give the invoice, no? So 61st day from the date of issuance of the invoice by the supplier. And one more point also they have added, date of issuance of invoice by recipient, where cases invoice is required to be issued by recipient. See, there is something called self-invoicing. There is a concept called self-invoicing. Let me try to introduce that here for you. So just simply I will try to recollect that provision. So there is something called self-invoicing. Sir, what is this concept? Let us say, for example, there is one supplier. Okay. So this supplier is making a supply to a recipient. Okay. This supply is getting covered under reverse charge mechanism. This supply is getting covered under reverse charge mechanism. Now, what will happen is, if the supplier is also a registered person, if the supplier is also a registered person, he will only give the tax invoice. He will only give the tax invoice. Now recipient is liable to pay the GST under reverse charge mechanism. No. What is time of supply? In that case, date of payment, date on which you have made the payment, or 61st day from the date of issuance of invoice by the supplier. The supplier has given you invoice. No. On this invoice, some date will be there, right? So from that day, 61st day you calculate. 61st day from the date of issuance of the invoice by the supplier, whichever is earlier. Okay. Now 31 subsection 3 clause F, in section 31 subsection 3 clause F, they say one point here. Let us say you are a recipient receiving a supply under reverse charge mechanism, but your supplier has not given you invoice. Let us say your supplier is an unregistered person. He did not give you any tax invoice. In that case, the recipient will be required to do a self-invoicing. The recipient will be required to do self-invoicing. He himself has to generate one self-invoice under 31 subsection 3 clause F. Once again, remember carefully, this is very important. It will have so much of significance. So in case of supply of goods or services under reverse charge mechanism, if the supplier is already registered person, supplier will give tax invoice. But 31 subsection 3 clause F says that in case if you are a recipient who is receiving the supply under reverse charge mechanism, but if your supplier is unregistered person, he will not give any tax invoice. In that cases, the recipient himself has to do self-invoicing under 31 subsection 3 clause F. Okay, so let us say in this case, if the supplier has not given you invoice, in that case, what will be the time of supply is earlier of date of payment. earlier of date of payment, but here 61st day from the date of issuance of invoice by the supplier will not become applicable here. Why? Because supplier did not give invoice. So in that case, what the act is saying, in that case, date of issuance of invoice by the recipient. So in that case, if the supplier is not giving the invoice, this recipient will give the issuance of invoice. No. So date of issuance of invoice by recipient, that means I will say date of issue of self invoicing, whichever is earlier, that will become the time of supply. Okay, so practically speaking, even though they have given 3 dates, but at any point of time only 2 dates will be, you have to compare. In case if the supplier has given invoice date of payment or date 61st day from the date of issuance of invoice by the supplier. In case supplier has not given invoice, date of payment or date of issuance of self invoicing by the recipient, whichever is earlier. Able to understand? So out of all the provisions of this time of supply, 13 subsection 3 I will consider it as very, very important. Here they can twist, pose a MCQ question and all. So like this you have to remember it. I hope this example will help you out in remembering the concept. So very simple. In case of supply of services under reverse charge mechanism, if the supplier has given invoice, date of payment or 61st day from the date of issuance of invoice by the supplier. In case if the supplier has not given the invoice, date of payment or date of issuance of the self invoicing by the recipient, whichever is earlier. In case of 12 subsection 3, but in case of 12 subsection 3, all that discussion we don't have. In the 12 subsection 3, they have given us 3 dates, whichever is earlier. So what is that? What is that they have told? So they have simply told 3 dates which are required to be compared. In case of 12 subsection 3 is going to be this: date of payment, 31st day from the date of issuance of the invoice, and date of receipt of the goods. Like that they have told under 12 subsection 3. So whichever is earlier. Okay. Right. So this is what regarding 12 subsection 3, 13 subsection 3. So there is one more point regarding 13 subsection 3 also. In case, if you are unable to determine, if it is not possible to determine the time of supply using the above parameters, let us say you are receiving the supply of services under reverse charge mechanism, but you are unable to determine the time of supply as per this. Let us say date of payment is not available, supplier has not given you invoice, let us say recipient has also not given the self invoicing. So if it is not possible to determine the time of supply using the above parameters, it will be the date of entry of service in the books of accounts of the recipient. Same like supply of goods only. So whatever they have told in supply of goods, the same thing they are saying. If it is not possible to determine, in goods they have told the date of entry of goods in the recipient's books of accounts. In case of service also they are saying the same thing. The date of entry of service in the books of accounts of the recipient will be considered as time of supply. Understood? Clear and comfortable? Right. Now, one more small point I would like to explain it here. One more small point. So till 13 subsection 3 we have covered. Now, here in the forward charge mechanism, in 13 subsection 2, one point is relevant that I would like to bring it to your attention. See, they told that what is the time of supply in case of supply of services under forward charge mechanism? If invoice is issued within the time limit, date of invoice or date of payment, whichever is earlier, no? In case if invoice is not issued within the time limit, date of provision of service or date of payment, whichever is earlier. This is what they are saying. Now they have given one relaxation. If you are receiving an advance payment up to 1000 rupees, in case if you are receiving an advance payment up to 1000 rupees. So when I say advance payment, date of payment will always be earlier, no? So in case if you have received the advance, going by the rule of 13 subsection 2, the date of advance payment means you are receiving the advance well before the provision of service. So always date of receipt of payment will be earlier. So that means in case of supply of services, if you are receiving the advance at the time of receiving the supply at the time of receiving the advance only, you become liable to pay the amount of GST. But they have given one relaxation. Okay, you are receiving the advance, but if the advance amount is up to 1000 rupees, if the advance amount which you are receiving is up to 1000 rupees, you can treat date of invoice itself as time of supply. That means you can ignore the date of payment. You need not deposit the tax well in advance. You can consider the date of invoice or date of provision of service. In case if invoice is not issued within the time limit, you can consider either date of invoice or date of provision of service itself as time of supply. When, sir? When you are receiving the advance only up to 1000 rupees. When you are receiving the advance only up to 1000 rupees. In case if you have received the advance for more than 1000 rupees, date of receipt of payment will be earlier. At the time of receipt of the payment only, you become liable to pay the amount of GST. The time of supply will be earlier. But this relaxation has been given only if the amount of advance is up to 1000 rupees. Then only you ignore date of receipt of payment. You can go with the date of invoice or date of provision of service. The same 1000 rupees of limit also will become applicable here also. In case of 12 subsection 2, in case of composition dealer, and also specified actionable claims, there also what we have told, whichever is earlier, date of invoice, last date for issuance of invoice, or date of receipt of the payment. So here also if you are receiving advance payment, at that point of time only time of supply will fall. But whatever 1000 rupees of relaxation they have given, in case if you are receiving the advance up to 1000 rupees, you can ignore the date of receipt of payment and you can determine the time of supply as per date of invoice or last date for issuance of invoice, whichever is earlier. But this relaxation is there only up to 1000 rupees of advance payment. Okay, right. So whatever it is, we have covered 12 subsection 1 and 13 subsection 12 and 13 subsection 1, 12 and 13 subsection 2, 12 and 13 subsection 3 we have covered. Now we have 12 subsection 4 and 13 subsection 4 which are actually omitted. We have few more provisions. Here I would like to explain one important circular. Listen carefully. One important circular I am going to explain here. So we have 12 subsection 4 and 13 subsection 4 which used to talk about vouchers. How to determine the time of supply in case of vouchers. How to determine the time of supply in case of supply of vouchers for goods or supply of vouchers related to services. But this 12 subsection 4 and 13 subsection 4 has been omitted. 12 subsection 4 and 13 subsection 4 has been omitted. So now you are not required to determine any time of supply regarding vouchers, because when you are making supply of vouchers, that is not falling under supply definition at all. So department has given one circular, CBIC has given one circular in which they have given a clarification that vouchers are not supply. Whenever you are dealing in vouchers, that is not a supply at all. Sir, what is this voucher first of all? Listen, this circular is very important. This circular related details, theory, you will be able to find it in the supply chapter. In the supply chapter, if you open it, you will be able to find one vouchers related discussion that I am trying to explain it here because this is a relevant place. See, vouchers can be of two types. Vouchers can be of two types. See, vouchers can be something called prepaid instruments. I will simply call them as PPI. There will be some vouchers which are prepaid instruments. There will be some vouchers which are other than prepaid instruments. There will be some vouchers which are other than prepaid instruments. I will give you one simple example to make you understand. Let us say, for example, you have an Amazon voucher. You have an Amazon voucher. So let us say 1000 rupees of voucher. Amazon voucher is there. That Amazon, you purchased a voucher from the Amazon. Amazon sold you 1000 rupees of voucher. You paid 1000 rupees and they gave you the voucher. Now this 1000 rupees of voucher, you can add it to Amazon Pay balance. Amazon Pay, like that you have something, no, wallet is there, no. So to that Amazon Pay, you can add that money, 1000 rupees you can add. And once you add that voucher amount of 1000 rupees to the Amazon Pay balance, you can use it equal to money. You can use it equal to money. So if the amount is lying in your Amazon Pay balance, you can use it equal to money. So for example, if you are placing an order in an Amazon, that you can use it for making payment. And if you are making purchase on any other website, there also they will give you an option to make the payment through Amazon Pay. If you go to any counter, if you go to any shop, if you make any purchase there, if you want to make UPI payment, you can scan using the Amazon Pay, and through that wallet to the balance which is available in the Amazon Pay, you can make the payment. Yes or no? So here Amazon voucher is similar to cash, is equal to cash. If they have sold you Amazon voucher, that money you have added to your wallet. So that will be equal to money that you can use it for the purpose of settlement of your obligations, equal to money. So yes or no? So that I call it as prepaid instrument. So here Amazon voucher is a prepaid instrument here. So they have told that this, when vouchers are prepaid instruments, they are considered equal to money. They will fall under money definition. They will fall under money definition. Sir, why money definition? Sir, what is the meaning of the term money? Money definition, if you remember, which we have understood in the supply chapter, money means Indian legal tender money or foreign currency or any other instrument which is recognized by RBI which can be used for the settlement of obligation. Yes or no? So any other kind of instrument which is recognized by RBI for the settlement of obligation, that we call it as money. So here, this Amazon voucher, that money which you are adding it to your wallet, that you are using it for settling an obligation. So that will become money here. So that is what voucher meaning. That is what the prepaid instrument here. So if any voucher is supplied, but if it is falling under PPI, if it is a prepaid instrument, that will fall under money definition. So if it is falling under money definition, that is neither goods nor services. If it is falling under money definition, that is neither goods nor services. So if there is no goods and services only, there is no supply at all. There is no supply at all, and there will be no GST. If it is not a supply, there is no GST at all. There is no question of GST at all here. Able to understand? Clear and comfortable? So one part I have explained. So in case voucher is getting qualified as prepaid instrument, then it will fall under money definition. If it is falling under money definition, it is neither goods nor services. If it is neither goods nor services, then it will not be a supply only. If it is not a supply, there is no question of GST only here. Understood? Next. There will be some vouchers which are other than prepaid instruments. There will be some vouchers which are other than prepaid instruments. I will give you one best example, which I often use it in the class. So let us say there is a company called Sleepwell. This company Sleepwell is selling mattresses, office chairs, like that, a set of furnitures they are selling, office furniture and also some beds, mattresses and all they are selling. So on the Sleepwell, this Sleepwell website, through the website, they have sold me one voucher. Let us say, for example, they sold me 5,000 rupees of voucher. I purchased 5,000 rupees of voucher from the Sleepwell company. Now, this voucher is not equal to money. This voucher will not be accepted as this voucher will not be accepted for settlement of any obligation. Then what is this voucher, sir? This voucher is just a this voucher can be used for settling your obligation only with the Sleepwell. Let us say if you go to the Sleepwell, if you are buying any furniture, let us say I purchased one office chair amounting to 5,000 rupees. Instead of making that payment, I can redeem that voucher. But this 5,000 rupees of voucher, I can't use it for any other obligation. Let us say if I go to some other furniture store, if I buy the furniture there and if I give them that 5,000 rupees of voucher of Sleepwell, they will give me a tight slap. Yes or no? So this voucher, I can use it only for buying a furniture, that too with the Sleepwell company. Yes or no? So here, this Sleepwell voucher is not a prepaid instrument. It is not a prepaid instrument because it is not getting used as settlement of any kind of obligation. So here, this Sleepwell voucher is other than prepaid instrument. So, however, even though it is other than prepaid instrument, the circular has clarified that if it is other than prepaid instrument, then it will fall under actionable claim definition. If it is other than prepaid instrument, it will fall under actionable claim definition. So anyhow, if it is falling under actionable claim definition, we have seen under Schedule 3, only specified actionable claims will be taxable, will be treated as supply. Other than specified actionable claims, if any other actionable claim is supplied, it is neither supply of goods, not even supply of services. There are only 6 specified actionable claims. What are they? Lottery, betting, gambling, casino, horse racing, online money gaming. That's all. So now, voucher, it is an other than prepaid instrument, but they are saying it is an actionable claim, but it is not a specified actionable claim. It is not a specified actionable claim. No. So if it is not a specified actionable claim, then it will fall under Schedule 3. If it is falling under Schedule 3, once again, it is not falling under supply definition. And here also, there is no question of GST being imposed here. There is no question of GST at all. Able to understand? So this is what the circular has clarified. So in case of supply of vouchers, that voucher will either fall under prepaid instrument or that voucher will not be a prepaid instrument. If the voucher is a prepaid instrument, then it will be equal to money. If it is money, it is neither goods nor services, then there is no question of invoking the supply here. There is no GST applicable here. On the other hand, if the voucher is other than prepaid instrument, if there is a supply of voucher, but that voucher is other than prepaid instrument like Sleepwell voucher and all, but here it will fall under actionable claim. Even though it is an actionable claim, it will not fall under any of that 6 actionable claims. It will not fall under any of that 6 actionable claims like lottery, betting, gambling, horse racing, online money gaming, etc., casinos. So it is not falling under any of the 6 specified actionable claim. It is other than a specified actionable claim. It will not be a supply. And if it is not, as per Schedule 3, if it is not supply, there is no question of GST being imposed here. Clear? So that's why, because of that circular, when you are making supply of vouchers, it is not at all falling under supply definition only. If it is not falling under supply definition, then what is the purpose of having 12 subsection 4 and 13 subsection 4? Able to understand? If the voucher supply is not at all falling under supply definition, then what is the purpose of having the time of supply provisions related to voucher? See, before the circular, whatever I have explained, this explanation was given in the circular. Before this circular, vouchers are used to be treated as supply. When vouchers are treated as supply, how to determine time of supply? We used to come and refer to that 12 subsection 4 and 13 subsection 4. But now, because of the circular, vouchers are not at all getting clarified. Vouchers are not at all getting qualified as supply. If there is no supply at all, there is no question of having the provisions relating to 12 subsection 4 and 13 subsection 4. That's why they have omitted it. So these 12 subsection 4 and 13 subsection 4 is no longer applicable. Okay, next. Let us come to the next part here. So that also we are done. Now we will come to 12 subsection 5 and 13 subsection 5. Sir, what is 12 subsection 5 talking about? What is 13 subsection 5 talking about? First, we will come to 12 subsection 5. So here vouchers I have given, but it is omitted. I made you strike it off in our class also. In our regular class also, I asked you to strike it off. 12 subsection 4, 13 subsection 4, both you have to strike it off. These are omitted now. This is used to be the provision previously. Right. So 12 subsection 5, time of supply in residual cases. The same provision exactly copy pasted will be in 13 subsection 5. If you are learning 12 subsection 5, automatically you are learning 13 subsection 5. You are learning 12 subsection 5, you are automatically learning 13 subsection 5, both are same. So in case of residual cases, sir, what will be residual cases here? Residual cases, usually what will come is when you are caught. when you are not maintaining records, when you are liable for registration but you did not take the registration. On inquiry, inspection, they have found out that you are required to pay the amount of tax, but you will not fall under any of the 12 subsection 3, 12 subsection 2, 12 subsection 4, etc. So in those cases it will fall under residual cases. Same 13 subsection 5 in case of supply of services, time of supply in case of residual cases. The provision is going to be same here in all the residual cases. That means if the situation is not covered by any of the provisions discussed above, then the time of supply will be fixed under 12 subsection 5. In case of supply of services, it will be fixed under 13 subsection 5 in the following manner. What is it? So time of supply will be either due date for filing of periodical return. If you are already registered person, due date of filing of the periodical return will become the time of supply. In any other case, the date on which GST is paid, the date on which you are caught and on which you are making the payment of GST, that will become the time of supply. So very simple. In all residual cases, one simple rule they are saying: if the return is required to be filed, due date of the return. In all other cases, date on which GST has been paid, that will become the time of supply. Then we have 12 subsection 6. This is also same. If we are reading 12 subsection 6, automatically we are reading 13 subsection 6. Why? Because exactly copy pasted provisions are available. So what is it? Time of supply in case of enhancement is value on account of interest or late fee, etc. for delayed payment of consideration. So what they are trying to say it here. So 12 subsection 5, 13 subsection 5 we have covered. So both are talking about residual cases. Both are talking about residual cases, same provision. So now 12 subsection 6, 13 subsection 6 we have. So both are talking about what is the time of supply in case of enhancement of value. Enhancement of value because of delayed payment. Sir, what is it? Let us say, for example, you are a supplier, you made some supply amounting to 1 lakh rupees along with 18,000 rupees of GST to a recipient. This supply you have made it on 1st of April 2026. On this date you have made a supply. So now you have given 3 months of credit period. You have given 3 months of credit period with the condition that, sir, I'm making the sale on credit basis. You are required to make the payment within 3 months. In case if you are not making the payment within 3 months, I will be collecting from you extra 10,000 rupees interest. Extra 10,000 rupees of interest I will be collecting it from you. Like that I have told. Sir, I made you supply amounting to 1 lakh rupees with a GST amounting to 18,000, but I am giving you 3 months of credit period. If you are not coming back and making the payment within 3 months, you will be liable to pay me 10,000 rupees of interest. Okay, I have initially given the tax invoice. Within 3 months, that person did not come and make me the payment. Within 3 months, this person did not come and make me the payment. Then I am required to collect the interest now. So for this interest, I will give debit note. Since I have to collect extra, I will give debit note. Sir, even on this interest also, I am required to collect GST. Yes. Even on this interest also, I am required to collect GST. Yes, this I am going to tell you in value of supply. Next chapter which we are going to pick up is going to be value of supply chapter. There I will tell you this. But on this 10,000 rupees also, you will be liable to pay interest. For that you will give debit note. Let us say on this 10,000 rupees, you are calculating 1800 rupees of GST also. Sir, when you are required to pay this GST on interest, you are getting enhancement in value. What is the time of supply? When you will become liable to pay the amount of GST? Whenever you are receiving it. Whenever you are receiving it. So whenever you are receiving that enhancement of value, either in the form of interest, late fee, penalty, whatever name you want to give it, you give it. So whenever you are receiving that enhancement of value, that will become the time of supply. Not the original supply, not the original supply date. So whenever you are actually receiving that enhancement in value, that will become the time of supply. So that's what they try to clarify it here. So Section 12 subsection 6, in case of supply of goods, it states that time of supply for addition in value due to interest, late fee, penalty is whenever the supplier receives the payment. Same exact provision will be there even under 13 subsection 6 also. So in case of supply of services, in case if there is any enhancement in value due to interest, late fee and penalty, the time whenever that supplier is receiving that enhancement of value, that will become the time of supply. So that's all, my dear students. These are all various subsections which are talking about the time of supply. So we have covered section number 12. What is the time of supply in case of supply of the goods? We have covered 13 subsection. Section number 13, the circumstances of supply of services and how to determine the time of supply for that. Now we have one more thing. Section number 14 we have. So let us try to understand section number 14. For this, I have an example for you. So this I will try to use it. Just give me 1 minute. Oh shit. Where is this copy page option? Okay. Section 14, change in rate of tax. Let us try to understand it. Right. Mhm. Let me rearrange it once. Okay, fine. So let us try to revise quickly section number 14 also. Sir, what is section number 14 talking about? What will happen in case if there is a change in rate of tax? See, in association with supply, there could be three dates. In case of supply, there could be three dates associated with the supply, whether it is supply of goods or supply of services. There are three dates associated with it. One is date of supply, date on which you have made the supply. Other one is date of invoice. Then the next one is date of payment. Date of payment. So if associated with the supply, there might be three dates associated. Number one, date of supply, date on which you have made the supply. Then we have date of invoice, date on which you have given the invoice. Then date on which the payment has happened. So three dates will be there. Now between these three dates, there might be a change in rate of tax which could happen. Between these three dates, there could be a change in rate of tax. That means you are making some supply, the rate has been changed from certain percentage to some another percentage. So like that, rate changes could happen between these three dates. In those cases, how to determine the time of supply? See, one recent example I will tell you. Recently we had this GST 2.0 reforms. As a part of that GST 2.0 reforms, there was a change in rate of tax. Many items there was a change in the rate of tax. So let us say, for example, there is a change in rate of tax. You are supplying one product. So that product before 22nd of September 2025, the rate of GST is 12%. But with effect from 22nd of September 2025, the GST rate has been changed to 18%. So before 22nd of September 2025, you are making supply of one product. Before 22nd of September, the rate of GST was 12%, but with effect from 22nd of September 2025, as a part of the GST 2.0 reforms, so they have increased the rate of GST from 12% to 18%. So like that, there is a change in rate of tax. See, if all the three are happening prior, let us say if the date of supply and date of invoice and date of payment, if all the three are happening before 22nd of September, no need to worry. We will go by the usual rules of 12 and 13. If all the three are happening after, let us say date of supply, date of invoice, date of payment, if all the three are happening after, then also we'll go by rules of section number 12 and section number 13. But when the problem will happen is, a few dates are happening among these three, if you are happening before, if you are happening after, then the problem will arise. Then we have to come to section number 14. So if there is a change in rate of tax and three dates are there, date of supply, date of invoice, date of payment, if all the three are happening at one point of time, then there is no issue. We will go to section number 12 and section number 13. But in case there is a change in rate of tax, but between date of supply, date of invoice, date of payment, some dates are before, some dates are after, then how to determine the time of supply? So here we have two sections, 14 subsection A and 14 subsection B. So 14 subsection A says that, let us say there is a change in rate of tax, but date of supply has taken place before the change in rate of tax. Supply has taken place before the change in rate of tax. Then what will be the rate and time of supply which will be applicable? Then which rate will become applicable? What will be time of supply? And we have 14 subsection B, there is a change in rate of tax, but date of supply has taken place after the change in rate of tax. Then how to determine the time of supply? That is covered under 14 subsection B. Okay, so 14 clause A, which is talking about in case if the date of supply has taken place before the change in rate of tax, how to determine time of supply and what will be the rate applicable. Then 14 subsection B, if supply is happening after the change in rate of tax, what will be the time of supply? What will be the rate? First, I will talk about 14 subsection A. So let us say in 14 subsection A, one thing is common. Supply has taken place before the change in rate of tax. So date of supply is before the change in rate of tax, but let us say that date of invoice and date of payment both have happened after the change in rate of tax. Supply has taken place before the change in rate of tax. You'd have done the supply. Let us say, for example, you have supplied already the goods or services when the rate of tax is 12%. But date of payment, both is happening after the change in rate of tax. So then what will be the time of supply? Which rate will be applicable? They say time of supply will be date of invoice and date of payment, whichever is earlier. Date of invoice and date of payment, whichever is earlier, that will become time of supply. And whatever rate that is there as on that particular date, whichever is earlier, that will become the rate which is applicable. Since both are after change only, Since both are after change, let me give you some illustrative examples here. Let us say date of invoice is 28th of September. Date of payment is 30th of September. Which one is earlier? Date of invoice. So time of supply will be date of invoice, and whatever rate which is applicable on date of invoice. What is the rate applicable? 18%. So even supply also will attract 18% GST. Understood? So one more typical scenario which could happen is, sir, supply has taken place earlier. Supply has taken place before only. Invoice is also issued before. Invoice is also issued before change in rate of tax. But payment has happened after the change in rate of taxes, sir. Supply has taken place before change in rate of tax. Date of invoice is also before change in rate of tax. But payment has happened, sir, after change in rate of tax. Then what will be time of supply and which rate will be applicable? They simply say that in this case, date of invoice will be considered as time of supply, and whatever rate that is prevailing as on the date of invoice, that rate will become applicable. That means 12% will become applicable here. One more case which could be possible is, sir, supply has happened before only. Date of payment has happened before the change in rate of tax, but invoice was given after the change in rate of tax, sir. So in that case, date of payment will become the time of supply, and the previous rate only will be applicable. 12% only will become applicable. So this is what 14 subsection A says. If I have to summarize all of this into one single line, in case of 14 subsection A, sir, what is 14 subsection A? There is a change in rate of tax, but supply has taken place before the change in rate of tax. Simply, if I have to put it, time of supply and rate applicability will be date of invoice or date of payment, whichever is earlier. That's what the simple summary. That's what the simple summary. If you apply this logic, that will become applicable in all this first case. So in case of change in rate of tax, and if the date of supply has taken place earlier, before the change in rate of tax only date of supply has taken place, but remaining dates are spread, then what you should do? Simply, if I have to put it, time of supply and the rate will be applicable, rate applicability will be the date of invoice or date of payment, whichever is earlier. That's what happening here in all the circumstances. Then 14 subsection B. What is 14 subsection B says is, sir, there is a change in rate of tax. Supply has taken place after, sir. Supply has taken place after the change in rate of tax. But date of invoice and date of payment are happening before or spread. Then what we should do? So here they say that in case if the supply has taken place after, but date of payment, date of invoice, both are before change in rate of tax. You made the supply after the change in rate of tax, but date of payment and date of invoice both are before change in rate of tax. Now whichever is earlier, date of payment or date of invoice, whichever is earlier, that will become the time of supply, and that old rate will become applicable. Sir, date of supply is after the change in rate of tax. Date of payment is also after the change in rate of tax. But invoice alone I have given before change in rate of tax, sir. In that case, go with the date of payment. So date of payment will become the time of supply. Whatever rate that is prevailing on the date of payment, that rate will become applicable. Sir, date of supply is later, sir. Invoice also I have given later, sir. But payment has happened prior to that, sir. In that case, take date of invoice, that will become the time of supply, and that rate will become applicable. So if I have to summarize this entire 14 subsection B into one simple paragraph, so time of supply and rate applicability will be as follows. And when 14B will become applicable? 14B will become applicable when the date of supply is after the change in rate of tax. So in case if the date of invoice or date of payment, whichever is later, general rule is a date of invoice or date of payment, whichever is later. But in case if the both have happened before change in rate of tax, if date of invoice and date of payment are before the date of change in rate of tax, whichever is earlier, so that will become the time of supply and the rate, and that rate will become applicable. Understood? So if you are able to remember the logic, go with the logic. If you are finding difficult in remembering the logic, just you try to remember this one single line summary. One single line summary is whatever I have given, that you can remember it as a thumb rule. If you are able to remember the logic and all, go with the logic. If you are unable to remember the logic, just simply try to remember this one line summaries, whatever I have given it here. Understood? That's all. So this is what regarding the time of supply chapter, my dear students. So with this, I am winding up the revision of time of supply. So with this, I am winding up the revision relating to time of supply chapter. So now what we will try to do is, we will try to proceed further with the value of supply chapter. We will try to proceed further with the value of supply chapter. Important chapter we are going to revise now. Listen carefully. Someone is asking, why do you not teach in Hindi? I can't, because from the beginning itself, I was so adopted to teaching in English. Now it becomes highly difficult if I have to teach in Hindi. It's not something that I could not speak. Yes, I could speak Hindi comfortably, but I can't teach in Hindi. because I have adopted. So I thought my teaching should be benefited for all the students, not for one particular language. So just I had that intention from the beginning itself. So that's why I adopted my teaching completely in English, and I will teach in English. That's it. Fine. So one more message I was able to see it in the chat box. Sir, marathon chart. I will upload it. Don't worry, because see, many changes I'm going to do it. So this running notes and all, whatever I'm using, where I'm keeping all the charts and all, this I will upload it. Let me complete the marathon series. I will make it available on the website in the free resources section. I will make it available. Right. Fine. So let me try to proceed further. So now we will talk about the value of the supply chapter. Very important chapter. There will be a compulsory question from this value of supply chapter. Listen carefully. Once again, if you remember the introduction part, once again, if you go to the introduction part, I have already told you what is the significance of this value of supply chapter. So if you remember the structure of GST, first there must be goods or services, and a taxable event called supply should have taken place, right? And a taxable event called supply should have taken place. That supply should be falling under taxable supply, and that supply should be made by taxable person. Then only GST will be applicable. So once that GST will become applicable, now you have to calculate the amount of GST. You have to calculate the amount of GST which is required to be paid, or if you are a supplier, the amount of GST which is required to be collected. Okay. Then thereafter, how to calculate that amount of GST, sir? The question will come. Okay, I'm a taxable person. I am making a taxable supply. Now I have to collect the amount of GST, sir. But how to calculate that amount of GST? So GST is always an ad valorem. Customs, if you have listened to the classes of customs could be ad valorem or it could be specific duty. But GST is always ad valorem. Sir, what is ad valorem? So there will be 1%, one rate of GST that will be given. That rate is required to be multiplied with the value. So you have to determine the value of supply, and there will be a rate given. That rate of GST is required to be multiplied with the value. By that you are going to arrive at the GST amount. So GST is an ad valorem taxation. Now the $1 million question is, sir, how to determine that value of supply? How to determine that value of supply? So how to determine that value of supply, that they have tried to explain it in section number 15. So section number 15 of the CGST Act is going to help us out in arriving at the value of the supply. How to arrive at the value of the supply, that 15 subsection 5 is trying to help out. Section number 15 of the CGST Act is going to help us out in determining what is value of supply. So let me give you overall structure now, how to determine the value of supply. What is the structure of section number 15? We'll try to understand. So we have 5 subsections: 15 subsection 1, 15 subsection 2, 15 subsection 3, 15 subsection 4, and then we have 15 subsection 5. See, understanding this structure of section number 15 is very, very important, because that will add more conceptual clarity. So section number 15 is divided into 5 subsections. What does each subsection say? 15 subsection 1 says that, let me come to the material now. Right. So 15 subsection 1. So what does 15 subsection 1 says? If I keep it in very simple form, whenever a transaction, whenever a supply is happening between two unrelated persons, and when price is the sole consideration, So whenever a transaction is happening between two unrelated persons, the people are the buyer, the supplier and recipient, both are not related with each other. So a transaction is happening between two unrelated persons, and price is the only consideration. Whatever monetary amount you are charging, that is the only consideration. Apart from price, there is no other consideration. So if that is the case, 15 subsection 1 says that you can start with transaction value. Transaction value will be considered as value of supply. You can start with transaction value. Sir, what is transaction value? Transaction value means the value at which the transaction has taken place. If I have to put it in very simple English, so what is transaction value? The value at which the transaction has taken place. Or if I have to go to the technical definition, they say that transaction value means price paid or agreed to be paid in relation to the supply. Whatever price that has actually been paid, or whatever price that is agreed to be paid in relation to the supply, that I call it as transaction value. So what they're trying to say here is, if the transaction is happening between two unrelated persons and price is the sole consideration, then whatever value at which the transaction has taken place, whatever price that has been paid or agreed to be paid in relation to that supply, that you start with it. That will be considered as value of supply. Clear? That's what 15 subsection 1 says. Then, so 15 subsection 2 says that whatever value of supply you have taken, whatever transaction value you have taken, whatever transaction value you have taken, in order to arrive at the transaction value, you are required to do some additions. You are required to do some additions in order to arrive at the transaction value. In order to arrive at the value of supply, sorry. So whatever transaction value you have taken, as per 15 subsection 1, you have taken the transaction value, no? To that transaction value, you are required to do some additions. When you do all that additions, then you will arrive at the value of supply. On that value of supply, you are required to calculate the amount of GST. And it says that under 15 subsection 2, there are 5 kinds of items they are saying. 15 subsection 2, clause A, clause B, clause C, clause D, clause E. All together 5 items they have told. You have to add these 5 items. Under 15 subsection 2, you are required to add this 5. You are required to do this 5 additions to the transaction value to arrive at the value of supply. Okay, so this is what 15 subsection 2 says. Now 15 subsection 3 says, okay, transaction value is there, fine. Thereafter, you have made the additions under 15 subsection 2. All the additions you have done. Okay. Now, from that value, you have to do some adjustments for discounts. You have to do some adjustments for discounts. Some discounts are required to be reduced. So that discounts you reduce it, then you will ultimately arrive at the transaction value. On that transaction value, you calculate that, you apply that rate of GST, you will ultimately arrive at the amount of GST applicable for that supply transaction. Understood? So here the discount related treatment is explained under 15 subsection 3. Okay, so 15 subsection 1 says, once again, if you come back to the logic here, 15 subsection 1 says, when the transaction is happening between two unrelated persons and when price is the sole consideration, then we can take the transaction value as a value of supply. We can start with the transaction value. Now 15 subsection 2 says, whatever transaction value you have taken as per 15 subsection 1, then to that transaction value you are required to make some additions. You are required to do some additions. 15 subsection 2, clause A, clause B, clause C, clause D, clause E, like that 5 additions you are required to do. Now 15 subsection 3 says that, okay, you have taken transaction value, you have also done the additions as per 15 subsection 2, clause A to E. To that, you have to make some adjustments for discounts. As a common business practice, we give discounts. In business, discounts are very common. So there will be 2 kinds of discounts. One is pre-supply discount, other one is called post-supply discount. So they will tell you treatment, how to treat the pre-supply discount, how to treat the post-supply discount. That is what we are going to learn in 15 subsection 3. So you're required to make some adjustments to the transaction value with respect to the discounts. How to do it, that guidance has been given under 15 subsection 3. So that discount value, you have to reduce it from the transaction value. Then finally you will arrive at the value. On that value, you multiply the rate of GST which is applicable, then you will be able to calculate the GST amount. Till here, you are able to understand. So 15 subsection 1, 15 subsection 2, 15 subsection 3, all these 3 are connected. So these 3 subsections will become applicable in relation to those supplies where the supply is happening between 2 unrelated persons and where price is the sole consideration. 15 subsection 2, 15 subsection 1, 15 subsection 2, 15 subsection 3, all this cluster is related. So these 3 are talking about only one case. Which case? Where the supply is happening between unrelated persons and where price is the sole consideration. Then you take the transaction value as a value of supply. To that you do the additions as per 15 subsection 2. From that you reduce the discounts as per 15 subsection 3. Then you will finally arrive at the value of supply. So 15 subsection 1, 15 subsection 2, 15 subsection 3, all the 3 sections are talking about those circumstances where transaction is happening between 2 unrelated persons and where price is the only consideration. Sir, but not all supplies will happen between unrelated persons. In not all supplies, the transaction value will be only, price is the only consideration. There could be other aspects also. Sir, what could be the other aspects? Let us say, for example, there is a supply which is happening between a related person. There is a supply which is happening between related person. See, if the supply is happening between related persons, 15 subsection 1, will it become applicable? No, 15 subsection 1 will not become applicable. 15 subsection 1 will not become applicable. So then how to determine value of supply, sir? You come to 15 subsection 4. In 15 subsection 4, they have prescribed some rules. In 15 subsection 4, they have prescribed some rules. Rule number 27, 28, 29, 30, 31, 32, 33. So like that, some rules they have prescribed under 15 subsection 4. According to that prescribed rules, you have to determine the value. When, sir? Whenever the supply is happening between related persons, then you can't come to 15 subsection 1. Transaction value will not become applicable. Transaction value will not be accepted. They have given some rules. Some rules are prescribed under 15 subsection 4. According to that rules, you have to determine the value of supply. Clear? Another case. Sir, let us say supply is happening between related persons, unrelated persons only. Supply is happening between unrelated persons only. But the problem is the price is not the sole consideration. The price is not the sole consideration. Sir, what do you mean by price is not sole consideration? That means you are not just getting monetary consideration, even some non-monetary consideration is also involved. So when I say price is not the sole consideration, it could be partly monetary. It could be partly monetary and partly non-monetary. Partly monetary and partly non-monetary. Let us say exchange transaction, mobile exchange. So you go and buy a new mobile phone for which you will exchange your old mobile phone. You are giving an old mobile phone, along with that some amount also you will pay. Let us say I am buying a new iPhone in which I am giving my old iPhone and also I am paying some 30,000. So this is such a transaction where consideration is partly in money. Consideration is not partly in money because they are receiving an old mobile phone. That is partly a non-monetary transaction. So in that case, sir, will 15 subsection 1 will become applicable? No. Why? Because 15 subsection 1 will become applicable only when the supply is happening between two unrelated persons and price is the sole consideration. Here price is not the sole consideration because partly non-monetary consideration is involved. So you can't bring here 15 subsection 1. You can't go by the transaction value. Then how to determine the value, sir? You come to 15 subsection 4. In the 15 subsection 4, some rules are prescribed. Once again, rule 27, 28, 29, 30, 31, 32, 33. So like that some rules are prescribed. According to that rules, you have to determine the value of supply. You have to determine the value of supply. Sir, I am doing a transaction with unrelated person only, but the transaction is completely non-monetary consideration, sir. There is no monetary transaction involved. It is completely non-monetary consideration. Let us say, for example, complete barter transaction. I am making some supply of goods. In return, I am getting the supply of the goods. No money, nothing involved. I am making some supply of services. In return, I am getting some supply of services. Or I am making supply of goods. In return, I am getting services. So like that complete barter transaction is there. Unrelated person only. Supplier and recipient both are unrelated persons only, but the price is not the sole consideration. When I say price is not the sole consideration, it could be a partly monetary, partly non-monetary, or it could be a completely non-monetary consideration also. In that case also, will 15 subsection 1 will become applicable? No, sir. What will become applicable? 15 subsection 4. Once again, some rules are prescribed under 15 subsection 4. According to that prescribed rules, you determine the value of supply, and on that value of supply, you are required to calculate the amount of GST. Understood? So this is what 15 subsection 4 says. So 15 subsection 1 I have explained, 15 subsection 2 I have explained, 15 subsection 3 I am to explain, and 15 subsection 4, if you see, if I read it for you, where the value of supply of goods or services or both cannot be determined under subsection 1. Sir, when you can't apply subsection 1, when the transaction is happening between two related persons and price is not the sole consideration, then 15 subsection 1 will not become applicable. That's what I tried to give you in the form of chat also, when 15 subsection 1 will not become applicable. Next, so in case value of supply cannot be determined under subsection 1, then the same shall be determined in such manner as may be prescribed. They are prescribing some rules, rule 27 to 31 of the CGST rules. According to that rules, you have to determine the value of supply. Next, sir, what is 15 subsection 5? Okay, you have explained us 15 subsection 1, 15 subsection 2, 15 subsection 3, 15 subsection 4. Now what is 15 subsection 5? Let us try to read this also, what they say here. Notwithstanding anything contained in subsection 1 or 4. That means it is having an overriding effect. 15 subsection 5 is having an overriding effect of 15 subsection 1 and 15 subsection 4. It will override both the sections. Value of such supplies as may be notified by the government. That means government can notify some supplies on the recommendations of the GST Council. So whatever services, whatever supplies which are notified by the government on the recommendations of the council, their value shall be determined in such manner as may be prescribed. That means government will prescribe some services and government will notify some services. For that services which have been notified, the valuation has to be done as per specific rules only. That means even though the transaction is between unrelated person, price is the sole consideration, 15 subsection 1 will not become applicable when they have notified some supply. For that notified supply, 15 subsection 1 will not become applicable. They will give you some rules. According to that rules only, they have to determine the value of supply. Understood? So like that, government can notify some supplies on the recommendations of the council, for which they can give you different rules for valuation. For those notified supplies, the valuation must be done according to that different rules only, not 15 subsection 1 or 15 subsection 4. This will have a overriding effect. And there are various bunch of services which are actually notified here, the list which we are going to cover in the subsequent chapter. If I give you a few examples, sir, what services are notified under 15 subsection 5? Like purchase or sale of foreign currency, booking of air tickets, life insurance services, buying and selling of second hand goods, vouchers, tokens, coupons or stamps, services provided without consideration, Supply in case of lottery, betting, gambling, online gaming other than online money gaming, actionable claims in casinos. So like that list of some services have been notified for which they are prescribing separate rules. According to that rules, we have to determine the value of supply. Understood? Clear? Right. So I gave you the entire structure of 15 subsection, entire section number 15. Now let us try to first complete this block. 15 subsection 1, subsection 2, subsection 3. This block we will try to complete first. 4 and 5, that rules will come back to that later. So 15 subsection 1, 2 and 3, when it will become applicable? When the supply is happening between two unrelated persons and price is the sole consideration. So then 15 subsection 1, 2 and 3 will become applicable. So 1 I have already covered. So what does 1 say? 15 subsection 1 simply says that transaction value itself will be taken as value of supply. Sir, what is transaction value? Transaction value is nothing but the value at which the transaction has taken place, or even if I have to put it in simple terms, the price which is paid or agreed to be paid. So what is transaction value? When a transaction of supply of goods or services is made between two persons who are not related to each other and price is the sole consideration, it should be transaction value. Sir, what is transaction value? It includes both amount already paid and payable. Whatever amount paid or payable in relation to that supply, that we call it as transaction value. Okay, sir, we'll take the transaction value. Now you are saying we are required to do some additions. We are required to do some additions to this transaction value. You are required to do some additions as per 15 subsection 2. So there are 5 clauses are there. So these are 5 additions I am required to do. Let us try to understand what are those 5 items which are required to be added to the transaction value under 15 subsection 1. Starting with 15 subsection 2 clause A, which says that in addition to the transaction value, if the supplier is collecting from you any extra amount in the form of taxes, duties, cess, fees and any other charges levied under any law for the time being in force, other than CGST, SGST, UTGST and GST compensation cess, if these charges are getting separately collected by the supplier. So supplier is making some supply. He's saying that for this supply the amount is, the value is 10,000 rupees. In addition to that value, he is also collecting some other amount in the name of taxes, cesses, duties or charges under any other law for the time being in force, apart from GST and GST compensation cess. So all those taxes, cesses, charges collected under any law, that should be added to the value of supply. So let us say, for example, if the supplier is collecting from you in the name of municipal taxes some amount, or he's collecting from you some property tax in the name of some tax, or he's collecting you from some cess, water cess or municipality cess, so like that he's collecting some cess. So apart from GST compensation cess, if any excess tax, duty, cess, fee or charges is getting collected by the supplier from the recipient under any other law for the time being in force, that should be added to the value of supply. But one point you have to remember it here, only when the supplier has collected from the recipient, then only you add it. If the supplier is not collecting anything, let us say for example, sometimes in the exam they will try to confuse you. There is a supplier who rented out immobile property to a recipient at a monthly rent of 10,000 rupees. Supplier paid some 1,000 rupees of municipal tax from his own pocket. He did not collect it from the recipient. So sometimes they will try to confuse you on these minute details. Many students will do the mistake. So there is a supplier who has given an immobile property on rent for a monthly rent of 10,000 rupees. Now this supplier is making the payment of municipal taxes of 1,000 rupees to the municipalities, which he is not collecting from the recipient separately. So you tell me here transaction value is 10,000 rupees. Should I add that municipal tax also? No. Why? Because they clearly say here, if charged separately by the supplier, if the supplier is separately charging in addition to the consideration, then only you have to add it to the value of supply. Understood? Now here there is one important clarification which we all have to remember it. So what is that is, let us say for example, you went for car shopping. You went to purchase a car. What is this? Okay. So you want to purchase a car. So you went to one dealer and this dealer has made a supply of car. So when you are purchasing a car exceeding 10 lakh rupees and all, as we all are aware, you will be required to pay consideration. Let us say I am purchasing 15 lakhs worth of car. In addition to that, car dealers will collect from you something called TCS at the rate of 1%. TCS also they will collect on the value of the car which has exceeded 10 lakh rupees and all. In addition to the consideration, they will also collect TCS under Income Tax Act. Let us say 15,000 rupees of TCS they have collected. Now what this dealer will do? Total 15 lakh rupees is the value of supply. In addition to that, some tax, TCS under income tax is also collected. Now the issue which has gone to the department is whether this TCS is also required to be added under 15 subsection 2 clause A. is this TCS also required to be added under 15 subsection 2 clause A? This is what the question which has went before the department. So now the argument here is 15 subsection 2 clause A says all kind of taxes, cesses, charges which are imposed under any other law, if collected separately by the supplier from the recipient, that should be added. So TCS is also getting collected. No, it should also be added to the value of supply. So now what department has clarified is, see, whatever this TCS which is getting collected, that is not in the nature of tax. It is just in the nature of interim levy. This phrases you have to use it in the exam. So whatever TCS which is getting collected, the department has clarified that TCS under income tax is not tax. TCS which is getting collected under income tax is just an interim levy. What is interim levy, sir? This dealer will collect TCS of 15,000 rupees. What he will do to that 15,000 rupees? That 15,000 rupees will be deposited against the PAN number of this buyer. So this person will give PAN, against his PAN number this 15,000 rupees will be deposited. Now this person against whose PAN number the TCS has been deposited, what he can do? He will file his ITR. No, when he is filing ITR, he will have a tax liability. Against that tax liability, that TCS amount will be adjusted. Let us say if this person is filing ITR, if he is having no tax liability, then that TCS amount you can claim it as refund. So either this TCS which you have paid it to the dealer, that amount will be deposited against your own PAN card only, and whatever amount that has been deposited in your against your PAN, the TCS amount deposited against your PAN, you can use it either for discharging your tax liability. In case if you are not having any tax liability, the TCS amount anyhow ultimately you are going to get it as a refund only. No. So that means it is not in the nature of tax. Ultimately, you are only enjoying its benefit. It is just an interim levy. So since the TCS is not in the nature of tax, it is just an interim levy. The department has clarified that this TCS should not be added to the value of supply. Under 15 subsection 2 clause A, TDS should not be added to the TCS should not be added to the value of supply. Why, sir? Why? Because it is not in the nature of tax. It is just an interim levy. Okay, so this circular is very important. Okay, we have covered 15 subsection 2 clause A. First item which is required to be added to the value of supply. Second item which is required to be added to the value of supply. Any amount that the supplier is liable to pay in relation to such a supply, but which has been incurred by the recipient of the supply and which is not included in the price actually paid or payable for the goods or services or both. Sir, what is it? I will simply try to say it as supplier's obligation met by the recipient. Supplier's obligation met by the recipient, that should also be added to the value of supply. Sir, what they are trying to say here, also let me try to use one simple example to make you understand this in a detailed manner. Let us say there is one supplier. He agreed to provide me catering services. So this recipient is undergoing a wedding. So at his wedding, he has received catering services. Now, as a part of this catering service, some 20 items are required to be supplied. This person has agreed to provide catering services. As a part of this catering, some 20 items are required to be supplied. They have to serve 20 kinds of food items. So in that 20 food items, one drink. So soft drinks also they are required to provide. Along with the catering, they are also required to provide soft drinks. Now, when this wedding is happening, on the day when the wedding is happening, at the wedding hall, so one person, this supplier is also required to provide soft drinks, no, as a part of the catering service. So there is one vendor. There is one third party. One vendor is there. So this supplier has ordered from this vendor to deliver some 500 soft drink bottles. So he brought his vehicle with 500 soft drink bottles and he has unloaded that at the wedding venue. At the wedding venue, he has unloaded it. Now he stood there and he's asking for payment. Whom he will ask the payment? For supplier, he will ask the payment. Sir, you asked me to deliver 500 bottles of the soft drinks here. I have unloaded them. Please come and make me the payment. At that point of time, let us say supplier is not available at the venue. He went out on some task. Supplier is not available. So now he's not leaving. Supplier told to the vendor, boss, you go now. Later, I will come back and pay you for that 500 bottles. But this vendor is not leaving. This vendor has created the issue there. He's going and asking everybody. He's disturbing the guests and all. He's shouting in big voice and all. So he's creating nuisance. Now, this fellow who is getting married, who is a recipient of that catering service, is worried. He went to that vendor and asked the problem. Boss, what is your problem? He told, sir, that supplier has asked me to deliver 500 bottles of soft drinks here. I have unloaded them, but now he's not giving me payment. I will not go. Now he is creating issue at his wedding. He's getting worried. So what the recipient told is, okay, I will do one thing. Who is required to pay? Supplier is required to pay. No, how much amount you are required? He is required to pay 10,000. Don't worry, I will pay you 10,000. Don't worry, I will pay you 10,000. You please leave from here. So here recipient has paid 10,000 rupees to a third party. Here vendor is a third party, no? So recipient has paid amount of 10,000 rupees to a third party, which is actually whose obligation? Supplier's obligation. So supplier's obligation has been met by the recipient. Recipient has made a payment to the third party, which is actually supplier's obligation in relation to that supply. Now ultimately after this wedding and all has happened, recipient is required to make the payment. No. So what he is doing is, okay, initially we agreed for the fees of 1 lakh rupees, but since I have already made the payment, your obligation I have already discharged it to third party amounting to 10,000, I will pay only 90,000 rupees. So how much he has paid? 90,000 to the supplier. So now you tell me, what is the transaction value here? 90,000 only. Transaction value is 90,000. Why? Because what is transaction value? Price paid or agreed to be paid by the recipient to the supplier. So here how much price he will pay ultimately? 90,000. So transaction value as per 15 subsection 1 is 19,000 only. But under 15 subsection 2 clause B, this 10,000 rupees will be added. Why, sir? Because this 10,000 rupees is an amount paid by recipient to a third party, which is actually supplier's obligation and in relation to such a supply. So supplier's obligation has been met by recipient in relation to the supply. So as per 15 subsection 2 clause B, this 10,000 will be added. Total 1 lakh will become the value of supply. On that 1 lakh rupees, you will be liable to collect the amount of GST. Supplier should charge GST on 1 lakh, not just 90,000 rupees. Able to understand this? I hope you are able to with the help of this example. So that's what they try to say it here. So if you see any amount that supplier is liable to pay in relation to such supply, but which has been incurred by recipient, supplier is liable to pay some amount in relation to the supply, but instead of supplier who incurred that amount, recipient has incurred that amount. So if it is not included in the price actually paid or payable, so you are paying 90,000. In that 90,000 rupees, that 10,000 rupees paid to the third party is not included. Now you have to add it as per 15 subsection 2 clause B. Understood? Clear? Right. Next one. So this is what regarding B. Then we have C. Sir, what is C? In relation to the supply, if any incidental expenses are incurred like commission and packaging, which is charged by the supplier to the recipient of a supply, and any amount charged for anything done by the supplier in respect of the supply of goods or services or both, either at the time of supply or before delivery of that goods, before delivery of the goods or supply of the services. So not just the value of the consideration, any other incidental expenses. Let us say, for example, supplier is collecting from you along with the value. He is also collecting from you some commission, packing charges. So like that, if he is collecting some extra amount, even that also should be added to the value of supply. Or supplier has done something at your request. Supplier has done something at your request. For that, he is charging some extra amount from you, and that activity has been performed either at the time or before delivery of goods or supply of services. Even that is also required to be added. Let us say, for example, you have ordered some goods. Now you ask the supplier, sir, before delivering the goods to me, you please do some testing. You are buying some food articles. Now you wanted the supplier to get some inspection report. So supplier, since you have agreed, okay sir, I will supply the goods amounting to 1 lakh, but since you are asking me to do the testing, I will get the testing done for you. That for testing 10,000 rupees extra. So at your request, supplier is doing something for you and he is collecting that amount separately, 10,000 rupees. Now your value of supply will not be just 1 lakh rupees, it will be 1,10,000 rupees. Able to understand here what they are trying to say? So all other incidental expenses like commission, packaging, which are charged by the supplier from the recipient, that should be added to the value of supply. Or if any amount is charged by the supplier for doing anything in relation to that supply at the request of the recipient, and that you are doing that additional activity which the supplier is doing either at the time or before delivery of the goods or supply of services. In case after the supply of the goods or after supply of services, if the supplier is doing something at the request of the recipient, for that if he is collecting some extra amount, will it be added? No. Only something done by the supplier at the request of the recipient either before or at the time of delivery of the goods or supply of the services. That additional activity should have been done by the supplier either before the delivery of the goods or at the time of delivery of the goods, or before the supply of services or at the time of supply of services, but not after. If anything done extra by the supplier at the request of the recipient after the delivery or supply of the goods or services, then that amount will not be added to the value of supply. It will be taxed separately. Understood? Clear? Now here I want to bring one more concept here. So what is that one more concept is? See, I want to bring here the concept of pure agent. Listen carefully. I'm a supplier. Okay. So now I'm a supplier. I'm making some supply of the goods. Let us say 1 lakh worth of goods I am supplying to the recipient. In addition to that, I am also collecting some incidental expenses. Let us say I am collecting some 10,000 rupees as incidental expenses. Now I told 15 subsection 2 clause B, any incidental expenses should be added to the supply. But here there is one small catch here. In case if you are a supplier, you are collecting that extra expenses in the capacity of a pure agent. In case if you are collecting that incidental expenses or extra expenses you are collecting in the capacity of a pure agent, then that will not be added. In case, in addition to the value of supply, if you are collecting some extra amount for any expenses incurred by the supplier, but in case if you are collecting that extra amount in the capacity of a pure agent, then that pure agent expenses will not be added. That pure agent expenses will not be added. Now your doubt will come to you, sir, what is pure agent or who is pure agent? Let us see what is pure agent, who is pure agent. So if you come to rule number 33, you will be able to find the details. So who is a pure agent? Let us try to understand who is a pure agent. Right. So who is a pure agent? Pure agent means a person who enters into a contract with the recipient to act as a pure agent for incurring expenditure. That means as a supplier, you are entering into a contract with your recipient that you are going to act as a pure agent. And he does not hold the title of goods or services procured. That means on behalf of your recipient, you are procuring some goods, you are procuring some services, and you are not owning any title. Let us say, for example, one simple example I will tell you. I am providing event management services. One person is undergoing his wedding. I agreed to provide him event management services. For that event management, I am collecting 5 lakh rupees. Now, this recipient has requested me, boss, you do one thing, along with the event management, you also book the rooms for my guest in the hotel. You also book the rooms for my guest in some hotel. I told, okay, sir, I will book the rooms for your guest. For that, I will incur some expenses. Let us say, for example, I am incurring some 50,000 rupees expenses. But this is incurring as a pure agent. When he is incurring as a pure agent, when he will be considered as pure agent, he has agreed, he has entered into an agreement with the recipient to act as a pure agent. Number 2, he does not hold title of the goods or services procured. That means whatever hotel bills and all he is getting, those are in the name of the recipient only. Those invoices, that hotel bills and all are not in the name of the supplier. That invoices and all are in the name of the recipient only. Then he does not use the goods or services for their own interest. So he is booking that hotel not for his purposes. He is booking the hotel for recipient's purposes. Receives only actual amount, and this 50,000 is the actual amount you are incurred. You are not adding any profit margin. You are not adding any profit margin. Whatever cost you have incurred, that cost only you are recovering. Receives only actual amount for procuring the goods or services aside from the services provided on their own account. So this 5 lakh rupees is the consideration for services you are providing on your own account. This 50,000 rupees is for booking the hotels at the request of the recipient. You are only recovering the cost, and invoice is also in the name of the recipient. Then you will be considered as pure agent. Sir, should this 50,000 whatever I have extra collected, should that also be added to the value? No, not required. No, not required. So that's what they say here. Expenditure incurred by a pure agent is excluded from the value of supply and aggregate turnover subject to the following conditions. So this 50,000 rupees will be excluded from value of supply. This 50,000 rupees will not be included in the aggregate turnover of the supplier also. But some conditions are required to be fulfilled. Sir, what are that conditions? Payment arises from a contract between recipient and third party. So there should be a contract between recipient and third party with supplier acting as a pure agent. That means you should this recipient should say to the hotel, sir, on my behalf, there will be a supplier. He will act as a pure agent. He will incur expenses on my behalf. And the recipient authorizes supplier to make the payment. That means recipient has given the approval to make the payment. The supplier shows the payment separately in the invoice. Very important. This excess amount you are collecting should be shown separately. You should not show the bulk amount. If you are showing single amount 5,50,000 rupees, then entire 5,50,000 rupees will be treated as value of supply. If you want to claim that exemption of pure agent expenses, show your value of supply separately and the pure agent expenses separately have to indicate in the invoice. And the supplier supplies as a pure agent are in addition to their own services. So in addition to your main service, you are doing that additional service. If these conditions aren't met, expenditure will be included. That means if these conditions are met, expenditure will be excluded. If these conditions are not met, then that will be added to the value of supply. Understood? So this is what one related aspect of 15 subsection 2 clause C. Right. So 3 additions we have covered. So what are the 3 additions we have covered? 15 subsection 2 clause A says that any tax, charges, cess collected under any other law apart from GST and compensation cess is required to be added. 15 subsection 2 clause B, if any amount incurred by the recipient on behalf of the supplier, that is also required to be added. 15 subsection 2 clause C, which says that incidental expenses or any amount charged by the supplier for doing something at the request of the recipient, those all should be added to the value of supply. Now we have 15 subsection 2 clause D. 15 subsection 2 clause D says that one more item which is required to be added to the transaction value is in case if you are collecting any interest, late fee, penalty for delayed payment of any consideration for any supply. So in case of credit based transaction, let us say you made the supply of goods, you made the supply of services on credit basis. In case if the payment is just in the time of supply chapter itself, I have told, just in the previous chapter, I have told this point. So you initially made a supply amounting to 1 lakh rupees, charging GST at the rate of 18,000. You gave them 3 months of credit period. Within 3 months, if you don't make me the payment, I will collect from you some interest. I will collect from you from some late fee. I will collect from you some penalty. So like that, you have clearly told, in case of delayed payment, you will collect interest, late fee or penalty. Sir, will that interest, late fee, penalty also required to be added to the value of supply? Yes, on whatever interest, late fee, penalty you are collecting for late payment, that also should be added to the value of supply. But here once again the same issue will come. Sir, I would have already given the invoice. No, I would have already given tax invoice. Now how will I now add it, sir? Now you will not add it. For that you will give debit note. So if you come back to this example, initially you give the invoice amounting to 1 lakh 18,000 rupees. Thereafter, whenever you are collecting interest, in case if the recipient did not make the payment within time, you will be collecting the interest. No, then you will give debit note. Let us say, for example, the recipient is coming and making the payment on 15th of July. So on 15th of July, you will give the debit note for 10,000 rupees, and then you will collect the amount of GST. Able to understand? Now, one more point you have to always keep in mind. Whenever you are collecting interest, late fee, penalty for delayed payment, always assume that the amount which has been collected is inclusive of GST unless specifically mentioned in the question. You assume that whatever interest, late fee, penalty which you are collecting for late payment, that is inclusive of taxes. Quite simple business logic here. See, when the customer has not made the payment within time, if we are asking interest or late payment, in many of the cases, they will not pay me interest and late fee only. Now, if I ask them, sir, you have to pay me the late fee, interest, penalty along with the GST, forget about it. You are not going to get it. So that's why whenever you are collecting late fee, interest, penalty for delayed payment, that you assume it as inclusive of GST unless specifically mentioned in the question. Sometimes in the question specifically they will mention 10,000 rupees of GST exclusive of taxes. Like that, if they are mentioning, then only consider that interest, late fee, penalty as exclusive of taxes. If they did not mention anything, assume that that amount is inclusive of GST, because specifically no one will pay separate along with interest, late payment and all. No one will pay you excess GST amount also. So this 10,000 rupees will be considered as inclusive of GST. And what will be the rate of GST applicable on this interest, late fee or penalty, sir? Whatever rate of GST which is applicable for your main supply, the same rate of GST will become applicable on the interest also. Let us say your original supply against which you are collecting this interest is a taxable at the rate of 18%. Even this interest also will be applicable at the rate of 18%. So this 10,000 rupees will contain GST amount. Do the reverse calculation. 10,000 rupees into 18 divided by 118, you will get the GST figure. Let us say your original supply will attract GST at the rate of 12%. Then even this interest also will be attracting the GST at the rate of 12%. In that case, interest component will be 10,000 into 12 divided by 112. Let us say if your original supply is attracting GST at the rate of 5% only, even this interest also will attract GST at the rate of 5% only. 10,000 into 5 divided by 105. Understood? Clear and comfortable? So what will be the rate of GST? See, regarding this interest, few things we are required to understand. Sir, will interest be on interest or late payment charges also I am required to collect GST? Yes. Sir, what will be time of supply? When I will be liable to pay GST on that interest, late fee or penalty? Whenever you have actually received it. That's what we have covered in 12 subsection 6 and 13 subsection 6 of the time of supply chapter. Sir, what will be the rate of GST applicable on that interest, late fee, penalty charges? So whatever rate that is applicable on your main supply, the same rate of GST will become applicable. Fourth point, always imagine that interest, late fee or other penalty for delayed payment is inclusive of GST unless specifically mentioned in the question. So these points you have to keep it at the back of your mind, right? So this is where most often the students will try to commit the mistake. I hope you will not do it because I explained you clearly. Then one more last item which is required to be added to the value of supply under 15 subsection 2 is subsidies directly linked to the price, excluding subsidies provided by central government or state government. So in case if you are receiving any subsidy in relation to the supply whatever you have made, that subsidy is also required to be added to the value of supply provided to two conditions. Subsidies will be added to the value of supply only on fulfillment of two conditions. Number one, that subsidy is something which should be linked to the price. Subsidy should not be a blanket subsidy. So linked with the price, they should have given the subsidy. Let us say, for example, you are selling the article at 100 rupees. For every article you are selling at 100 rupees, 20 rupees of subsidy you are getting. So like that, price linked subsidy should be there. It should not be a blanket subsidy. What is blanket subsidy? Let us say, for example, you are doing some good job. Some NGO came and told you will give you some bulk subsidy of 10 lakh rupees. So should this be added? No, because it is not a price linked subsidy. So subsidies should be added to the value of supply only when two conditions are satisfied. Number one, that subsidy should be linked with the price, not a blanket subsidy. Number two, that subsidy should be given by other than central government or state government. That subsidy should be given by, provided by other than central government or state government. When these two conditions are satisfied, even subsidies also should be added to the value of supply. So what are the two conditions? Tell me. Subsidy should be linked with the price. It should not be a blanket subsidy. Number two, that subsidy should be given by other than central government or state government. When these two conditions are fulfilled, that subsidies also should be added to the value of supply. Clear? Understood? So this is what regarding this thing. So I think most of the concepts and all I have covered it. So 15 subsection 2 we have covered. So what and all are the additions which are required to be made to the value of supply we have covered. So coming back to the overall structure here. So we are done with 15 subsection 1 and we have also done with 15 subsection 2. Now we have to go ahead and try to understand 15 subsection 3. We have to go ahead and try to understand 15 subsection 3. So we are done with 15 subsection 1, 15 subsection 2. We have to understand 15 subsection 3, which is relating to treatment of discounts. So this 15 subsection 3 we are required to understand. Right. So before the break, we are done with 15 subsection 1 and 15 subsection 2. So now we will talk about 15 subsection 3, which is talking about treatment of discounts. So it is quite common in the business practices that suppliers will give discounts to their recipients. Now what should be the treatment of that discounts? Are that discounts permitted to be reduced from the value of supply? That's what we need to decide. So they say that for the purpose of 15 subsection 3, they have divided discounts into two categories. The discounts could be of two categories. So what are the two category discounts? One is pre-supply discount and another one is post-supply discount. So 15 subsection 3 clause A will talk about something called a pre-supply discount, and 15 subsection 3 clause B will talk about something called post-supply discount. Okay. So first let us see what is a pre-supply discount. Pre-supply discounts are those discounts which are given at the time of making supply, and these discounts are recorded on the invoice itself. Those discounts which are given either at the time of making supply or before making supply, and those discounts which are duly recorded on the invoice. On the invoice itself, these discounts will be recorded. Let us say, for example, you went to some shopping mall, you made a purchase. Let us say you made some 10,000 worth of purchase. On the 10% discount they have given. So that discount they are giving it at the time of making supply, and whatever discount they have given, that discount they will record it on the invoice also. 10,000 rupees is the total value minus 1,000 rupees discount, 9,000 payable. So now whether if the discount was duly recorded on the invoice, so if you say here 10,000 worth of shopping I have made, sir, they have given me discount amounting to 10%, and they have shown it in the invoice also, 9,000 rupees net they are collecting from me. Now GST should be charged on what value? Should the GST be charged on this 10,000 rupees, or should the GST be charged on this 9,000 rupees? So 15 subsection 3 clause A clarified that the GST has to be charged on 9,000 rupees. So those discounts which are given at the time of making supply and those which are duly recorded on the invoice, those are called as pre-supply discounts, and they must be excluded from the value of supply. On that you are not required to pay the GST. Exclude that from the total value of supply. On the balancing figure only you are liable to pay the amount of GST. That is what 15 subsection 3 clause A says. Very simple. Now we have 15 subsection 3 clause B, which is talking about post-supply discounts. The name itself says post-supply discounts. After supply the discount has been given. See, in many cases, in some cases, especially in B2B transactions and all, it will not be possible for the supplier to give the discount at the time of making supply only. Sometimes supply will happen at a later point of time, discount will be given. So if I have to give you a few examples of the post-supply discount, cash discount, you often might have read about cash discount. Like supplier will sell the goods on credit basis. He will say, if you come back and make me the payment within 15 days, I will give you 2% discount. So at the time of making supply, he did not give the discount. But later when the recipient comes back and makes the payment within that specified time limit, then he will give the discount. So this is one example. And there will be a few more examples in case of dealers. In case of dealers and all, manufacturers will give them something called volume discounts. To a dealer, they will say, in this year, if you purchase 10,000 quantity from us, we will give you 5% discount. So this is volume discount. Whether that dealer will be eligible for that 5% discount or not, I don't know it. At the time of making supply, I don't know. By the end of the year, if he has actually made a purchase of total 10,000 quantity from me, then only I will give you discount. So this is also an example of post-supply discount. Sir, you told in case of pre-supply discount, which is given at the time of making supply, which is also duly recorded on the invoice, we can exclude it from the value of supply. Okay, agreed. Then what about this post supply discounts, sir? So those discounts which are not given at the time of making supply, but which are given at a later point of time, what should be the treatment of that post supply discount? So when it comes to treatment of the post supply discounts are also excluded from the value of supply. Post supply discounts will also be excluded from the value of supply when three conditions are fulfilled. Sir, what are the three conditions? Number one, so that there should be an agreement. There should be an agreement to give the discount at the time of making supply. At the time of supply, you are not giving discount, but there is an agreement. There is an agreement to give the discount. The discount should have been agreed at the time of making supply. So you are not giving the discount at the time of making supply, but you have agreed to give the discount at the time of making supply. Like if you take the cash discount, I am saying if you make the payment within 15 days, I will give you discount. So at the time of making supply, I have agreed to give you the discount. So there must be an agreement to give the discount at the time of making supply. Number two, we should be able to calculate the discount invoice wise. We should be able to calculate discount invoice wise. It should not be a bulk discount. We should be able to calculate the discount invoice wise. At each invoice level, I should be able to calculate the discount. And third condition, recipient must reverse the proportionate ITC. Recipient must reverse proportionate ITC. So when all these three conditions are satisfied, then that post supply discount also will be excluded from the value of supply. So what are the three conditions which are required to be complied with? Number one, there must be an agreement to give the discount at the time of making supply. Number two, we should be able to calculate the discount invoice wise. Number three, recipient must reverse the proportionate ITC amount. When all these three conditions are satisfied, even that post supply discounts also will be excluded from the value of supply. Sir, how this will practically work out? How this will practically work out is, let us say for example, there is one supplier, he made some supply amounting to 1 lakh rupees. And on that GST is 18,000 rupees to the recipient. Now for this initial transaction, he will give tax invoice. Now this tax invoice will be declared in his GSTR1. He will discharge the output tax liability amounting to 18,000 rupees. Now on the basis of this tax invoice, this recipient will also take the ITC amounting to 18,000 rupees. Yes or no? Then thereafter, let us say for example, some post supply has been given, some post supply discount has been given, where there was an agreement to give the discount. Discount also I can calculate invoice wise, and recipient has also agreed to reverse the proportionate ITC. Now how this discount will be passed on is, we will give something called a credit note. Credit note under GST Act I will give. Sir, what is the credit note under GST Act? So since my recipient has also agreed to reduce this amount, proportionately reverse the ITC. So what I will give, let us say I'm giving 10% discount. So 10,000 for value I am giving discount. On the 10,000, whatever GST component is there, that also I have to reduce. So I'm giving 10% discount. If I give 10% only on 1 lakh rupees, it will not be enough. I am required to give the discount of that GST also. So on that discount also, I will calculate GST, which will come to 1800 rupees. Total for 11,800 rupees, I will give something called credit note under GST Act. So now when I give this credit note to the recipient, now supplier will declare this credit note in his GSTR1, and his output tax liability will get reduced by 1800. Whatever GST amount that is there in the credit note, that amount when you are declaring, that credit note when you are declaring in your GSTR1, your output tax liability will get reduced. And on the basis of this credit note, even the recipient, on the basis of invoice, he has taken 18,000 rupees full ITC. Now you got the credit note. On the basis of this credit note, even the recipient is also required to reverse that 1800 rupees of input tax credit. Even on the basis of this credit note, recipient is also required to reverse that proportionate ITC, that 1800 rupees is required to reverse it. This is how practically the things will work out. So first you will give tax invoice, then you will give credit note. In case if you are giving discount for the GST component also, then you will give credit note under GST Act, and that credit note will be declared in the GSTR1. If you declare that credit note in the GSTR1, your output tax liability will get reduced for the supplier, and the recipient is also required to reverse the proportionate ITC on the basis of that credit note. Okay, see, sometimes what will happen is, let us say initial tax invoice has taken place. Thereafter you are giving discount. Let us say there is no agreement. At the time of making supply, but you are giving discount. So now one of the condition got violated. There is no agreement at the time of making supply, but still you are giving discount depending on the stock levels and all. Sometimes even though there is no agreement at the time of making supply, suppliers will give discount. So there is no agreement, but still the supplier is giving discount. Let us say he is giving 10,000 rupees of discount. Sir, can I reduce the discount? Can I reduce the GST also? No, here you can't reduce the GST. You can give discount only on value. You can discount, in this case, you can give discount only on value. You can't give discount on the GST component. Why, sir? Why? Because conditions are not fulfilled. So 3 conditions are required to be fulfilled to reduce your GST liability. 3 conditions are required to be fulfilled. Number 1, there must be an agreement at the time of making supply. Number 2, you should be able to calculate the discount invoice wise. Number 3, recipient should be able to reverse a proportionate ITC. Here first condition itself is violated. There was no agreement at the time of making supply. So since there is no agreement at the time of making supply, you can give discount only on value. You can't give discount for GST component here. So in this case, if I am giving discount only on value, if I am not giving discount on GST, then I will give credit note, but that is not a credit note under GST Act. That is a credit note. That is a credit note which is commercial, or let me put it this way, that I call it as commercial credit note or financial credit note. Commercial credit note or financial credit note, I will call it. Sir, what is commercial credit note and what is financial credit note? So both are used interchangeably. So in the commercial credit note or financial credit note, through that credit notes, you will only pass on the discount of for value. You will not pass on any discount for GST. Sir, but what is credit note under GST Act? Credit note under GST Act is such a credit note where you are giving discount for the value also, where you are giving discount on the GST component also. So if you are giving discount for the GST component also, then only you can give credit note under GST Act. In case if you are not giving discount on GST, if you are giving discount only on value, then you will give commercial credit note or financial credit note. Now this commercial credit note is not required to be declared in your GSTR1. Even if you declare it also, your output tax liability will not get reduced. And on the basis of this commercial credit note or financial credit note, recipient is also not required to reverse any ITC. Recipient is also not required to reverse any ITC. So one important point I am making it here. Number 1, in case of secondary discounts, in case of post supply discounts, if 3 conditions are fulfilled, then we will give credit note under GST Act. That credit note under GST Act, supplier will declare in his GSTR1, his output tax liability will get reduced, and on the basis of that credit note under GST Act, recipient is also required to reverse the ITC. But in case of commercial credit note or financial credit note, where I am giving discount only on value, not on GST, that commercial credit notes or financial credit note will not reduce the output tax liability of the supplier, and on the basis of that commercial credit notes or financial credit notes, even the recipient is also not required to reverse any input tax credit. Understood? Right. So this is what you are required to remember. Now there is one circular. There are some circulars associated with this. Let me try to elaborate that circulars. So one recent circular, one amendment is there, one circular is there that I will try to explain. So one part of the circular I have already explained. First part is on the basis of commercial credit note or on the basis of financial credit note, the recipient is not required to reverse any ITC. Only when the credit note under GST Act has been given, then only recipient is required to reverse ITC. If any commercial credit note or financial credit note has been given, recipient will not be required to reverse any ITC. Now, one more interpretation, one more clarification which the department has recently given is, let us say there is a Tata Motors. There is a Tata Motors. Now, Tata Motors has sold some stock to the dealer. They have sold some cars to the dealers. Now, these dealers will sell the cars ultimately to the customers. These dealers will ultimately sell the cars to the customers. Let us say Tata Motors has sold some 1 lakh quantity of the cars to the dealer. Total some 1000 quantity of the cars they have already sold. For that, they have already given the tax invoice. Okay, on the basis of which this tax invoices are declared in the Tata Motors outward supplies, they have discharged their output tax liability, and this dealer has also claimed ITC on that 1000 cars. Now, at the end of the year, some stock is still left with the dealer. Some stock is still left with the dealer. Now, in order to clear his stock, in order for the dealer to help him to clear the stock, what the Tata Motors has done is they told, okay, boss, I will give you one discount now. I will give you some discount now. So I will give you some discount so that you can reduce your prices and you can clear the stock. So like that, they have given discount. This discount was not agreed. This discount was not agreed at the time of making supply. Listen carefully. Important circular, high chance of getting tested in the examination. Amendment also, little complicated also, listen carefully. So Tata Motors initially sold some 1000 quantity of the cars to the dealers. For that, they have given tax invoice, which Tata Motors has paid output tax liability also. Dealer has also claimed ITC. But at the end of the year, some stock is left out. Let us say, for example, some 50 cars are still left out. The stock is not moving. Now, as a kind gesture, what Tata Motors has done is, they told one thing, dear dealer, you do one thing. I will give you discount. You clear your stock. I will give you discount. You clear your stock. So let us say, for example, he gave some discount amounting to 10 lakh rupees of discount he has given. For this, he will give commercial credit note. Sir, why commercial credit note, sir? Why not credit note under GST Act? Here he can't give credit note under GST Act because it is a post-supply discount for which there was no agreement. Only when there is an agreement, then only GST amount will be reduced. But here there is no agreement. Since there is no agreement, he will give what? Commercial credit note he will give. commercial credit note he will give. That means this dealer is not required to pay 10 lakh rupees to the Tata Motors. This dealer is not required to pay 10 lakh rupees to the Tata Motors. Okay, so he's having some dues for this 1000 quantity. He will have some dues. No, from that dues, they are giving some 10 lakh rupees of discount they are giving. Okay, fine. So now what dealer will do, since he got the discount, that benefit or that he will try to reduce the prices and he will try to clear his stock. Now what one proper officer has done the interpretation? Listen, one proper officer, what he has done the interpretation is, he has done the interpretation. This Tata Motors have given the discount of how much? 10 lakh rupees. Discount given means cash received only. Indirectly, if Tata Motors has given the dealer discount of 10 lakh rupees, that means what? They are not collecting. They are not collecting his benefit only. If Tata Motors is not asking 10 lakh rupees from the dealer, that is also a consideration. No. See, let us say, for example, if they are required to pay 50 lakh rupees here, they have 50 lakh rupees of due. For that, Tata Motors has given 10 lakh rupees discount. So how PO has interpreted is, you are giving 50 lakh rupees and Tata Motors is giving back 10 lakh rupees. They have done some over interpretation here. Let us say this dealer is having a dues of 50 lakh rupees. Now Tata Motors has given 10 lakh rupees of discount. So how they have interpreted, you have given 50 lakh rupees and Tata Motors is giving you back 10 lakh rupees. They're giving you back 10 lakh rupees. So here Tata Motors has given this dealer some 10 lakh rupees of benefit. So this dealer has got a consideration of 10 lakh rupees. Money not given is equal to money received only. No. So they have told that this dealer has got 10 lakh rupees of consideration from Tata Motors for inducing the supply, for inducement of supply. So PO has interpreted. So let us say you are selling these cars. Let us say you are selling the car. You are supposed to sell the car at 20 lakh rupees. But now they have given discount. Now you will reduce the price, no? So let us say on each car, on 10 cars, they have given discount here. So 1 lakh on 10 cars, they have given total 10 lakh rupees of discount. Okay. Now what this seller is doing, what this dealer is doing, let us say he has to sell this car at 20 lakh rupees. But now he wants to clear the stock. He got the discount, no? So he will reduce 1 lakh rupees and he will sell the car. He will reduce the price to 19 lakh rupees so that he can clear the stock. So he's selling to the customer at 19 lakh rupees only. But what the PO has interpreted is, boss, you might be selling it to the customer at 19 lakh rupees only. But you got 1 lakh rupees as a discount. Consideration. Discount is nothing but consideration. So you got 1 lakh rupees from Tata Motors for inducing this supply. For inducing this supply. If you go and look at the consideration definition. So once again, let me take you back here. Very important here. We will take some time to understand this in a detailed manner. So if you come back to the consideration definition under the supply chapter. Listen. So where is consideration? Come on. Yeah, here you have. So if you see here, sir, what is consideration? Consideration in relation to supply of goods or services or both includes any payment made or to be made, whether in money or otherwise, or in response to an inducement of supply. It includes monetary value of any act or forbearance in respect of or in response to or for inducement of supply. So here what PO has interpreted is, this dealer is making the supply at 19 lakh rupees only to the ultimate customer. But for inducing this supply, to make this supply happen, the Tata Motors has given you discount of 1 lakh rupees on each car. So what PO has told is, this 1 lakh rupees will be added and your value of supply will be total 20 lakh rupees, he has told. He has told what? This 1 lakh rupees should be added because this is consideration, you are getting it from the Tata Motors for inducing this supply. Consideration need not be received only from the recipient. Consideration can be received from other person also. So now PO has interpreted, even though you are selling at 19 lakh rupees this car to your customer, for inducing this supply, you got discount of 1 lakh rupees from the manufacturer. So this 1 lakh rupees is also a consideration for inducement of supply. You will be liable to pay GST on total 20 lakh rupees, even though you are selling it to your customer for 19 lakh rupees only. Like this, POs have started harassing. Now the department has clarified that, see, it is a transaction on principal to principal basis. It is a completely transaction on principal to principal basis. When Tata Motors has sold the cars to the dealers, dealer will become the owner. He will become the principal. Now that dealer is giving the stock. The dealer is selling the stock to his customers, which is once again a transaction on principal to principal basis. And when the dealer has given discount, when the dealer is reducing the price, while selling the goods to the ultimate customer, he is reducing the price not for clearing the Tata Motors stock. That is his own stock. He has already purchased that 1000 quantity. For clearing his own stock, he is giving that discount. For clearing his own stock, he's giving that discount. So this transaction is happening on a principal to principal basis. So this 1 lakh, you don't add it to the value of supply. Like the department has given a clarification. This 1 lakh rupees should not be added. This 1 lakh rupees of discount which this dealer has got from the Tata Motors is not for inducement of Tata Motors supply. This is supply being made by dealer. He is clearing his own stock. So don't add that 1 lakh rupees. It is not for inducement of this supply. It is not for inducement of this particular supply. So don't add this 1 lakh rupees. Here the value of supply will be 19 lakh rupees only. This is what the department has clarified. This is what the department has clarified. But associated with this, one more point also they have told. Let us say, for example, there is Tata Motors. Now, this Tata Motors is having one dealer. This Tata Motors is having one dealer. Now, this dealer will buy the cars from Tata Motors and this dealer will sell it to the customers. Now, one day, what happened is one big MNC company is there. Now, this MNC company wanted to gift 10 cars to their best performing employees. One MNC company is there. This MNC company wants to gift some 10 cars to their best employees. Now, what they have done is they have approached directly Tata Motors. Sir, we want to gift 10 cars for our employees. They have directly approached the manufacturer and they ask, we want some discount, sir. They told, okay, sir, no problem. On each car, I will give 1 lakh rupees of discount. Tata Motors agreed with the customers to give discount at 1 lakh rupees. Discount on each car for 1 lakh rupees. But if you want to purchase a car, you can't go to the showroom. You can't go to the company. At the factory, they will not make any sale. If you want to make the purchase of a car, you have to go to the showroom only. You have to go to the dealer only. So purchase of cars can only happen through dealer. That purchase of cars, you can't go to the factory and buy it. So what Tata Motors has told to this MNC company is one thing. Sir, you go to the nearest dealer and you tell them that we have asked you to give you, we have confirmed you to give 1 lakh rupees of discount, and that dealer will sell you the car at 1 lakh rupees of discount. So this MNC company went to the dealer. They are purchasing 10 cars. Each car will cost 20 lakh rupees. But they are asking for a discount. Why? Because company has asked them to do it. So they went to the dealer and they told, sir, we want 1 lakh rupees of discount on each car. But dealer will not agree. No. Why dealer will not agree? Because he could sell that car for 20 lakh rupees and he will make profit. If he agreed to sell that car for 19 lakh rupees only, 1 lakh rupees of profit he is losing. Now he will complain to the manufacturer. Sir, why are you asking me to sell to this customer 20 lakh at 19 lakh rupees only? I can sell it at 20 lakh rupees. 1 lakh rupees I am losing. No. Why I should lose? Now manufacturer will say, don't worry. You sell this motor vehicle, you sell this car at 19 lakh rupees only. That 1 lakh rupees we will give you as discount. Anyhow, you are required to pay us the amount. No. From that amount we will reduce. For this they have given commercial credit note. So like this, 10 cars I am selling at 19 lakh rupees. On the 10 cars, each car I am getting a discount from the manufacturer. He is giving, okay, 10 cars you sell it at 19 lakh rupees only. That 1 lakh rupees, whatever you are losing, we'll try to give you a credit note. You are required to pay some amount to us. No. From that we will reduce that 1 lakh. So like that, here they have given commercial credit note amounting to 10 lakh rupees. And this dealer ultimately is selling that car at 19 lakh rupees. Now, the previous interpretation will not become applicable here. In this case, since the manufacturer is under an obligation to make the supply to the ultimate customer at discounted price. So now whatever commercial credit note he is giving it to the dealer, here it is for inducement of the supply only. Why? Because the manufacturer is under an obligation to the customer to supply at a discounted price. To make it happen, for that dealer he is getting the discount of 1 lakh rupees on each car. So here, this discount, whatever has been given by the manufacturer to the dealer, here it is for inducement of supply. And this 1 lakh rupees should be added to this 19 lakh rupees. That 1 lakh rupees should be added. That will be considered as value of supply. On total 20 lakh rupees, GST will become applicable. I hope you are able to understand the difference between previous case and this case. In the previous example, the manufacturer is under no obligation to supply at a discounted price to the customer. The dealer is doing on his own. So that discount, whatever he has received from the manufacturer, that is not for inducement of any supply. That will not be added to the value. Whereas in the second case, the manufacturer is under an obligation to provide at a discounted price to the final consumer. To fulfill that obligation, he is making it happen through the dealer. For that purpose, he is giving discount to the dealer. Now here it will be this discount, whatever they are receiving, that is for inducement of supply. And here we have to add it to the value of supply. Understood? So if you read that circular and all, it will sound little complicated here, but this is what ultimately the summary is. With the help of this example, you will be able to understand it in a better manner. You will be able to relate the things in a better manner. So just take the help of the example. I know I have taken a lot of time for this circular because this is amendment. This is from where the questions are going to come. That's why. I hope you understood it. If it had been a regular class or EOB class, we would have gone much deeper. But as you all are aware, this is marathon. Come on. Where are you? Yes. At the end, I have given this extra circulars. See here. This is circular. Whether a post-supply discount offered by a manufacturer to its dealer or distributor would be treated as consideration paid by manufacturer for dealers' supply of same goods to end customers as a monetary value for inducement of the supply of the goods manufactured by him to the end consumer. So this is what I have tried to clarify it with the help of the example, whatever I have used. Now, one more thing also come here. In this circular, one more point also they have clarified. Now, what happened is, let us say Tata Motors has sold some car to the dealer. Now, this dealer is left with some stock. Now, what happened is, this Tata Motors has given him some discount, post-supply discount they have given, for which they have given commercial credit note, 10 lakh rupees worth of discount they have given. Now, what dealer will do is, since he got the discount, he will spend more money on advertising. He will spend more money on advertising so that he can clear his stock. He will, since company has given him the discount, what he will do, he will spend more money on advertisement and he will clear the stock. Now, what one PO has interpreted is, hey, you got the discount, no? Money waived is equal to money received only. If the company is not asking you 10 lakh rupees of consideration, that means you are not required to pay 10 lakh rupees. Not paying is equal to receiving only. So this dealer has got consideration, 10 lakhs worth of consideration he has got. In return, what he is doing? He is doing advertising. He is doing advertising for the manufacturer, like that he has interpreted. But here also the department has clarified, in this case, when the dealer is doing the advertisement, he is not doing the advertisement from the manufacturer. He is doing the advertisement to clear his own stock. He's doing the advertisement for clearing his own stock. He's not doing advertisement for the manufacturer. He has given discount, but why this? But dealer is doing the advertisement, that whatever amount that has been reduced, for that amount he's spending on advertisement. Why he's doing the advertisement? For clearing his own stock or for clearing the manufacturer's stock? It is for clearing his own stock. So for clearing his own stock, he is giving advertisement. He's incurring expenditure on advertisement. He's not providing any advertisement or marketing services to Tata Motors. So there is no supply of service here. For this 10 lakh rupees, there is no supply of services doing to manufacturer. So it is not treated as supply. Yes, he is doing advertising, but that advertising he is doing it for clearing his own stock, not for clearing the manufacturer's stock. He is not providing any service to the manufacturer. Like that they have clarified. But on the other hand, let us say, for example, Tata Motors is giving some discount to the dealer with an agreement. So while giving discount, the Tata Motors has clearly put the condition that, boss, we are giving a discount to you, but for that discount, what you are required to do is, you are required to do some specific advertisement. Like, let us say, for example, you are required to conduct one expo, you are required to keep a stall at a shopping mall. So if you do that specifically, if you keep the stalls, if you keep some expos, if you do some advertisement specifically as per our requirement, then only we will give you discount. Like that, if the Tata Motors has given discount with a specific condition for advertising, in that case, the dealer, whatever discount he is getting, that is a consideration for supplying advertising and marketing services, that will be considered as supply of services. On that, GST has to be collected. Able to understand? So if the discount has been given by the manufacturer to the dealer with a specific condition that dealer has to do certain kind of advertising to promote the manufacturer's brand or product, in that case, that discount is equal to consideration received for supplying marketing services, that will be considered as supply of services, and GST will become applicable. Understood? Right. So this is the circular, recent circular, very important. So whatever is there in the circular, that's what I tried to explain it with the help of this example. I hope you are all able to understand it. Okay, right. Now, so let us come back to the context here. So we have covered 15 subsection 1, 15 subsection 2, 15 subsection 3. So whenever the transaction is happening between two unrelated persons and price is a sole consideration, how to determine the value, that we are done. Now we will come to 15 subsection 4. Now we will come to 15 subsection 4. Sir, what is 15 subsection 4 saying? As we have already seen, whenever the transaction is happening between either two related persons, or when price is the sole consideration, or when price is not the sole consideration, then we are required to determine the value as per the rules. And what rules we have, sir? Starting from rule number 27, rule number 28, rule number 29, rule 30, rule 31 we have. So let us try to understand one by one. So first case, let us say, for example, you are making some supply where some non-monetary consideration is involved. You are making some supply with unrelated persons only, but there is some non-monetary consideration. You are getting a monetary consideration, along with that some non-monetary consideration is also there, or you are receiving completely non-monetary consideration. So you are making a supply You're making some supply of goods or you're making some supply of services, but some non-monetary consideration is involved. When I say non-monetary consideration, it could be monetary plus non-monetary, or it could be completely non-monetary consideration. So definitely 15 subsection 1, 15 subsection 2, 15 subsection 3 will not become applicable. Sir, in this case, how to determine the value of supply? In this case, how to determine the value of supply in case if there is a supply in which there is a non-monetary consideration involved? Now they say that you need to determine the value of supply as per rule number 27. You need to determine the value of supply as per rule number 27. Sir, what is rule number 21 saying? You have to follow in this order. So in this case, the value of supply should be open market value. Open market value of goods and services, or open market value of the same goods and services. So whatever services you are providing, you have to determine its open market value. So that will be considered as value of supply. Sir, if open market value is not available, then it will be you are getting monetary consideration. No, that monetary consideration plus money equivalent of non-monetary consideration. Plus money equivalent of non-monetary consideration. So whatever money consideration, let us say for example, I am getting for making a supply 20,000 rupees of cash and 50,000 rupees worth goods also I am receiving. Now I have to determine what is the monetary value of the what is the monetary money equivalent of the non-monetary consideration. So let us say I'm making a supply for which I received 10,000 rupees of cash and also have received some goods. Now I have to determine what is the money equivalent of this goods. Let us say for example, money equivalent of this goods is 50,000 rupees. So 10,000 rupees plus 50,000, 60,000 rupees will become my value of supply. Sir, even money equivalent of the non-monetary consideration is also not available. Then in that case, the value should be value of like, kind and quality. Value of like, kind and quality. So for this, like for the goods or services, whatever you are supplying, like, kind and quality of goods or services value you have to take, that will become the value of supply. Sir, if that is also not applicable, then what you should do? Then you have to find out the value on the basis of rule 30. Sir, what is that rule 30? Cost plus 10% margin. Cost plus 10% on cost basis. So you have to determine all the cost and you have to add 10% to it. That cost plus 10% will become the value of supply. Sir, if cost also I am not able to determine, then you have to follow rule number 31, which is a best judgment assessment. Which is what? Best judgment assessment. Even cost also, if you are not able to determine, best judgment assessment. So depending on whatever information available, so using some other reference points, you have to determine the value. Best judgment assessment you are required to do. However, in case of supply of services, what you can do is you can skip. In case of supply of services, you can skip rule number 30 and directly come to rule number 31. Why? Because in case of services, how you will determine the cost? For goods, we can determine the cost. What is the material? What is labor? What are overheads? That we can calculate. But for services, it is highly difficult to determine the cost. No, so that's why what you can do is, in case of services, you can skip that section. You can skip that cost, and you can directly come to rule number 31. Why? Because for services, it will be very difficult to determine the cost. We can't determine the cost. Understood? So rule 27 says, in case if you are making any supply, where non-monetary consideration is involved, that means either monetary plus non-monetary consideration is there, or completely non-monetary consideration is there. So in that case, you have to determine the value as per rule number 27 in the same order. You have to follow. First one, it should be open market value. So let me come here. Right, let us come here. So what they're saying, so in case of non-monetary consideration, so it should be applied in the same sequence, which says open market value. Sir, what is open market value? Full value of money excluding GST payable by a person to obtain such supply, same supply. So to obtain the same supply, what will be the full value of money excluding GST you are required to pay at the time when the supply is being at the time when supply being value is made. So on whatever day, on the day at which the supply is made, on the same day, if any other supply happens of the same article, what value you will pay, provided such supply is between unrelated person and price is the sole consideration. That I call it as open market value. So if open market value is available, you have to go with the open market value. Sir, open market value is not available, sir. Then value will be money consideration plus money equivalent of non-monetary consideration. Sir, that is also not available, sir. Then it will be value of supply of goods and services of the like, kind and quality, where value cannot be determined under clause A or B above. And sir, that is also not available. If it is not ascertainable, then you have to apply rule 30. What does rule 30 say? Cost of supply plus 10% markup. Sir, if that is also not applicable, then you come to rule number 31. And however, for supply of services, the supplier can skip the cost plus 10% and directly come to rule number 31. So this is how you need to determine. Sir, where this is mentioned? In rule number 27, they have mentioned it. Now, let us try to proceed further with rule number 28. Sir, when rule number 28 will become applicable? So rule number 28 will become applicable. If you see here, value of supply of goods or services or both between distinct persons or related persons other than through an agent. So I told 15 subsection 1 will become applicable only when you are making supply between unrelated person. Sir, but what if supply is between related persons or distinct persons under section number 25? I have already told you who are distinct persons under section number 25. Multiple registrations under same PAN. So establishment, registered establishment in one state, unregistered establishment in another state. So like that, distinct persons. So in case of supply of goods or services, either between related persons or between distinct persons under section number 25, in that case, you can't go by the transaction value. If the supply is happening between related persons or if the supply is happening between distinct persons under section number 25, you can't take transaction value. Why you can't take transaction value? Logic is very simple. When the supplier and recipient both are related, the relationship will have an effect on the price. The relationship will definitely influence the price. So that's why they have told whenever transaction is happening between related persons or whenever transaction is happening between distinct persons under section number 25, then you can't take transaction value. Then how can I determine the value of supply, sir? So here also they say first one, go with the open market value. Go with the open market value. In case open market value is not available, here there is no, here this point is not there. Directly they told in case open market value is not available, value of like, kind and quality. Value of like, kind and quality you have to consider. Sir, if value of like, kind and quality is also not available, then you come to rule number 30, cost plus 10%. Sir, if cost also I am unable to determine, come to rule 31, best judgment assessment. Here also in case of supply of services, you can skip rule number 30 and come to rule number 31 directly. In case of supply of services, you can skip rule number 30 and you can come to rule number 31 directly. Understood? So this is what rule number 28 says, more or less similar to rule number 27 only, but that second point will not be there. Monetary plus money equivalent of non-monetary consideration, that thing will not be there. Okay. So in case supply is happening between related persons or distinct persons under section number 25, how you can determine the value of supply? So you have to go with the open market value. If open market value is not available, value of like, kind and quality. If that is also not available, cost plus 10%, rule 30. If that is also not possible, rule number 31, best judgment assessment. But however, there are some provisos here. To this rule number 28, there are some provisos. What are that provisos? So let me try to explain that one by one. So what they try to say here is, if the goods are intended to be supplied as such by the recipient. Let us say a supply is happening between related person or distinct person, and you are making supply of goods, and those goods will be sold as such as it is. Those goods will be sold by the recipient. In that case, 90% of the price charged for supply of the goods of like, kind and quality by the recipient to his unrelated customer, that itself will be considered as value. Sir, what they are trying to say here? Don't worry, I have a example for you. Listen. So I will take one notes here. Right. So let me take this example. Copy. Marathon notes. Right. See here. So what they are trying to say, first proviso says that in case supply is happening between related persons and distinct persons, but the supply which is happening is supply of goods. Let us say there is a factory in Delhi and you have a depot in Mumbai. Both are distinct persons only. Now you are doing a stock transfer. So there is a supply of goods happening between related persons under section number 25. So under section number 25, actually rule 28 will become applicable. What does rule 28 say? Just now as we have read. So the value should be either open market value, like, kind and quality, rule number 30, rule number 31. But here they are giving one option. For this supply. Either you can determine the value of supply like this. Following rule 28, which will be open market value, like, kind and quality, or rule 30, rule 31. But in case if you are making supply of goods and those goods will be supplied as such, to an unrelated person. So you made stock transfer to your Mumbai branch. From their Mumbai branch, the goods will be sold as it is without any modification. Those goods will be sold to an unrelated person. When you make that subsequent sale to the unrelated person, there will be sale price. No, in that sale price, you take 90%. That 90% you can take it as value. So like this, one option has been given. It is not mandatory. It is an option given in case of supply between related persons or distinct person. That too only in the case of supply of goods. If you are making supply of goods to your related person who will make further supply as it is to an unrelated person, you have two options. Either you follow rule number 28, that is determine the value as per open market value, like content quality, rule 30, rule 31, or at your option 90% of the price at which that goods will be sold to unrelated customer will be there. No, that 90% of the value also you can consider it as value. It is your option. Either of it you can choose it. Sir, what if the supplier is making, what if there is a supply of services happening between distinct persons and those services will be supplied to an unregistered person? Here also will 90% rule become applicable? No. Here only this rule will become applicable. Open market value, like content quality, 30 and 31. Why? Because this relaxation has been given only for supply of goods, not for supply of services. So in case if you are making supply of goods to an unrelated person, distinct person, from there they will be supplied to unrelated person as it is, then only you can take 90% value. In case of supply of services, that relaxation is not there. In case if the supply of services is happening between related persons or distinct person, compulsorily you have to follow this rule number 28, open market value, like content quality, rule 30, 31. One more case. Let us say, for example, there is supply of goods happening between related persons or distinct person. Now this recipient, he will make some modification to that product, then he will sell it to the unregistered person. And the price at which that modified goods will be sold to unrelated person, not unregistered, unrelated. So the price at which that recipient will sell that modified goods to unrelated person is 10 lakh rupees. Sir, can I take 90% of the value here? No. Here only rule 28, usual rule 98 will become applicable. What is it? Open market value, like content quality, rule 30, rule 31. Why? Because this relaxation has been given only when the goods you are supplying into related persons or distinct person, and they will be supplied as such, as it is, without any modification. If they are getting supplied as such, then only you can take either this usual route or 90% of the value. But in case if the recipient related persons or distinct person, if they are doing some modification, thereafter they are selling it to unrelated person, then that provision will not become applicable. You have to come to the usual route of open market value, like content quality, rule 30 and rule 31 only. Understood? Clear and comfortable? Right. Next, one more provision is there. So what is that one more provision is, if recipient is eligible for full ITC, value declared in the invoice itself will be deemed to be the open market value of goods or services. So one more provision also they have told. So what they are saying, if the recipient is eligible for full ITC, value declared in the invoice shall, mandatory, value declared in the invoice shall be deemed to be the open market value. Sir, what is this one more provision? So let me try to explain this also, what they are trying to say it here, the help of example. So let us say there is a related persons or distinct persons. They are making some supply to another related person. So now practically what will happen? Rule 28 should become applicable. But what here the one provision they are saying is, if the recipient is eligible for full ITC, if you are making some supply to the recipient who is a related person or distinct person under section number 25, and this recipient is eligible for full ITC, then rule 28 will become applicable. What rule 28 say? Open market value, like kind and quality, rule 30, rule 31. But here the provision what it says is, in case if the supply is made between distinct person or related person, and if the recipient is eligible for full ITC, there is no restriction, this recipient will become eligible for full ITC, then you will give the invoice. No, in that invoice you will declare the value. No, that value itself will be deemed to be the open market value. Let us say if in the invoice 1 lakh rupees I have mentioned, your open market value will become 1 lakh rupees, and that 1 lakh rupees will become the value of supply. If in your invoice 10 rupees you are mentioning, that 10 rupees will become value of open market value, that itself will be considered as value of supply. If you are mentioning 1 rupee in your invoice, that 1 rupee itself will be considered as open market value, that will become the value of supply. Able to understand? Clear and comfortable, everybody? So one more provision. First provision says, in case of supply of goods between related persons or distinct person, where the recipient is making the supply of the goods as such to the unrelated person, you can either go with that usual rule 28 or 90% of that price to an unrelated person. One more provision is there to rule number 28, which says that in case of supply between related persons or distinct person, where the recipient is eligible for full ITC, then value declared in the invoice itself will be considered as open market value. If itself is getting considered as open market value, that itself is going to become the value of supply. Understood? Clear and comfortable? Right. So that is what one more provision they are saying. So if recipient is eligible for full ITC, value declared in the invoice shall be deemed to be the open market value of the goods or services in the following cases: distinct persons or related persons. Clear? Next. And one more thing is also there. One more point is also there regarding corporate guarantees. Regarding corporate guarantees also, one more point is there. Listen carefully. See what is this corporate guarantee. So this is also related to rule number 28 only. Let me tell you what is this. These are all little complicated and important from the examination perspective. So that's why I'm giving examples here. And this is where many students will face a difficulty in understanding also. Let us say there is a company H Limited, which is a holding company. There is a company S Limited, which is a subsidiary company. So holding company, subsidiary company, both are related or not? Yes, both are related persons. Now this subsidiary company needs some loan from SBI. Let us say, for example, this SBI, there is a SBI bank. They need some loan. Subsidiary company needs some loan. Now for this loan, this holding company is providing the guarantee. For providing that loan, see, I think for this also one ready chart should be there. Let me take the help of it. Try to draw it once again. Yeah, this chart is there. This is something which I've used in my regular class. This itself I will use. Try to redraw and waste the time. Okay. Let us see here. So there is a holding company, subsidiary company. Now this subsidiary company needs a loan from SBI. Okay. So for that loan, this holding company is acting as a guarantor. Holding company is acting as a guarantor on behalf of subsidiary company for the purpose of getting a loan from a bank or financial institution. Now, who is the service provider? Holding company. Who is the service recipient? Subsidiary company. Why subsidiary company is a recipient? Because they are providing guarantee on behalf of this service recipient, on behalf of this recipient only. No. So here subsidiary company needs a loan here. So they went to SBI. Sir, we want a loan. SBI told, sir, we want someone to give guarantee. Now this S Limited, this holding subsidiary company went to holding company. Boss, we need a loan, but bank is asking for guarantee. Now holding company told, no issue, I will act as a guarantor. So this holding company is providing the guarantee to the subsidiary company for getting a bank loan. So both are related persons. So who is service provider? Holding company. Who is recipient? Subsidiary company. And this service we call it as corporate guarantee. Between two corporates, one guarantee is happening. So this is also supply between related persons only, no? This is also supply between related persons. If it is supply between related persons, what will happen? Rule 28 will become applicable. So what does Rule 28 say? Open market value, like, kind and quality 30-31. Yes or no? But this will not become applicable here. You should not determine the value of supply using rule number 28. But there is one more rule. This is rule number 28 sub rule 1. But we have rule number 28 sub rule 2, which says that in this corporate guarantee, in the case of corporate guarantee services between related person, don't go by rule sub rule 1. Don't go by open market value, like, kind and quality 30 and 31. But instead come to sub rule 2. What does sub rule 2 say? In these cases, the value will be either 1% of amount guaranteed. Either 1% per annum of total amount guaranteed, or actual amount whatever is getting received, whichever is higher, that will be considered as value of supply. So corporate guarantee between related persons. Yes, this is also a transaction between related person. So here rule 28 will come, but here rule 28 sub rule 1 will not come. What is rule 28 sub rule 1? Open market value, like, kind and quality 30-31. Here that will not come. So you have to come to rule number 2, sub rule 2. What sub rule 2 says? In the case of corporate guarantee between related person, the value of supply will be either 1% per annum of the amount guaranteed, or actual commission which has been received, whichever is higher. Let us say there is 200 crores of loan. Loan amount is 200 crores and this amount has been guaranteed by the holding company. So what is the value? What is 1%? If I calculate 1%, 2 crores. But for giving that guarantee, they are getting actual consideration. For giving that guarantee, they are getting actual consideration also. For giving that guarantee, they are getting a consideration of 1 crore. So what will be value of supply? Whichever is higher. 1% per annum of the amount guaranteed, or actual consideration. That is 2 crores or 1 crore. Whichever is higher. Which one is higher? 2 crores. Value of supply will be 2 crores here. So let us say amount guaranteed is 50 crores. Amount guaranteed is 50 crore rupees. So 1% of the amount guaranteed, which will come to 50 lakh rupees. Actual consideration received is 1 CR. Whichever is higher. Which one is higher? 1 crore is higher. So 1 crore will become the value of supply. Able to understand? So in case of corporate guarantees between related person, there don't go by sub rule 1. You come to sub rule 2, 28 sub rule 2, which says that in case of corporate guarantee between related persons, value of supply will be either 1% per annum. Let us say if the loan is given for 5 years. Amount is 100 crore rupees. Loan given is 100 crore rupees, but this loan is for 5 years. 1% into 5, because 1% per annum. 1% into 5 into 100 crores, which will come to 5 crores, or actual consideration, whichever is higher. Able to understand? Clear and comfortable, everybody? right? So this is what they try to say it here. This is what subrule 2, 28 subrule 2 says. So in case of corporate guarantee services between related persons, special rule will become applicable. 1% per annum of the total amount guaranteed or actual consideration which has been received, whichever is higher. Now, associated with this, there is one more point also which they have told. There is one more circular also they have given. So what is that circular is? Let us say, for example, one individual is there. Director is there. Board of director is there, no? That board of director is giving a guarantee on behalf of the company. There is a person who is acting as a board of director in the company X Limited. Now this company needs a loan from the bank. This company needs a loan from the bank. So now from the bank, they will get a loan, but for that bank is asking someone as a guarantor. Now this board of director is acting as a guarantor for this company to get the bank loan. So this is also service provided by the board of directors to the company. Sir, are they both related? Are they both related? Yes, director and company are also related. So, but is it a corporate guarantee? No, it is not a corporate guarantee. What is a corporate guarantee? Guarantee happening between two companies. That guarantee happening between two corporates. That is what we call it as corporate guarantee. That is what we call it as corporate guarantee. Here, if the individual board of director is acting as a guarantor for the company in which he is a director, that is not a corporate guarantee. But this is also a transaction between related persons. This is also a transaction between related persons. Here, usual rule number 28 subrule 1 only will become applicable, which is you have to determine open market value, you have to determine like, kind and quality, or you have to come to rule 30, or you have to come to rule 31. But here what they have clarified, as per the Companies Act and all, if the board of director is providing a guarantee on behalf of the company, he should not charge any consideration. He should not charge any consideration. So that means for this kind of services, the board of directors should not charge any consideration. That means open market value will be considered as 0 here. So that's why value of the supply will become 0 here. Value of the supply will become 0 here. Very, very important. Very important circular. So in case if an individual board of director is acting as a guarantor for the company in which he is a director for a bank loan, it is not a corporate guarantee. If it is a corporate guarantee, it will come to subrule 2, which says 1% per annum of the total amount of loan guaranteed or this actual consideration, whichever is higher. But in case if the board of director, if an individual person has provided guarantee to the company in which is the director, that is not a corporate guarantee. But this transaction is also a transaction between related person. Rule 28 subrule 1 will become applicable. Either open market value, like, kind and quality. Rule 30, rule 31 will become applicable. But here the department has given circular is, as per the Companies Act, board of directors should not charge any consideration for acting as a guarantor. So literally speaking, open market value will be considered as 0 here. Value of supply is 0 here. That means no GST will come here for the purpose of guarantee given by the board of director to the company in which he is a director. Understood? So this one point also you try to remember it. A very important circular. Okay. And further, many other nuances are also there in this particular association. So yeah, so this I will try to wind it up here. This valuation rule 28, I will try to wind it up here. So this is what regarding valuation of personal bank guarantee by the directors to the bank for the company. Open market value will be treated as 0. So this I will try to wind it up. So rule 28, rule 29 we have covered. Now let us come to rule number 29. So rule number 29 will become applicable in case if there is any supply of goods is happening through an agent. If the supply of goods or receipt of the goods, supply of goods or receipt of the goods through an agent, then this rule 29 will become applicable. Okay, so what they're trying to say it here. So if you remember, principal making the supply of goods through an agent, where agent will make further supply, or agent is receiving the goods on behalf of the principal and this agent will make the supply to the principal. Yes or no? So here, even if happening without consideration, this will be considered as supply as per para number 3 of schedule 1. As per para number 3, schedule 1, if the principal is supplying the goods to the agent or if the agent is supplying the goods to the principal, even if without consideration, it will be treated as supply or not. Sir, but how to determine the value? How to determine value? Okay, as per para number 3, schedule 1, this activity of principal to agent and agent to principal is getting treated as supply, even without consideration. But how to determine that value of supply, sir? Here rule number 29 will become applicable. So what rule number 29 says? Very simple things rule 29 will say, not at all complicated. So in case of supply of goods between principal and agent, it is applied, the valuation will be determined by following the following method. Number 1, open market value of the goods. Open market value or 90% of the price charged for supply of the goods of like kind and quality by the recipient to his unrelated customer. So what they have told here, very simply what they have told is, let us say principal is supplying the goods to an agent. So what will be the value? Rule 29 says either open market value. or 90% of the value charged by the recipient to his final customer. Agent will make a further supply to the unrelated person, no, in that value 90%. So either open market value or 90% of the value charged by the recipient to an unrelated person. And if value cannot be determined under A, in case if you are unable to determine the value as per open market value or 90% of the value charged by the recipient to unrelated person, if value can't be determined under clause A, taxable value is determined sequentially by following Rule 30 and Rule 31. Rule 30 and Rule 31. So either cost plus 10% or best judgment assessment. Very simple here. Rule number 29 is not at all complicated. Very simple. So when rule number 29 will become applicable in case of supply of goods only, not supply of services. Rule number 29 will specifically talk about only supply of goods, value of supply of goods between principal and agent. Rule number 29 will not become applicable for supply of services. But if you see rule number 28, it will become for supply between related persons or distinct persons. That will become applicable for supply of goods also, supply of services also. But rule number 29, it will become applicable only for supply of goods between principal and agent. So how to determine value as per rule number 29? Either open market value or 90% of the value charged by the recipient to his unrelated person. If you are unable to apply if you are unable to apply this, it will be applied by following rule number 30, rule number 31. What is rule number 30? Cost plus 10%. What is rule number 31? Best judgment assessment. Simple. Right. So rule 30 we have already covered, cost plus 10%. Rule 31, as I have told, best judgment assessment will become applicable here. Now apart from that, some extra rules also we have. Rule number 32 we have. Rule number 31A we have. So these are just straight away points which you have to refer to it. So rule number 31A, 31B, 31C, these are all relating to actionable claims. Rule number 31A, 31B, 31C will talk about how to determine the value of supply in case of specified actionable claims are there. No, only 6 specified actionable claims are there. So in those specified actionable claims, how to determine the value of supply, that is explained by rule number 31A, 31B, 31C. First I will talk about rule number 31C. C means casino. Like this you can remember. Rule 31C will talk about how to determine the value in respect of actionable claims in case of a casino. In case of casino, how to determine the value of supply. Rule 31C will talk about it. So they say that when someone plays a casino, what will be value of supply? It will be total amount paid or payable by or on behalf of player for buying tokens, chips, coins, tickets, which will be used for gambling, no matter what they are called. So if you go and want to play in a casino, you have to deposit the money and get the chips or tokens. Like you often see it in the movies and all. Some big casinos will be there, some colored coins they will give. So if you want to go and play in a casino, you have to go and deposit the money. For the money you have deposited, you will get the coins. So whatever money you are depositing for getting that tokens, for getting that chips, which you will use it for playing the games in that casino, that amount which you are depositing for getting that chips or tokens, that will be considered as value of supply. Or if you are paying any amount for participating in an event, including game, scheme, competition, or any other activity or process in casino where tokens, chips, coins, tickets aren't needed. Inside the casino also, in some for some games, you need not have any tokens. Directly you can pay the money and you can play the game. So either you are buying the chips or tokens for whatever amount you have deposited for buying that chips or tokens, that will be value of supply. In case if you are not required to buy the chips or tokens, directly you can deposit the money and participate in the event. That money, whatever you are depositing, that will become the value of supply. No deduction for refunds. Sir, this is very important point. Refunds for unused tokens, coins, tickets, chips does not reduce the total value. Let us say, for example, you paid 10,000 rupees. You purchased the coins. Okay. Now you played with some 8,000 coins. 2,000 coins are left. Now, at the time when you are leaving the casino, you are returning that 2,000 coins and getting back the cash. Sir, 10,000 rupees I have paid and initially got coins. Now I am returning 2,000 worth of coins. Sir, what will be value of supply? 10,000 only, not 8,000. 10,000 only. Refunds and all will not be deducted. Gross amount, whatever you have paid for buying that tokens or chips, or amount which you have paid for participating in the event, that will be considered as value of supply. Refunds will not be reduced. And provisions of this chapter override other chapters and etc. What else? One more point. Winnings used by a payer to play further games without withdrawing are not considered as new money deposited. Sir, what is it? Let us say, for example, you paid 10,000 rupees. You paid 10,000 rupees, you got 10,000 worth of coins. Now you have bet that 10,000 rupees you have bet. Now you got 12,000 rupees. 2,000 rupees of gain you have made. 2,000 rupees of gain you have made. So initial 10,000 rupees, now 2,000 rupees have been added. Now this 12,000 rupees you are using it for the purpose of playing next game. Sir, will this 2,000 be added to the value of supply? Will not be added. Will not be added. So whatever money you have made without withdrawing it, if you are using it for playing, if you have made some winnings and you are using it for playing without withdrawing, that will not be added. That will not be added. So simple point here. So in case of casinos, what will be value of supply? Whatever amount you have paid for buying chips, tokens, or any other instruments, or if these things are not required, whatever amount you are paying for participating in the event. Sir, will refunds be reduced? No. Sir, will winnings be added? If I did some winning and using it for games without withdrawing, will it be added? No, it will not be added. Right. So this is 31C. Then we have 31B. Sir, what is 31B? Determination of value in case of online money gaming, including online money gaming. So if you are playing online gaming and all, in that case, what will be value? So here also they say that value of supply of online money gaming, including supply of actionable claims involved in online money gaming, should be total amount paid or payable to or to be deposited with the supplier by way of money or money's worth, including virtual digital assets, by or on behalf of the player. So if you want to play online money gaming, for playing that online money gaming, there will be one wallet. In that wallet, you will add money. If you want to participate in the online money gaming, so there will be some wallet of that vendor. So in that wallet, you have to add the money, whatever money you are adding it to the wallet for the purpose of that online money gaming. That entire money added to the wallet will become your value of supply. Any refunds to the player for any reason are not deductible. Sir, I am getting the refund back, sir. Will it be deducted? No. Provisions of this rule will override other provisions. Next, apart from that, if any other things are there like lottery, betting, gambling, and horse racing, for all other actionable claims. For online money gaming, they have given 31B. For casinos, they have given 31C. For remaining all 4 actionable claims, we have one single rule, 31A we have. So what does that say? In case of supply of lottery by organizing state, in case if the lottery tickets are getting sold by state, then the value will be higher of the two amounts will be deemed as value. What is it? 100 by 140 of the face value of the ticket. Let us say, for example, you are buying a face value of the ticket of 1 lakh rupees. Face value of the ticket is lottery ticket is 1 lakh. So what will be considered as value? This 1 lakh will be considered as inclusive of GST. 1 lakh divided by 100, 1 lakh into 100 divided by 140, or 100 divided by 140 of the price as notified in the official gazette by the organizing state. Let us say the price notified is 80,000 rupees only. So first, in case of supply of lottery tickets by the organizing state, you have to find out two values, either face value or price as notified by the state, whichever is higher. So that amount will be considered as inclusive of GST, that you have to do reverse calculation into 100 divided by 140. So very simple here, in case of supply of lottery by the organizing state, what you should do, first you determine what is the face value and what is the price as notified in the official gazette. Find out whichever is higher. That amount will be considered as inclusive of GST at the rate of 40%. There was a rate change recently. Previously it used to be 28. Now it has been changed to 140. So whatever that face value or whatever that price notified in the official gazette, whichever is higher, that will be considered as value inclusive of GST at the rate of 40%. Do the reverse calculation, find out the value. Supply of any other actionable claim, 100% of the face value, like betting and all. In all those circumstances, whatever is the face value, 100% of the face value will be considered as value of the supply of that actionable claim. Okay, right. So this is what regarding actionable claims. Now come to rule number 32. Rule number 32 will talk about some special cases. Let me try to explain that special cases here. In case of money exchange, in case of forex. For forex transactions, they have given different valuation method at the option. So what is that different method of valuation for transactions, for forex transactions? So I have once again a chart here, right? So this is the chart actually. So you have two options. In case of forex dealers and all, they have two options for determining the value. So one is they can follow the usual method, transaction value and all, and other simple method is also there. Some other method is also there. So what is that other method is? Right. So 32 subrule 2 will talk about it. In the 32 subrule 2 itself, we have two options. In the 32 subrule 2 itself, we have two more options. Just 1 minute. Yeah. So 32 subrule 2 clause A says that buying minus buying or selling rate minus RBI reference rate into units of currency. So what one simpler method of determination of value they are saying is, in case of foreign currency, in case of forex transactions, you take either buying rate or selling rate depending on what transaction bank is doing. Let us say, for example, bank is buying the currency. So that buying rate minus RBI reference rate, or bank is selling the currency, selling rate minus RBI reference rate into units of the currency, that will be considered as value. Sir, if RBI reference rate is not available, then what, sir? 1% of the INR amount. If for one currency, RBI reference rate is not available, so then what you should do is total INR amount will be there, no? In that 1%, that will be considered as value. Sir, if both currencies are not INR, so a bank is doing forex, but that forex transaction is happening not in INR. Let us say, for example, USD to GBP, no INR is involved. So in case if both currencies are not in INR, 1% of the lower of INR equivalent of the two currencies at RBI reference rate. So each value, two currencies are there, both are not INR. So each currency equal INR rate you determine. So at the RBI reference rate, whichever is lower, that INR equivalent you take, and 1% of that will become the value of supply. So these are straight away rules, my dear students, no logics and all. This is something which you have to remember. So first option under rule 32 sub rule 2 clause A, buying rate or selling rate minus RBI reference rate into units of currency sold. In case if RBI reference is not available, RBI reference rate is not available, 1% of the INR amount. Sir, if none of the currency is in INR, you determine one INR equivalent of the INR equivalent amount of two currencies at the RBI reference rate, whichever is lower. In that lower amount, 1% you multiply, that will become the value of supply. Sir, one more slab method is also available. So one more alternative option is available. Slab method. Sir, what is that slab method? So it is slab method means like income tax slabs we have no. So like that they have some slab method. Up to 1 lakh. If currency which is getting exchanged is up to 1 lakh INR, 1% of the amount or 250 rupees, whichever is higher. Minimum 250 or 1% of the amount, whichever is higher. So if the amount of currency getting converted is 1 lakh 1 rupee up to 10 lakh rupees, 1000 rupees plus 0.5% of the amount, 0.5% of the amount exceeding that 1 lakh rupees. Sir, if the amount converted is more than 10 lakh rupees, 5,500 plus 0.1% of the amount more than 10 lakh rupees or maximum 60,000 rupees or maximum 60,000, whichever is lower. Okay. So this is slab method, and between A and B you can choose, and if you have chosen for B, you have to stay in that for 1 year. In case if you want to go for slab method, you have to exercise the option, and in case if you have exercised the option to remain under slab method where you want to use this method for the purpose of valuation, you can't withdraw it for a period of 1 year. For the entire financial year you have to follow the same thing. Okay, so what is the slab method? Just this is important. Slab method is what? On the basis of amount of currency you are exchanging, this limit will be decided. So if you are converting forex up to 1 lakh rupees, 1% of the amount which you are converting or 250 rupees, whichever is higher. In case if you are converting 1 lakh 1 rupee, amount exceeding 1 lakh rupees but less than 10 lakh rupees, 1000 rupees plus 0.5% of amount which is more than 1 lakh. And if the amount getting converted is more than 10 lakh rupees, 5,500 rupees plus 0.1% of the amount exceeding 10 lakh rupees, this total amount or 60,000 rupees, whichever is lower. That means maximum, but if you follow the slab rate, maximum amount of value which you will get is 60,000 rupees. It is getting capped at 60,000 rupees. Clear everyone? So this is what regarding determining the value in case of forex. Then, so this same thing only I have tried to summarize it here. Then we have in case of booking of air tickets. In case if you are providing the services of booking of the air tickets, then what will be your value? So in case of domestic fare, we could take it as 5% of the domestic fare. In case of international travel, 10% of the basic fare. Okay, so if you are into services of booking of air tickets, you can opt for this method. Either in case of domestic travel, you can consider your value as 5% of the basic fare. In case of international travel, you can consider 10% of the basic fare as the value of supply. Then in case of insurance policies, what could be the value? In case if the policy is only for risk cover, no investment, nothing. If the policy is completely for providing risk, no investment element is involved. So policies with only risk cover, taxable value is equal to entire premium. Let us say you are selling one policy which is providing only risk cover. There is no investment element involved. If you are collecting 10,000 rupees of premium, this entire 10,000 rupees will be considered as taxable value. So if there is an insurance policy which is having only risk cover, no investment or saving element is involved, entire premium, whatever you have collected, that will become the taxable value. So in case if there is a policy with a dual benefit, in which there is a risk coverage also, investment portion also. And what is the investment portion that has been intimated, that has been informed to the policy holder? Very important. If the insurance company is selling an insurance policy in which it is having two options, there is a risk coverage also, investment element is also there. And to the policy holder, it was clearly intimated. What is that investment portion. So in that case, taxable value will be gross premium charged minus amount collected for investment or savings. Let us say you are collecting 10,000 rupees of premium, and in that 70% is risk cover, 30% is for investment. So it was intimated to the policy holders, or 30% is for investment purposes. So gross premium 10,000 rupees minus that investment portion which is 3,000, 7,000 rupees will become the value. On that you are required to pay the amount of GST. Sir, in case of single premium annuity policy, sometimes some policies called single premium annuity policies will be there. In case of single premium annuity policy, taxable value will be considered as 10% of the single premium charged from the policy holders. Next, where allocation for investments or savings is not intimated. If the allocation for savings or savings is not intimated, then the taxable value will be considered as 10% of the single premium amount. In all other cases, taxable value will be 25% of the premium charged from the policyholder in the first year. For the first year premium, 25%. For the subsequent year's premium, 12.5%. So once again, remembrance here, no logic and all, nothing is there. So very simple, if I have to recap, if there is a policy with no risk, with only risk cover, no investment element, full amount, full premium will be considered as taxable value. If there is a policy with risk cover also, investment plan also, and if the policy was, if it was intimated to the policy holder, gross premium minus the investment portion. So single premium annuity policy, 10% of the single premium annuity premium, whatever you have collected. In all other cases, for the first year premium, 25% of the value of the first premium. For subsequent year premiums, 12.5% of the premium amount, whatever you have collected. So that will become the value of supply. Understood. Next. Second hand goods, this also will try to cover. So in case of dealer of second hand goods, for him also a separate valuation option has been given. So in case of second hand dealer goods, GST can be paid on, normal GST is charged on the transaction value, or for second hand goods, GST is charged only on margin. Sir, what is margin? Selling price minus purchase price. Let us say, for example, if I am a second hand car dealer, I purchased a car at 2,50,000. Now I am going to sell that car for 3 lakh rupees. Usually what will happen? This 3 lakh rupees will become my transaction value. Whatever rate of GST is applicable on the 3 lakh rupees, that rate I have to multiply and pay the amount of GST. But for the second hand dealers, they have given one option. So what they have told is determine margin. Sir, what is the margin here? 50,000. On that 50,000, if you pay the GST, it will be enough, provided you are taking with a condition that you should not avail ITC on your purchases. Provided a condition is what? You should not be availing ITC on your purchases. If you give up your right to claim ITC on your purchases, we will give you one margin option. So what is that margin option? GST will be charged only on margin. Sir, what is margin? Difference between purchase and selling price, provided if ITC is not availed. Sir, what if there is no margin? Let us say, for example, I purchased it for 2,50,000. I am also selling it for 2,50,000 only. Sir, no margin is there. No requirement to pay any GST. And if selling price is less than purchase price, negative value you can ignore. Let us say 2,50,000 you have purchased a car, but you are selling it at 2 lakh rupees only. I made a loss, sir. Ignore. Not required to pay any GST. Okay, so this is one simple rule you remember. Rule 32 sub rule 5 says that in case of second hand goods, in case if the supplier has agreed not to avail ITC, if he wants to give up his ITC claim, so he can pay the GST only on the margin. Sir, what is margin? Selling price minus purchase price. Sir, if there is no margin, no need to pay GST. Sir, if I made a loss, let us say my selling price is less than the purchase price, ignore the negative value, no need to pay the amount of GST. Understood? But this will come with a condition. What is that condition? Supplier should not avail the ITC on that second hand goods, whatever he has purchased. That's it. Now some tax rates in case of old and used motor vehicles is there. This is some circular. This I'm not taking it through. This is very rarely tested because some advanced circular it is. It will not be, time will not be enough for me to take you through that circular. So I'm skipping it. So I'm coming to the, but very rarely asked area. So that's why I'm skipping it. Now I will come to rule sub rule 6. So what is it? In case of token, voucher or stamp redeemable against goods or services equal to money value, this is also irrelevant because vouchers are no longer treated as supply. This is also irrelevant. This 32 sub rule 6 also you can ignore. Next. What is this sub rule 7? The government can notify some services where they can consider value as nil. This is one special power where the government has reserved their power. The government can notify some services. In those services, if the recipient is eligible for full ITC, they can consider the value as nil, open market value as nil. One example we have already seen, services provided by board of director, individual board of director providing services to the company by way of giving corporate guarantee, their value itself will consider it as nil. So like that, government can notify some services. For that notified services where the recipient is eligible for full ITC, they can consider value as nil. Okay, right. Next. 33 pure agent, I have already covered it. Yeah, I think that's all. In case this one, rule 34 also, I'll try to quickly cover it. In case if for supply whatever you are making, if it is denominated in foreign currency, you are making some supply, your invoice is given in foreign currency. Now you have to convert that foreign currency into INR for the purpose of calculation of GST. In case if you are making some supply, for that supply you are giving invoice, but invoice is denominated in foreign currency, but you are required to pay the GST in INR, That means that invoice which is denominated in foreign currency, it is required to be converted into INR. Sir, which exchange rate I have to use? Which exchange rate I have to use it for the purpose of converting that foreign denominated invoice into INR? Which currency rate I have to use? So if you see, for goods, relevant rate of exchange for determining value of taxable goods is rate notified by CBIC under 14 of the Customs Act, which is prevalent on the date of time of supply of the said goods. So whatever is the time of supply, at the time of supply of the said goods, whatever exchange rate which is notified by CBIC, that rate I have to take in case of goods. In case of services, I have to take the rate which is determined as per GAAP, generally accepted accounting principles. As per the GAAP, whatever rate is determined, that I have to take, that too which is prevailing on the time of supply of the said services. So very simple. For goods, you have to take CBIC rate. For services, you have to take GAAP rate. That's it here. So that's all. This is what the important discussion from the value of supply chapter. I hope you're all able to grasp the concept in a quick manner. Right. So with this, I'm trying to wind up this value of supply also. So I will wind up the today's marathon series. In the next session, we'll try to continue. Tomorrow, we'll try to continue our revision series. Okay, so welcome back everybody. I wish you a very good morning, and I hope you guys are all preparing well. I hope your preparation is all going well. So let us continue our final IDT marathon. So what and all we have covered till the previous session, what and all we have covered. So let us make a list of all the chapters, whatever we had done with the revision till now. So let us just make one quick recap. So just chapter names, not conceptual recap. So first, I have spent some amount of time in giving you a brief of the entire GST topic there. I have given you an overview. Thereafter, we have understood the supply chapter. Then we have revised the registration chapter. Thereafter, charge. Along with the charge, we are also done with the composition levy. And going ahead, we are done with the time of supply chapter. Also, we have covered the value of supply chapter. So this is what the bunch of chapters which we have covered till now as a part of our marathon series. So today what we'll be going to do is we are going to pick up one such important chapter, very, very important from the examination perspective. If I have to prioritize, if someone asks me, sir, out of all the chapters which you have at the final IDT level, tell me one such chapter which should be top priority, sir. Tell me one such chapter which should be top priority, one such chapter which I should refer compulsorily. If I don't refer to that chapter, I should not go for exam only. So such a chapter, if there is something, what is that chapter? If someone comes and asks me that question, I will simply say them input tax credit. Input tax credit. So without writing this term input tax credit, without referring the sections of the input tax credit in your exam, then you might not be writing the IDT exam. You might be writing something else. So if you are writing the IDT exam, definitely in your answer sheet, you will be writing the input tax credit term and various sections, whatever we are about to revise now in this chapter, that section references, you will be writing it compulsorily in your exam. If you are not writing it, definitely you are not writing an IDT paper. So that's one thing which I can assure you. Such an important chapter is this input tax credit chapter. So let us try to go into the discussion directly. So as before we go into that discussion, let us have one quick overview. So this also, if you remember the intro part, when I have given you introduction regarding the overall concept of this GST and all, I told that if you are a registered person, so you will make your outward supplies, outward sales, outward supply of services, like that you will do. So on your outward supplies, there will be something called output tax liability. On your outward supplies, there will be some liability. On whenever you are making any supply, GST will be attracted, no? So on your outward supplies, there will be a liability which we call it as output tax liability. That GST liability, we call it as output tax liability. Now if you are a registered person, if you are a business person, in order to make that outward supplies, you need to procure some various inwards. Yes or no? So like you need inputs also. Inputs means usual goods and usual goods, whatever you would need for the purpose of doing the business. Then you need some services also, which we call them as input services. So you procure various services in order to run your business. And also you also obtain capital goods. In order to run the business, you might also need capital goods. Whether you are engaged in supply of goods or you are engaged in supply of services, to run your business, there is a need for the capital goods. So also you might be procuring the capital goods. So all this put together, even in the intro itself, I have told all this input services and capital goods put together, we are going to call it as inward supplies. We are going to collectively call them as inward supplies. So on all that inward supplies, you would have paid GST, and whatever GST that you have paid on your inward supplies, that we call it as input tax, and that input tax you can take the credit, that we call it as input tax credit. that we call it as input tax credit. So input tax credit is such a mechanism. Input tax credit is the backbone of the entire GST system. That is how, because of this input tax credit, the GST system actually works. So in GST, one of the main feature of the GST is the burden will be borne by ultimate consumer. So input tax credit is the only mechanism which will make sure that the ultimate burden of the taxes is going to be on the final consumer. The mechanism which will make this happen is input tax credit. Okay, right. So now what we are going to do is we are trying to refer to various sections of the GST Act which are talking about this input tax credit. So first I will be talking about section number 16. First we will be taking up section number 16, which is talking about eligibility and conditions for availing the input tax credit. Who is eligible for availing input tax credit, and what and all are the conditions which are required to be fulfilled in order to avail that input tax credit. So that discussion is contained in section number 16. We'll try to start our discussion with section number 16. So first let us talk about eligibility. Sir, who is eligible for availing input tax credit? So if you come to section number 16 subsection 1 says that in order to be eligible for availing input tax credit, you must be a registered person. First and foremost condition is what? Registered person. Definitely. Only when you are a registered person, then only you can avail the input tax credit. And also one more condition, they say that every registered person is entitled to ITC, and also whatever goods or services which he is using, whatever goods or services which he uses or intends to be used in the course or furtherance of the business, then only you become eligible to avail input tax credit. So two things here regarding eligibility. 16 subsection 1 says in order to be eligible for availing input tax credit, number 1, you must be a registered person. Number 2, whatever goods or services which you are procuring, that must be used in the business, or you should have an intention to use it in the course or furtherance of the business. So actual usage is not necessary. Even if you have an intention to use also, it will be enough. Even if you have an intention to use also, it is enough. So whatever it is, two conditions for availing ITC. Number 1, the person must be a registered person. Number 2, and whatever goods or services which he is procuring, that must be either used in the business, or it must be used, or you should have an intention to use it in the course or furtherance of the business. Next, thereafter conditions. So 16 subsection 1 talking about eligibility. So now we will talk about conditions. So some circulars are there, we'll come to that later. So 16 subsection 2 talks about conditions. What and all are the conditions which are required to be fulfilled for availing input tax credit? So there are multiple conditions which you are required to fulfill. It's not just that the moment you are a registered person, the moment you are buying goods or services which you are using, or which you are having intention to use it for your business purposes, that alone will not be enough. In order to claim that input tax credit, you need to fulfill some conditions. Sir, what and all are the conditions which are required to be fulfilled in order to avail that input tax credit? So that is addressed under 16 subsection 2. In that 16 subsection 2, we have various clauses. Each clause will be talking about one condition. So let us try to understand first condition. Number 1, you must be in possession of a tax paying document. You must be in possession of a tax paying document. If you are a registered person, if you want to avail input tax credit, you must be in possession of some tax paying document. You must have in your possession some document which shows proof that you have paid the amount of tax. Sir, what could be that document? What could be that valid document which I should possess? That could be a tax invoice. That could be a revised tax invoice which is issued by the supplier of the goods or services. Or it could be invoice issued by the recipient receiving the goods or services from unregistered person in case of RCM. Sir, what is it? Self-invoicing. Like in the previous session, I have told you about a concept of self-invoicing. In case if you are a person paying the GST under RCM, in case if your supplier is an unregistered person, in that case supplier will not give you any invoice. In that case, recipient himself has to do the self-invoicing. Even that self-invoicing could be also a valid document for availing the input tax credit. Even that self-invoicing could also be a valid document for the purpose of claiming that input tax credit. So what are the documents which are to be used for the purpose of making for the purpose of availing ITC? Number 1, it could be invoice, revised tax invoice, or it could be self-invoice, or even it could be a debit note issued by the supplier, or it could be a bill of entry or other similar document. In the case of imports, when you are importing the goods, there will be something called bill of entry. That bill of entry could be a valid document, or even document issued by input service distributor. In case of the input service distributor, if the ISD is distributing the document to you, if the ISD is distributing that credit to you, he will give ISD invoice. That ISD invoice could be a valid document. So in order to claim the ITC, you must be in possession of at least one of these documents. If you don't have documentary proof that you have paid GST, there is no availment of GST here. So that's why you must be in possession of any of this document, any of this tax paying document. So just having these documents alone will not be enough. Even in that document, some basic details must be there. So that document, either invoice, revised tax invoice, debit note, self-invoice, bill of entry, or document issued by IST, they must contain at least the following details. That means minimum details must be there in the document. So just having the document alone will not be enough. In the document, some minimum details must be there. Sir, what are that minimum details which must be there? Amount of tax, description of goods or services, total value of supply of goods or services, GSTN of the supplier, place of supply in case of interstate supply. So these must be there. So place of supply is required only in the case of interstate supply. Only when it is an interstate supply, then only place of supply will be required. So that is condition number 1. 16 subsection 2 clause A, you must be in possession of a tax paying document containing some minimum details. Then we have 16 subsection 2 clause AA. Then we have 16 subsection 2 clause AA. So in order to understand that 16 subsection 2 clause AA, so just have a quick recap of the returns. We need to have some basic understanding regarding returns. I hope you all have it, but just I will remind you in 5 minutes what and all are basic returns. So there will be something called GSTR1. So if you are a registered person, mainly 3 returns are 3 statements or 3 returns are relevant for you. GSTR1, then we have something called GSTR3B, then we have something called GSTR3B. GSTR1, GSTR2B, GSTR3B. Sir, what is GSTR1? GSTR1 is a return which is filed by a registered person to declare his outward supplies. So a registered person will declare his outward supplies by way of GSTR1. So like here he will declare B2B supplies. If it is a B2B supply, invoice wise details he will upload in that return. B2C consolidated details. B2C generally consolidated details. In some cases, even in B2C also invoice wise details you are required to give, but mainly B2C, B2B invoice wise, and generally B2C consolidated details you will be uploading. So whatever it is, GSTR1 is a statement of outward supplies, we call it, where a registered person will declare all his outward supplies. Then there will be one more statement which he has to file. So what is that one more statement is GSTR3B. So it is a summary return. I will say GSTR3B is something like a summary return where you will mention what is your output tax liability resulting from your GSTR1 and what is your eligible input tax credit. That input tax credit you will avail it. If there is any excess payment you are required to make, that you will make the cash payment. So this we call it as summary return, where you are telling what is your output tax liability, what is your input tax credit, how much amount you are required to discharge in cash. So that we call it as GSTR3B. Now in between, one more statement is there which is called GSTR2B. So GSTR2B is not a return which you are required to do anything. You are not required to file this. It is an auto-generated statement. It is a auto-generated statement. It will be generated automatically. Now what will be shown in this GSTR2B is whatever purchases that you have made from other registered person. You might have, let us say for example, this we are talking from the perspective of a person, Mr. A, registered person. Now this person, Mr. A, has made purchases from various people, B, C, D, like that, from different people he made a purchases. Now these are all registered person. So there is a supplier Mr. B from whom Mr. A has purchased. There is a supplier Mr. C from whom Mr. A has purchased. There is a supplier Mr. D from whom Mr. A has purchased. Now these people also will file their GSTR1s, no? These people also will file their GSTR1s. Yes or no? So depending on the GSTR1s which are filed by his suppliers. So Mr. A, whatever purchase he has made from the suppliers, they will also file their GSTR1s. No, depending on the GSTR1s, whatever they have filed, this GSTR2B will capture the data of what purchases they have made and what is the eligible input tax credit. Like that they will show. That will be generated. It is an auto-generated statement which will show the amount of ITC balance automatically. And from where this GSTR2B will capture the data, sir? This GSTR2B is going to capture the data from the GSTR1s of the suppliers. Suppliers will file the GSTR1, no? So from the GSTR1s of the suppliers, this GSTR2B is going to capture the data. Now, whatever ITC that GSTR2B says, that is you are eligible for only that much amount of ITC, you will be able to claim it in your GSTR3B. Now in between, one more return is also there, GSTR1A. Sir, what is GSTR1A? So in case if you have already filed your GSTR1, but before filing your GSTR3B, if you want to amend your GSTR1, if you have already filed your GSTR1, but you did not file your GSTR3B for the current month yet, if you want to amend the details, like for example, you missed some invoices or you made some mistake while filing your GSTR1, if you want to amend that details in your GSTR1 before filing the GSTR3B of the current month, that updation you can do it by way of GSTR1A, which is an optional facility. So like this, various returns will be there. And recently I have uploaded one video on the channel also talking about GSTR 1, 1A, 2, 2B, 2C, like that. So one video also have uploaded, which will be around I think 1 hour 15 minutes or 1.5 hour of video I have uploaded. So if you want more clarity regarding this returns and all, instead of wasting our revision time here, you can refer to that video. You can refer to that video. I have already done it, which are especially from our regular class extract only I have put it here. So whatever class, regular class we had, from that extract I have taken that GSTR 1, 1A, 2A, 2B, 2C, like that, 2A, 2B, 3B. So all that I have explained in a detailed manner with practical example where the data will flow, from where it will capture. So like that, everything we have covered it. So please do refer to that video. You will get better clarity. Okay, so like that, these are the basic returns. Now why I was explaining this returns, why we came to returns, what actually we are discussing something called the conditions which are required to be fulfilled in order to avail the input tax credit. So first condition we have seen. Second condition says that details of that invoices or debit notes which are uploaded by the suppliers in their GSTR1 or using the invoice furnishing facility, and that details must be communicated in form GSTR2B. So what they are saying, second essential condition, in order to avail input tax credit, just having the invoices and all alone will not be enough. That amount should have been reflected in your GSTR 2B. That's what they are trying to say here. The second essential condition, only when the input tax credit has been reflected in your GSTR 2B, then only you can avail the input tax credit. If ITC is not getting reflected in your GSTR 2B, then one of the condition got violated. You will not be able to take the input tax credit. See, sometimes what will happen is you will make purchases from the suppliers, but those suppliers might not have filed their GSTR once within the due date. You might have made some purchases from the registered suppliers. Those people might not have filed their GSTR once before the due date. They might have filed it after the due date. In that case, what will happen? In the current month GSTR 2B, that input it will not show. Why? Because your supplier has filed that GSTR 1 after the due date. So in case if the supplier has filed the GSTR 1 after the due date, that will not get reflected in your GSTR 2B of the current month. Even though you have the invoice, you can't claim it. So that GSTR 2B, that GSTR 1 which is filed after due date, that amount will be reflected in your 2B of the next month. Only in the next month you can avail the input tax credit. So that is a second essential condition. Unless and until that ITC amount has been reflected in your GSTR 2B, you can't avail the input tax credit. Okay, right. So that's what they try to say it here. That is the second condition. So first condition we have seen, second condition we have seen. And next, however, there is one exception here. Full ITC can be availed in respect of IGST paid on imports, document issued under reverse charge mechanism, credits received from input service distributor which are outside the ambit of 37.1. That means this information, even though not reflected in your GSTR 2B, still you can claim ITC with respect to this. So what are that things which are not required to be reflected in GSTR 2B, but still we can claim ITC? ITC whatever you are paying, IGST whatever you are paying on imports, documents which are issued under reverse charge mechanism, credit which you are receiving from ISD. So these things, even though not reflected in your GSTR 2B, still you can take it. Usual GST, usual ITC, whatever you have made by purchasing from another person, so that is forward charge mechanism related input tax credit, that must get reflected in your GSTR 2B. Then only you can take the ITC. So two conditions we are done. Sir, what is the third condition? Third condition is 16 subsection 2 clause B says you must have received that goods or services. What is the third essential condition? You must have received that goods or services. If you have not received the goods or services, sir, I have invoice, I made the payment also, the amount is reflected in my GSTR 2B also, but I did not receive the goods, I did not receive the services, can I still claim the ITC? No, you can't claim the input tax credit. So in order to avail the input tax credit, the goods must have been received, services must have been received. Sir, I got the invoice, I made the payment, the supplier has filed his GSTR 1 also, but I did not receive the goods yet. The goods are not yet delivered to me. You have to wait till the goods are delivered to you in order to claim the input tax credit, because that is an essential condition. Same thing will happen even in the case of services also. And here they have given one more clarification also. Here they have given one more clarification also. So bill to ship to transactions. In case of bill to ship to transactions, they have given one clarity. So just 1 minute. So here also I will take the help of this class notes. In the class notes, while teaching the regular classes, I have took the help of various charts and all, that I will use it here so that we can save the time. Right. So this is one thing which I want to use it. Okay. See here. So The third condition, what section number 16 says is, in order to avail the input tax credit, you must have received the goods and services. No. Now, what will happen in case of bill to ship to transaction? What will happen in case of bill to ship to transaction? First of all, what is a bill to ship to transaction? Let us say there is a person, Mr. B. There is a person, Mr. B, who ordered 1 lakh quantity of the goods from Mr. A. There is a recipient. There is a person, Mr. B, who ordered 1 lakh quantity of goods from Mr. A, and he was supposed to deliver it to Mr. B. So A's supplier is located in Mumbai, recipient is located in Delhi. So B placed an order with Mr. A asking for 1,000 quantity of goods to be delivered to Delhi. But in the meantime, what happened is, this B is having another customer. B is having another customer who is also in Mumbai. He placed an order for the same 1 lakh quantity of the goods with Mr. B. So B placed an order with A. In the meantime, C placed the order with B for the same goods of the same quantity. Now what Mr. B has told is, Mr. B has ordered to Mr. A, sir, you do one thing. I have ordered for 1 lakh goods. No, don't send it to me. Don't send it to me. You please ship the goods to Mr. C, who is there in Mumbai. You please ship the goods to Mr. C. So now A will ship the goods to C, but he will give the bill to Mr. B. So this we call it as bill to ship to transaction. This we call it as what? Bill to ship to transaction. So A is the supplier. He is shipping the goods to Mr. C, but he is giving the invoice in the name of Mr. B. So this typical transaction, we call it as bill to ship to transaction. See, now here two transactions are involved. For supply between A and B, A will give invoice. For supply between B to C, B will give invoice. A is making a supply to B. For that, he will give invoice. This is a bill to ship to transaction. Whereas B is also making a supply to C, and he will also give invoice. That is a normal transaction. Okay. So now let us come to Mr. B. Sir, Mr. B is one of the recipient. No. Now A has given invoice to him. Let us say 1 lakh worth of invoice has been given. 10 lakhs worth of invoice has been given with 1.8 lakh rupees of GST. Now B has to claim ITC, sir. In order for the B to claim ITC, he is required to fulfill some conditions. So in that, he should have a tax paying document. Is he having a tax paying document? Yes, B is having a tax paying document which is given by Mr. A. And Mr. A has filed his GSTR1, that is reflected in the GSTR2B of this recipient also. Number 3, sir, that third condition, this person has not received the goods. B has not received the goods. No. Why? Because B has ordered the A to ship the goods directly to C. Did B receive the goods here? No. B did not receive the goods. Since B did not receive the goods, he should not be eligible to take ITC. No. Practically, yes. But here they have given relaxation. So what they have told is, in case of bill to ship to transaction, it will be deemed that this person has received the goods. In case of bill to ship to transaction, this original buyer will be deemed to have received the goods and services. Even same logic will apply for services also. It will be deemed that this person would have received the goods and services, and it will be deemed that the third condition has been fulfilled, that is 16 subsection 2 clause B has been fulfilled, and he can claim the input tax credit of it. Now talking from Mr. C's perspective, C doesn't have any trouble. Why? Because he will have an invoice which is given by Mr. B, and this B has filed his GSTR1 which has been reflected in his GSTR2B also. He in fact received the goods also. A has sent him the goods. No, he received the goods also. So for C there is no problem. Why? Because all the conditions he will be able to fulfill it. He will receive the goods. He will have a tax paying document that will get reflected in his GSTR2B. But problem is with Mr. B. Mr. B will not receive the goods here because it is a bill to ship to transaction. He asked his supplier to directly ship it to his customer. So he will not receive the goods. So that will be a violation of one of the conditions. That means he will never be eligible for claiming input tax credit. But the act has recognized this genuine scenario and gave a relaxation. It will be deemed, in case of bill to ship to transaction, the original buyer would be deemed to have received the goods or services. The same logic will become applicable for services as well. So this is what the third condition. So how many conditions we have seen? 3 conditions we have seen. Then here there is one important clarification here. Clarification on availability of ITC in respect of works contract. So very important clarification is there. So let me try to put it that for you. Let me try to explain it for you. Right. I will quickly try to explain that important circular. See, let us say there is Tata Motors. Now Tata Motors is having a factory. Let us say they are having a factory in Gujarat. So now there is one dealer of Tata Motors. So now this dealer has ordered some 100 quantity of cars. This dealer has ordered for 100 quantity of cars from Tata Motors. Now Tata Motors is selling the goods on X works basis, or even it can be called as X factory basis. That means Tata Motors will deliver the goods at the factory gate of Tata Motors premises only. From there, who has to arrange the transportation and all that is buyer's responsibility. So this we call it as X works or X contract basis, X works basis or X factory basis. So Tata Motors says, okay, we will deliver 100 cars to you, but our responsibility will end at the factory gate. We will make that goods available at the factory gate itself. From the factory gate, you have to arrange for your transportation. So now what happened is this dealer has arranged one transportation. This dealer has booked one truck. Now the truck has gone to that Tata Motors gate. So in that truck, all the vehicles are loaded. So let us say, for example, order was placed on somewhere around on 15th of April, order was placed. Now Tata Motors made that goods available at the factory gate. That means those goods are loaded in that vehicle on 20th of April. But these goods reached the dealer. These goods actually received by the dealer on 15th of May. So tell me, in which month this recipient will be able to avail the input tax credit? In which month he will be able to avail the input tax credit? So when he received the goods, 15th of May. That means he received the goods in May. Let us say, for example, invoice was given on 20th of April only. Invoice was given on 20th of April only. And this was filed by this person. This was declared in his return, in the April month return. In the April month return on or before GSTR 1 due date, this is also filed. That means this will become available. If you look from the dealer's perspective, while filing the return for the month of April, he will be able to have invoice. And in his GSTR 2B, the amount of ITC is also getting reflected. Now, can this dealer claim the input tax credit? Practically speaking, no. Why? Because when he has received 15th of May, when he has received 15th of May. So third condition says you should avail the ITC only when you have actually received the goods. But here he did not receive the goods. So practically speaking, since he has received the goods only in the month of May, while filing the return for the month of May only, you can claim the ITC. But here department has given one clarification. What clarification they have told us? In case of X works contract, or in case of X factory contracts, whenever the goods are made available, at the factory gate, at that time itself it will be deemed to have been received. So on 20th of April, the goods are handed over by this Tata Motors at the factory gate. No. So from thereafter, transportation responsibility and all is with the dealer. No. So it will be deemed as if the goods are received by this recipient on 20th of April only. So here also it will be deemed that in the month of 20, as on 20th of April only goods are received. That means in the month of April only goods have been received. So what will happen here is, so in the month of April itself, it will be deemed to have been received and you can avail ITC. You need not wait till 15th of May. Okay, so this is what the circular they have told. So if one line summary I have to say it for this circular, right? See here, ITC can be availed in case of X works contract. ITC can be availed at the time of handover at the factory gate. The same principle applies to any X works contract where ownership transfers at the supplier's premises upon delivery to the recipient or the transporter. In case if the contracts are X works, in case if the contracts are X factory, whenever they are made available at the factory gate, either to the transporter or recipient, at that time only the goods would have been deemed to be received, and at that point of time itself you become eligible to avail the input tax credit. So this is what regarding third condition. So how many conditions we have seen? 3 conditions we have seen. Number 1. So what is the first condition? The first condition says you should have a tax paying document. Number 2, that ITC should have been reflected in your GSTR 2B. Number 3, should have actually received that goods or services. Thereafter, number 4, details of ITC in respect of the said supply communicated to the registered person under section 38 should not be restricted. So that means whatever ITC which is there reflected in your GSTR 2B, that should not have been restricted. Sometimes you will have tax invoice, you would have received the goods, that amount will be reflected in your GSTR 2B only, but it will be reflected in your GSTR 2B under not available category. So that means there will be restriction on availment of ITC. In case if such ITC, you have tax invoice, you have received the goods, amount is getting reflected in your GSTR 2B, but it is restricted, it is showing under not available category, you can't claim that input tax credit. So in order to claim input tax credit, whatever ITC is there, that should be shown in your GSTR 2B, but that should be in the available category. It should not be in the non-available category. So in our regular class, I have showed you practically what is this ITC available, not available, ITC reversal. So how practically GSTR 2B will look like, all these things we have seen. But here if I have to give you one single line summary, ITC whatever is available should not have been restricted. So generally when ITC will be restricted, sir. So when ITC will be generally restricted is, here it is saying ITC will not be available for inward supplies furnished by registered supplier. That means if you are buying the goods or services from a supplier who is a new registrant, if you are buying from a new registrant for certain period, for a short duration, if you are buying that goods or services from a new registered person for some duration, that ITC will be kept under not available category. And in case if you are buying from such a supplier who has made a default in the payment of tax, in case if your supplier has not made the payment of tax, then also it will be shown under not available category. Where output tax payable as per GSTR 1 or IFF exceeds the output tax paid in GSTR 3B. That means if your supplier has got rule number 88C intimation. Sir, what is rule number 88C intimation, sir? Let us say your supplier is such a fraudulent person where he is showing more outward supplies in his GSTR 1, where he's showing more GSTR ones. So let us, for example, in GSTR 1, 10 lakhs worth of outward supply he's showing. So why he's showing 10 lakhs worth of GSTR 1? Why? Because he has to pass on the credit. If he doesn't declare all his outward supplies in his GSTR 1, his recipients will not get the credit. No. So that's what he's doing in his GSTR 1. He's showing total 10 lakh rupees of outward supplies. But when filing his GSTR 3B, their actual payment of GST will happen. No. So when filing GSTR 3B, instead of 10 lakh rupees, he's showing his outward supply as 5 lakh rupees only. So he's declaring more outward supplies in his GSTR 1 so that he can pass on the credit. But in his GSTR 3B, he's declaring less outward supplies. So that means he's trying to pass more credit, but he's trying to pay less amount of GST. So in that cases, to these fraudsters, there will be some intimation rule number 88C intimation will be given. In case if you are a person, if you are buying goods from such a registered supplier to whom that rule number 88C intimation has been given and he is not responding to that, then also the ITC will be under restriction category. Similarly, in case if you are buying from such a supplier who has availed ITC of an amount that exceeds the credit that can be availed by him as per GSTR 2B during the prescribed period. So this is rule number 88D intimation. Sir, what is rule number 88D intimation? Let us say you are buying goods from such a supplier who is claiming more ITC in his GSTR 3B than shown in his GSTR 2B. So just now one condition I have told, you should claim ITC only that amount which has been reflected in your GSTR 2B. But you are buying from such a supplier who is claiming more ITC in his GSTR 3B than what is reflected in his GSTR 2B. Then also for you, it will be shown under not available category. And if your supplier has made a default in discharging his tax liability under 4912 read with Rule 86B, in case if you are buying from such a supplier who has violated the provisions of Rule 86B or other specified class of persons. See here, the irony here is, your supplier is doing the mistake, for you ITC will be restricted. So here the irony here is, your supplier is making some mistake. You are buying from such a supplier where your supplier has committed a mistake, ITC will be blocked for you. Okay, so these are the not the non-compliance done by you. So if you read the sentence carefully, ITC will not be available for inward supplies furnished by registered supplier. So that means if you are a person, you purchased the goods from such a registered supplier who did this, who falls under these categories, like he's a new registrant, or he has defaulted in payment of tax, or to him 88C intimation has been given, or to him rule number 88D intimation has been given, or he has violated rule number 86B or any other specified class of persons. So if you are supplier, you are buying from such a supplier who has committed these kind of violations, then also ITC will be restricted for you. For you, ITC will be restricted. Clear? So this is the fourth condition. Whatever ITC that is available or whatever ITC that has been communicated to you in your GSTR 2B should not have been restricted. It should not be under restriction category. It should be under available category. Next condition. Tax leviable on supply actually should have been paid to the government. So what they are saying, so as a recipient, you are claiming ITC, no? That amount should have been paid by the supplier to the government. Supplier should have paid the amount of GST to the government, then only they will allow you to take input tax credit. In case, if the supplier has made a supply, he gave you tax invoice. Sir, you made the payment also. I am a recipient, sir. I made payment to my supplier also. But that supplier waste fellow is not making the payment of GST to the government, sir. Then also will my ITC will be restricted? Yes. Then also you can't claim the input tax credit. So you are genuine person, you are a recipient, you made the purchase, you made the payment to the supplier, but your supplier is not filing GSTR 3B, he filed GSTR 1. So amount was reflected in GSTR 2B, you claimed it. Thereafter, that supplier is not filing his GSTR 3B. That means he is not making payment of taxes. Then what will happen? Then also the GST you can't avail it. But how this all will practically work out is, I will give you one simple scenario. So how this will practically work out? Yeah, this example if you take. So what actually will happen in case if the supplier is not making the payment of GST? What will happen? So let us say, for example, there is one supplier. He made supply amounting to 1 lakh rupees. So 1 lakh with 18,000 rupees of GST. So that amount of tax invoice also he has given. So what he has given? He gave tax invoice for 1 lakh rupees with 18,000 rupees of GST. Okay. So what is the date of invoice, sir? On 25th of April 2025, he has given you invoice. So he gave you invoice of total 1 lakh and 1.18 lakhs worth of invoice he has given. 1 lakh rupees is the value of supply, 18,000 rupees is the GST. That invoice was given. And this fellow has filed his GSTR1 also on or before due date for the month of April, on or before that 11th of the May. He has filed his GSTR1 also. That was reflected in your GSTR2B also. That was reflected in your GSTR2B. So what you have done is, while you are filing the return for the month of April, you claimed ITC. While filing the return for the month of April, so you claimed input tax credit, 18,000 rupees of ITC you have claimed. But what this supplier is doing is, he is not filing his GSTR 3B. For the month of April, he filed GSTR1. Why? Because if he doesn't file GSTR1, his recipients will create a noise. No, hey boss, I purchased it from you. You did not file your GSTR1. If you did not file your GSTR1, it will not get reflected in our GSTR3B. If it is not getting reflected in our GSTR3B, we will not be able to claim ITC. So his recipients will create a noise. So that's why what he has done, he has filed his GSTR1. And it was reflected in the recipient's GSTR2B. And the recipient, you are one such recipient, you claimed input tax credit. But this fellow, what he is doing is, he did not file the GSTR3B for the month of April. 3B, he did not file it. 3B, he did not file it. Okay, don't worry. Government will wait. So by 20th of May, he has to file GSTR3B. He did not file it. Government will wait. Sir, he did not file it even in the next month also. He did not file it even in the next month also. No worries. The government will wait. Sir, how long the government will wait, sir? How long the government will wait like this? The government will wait till 30th of September. The government will wait till 30th of September following the end of the financial year for the supplier to file his GSTR 3B. So this initial supply was made in the financial year 25-26. The government will wait for this supplier to file his GSTR 3B till 30th of September following the end of the financial year. So what is the end of this financial year? 30th of March 2020, 31st of March 2026 is the end of the financial year. 30th of September following the end of the financial year will fall on 30th of September 2026. So the government will wait till 30th of September 2026 for this useless supplier to file his GSTR 3B. Sir, till 30th of September 2026 also, if this supplier has not filed his GSTR 3B, then they will intimate to this recipient, boss, you have made a purchase from such a supplier who did not file his GSTR 3B. Please return the ITC whatever you have availed by 30th of November. So they will give you 2 months of time. So by 30th of September, they will intimate you. 30th of September following the end of the financial year, they will intimate you, boss, you have made purchase from such a supplier who has not filed his GSTR 3B. We have waited till 30th of September following the end of the financial year, but that supplier has not filed his GSTR 3B. So that's why whatever ITC that you have taken, you reverse it. Sir, I made payment already. We are least bothered. Your supplier has not filed your GSTR 3B. You reverse your input tax credit. So by 30th of September, they will wait. Thereafter, they will intimate and they will give time till 30th of November to reverse that ITC. So you have to reverse that input tax credit. In case if you are not reversing it by 30th of November, after 30th of November, if you are reversing it, then you are required to reverse the amount of ITC you have availed along with interest. Along with interest at the rate of 18% per annum. So if you are reversing it by 30th of November, so they will intimate to you, no. So before 30th of November, if you are reversing it, no need to pay any interest, just reverse the amount of ITC. But in case if you are not reversing it by 30th of November, in case if you are going to reverse it after 30th of November, then you will be required to reverse the amount of ITC, whatever you have taken. Along with that, you will also be liable to pay interest at the rate of 18% from the date of utilization till the date of reversal. From the date of utilization, you will be liable to pay interest at the rate of 18%. Clear? Able to understand? So you have to be very careful about this. So this is what this condition 16 subsection 2 clause C, the tax leviable on such a supply should have been actually paid to the government. But this is how the scenario will actually practically work out. This is how the things will actually work out. So the government will wait for the supplier to file his GSTR 3B till 30th of September. Still, if he is not doing it, then they will give the intimation to the recipient to reverse the ITC amount by 30th of November. If you are reversing it by 30th of November, well and good. If you are not doing it, reverse the amount of ITC along with the interest at the rate of 18% from the date of utilization. Clear? Next one. So one more condition, one more, and sir, now one more thing I forgot it here. So let us say by 30th of November, I have reversed it. By let us say on 20th of October itself, I have reversed it. I have reversed my 18,000 rupees of ITC. So government has intimated me, department has intimated me. So I reversed 18,000 rupees I have reversed. Sir, thereafter, I have reversed it. Whatever ITC I have availed, that I have reversed it. So thereafter, this supplier, after certain point of time, let us say in the month of March 2027, after 2-3 years, this person is coming and filing his GSTR 3B, sir. Who? Supplier. Since the supplier did not file the GSTR 3B before 30th of September following the end of the financial year, I have reversed ITC. But thereafter, this supplier is coming and filing his GSTR 3B. After I have reversed it, at some point of time in the future, if the supplier is filing his GSTR 3B, can I re-avail that reversed ITC? Yes. Yes. Then you can re-avail your reversed input tax credit. You have reversed it, no? Because your supplier did not file GSTR 3B. Later, if the supplier is coming forward and filing his GSTR 3B, can I re-avail that reversed ITC? Yes, you can re-avail that reversed input tax credit. There is no time limit for that. You can do the re-availment of reversed ITC. Next, one more last condition which is required to be fulfilled in order to avail the input tax credit is you must have filed your returns. Definitely no. Which return? GSTR 3B. Just because, don't be of a wrong notion that just because ITC is reflected in your GSTR 2B means you have availed it. No. So it will only show in the GSTR 2B, it will only show how much ITC you are eligible for. You have to claim that input tax credit. You have to avail that input tax credit by filing your GSTR 3B. Unless and until you file your GSTR 3B, you will not be able to avail that input tax credit. So don't be of a wrong notion. When it is getting shown in GSTR 2B, it is automatically created. No, that is just will show you how much amount you are eligible for. You have to file your returns and claim that money. Okay, which return you have to file? GSTR 3B you have to file. So these are all the conditions which are required to be fulfilled. So repeat, what and all are the conditions which are required to be fulfilled for availing input tax credit? Number 1, you should have a tax paying document containing some minimum details. Number 2, that amount should have been reflected in your GSTR 2B. Number 3, you should have actually received that goods or services. Number 4, that ITC should have been, whatever ITC should have been communicated to you, it should not have been under restricted category, and that amount of tax should have been actually paid to the government, and you should file your return. GSTR 3B you have to file it. Then only you can avail the input tax credit. Next, there are some provisos. There are some provisos to 16 subsection 2. Two provisos we have. What are the two provisos? First proviso to 16 subsection 2 says that in case if you are receiving the goods in lots or installments. In case if you are receiving the goods in lots or installments. Sir, when I can claim the ITC? Let us say I have ordered some goods, 100 quantity of goods I have ordered. But these goods I am getting it in lots. In 5 lots I will get. Now these lots are spread across different months. Sir, can I avail full ITC on receiving the first lot? Or am I required to apportion my ITC for each lot and claim proportionate amount? Or should I wait till I receive the last lot to claim the ITC? Which is correct option? Last option. Last option. So government told you can avail ITC only on receipt of the last lot or last installment. So in case if you are receiving the goods in lots or installments, you can't claim ITC by along with the first lot, or you can't even apportion and claim the proportionate amount. You have to wait till you receive the last lot or last installment. Only after you have received the last lot or last installment, then only you can avail the input tax credit. That is the first proviso. Then we have second proviso. This is very, very important. Payment condition. So you should make the payment within 180 days. As a recipient, you should make the payment to the recipient. Sorry, as a recipient, you should make the supplier payment within 180 days. So that is there is a supplier who gave you invoice on 15th of April for GST amounting to 1 lakh rupees and 18,000 to the recipient. So now this sale has happened on credit basis. Now supplier has declared this tax invoice in his GSTR1. He discharged his output tax liability. Recipient, the amount was reflected in his GSTR2B. He claimed ITC. But now department says that by way of second proviso to 16 subsection 2, they say that this recipient should have made the payment within 180 days from the date of invoice. Date of invoice is 15th of April, no? So from 15th of April, 180 days you calculate. So within 180 days, this recipient should have made the payment to the supplier. Sir, what will happen if payment is not made within 180 days? What will happen if the payment is not made within 180 days? So if the payment is not made within 180 days, whatever ITC that has been availed by the recipient, that should be reversed. That should be reversed along with interest. Along with interest. Here no relaxation, nothing. If you are not making the payment within 180 days, then you are required to reverse ITC you have availed along with interest. From the date of utilization till the date of reversal, you have to calculate the interest at the rate of 18% per annum, and that interest you will be liable to also pay, not just a reversal of ITC. If you remember, in case if the supplier has not filed the GST R3B, if you are reversing it on or before 30th of November, then you are not required to pay any interest. But in case if you did not make the payment to your supplier within 180 days, then you are required to reverse the amount of GST directly along with interest. Government will not wait. You did not make the payment within 180 days, no? Now you have to reverse ITC whatever you have taken. Don't just reverse ITC. Reverse it along with interest at the rate of 18% per annum. Understood? So this is what second proviso says. You must make the payment within 180 days. Sir, what if I am making partial payment? Let us say out of this 1 lakh rupees, 50,000 I have already paid. 50,000 along with the GST I have paid. But balance 50,000 only I did not pay. Pending amount is balance 50,000 only. So 180 days is over, but pending amount I did not pay. So now whatever GST ITC attributable to that 50,000, proportionate amount of ITC only you are required to reverse. So what is ITC attributable to that proportionate amount? 9,000 rupees. So this 9,000 rupees you have to reverse it along with interest at the rate of 18% per annum. Sir, I paid 60%, I did not pay 40%. So ITC attributable to that 40% only you are required to reverse it. So whatever amount you did not make the payment within 180 days, ITC attributable to that amount should be reversed along with interest at the rate of 18% per annum. Understood? Sir, let us say I did not make the payment within 180 days. I have reversed my ITC along with interest. Thereafter, I am making payment, sir. Thereafter, after certain period of time, I am making the payment, sir. Can I re-avail my reversed ITC? Yes. Yes, you can do the re-availment of reversed ITC. So whatever ITC that you have reversed because you did not make the payment within 180 days, thereafter, after reversal, if you are making back the payment again to the supplier, then you can re-avail that reversed ITC. Sir, what about interest? Gone. Interest is gone. Interest, you are not going to get it back. Don't expect that government will give you back interest also. There is no way of getting interest back. But whatever reversal of ITC you have done, that you can re-avail it. Then that you can reclaim it. That is the maximum thing which you can do. Clear everyone? Right. So I told you two circumstances where you can do the re-availment of reversed ITC. Number one, in case if the supplier has not filed his GST at 3B, first you will reverse it. Thereafter, if the supplier has filed his GST at 3B, I can re-avail it. Second condition where you can do re-availment of reversed ITC is in case if you did not make the payment within 180 days from the date of invoice, you have to reverse it. Thereafter, if you are making the payment, you can do the re-availment. Understood? Right. However, this payment within 180 days condition will not become applicable in some circumstances. This payment within 180 days condition will not become applicable in some circumstances. There are some exceptions. What are they? So condition of payment within 180 days does not apply in the following situations. What are that situations? Number one, supplies on which a tax is payable under reverse charge mechanism. If you are a recipient, if you are only making the payment of GST under RCM, then that RCM input also you can use the credit. Whatever GST that you have paid under reverse charge mechanism, that also you can take it as credit. But in that case, there is no condition to make the payment within 180 days to the supplier. In case of RCM supplies, you can claim ITC, but there is no condition of making the payment within 180 days to the supplier. Second one, deemed supplies without consideration. If you remember the supply chapter, we have discussed schedule 1. There are 4 paragraphs which will be deemed as supply even if done without consideration. So there we are deeming those activities as supplies even without consideration. If there is no consideration only, what is the purpose of making the payment within 180 days? There is no consideration only. No. When there is no consideration, then what is the logic of putting that 180 days of payment condition? Because there is no consideration only there. One more case where the payment within 180 days will not become applicable is additions made to the value of the supplies on account of supplier's liability as per 15 subsection 2 clause B. So whatever addition you are doing it to the value under 15 subsection 2 clause B, for that addition which you have done to the value, for that payment within 180 days will not become applicable. Sir, what is that addition we have made to the value under 15 subsection 2 clause B? If you remember in the previous session value of supply, I told you one concept. Amount paid by the recipient to the third party on behalf of the supplier, which is the supplier's obligation, should be added. That wedding event management I have told. There was one supplier. So let me take you back to that example. Just 1 minute. Yesterday we have taken one example, no? Yeah, this one. So there is one supplier. So this supplier is providing, has agreed to provide event management services. Yes or no? So no, not this one. Where is it? PPA. This is time of supply. I guess this one. So there is a supplier who is providing catering services to a recipient. So as a part of that catering service, he is also required to provide soft drinks. So one day vendor has come on the day of wedding and he has unloaded all that 500 quantity of the drink bottles. Thereafter, he is asking for payment 10,000 rupees, but supplier is not available. Now he is creating a show. So what the recipient has done, okay boss, don't worry, I will pay you the 10,000, just leave from here. So recipient paid 10,000 rupees to the third party, which is actually supplier's obligation. Now ultimately he has to pay only 90,000 to the supplier. So here, even though transaction value is 90,000 rupees, but we will make an addition under 15 subsection 2 clause B. How much? 10,000, amount which is paid to third party. On total 1 lakh rupees, 18,000 rupees of GST will be charged. Okay, so supplier will give, okay, let me put it this way. Supplier will give invoice. Here in this case, 90,000 rupees is the transaction value. 10,000 rupees will be added under 15 subsection 2 clause B. Total 1 lakh rupees. And on that, 18,000 rupees of GST will be charged. So the recipient will take 18,000 rupees of ITC. But here payment condition is there, no? Payment has to be made within 180 days. Yes or no? So now let us say this recipient is not making that payment to the supplier within 180 days. How much is the payment he is not making? 90,000 rupees payment he is not making. So tell me, should I reverse full ITC or ITC attributable only to 90,000? ITC attributable only to 90,000 I have to reverse. Why? Because this 10,000 rupees was added under 15 subsection 2 clause B. So for this amount, payment within 180 days will not become applicable. Why? Because that amount is already paid to the third party. So for that portion of value which was added to the value under 15 subsection 2 clause B, that for that payment within 180 days condition will not become applicable. So that's why this 90,000 ITC attributable to this 90,000 rupees only you are required to reverse. So that means if I calculate 18,000 rupees into 90,000 divided by total 1 lakh. So 90%, which will come to 16,800. 16,800 ITC only I am required to reverse. So ITC attributable to that 10,000 rupees which was added under 15 subsection 2 clause B, that need not be reversed, because for that payment within 180 days condition will not become applicable. Understood? Right? Important point. Next. So let us come back here. Fine. Right. So these are the three cases where payment within 180 days will not become applicable. So let us see what are the three cases where payment within 180 days will not become applicable. Number one, supplies on which tax is payable under RCM. Number two, those deemed supplies, even those supplies which are mentioned under Schedule 3, which will be deemed as supply even without consideration. Number three, additions made to the value of the supply on account of supplier's liability under 15 subsection 2 clause B, whatever amount has been added. So for that also payment within 180 days will not become applicable. So this is what regarding 16 subsection 2. So what we have seen in section number 16 till now: 16 subsection 1, who is eligible for claiming input tax credit. 16 subsection 2, what are the conditions which are required to be fulfilled in order to claim the input tax credit. Now we will talk about section 16 subsection 3. Sir, what is section 16 subsection 3 is saying? Section 16 subsection 3 will talk about capital goods. So when it comes to capital goods, in case if you are buying a capital good, there are two options available for you. In case if you are buying capital goods, there are two options available for you. Number one, either claim ITC on it under GST Act or claim depreciation on the GST component. So there are two options. One we have to choose. In case if you are purchasing a capital asset, you can't say, so let us say I am purchasing the capital goods for 10 lakh rupees, in which 1.8 lakh rupees of GST is also involved. So this 1.8 lakh rupees is there, no? This either you can claim ITC or you can capitalize. So if you are capitalizing means what? You are claiming depreciation. So both will not be allowed. Either you claim input tax credit. If you want to claim ITC of that 1.8 lakh rupees on your capital goods, in your books of account, you capitalize only 10 lakh rupees. If you want to capitalize total 11.8 lakh rupees and claim the depreciation under the Income Tax Act, then you don't claim the input tax credit. So either claim input tax credit or claim depreciation under Income Tax Act, not both simultaneously. So this is what 16 subsection 3 says. Thereafter we have 16 subsection 4, which is talking about what is the time limit for availing the input tax credit. What is the maximum time limit within which you are required to avail the input tax credit? Sir, can I, let us say for example, let me put it this way. Let us say, sir, there was a supply. There was one supply. I am a recipient, sir. I received one supply in the month of April. In the month of April 2025, there was one invoice. So while filing the return for the month of April, let us say for April month return, I will file it on 20th of May. GSTR 3B, I will file it on 20th of May. No? So while filing my return for the month of April, I did not claim ITC. Let us say 1 lakh worth of invoice I have. On that 18,000 rupees of GST is there. So because of some reason, that 18,000 rupees of ITC I did not claim. So I have an invoice also, that amount is reflected in my GSTR 2B also, I received the goods also. So all the conditions are fulfilled, but I forgot, let us say I forgot, or because of some reason, I did not claim the ITC in the month of April. So what will happen? Will I lose the right? If I did not claim the ITC, will I lose that right? No issue. For May month, you will file the return, no? For May month, you will file the return on 20th of June. In that, you can claim it. In that, whatever you have missed for the May month, April month, you can claim it. Sir, that also I did not do. No worry. You will file the June month return, no. You will file it somewhere around 20th of July, no. In that, you can claim the ITC. Sir, there also I did not do it. No issue. Claim it in the next month. Like this, how long, sir? Can I claim after 2 years? Can I claim after 3 years? No, there is one time limit. There is one time limit. So there is a maximum time limit within which you are required to claim that input tax credit. And what is the time limit? ITC on invoices pertaining to debit notes or invoices should be claimed at any time till 30th of November following the of succeeding financial year or date of filing of the relevant annual return, whichever is earlier. So what is the maximum time limit? They are saying 30th of November following the end of the financial year. So this is belonging to the financial year 25-26. 30th of November following the end of the financial year means what? 30th of November 2026 or date of filing of annual return. There will be date of filing of annual return, not due date, date of filing of annual return, whichever is earlier. So within that date, that will be the maximum time limit within which you will be permissible, you will be eligible to claim the input tax credit. Okay, so not beyond it. However, listen carefully. This condition, this time limit, 30th of November following the end of the financial year or date of filing of annual return, this time limit will not become applicable in cases of re-availment of reversed ITC. I told you about 2 cases where we will do re-availment of reversed ITC. In those 2 cases of re-availment of reversed ITC, this time limit of 30th of November following the end of the financial year or date of filing of annual return, this time limit will not become applicable. So what are the 2 cases where there is a possibility of re-availment of reversed ITC? Number 1, in case if the supplier has not filed his GSTR 3B, then first you will reverse it. Thereafter, if the supplier has filed his GSTR 3B, you can re-avail. Number 2, if the recipient did not make the payment within 180 days to the supplier, you are required to reverse. Thereafter, if you are making the payment, then you can re-avail. So these 2 are the circumstances where you can do the re-availment of reversed ITC. So for re-availment of reversed ITC, there is no condition becoming applicable. You can claim it after 3 years, 10 years, 15 years, whatever you want to do. At any time, you can come back and claim it. Okay, right. So this is this point. Then one more point I would like to explain it here. One more point. So this is what time limit under 16 subsection 4 doesn't apply for re-availing ITC. So one more point I would like to say it here. 16 subsection 6 time limit for taking ITC in case of revoked registration cancellation. So this will try to spend some time. This is one important area. So this is something which you might not have learned at your CA inter properly, but CA final level, they might ask a question on this. Listen. So let us say one example. With the help of the example, I will try to clarify. In April 2025, I have an invoice. But I did not claim ITC. So what is the maximum time limit within which I can claim the input tax credit? 30th of November. See, date of filing of annual return is also there. Let us say annual return was filed on its due date. Annual return was filed on 31st of December. Whichever is earlier means 30th of November only. So let us say 30th of November. Maximum time limit within which I can claim ITC. What is it? 30th of November following the end of the financial year. Because this is forming part of financial year 25-26. So 30th of November following the end of the financial year. This is the max time limit. This is the max time limit for what? For availing ITC. So maximum time limit for availing ITC is 30th of November 2026. But in between, what happened is, let us say my registration was cancelled. Sir, when your registration was cancelled, let us say my registration was cancelled on, let me put it this way, on 30th of October 2026, my registration got cancelled. Suo moto basis by the PO, like in the registration chapter we have seen. So cancelled suo moto by PO. There are some circumstances where you are not filing the returns or you have committed some violations and all, then PO on suo moto basis, even without your application, PO on suo moto basis, he can come forward and cancel his registration. So that's what happened. On 30th of October 2026, my registration got cancelled, effective from that date only. So now what happened is, in case if the registration was cancelled by the PO on suo moto basis, you will be given an option under section number 30. You will be given an option to make an application for revocation of cancellation of registration. You will be given an option to submit an application for revocation of cancellation of registration. So you can ask for getting your registration back. So now what you have done is, using that option, you have made an application. Within 90 days we can do. So you have submitted an application for revocation, and ultimately what happened is, your registration was revoked. Your cancellation was revoked. So revocation of cancellation happened. Let us say, for example, revocation of cancellation happened on 31st of January 2027. By this date, they have given your registration back. So that means you will once again get back your registration effectively from the date of cancellation. Whatever is the date of cancellation, from that date itself, your registration has been revoked. That means your cancellation has been revoked. Now the problem is, by when your registration was cancelled, that is from 30th of October 2026 till 31st of January, during that duration, you would not have filed your returns. You would not have filed your returns. Why you would not have filed your returns? Because during that period, your registration was under cancellation. During that period, your registration was under cancellation. If your registration is under cancellation, you can't file your returns, you can't make the taxable supplies, you can't file your returns. From the effective date of registration, whenever your cancellation was, from the effective date of cancellation, whenever your cancellation has become effective, from that date you will not be able to file the returns. Yes. So for this duration, you would not file the returns. But now what you will do is, for this duration, since you got your registration back, since you got your revocation, so from the date of revocation of cancellation, from that date, within 30 days, you have to file all the pending returns. From that date, from within 30 days from the date of revocation of cancellation, within 30 days from the date of cancellation till the date of revocation, whatever pending returns are there, all that you are required to file within 30 days. So now you are filing your return here. Let us say you are filing your return on 15th of February. For duration from 30th of October till 31st of January, you are filing all your returns on, let us say, 15th of February. Within 30 days from the date of revocation you are doing. So now you wanted to claim the ITC. ITC is there. So one invoice was there in April month. No, 1 lakh worth of invoice is there. On that 18,000 rupees of GST is there. This you did not claim. You thought I can claim it till 30th of November. No, but you did not claim it. But you are filing now return on 15th of February 2027. Sir, can I claim ITC? He wants to claim this ITC in that pending returns, whatever he is filing, starting from 31st of October. So in that return, he wants to claim that ITC of 18,000 rupees. Can he claim it? Yes. Yes. Department has given the permission. So what they try to say here is, on the date of cancellation, by the time of effective date of your cancellation, if the time limit for claiming ITC has not yet expired, see, when your cancellation came into effect 30th of October, by the time still is the time available for claiming ITC? Yes, because you can claim it till 30th of November. So in that case, if you are getting your revocation of cancellation, you will file your pending returns within 30 days. No, in that returns, you can claim that unutilized, you can claim that unavailed ITC. Able to understand? But the condition is, you should be eligible. As on the date of cancellation, you are still eligible for claiming ITC because time limit is not over. You have still 30th of November, but on the date of cancellation, I am still eligible. Time limit is not over. No issue. In that case, if you are getting your registration back, you will file all your pending returns within 30 days from the date of revocation of cancellation. So in that pending returns, file all your pending returns. Along with that, you can also claim that ITC, which you are eligible as on the date of cancellation. Understood? So that is what the next section they try to say it here. So if I say it, if a taxpayer's registration is cancelled and later revoked, they cannot file returns for the period from effective date of cancellation to the date of revocation. That's what in our example also I have told. So from the date of cancellation till the date of revocation, you will not be able to file the returns. If recipient has not claimed ITC on any invoice or debit note before the time limit under 16 subsection 4 lapses, they cannot claim ITC on that invoice or debit note. However, relaxation is provided, extending time limit under 16 subsection 4 to the date of return of filing if the returns for the cancellation to the revocation period are filed within 30 days of revocation, provided ITC time has not already expired on the cancellation date. So in case if the ITC time limit has not already expired on the date of cancellation, then whatever pending returns you will file within 30 days from the date of revocation of cancellation, in that pending returns you can claim that ITC. Understood? Clear? Right. So this is what regarding section number 16. With this successfully we have completed section number 16, which is talking about eligibility and conditions for availing the input tax credit. Okay. So now we have to come to section number 17. Now we have to come to section number 17. So section number 17 will talk about two aspects. One is apportionment of credit and the other one is blocked credit. Section number 17 will talk about two concepts, apportionment of credit and blocked credit. Apportionment, we'll come back to that later. First, what we'll try to do is we'll try to complete the blocked credit concept. First, we'll try to complete the blocked credit concept. So thereafter, once we complete the blocked credit concept, then we will come back and understand apportionment related discussion. So first, let us try to understand blocked credit. Blocked credit. So this discussion has been contained in 17 subsection 5. So let us try to understand the conditions of blocked credit. What are the circumstances in which the credit will be blocked and all? So that we have to understand it. Fine. So now we will try to talk about blocked credit, a concept called blocked credit. Sir, what is this blocked credit? The name itself says Sometimes you are making some supplies, you are purchasing some supplies, be it goods, be it services. Sometimes there are certain kinds of supplies that if you are purchasing, that if you are procuring, you might be using it for business purposes only. You have an intention to use it for business purposes, or in fact you are actually using it for business purposes also, and you are a registered person, and you complied with all the conditions given under section number 16. You complied with all the conditions given under section number 16. So you are a registered person, you are procuring some goods or services which you are using it, or you have an intention to use it in the course or furtherance of the business, and you are complying with all the conditions given under section number 16. That is, you are having an invoice reflected in 2B, so like that all conditions are also fulfilled. But still, if those items are falling under 17 subsection 5, if those supplies are falling under 17 subsection 5, then ITC will not be available. The government is saying ITC we will block. We will not let you take the ITC. Agreed, you are a registered person. Agreed, you are receiving that supplies for making for using business purposes. Agreed that you are complied with all the conditions given under section number 16, but still we will not let you take the ITC. So if you are purchasing such supplies, ITC will not become available for you. Sir, what are that items on which ITC is blocked? So there is a very big list here, so we have to complete that one by one. So let us try to see it here. So what are that list of items on which ITC will be blocked? So let us see. First one. So I'm directly going into the discussion now. First one, motor vehicle for transportation of passengers with seating capacity of less than or equal to 13, including the driver. Ineligible motor vehicle. So the first category of item, the first supply on which ITC is blocked is motor vehicle. So if you are buying a motor vehicle, if you are purchasing a motor vehicle designed to carry passengers having a seating capacity of less than or equal to 13. So if you are purchasing a motor vehicle designed to carry passengers having a seating capacity of less than or equal to 13 persons, then ITC is blocked. That motor vehicle, they are calling it as an ineligible motor vehicle. So if you pay close attention, the restriction on ITC is there only for motor vehicles designed to carry passengers. If you are buying motor vehicle designed to carry the goods, no restriction, you can claim ITC. So what is ineligible motor vehicle? Ineligible motor vehicle is only such motor vehicle which is designed to carry passengers. So if you are buying any motor vehicle designed to carry the goods, will it also be blocked? No, it will not be blocked. Similarly, if restriction is also there only on that motor vehicle designed to carry passengers having a seating capacity of less than or equal to 30. That means if you are buying a motor vehicle designed to carry passengers having a seating capacity of more than 13, will there be any restriction? No restriction. You can avail full ITC. So the restriction is there only on ineligible motor vehicle, that is a motor vehicle designed to carry passengers, that too which should have a seating capacity of less than or equal to 13 persons. But however, if you are buying that ineligible motor vehicle, but if you are using it for some eligible purposes, then you can avail ITC. Sir, what are that eligible purposes? Even though if I am buying an eligible motor vehicle, but if I am using it for eligible purposes, then I can claim ITC. What are that eligible purposes? But before we talk about what are that eligible purposes, first let us try to understand what is an motor vehicle. And particularly, I want to shift your focus to what is excluded from the motor vehicle definition. Even though they might look like motor vehicle, but these things have been excluded from the motor vehicle definition. What are they? Vehicles running on fixed rails, railways, railway coaches, rails and all, they are not considered as vehicles. That means if someone is buying that rails and all, can they claim ITC? Yes, because that has been excluded from the motor vehicle definition. Similarly, special purpose vehicles for being used in factory on any enclosed premises. Like for example, inside the factories you will find some white kind of vehicles which is used only within the factory. Similarly, in the golf courts and all, you will find some vehicles which will run only within that golf court. So that also will not fall under motor vehicle definition. So if they are not falling under motor vehicle definition, can they claim ITC? Yes. Similarly, vehicles with less than 4 tires, 4 wheels fitted with engine capacity up to 25 cc. So any motor vehicle which is fitted with less than 4 vehicles and having an engine capacity only up to 25 cc, they are also not falling under motor vehicle definition. So if these three things are not falling under motor vehicle definition, that means ITC is not blocked. That means they can avail ITC, full ITC they can avail, no restriction on this. What are that excluded from motor vehicle definition? So rails and special purpose vehicle which will move only within an enclosed premises, or vehicles with wheels, vehicles with less than 4 wheels fitted with engine capacity up to 25 cc. So these are not falling under motor vehicle definition. If they are not falling under motor vehicle definition, we can claim full ITC. But as I was saying, even though if you are buying an ineligible motor vehicle, let us say I am purchasing a car. Car means, let us say seating capacity 5. So car is designed to carry passengers having seating capacity less than or equal to 13. So it is an ineligible motor vehicle. So ITC is not available for me. ITC is not available. However, if I am using it, if I am purchasing that car, but I am using it for eligible purposes, then I can claim ITC. Sir, what are that eligible purposes? Number 1, for making further taxable supply of such motor vehicle. If I am buying the car and I am selling the car, or if I am buying the car and renting the car, Anything. Further supply could mean anything. If I'm buying the car and selling the car, if I'm buying the car and renting the car, that will fall under further supply. Then I can claim ITC. Number two, if I'm making taxable supply of transportation of passengers, if I'm buying a car, using that car, I'm providing cab services. So I'm making a taxable supply of transportation of passengers. I can claim ITC. Or if I'm making taxable supply of imparting, training, or driving such motor vehicles. If I'm buying a motor vehicle, but using that motor vehicle, I'm running a driving school whereby I'm whereby I'm providing the services of training or imparting training or driving of such motor vehicles. Can I claim ITC? Yes, you can claim ITC. Understood? So practically speaking, ineligible motor vehicle, but when you are using it for these three eligible purposes, then you can claim ITC. What are the three eligible purposes? If you are using it for making further supply, if you are using it for the purpose of making taxable supply of transportation of passengers, and if you are using it for making taxable supply of imparting, training, or driving of such motor vehicle, then you become eligible to take the ITC. Clear? So that is the first blocked credit. Thereafter, we have vessels and aircrafts. Vessels and aircrafts. Even if you are purchasing a vessel, sir, vessel means what? Usually a ship. So if you are buying a vessel or if you are buying an aircraft, even vessel and aircraft is also ITC blocked. Even on vessels and aircrafts also, ITC is blocked. However, there are some exceptions. Even these vessels and aircrafts also, if you are using it for eligible purposes, even vessels and aircrafts also, if you are using it for eligible purposes, then you can claim input tax credit. Sir, what are that eligible purposes? Number one, if you are using it for making a further taxable supply, I'm buying a vessel or aircraft for further supply. For example, I'm buying vessels, selling vessels. I'm buying vessels or renting it. So if you are engaged in making further supply of vessels and aircrafts, then you can take ITC. Number two, if you are making taxable supply of transportation of passengers, let us say if Indigo Airlines purchased a vessel for the purpose of supplying, for the purpose of making a taxable supply of transportation of passengers, can Indigo Airlines claim the ITC on the aircraft? Yes. Making taxable supply of imparting, training, or navigating such vessel. So if you are buying a vessel, but using that vessel, you are providing the services of navigating a vessel. That means how to navigate the vessel and all. Driving school, once again. For cars, we say driving school. Here we say navigation academy. And if you are making a taxable supply of imparting training on flying such aircrafts, so you are buying an aircraft and using that, you are providing the skills on how to fly an aircraft. Or if you are using it for transportation of goods, if you are buying a vessel, if you are buying an aircraft for using it for transportation of goods, not for passengers, if you are using it for transportation of goods, then also you can enjoy the input tax credit. So first blocked credit is motor vehicle having a seating capacity less than or equal to 13. Second item which is falling under blocked credit is vessels and aircrafts. But in both the cases, if you are using it for eligible purposes, then we can claim ITC. Next, let us come to the third one, blocked credit. So now what is the third point? What they try to say here is, let us say if you are buying a vessel, or if you are buying an aircraft, or if you are buying a motor vehicle. On purchasing a vessel, aircraft, or motor vehicle, if you are unable to take ITC, if ITC is blocked for you. I'm a chartered accountant, I'm purchasing a motor vehicle, I'm purchasing a car for using it for official purposes, but ITC is blocked. Or I'm buying a vessel, I'm buying an aircraft, ITC is blocked. So if ITC is blocked on vessel, aircraft, or motor vehicle, so for that vessel, for that motor vehicle, I will take insurance, no? On that insurance also I will pay GST, no? Even on that insurance also I can take ITC. For this vehicle, vessel, or aircraft, I will undergo repairs, no? On that repairs also I will pay GST, no? That GST also I can't avail as ITC. For that vessel, aircraft, or motor vehicle, I will undergo service. For that service also I would have paid GST. On that also I can't avail ITC. So one simple logic, if you are ineligible to take the ITC on motor vehicle, vessel, or aircraft, even on its general insurance, even on its repairs and maintenance, even on its service also, even on its servicing also, whatever ITC you have paid, you can't avail ITC. Simple thing. So in case if you are eligible to take ITC on motor vehicle, vessel, and aircraft, even on its general insurance also you can take ITC, even on its repairs and maintenance also you can take ITC, even on your servicing cost also you can take the ITC. That's what a thumb rule. So if you are eligible to take ITC on motor vehicle, vessel, or aircraft, even on its insurance, repairs and maintenance, and servicing also you can take ITC. If you are ineligible to take the ITC on motor vehicle, vessel, and aircraft, you will also be not eligible to take the ITC on this insurance, repairs and maintenance, and also servicing cost. Clear? However, they told one more thing here. The services of this general insurance, repairs, and servicing will be available for manufacturers. In case if these services are availed by the manufacturers of that motor vehicles, vessels and aircraft, then also they can take ITC. Let us say Tata Motors is there, it is into manufacturing of business of motor vehicles, and they have taken insurance for the motor vehicles they are manufacturing, or they are incurring some service and repairs cost for the motor vehicles which they are manufacturing. Can they take ITC? Yes. So services relating to general insurance, repairs and servicing, that can be availed by the manufacturers of that motor vehicles, vessels and aircrafts. Not just that, that can on that ITC can also be availed by general insurance companies. On that ITC, on this general insurance repairs and maintenance, ITC can be availed by that general insurance companies also in respect of cars which are insured by them. In respect of cars which are insured by them, I will give you one simple example here. Right. So what are you trying to say, sir? So what am I trying to say here is, so let us take this example. I purchased a car. I purchased a four-wheeler. I'm a chartered accountant. I purchased a car. On this car, I have paid GST. Can I claim ITC of that? No, I can't claim ITC. What I have done is I took insurance. Let us say I paid 10,000 rupees of insurance. On that, I have paid 1,800 rupees of GST also. Can I claim ITC? No, I can't claim ITC on that insurance also. Because since I am unable to claim GST on the car, even on the general insurance also, I will not be able to claim any GST. Thereafter, I was driving the car. This car met with an accident. Now, this car, I took it for repairs. I need not worry. Why? Because I have paid the insurance. No, I paid insurance. So for this repairs and expenses, repair expenses, all are have to be borne by this insurance company only. So now I have undergone the repairs. Now repair cost came to 1 lakh rupees. Amount of GST is 18,000. So total 1,18,000 worth of repairs have taken place. Now these repairs will be given invoice in the name of this Max Insurance. Because they have to bear. No, I took an insurance policy with the Max Insurance. They have agreed to compensate for my damages. So now my vehicle met with an accident. So I'm making a claim with the Max Insurance. Now they have to reimburse me this, or they have to incur these expenses. Total 1,18,000. Sir, can this Max Insurance, whatever amount they are paying, 1,18,000 for undergoing the repairs in respect of the vehicle, whatever they have insured, can they claim the ITC of this 18,000 rupees? Yes, Max Insurance can claim the ITC of that 18,000 rupees. They can claim it. Why? Because they are incurring that cost in respect of the vehicles, whatever they have insured. So they can take the ITC of that. Understood? Clear? So that is what the third point. Services of general insurance, servicing, repairs and maintenance insofar as they relate to motor vehicles, vessels or aircraft. Now, one more last thing here regarding motor vehicles. So now what some people have started thinking is, sir, if I am buying a motor vehicle, vessel or aircraft, you are saying that I am ineligible to take the ITC. I will do one thing. Instead of buying it, I will take it on rent. So GST Act is saying, if I am purchasing a motor vehicle, or if I am purchasing a vessel or aircraft, and if I am not using it for eligible purposes, if I purchase it, then ITC is not available. I will do one thing. I will not do the purchase. I will do renting. I will take that vehicle, motor vehicle, vessel or aircraft on lease. Renting or lease I will do. On that I can take ITC. No, sir. No. Here they have told no. Not possible. So in case if you are ineligible to take the ITC on the purchase of motor vehicle, vessel or aircraft, even on its leasing or renting also, you can't avail the input tax credit. Why? Because this will be because if they don't put it, people will do like this. People, instead of buying the motor vehicles, vessels and aircraft, they take it on lease. Why? Because on lease they can take ITC. So like that, people will try to override the law. So that's why what they have told is, if you are ineligible to take ITC on the motor vehicle, vessel or aircraft purchase, even on its renting or leasing also, you will not be able to take the ITC. However, there are some exceptions. In some cases, ITC can be availed. So what are that exceptions is, let us say for example, there is some IT company. There is some software company. This company is taking some motor vehicle, is taking some vehicle on rent or lease. They are taking a car. They're taking some car on lease or rental. So why they are taking that car on lease or rent is because they wanted to provide transportation services to their employees. And this company has to do that as per statutory obligation. They are under a statutory obligation to provide transportation facilities to their employees. For that purposes, they are taking that car on lease or rent. In that case, they have given relaxation for these companies for the purpose of taking the input tax credit. Then they can take the input tax credit. In case if any entity is availing the services of renting or lease of a motor vehicle to provide them to the employees under some statutory obligation. If they have a statutory obligation to provide the transportation facilities to the employees, to fulfill that, if they are taking that motor vehicle on rent, then they can claim the ITC. Sir, what if they purchase? What if this IT company, instead of taking the rent, if they purchase the car and providing the transportation facilities for the purpose as per statutory obligation, can they take ITC? No, they can't take ITC. If they're purchasing, they can't take ITC. But if they're taking it on rent or lease, they can take ITC. Able to understand? Sir, what if they purchase a bus? On bus, anyhow, it is not an ineligible motor vehicle. No. The ineligible motor vehicle is what? A motor vehicle designed to carry passengers having a seating capacity of less than or equal to 13. A bus will have a seating capacity more than 13. So that is not an ineligible motor vehicle only. Can they take ITC? Yes. On bus, they can happily take the ITC. There is no restriction. There is no blockage of rate in respect of a bus. Okay, I'm talking about the cars. So one exception of renting or leasing of motor vehicles where they can claim the ITC is in case if that recipient is using that services to provide the facilities to the employees under a statutory obligation, then they can claim the ITC on that renting or leasing of the motor vehicles. And one more case where ITC on renting or leasing of motor vehicles is allowed is, let us say for example, you are getting the services of renting or leasing a motor vehicle. You are a recipient and you are also doing the same line of business. You are also doing the same kind of outward supply. Let us say you are taking a motor vehicle on rent or lease, and you are also giving that motor vehicles on rent or lease once again. That means if your inward supply and outward supply both are same, then you can take ITC because you are into same line of business. Or let us say you are not into same line of business, you are into different line of business, but you are using it as one of the element of composite of mixed supply. You are using it as one of the element of composite or mixed taxable supply. Sir, what is it? Let us say there is one resort. Now what this resort is doing is, this resort management is taking on lease some off-roading vehicles like Thar and all. They are taking this vehicles on lease. Sir, why they are taking this lease on lease? Because in their resort, to the customers whoever are arriving, for them they are providing composite supplies. What is a composite supply? So this resort, if you want to book a package in this resort, so they will give you accommodation. They will also give you food. Along with that, they will also give you one vehicle for off-roading. Vehicle also they will rent it out for off-roading. So this resort is making a composite supply or mixed supply. In that, one of the element is renting of motor vehicle. So in case if you are receiving the services of renting or leasing of motor vehicle, and if you are into same line of business, then you can claim ITC. Or you are receiving the services of renting or leasing of motor vehicle and you are using it as one of the element of composite or mixed outward supply which you are doing, then also you can claim ITC. Able to understand? So this is what regarding leasing and renting services. So if you see here, leasing or renting or hiring of the motor vehicles, vessels or aircraft on which ITC is not allowed. Exceptions: such as services when used for making an outward taxable supply of same category of services or either as an element of taxable composite or mixed supply, just now as I have told. Or when such services when provided by employer to its employee under a statutory obligation, then also they can enjoy the input tax credit. Then there is no restriction. Understood? Now, so this is what regarding motor vehicles related cluster of blocked credit. So before we proceed further, I would like to tell you one more thing here. So now one circular I want to explain. Sir, dealers will be there, no? Vehicle dealers will be there, no? Sir, they will purchase demo vehicles. They will have demo vehicles. Let us say for example, Tata Motors is there. They are into business of selling of this vehicles, motor vehicles they will sell. Let us say for example, some 100 motor vehicles they have purchased, 100 Nexon models this dealer has purchased. Now out of this 100 models, 99 models he will make further supply. 100 cars he has purchased. Out of that 99 cars he will supply. He will make a further supply. But one car he is going to use it as a demo vehicle. One car he is going to use it as a demo vehicle. Sir, what do you mean by demo vehicle? Today, if you want to go to a dealer and if you want to purchase a car, first you have to do the test drive. People would like to do the test drive. Without doing the test drive, people will not be able to purchase it. People will not be able to get the feel, how the car will look, how the car will feel when driving and all. So that's why one vehicle, whatever he has purchased, that he is going to use it for demo vehicle. That he is going to keep it for demo vehicle purposes. Now, when it comes to these 99 vehicles, there is no doubt these 99 vehicles are purchased with the intention of making a further supply. He can claim ITC on that, no doubt. But what about this one demo vehicle? What about this one demo vehicle? See, it is an ineligible motor vehicle, but ineligible motor vehicle you can claim ITC only when three eligible purposes are permitted. So either you are using it for making further supply, or you are using it for making taxable supply of transportation of passengers, or you are imparting driving skills. But this one demo vehicle is not getting used for making further supply. You are not making further sale of it. You are not using it for transportation of passengers. You are not using it for either imparting or driving skills. So whether on this one demo vehicle, one PO told, since it is not getting used for further supply, since it is not getting used for making taxable supply of transportation of passengers, since it is not getting used for making imparting or providing driving skills, so on this one demo vehicle, I will not allow the ITC. Like that one PO has argued. Now department has given a circular, CBIC has given a circular stating that no, even this demo vehicles are also used in the course or furtherance of business only. Even this one demo vehicle is also getting used in the course or furtherance of business only, because if a customer has to come and purchase a vehicle, he will not purchase it unless and until he will have a test drive. Yes or no? So that's why if this demo vehicle is also getting used in the course of making that further supply only. So even on that demo vehicle also you can claim the ITC. That's what the circular has been given by CBIC. CBIC has given that circular. Even on the demo vehicles also you can claim ITC. There is no blockage of that because it is also deemed to be used in making further supply only. Clear about it? Understood? Right. Next. So this is one block. Next, let us come to further categories of the blocked credit. So we have some services here. So ITC is blocked on the following. They have categorized some services on which ITC is blocked. So food and beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, life and health insurance services. On this ITC will always be blocked. So what are that? List you tell me. Food and beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, life insurance and health insurance. If anyone is availing these services, on that ITC will be blocked. However, exceptions are there. That means in some cases this ITC will be on these services, ITC will be available. When, sir? Same. If the recipient of the services is also engaged in same line of business, you are receiving food and you are using it and you are making further supply. If you are receiving outdoor catering services and if you are making the same kind of supply. If you are receiving beauty treatment services, if you are also into same line of business. So if either the person, if the above are used by registered person for making an outward taxable supply of same category of goods or services, or either as an element of taxable or composite or mixed supply. I already gave you example how it could be one of the element of a composite or mixed supply. So if the recipient is either using it for making same outward supply, or he is using it as one of the element of the composite or mixed supply, then that recipient can avail ITC on these specified services. Thereafter, membership of a club, health and fitness center. So even this membership of a club, health and fitness center, you can't avail ITC. Travel benefits extended to employees. If any travel benefits are given to employees on vacation, such as leave, home travel concession, on that leave travel benefits also, there is no ITC. However, if these goods or services specified, this 1, 2 and 3, if these goods are received by a recipient in order to provide the same to their employees under a statutory obligation, then ITC will be allowed. In case if these services 1, 2 and 3, if these services are received by a recipient who is an employer to provide the same to his employees under some statutory obligation, there must be a statutory obligation to provide these things to the recipient. In that case, if the employer is receiving it to provide the same to his employees under some statutory obligation, then that recipient can avail the input tax credit. Next, we have C and D, both are talking about immovable properties. Let us try to complete both of them in one go. Very simple clauses only. So I will try to explain it. So let me see whether I have any ready notes available. Okay, perfect. This I have. What is it? Come on. So what they are trying to say. Fine. So let us come here. So first thing what they say is, in case if you are a recipient who is a registered person, and in case if you are receiving works contract services in relation to an construction of an immobile property. If you are a registered person, if you are receiving any services relating to works contract. Sir, what is a works contract? Works contract relates to such a service where supply of goods is also involved, supply of services is also involved in relation to an immobile property. If someone is providing the services in relation to immobile property, which involves a supply of the goods also, supply of the services also. That I call it as works contract. Simply, if I have to put it, I have a piece of land. On that piece of land, a building has to be constructed. Now, one contractor came forward. He told, "Sir, you give me 1 CR, I will construct that building for you." Now, as a part of that supply, he will supply me the goods also, like whatever cement, sand, and all are required, that he will only supply. Along with that, service also he's doing. So, that I call it as works contract. So, if you are a registered person and if you are receiving the works contract services in relation to a construction of immobile property, so let us say 1 crore is the works contract value, 0.18% GST, total 1.18 CR worth of works contract services in relation to immobile property you are receiving. Now, this section 17 subsection 5 says that ITC is blocked on this works contract services in relation to construction of an immobile property. Whatever GST that you have paid, this 18 lakhs worth of GST, whatever you have paid, that ITC we will not allow. ITC is blocked on works contract services in relation to construction of an immobile property. If you are receiving any works contract services and in relation to construction of an immobile property, on that works contract services, ITC will be blocked. That's what they have told. This ITC will not let you take the input tax. This GST will not let you take the input tax credit. However, there are some exceptions. In some cases, even though you are receiving the works contract services in relation to immobile property, you can take the input tax credit. You can avail the input tax credit. When, sir? Sir, when ITC will be eligible? What are the exceptions? Number one, if that expenditure, if that works contract, whatever you are receiving, it doesn't qualify as a capital expenditure, it is revenue expenditure. If you are receiving works contract services in relation to an immobile property, which will not qualify as capital expenditure as per the accounting standards, it is a revenue expenditure. It is such an expenditure which will be charged to the statement of P&L. On that, you can take ITC. So restriction is there only when that works contract expenses is eligible for getting recognized as capital expenditure in the books of accounts of the recipient. Then only ITC will be blocked. In case if that works contract expenditure does not qualify as a capital expenditure, if that is getting charged to the statement of P&L, on that no restriction is there, you can claim ITC. Similarly, you are receiving works contract services in relation to an immobile property, but if that immobile property is qualifying under plant and machinery definition, if that immobile property, whatever you are constructing, if that is falling under plant and machinery definition, then you can claim ITC even though you are capitalizing it. Sir, what is plant and machinery? This is what the plant and machinery. So here it is also an immobile property. Here also some contractor came and told, "Sir, I will construct this plant and machinery for you for 50 lakh rupees, on which he is charging GST. Sir, can I claim this 9 lakh rupees of ITC? Yes. Why? Because here the immobile property which is getting constructed is falling under plant and machinery definition. So if you are receiving works contract services in relation to construction of an immobile property, but which is falling under plant and machinery definition, then you can claim ITC. So this 9 lakh rupees, can I claim ITC? Yes. But here it is very much necessary for us to understand what is this plant and machinery. Plant and machinery, what will come here, what will not come here in the plant and machinery, that is very important. So what is plant and machinery? It means apparatus, equipment, machinery fixed to earth by foundation or structural support used for making outward supply of goods or services. So it includes any apparatus, equipment, machinery fixed to the earth by foundation or structural support. So if you come here, so this machinery, this apparatus, this foundation, this structural support, everything will fall under plant and machinery definition. So it even includes foundation or structural support also. But what is excluded from the plant and machinery definition? Land is excluded from plant and machinery definition. Building is excluded from plant and machinery definition. Other civil structures, telecommunication towers are not plant and machinery. Pipelines laid outside the factory premises is also not plant and machinery. Pipeline laid outside the premises is also not a plant and machinery. That means pipelines laid inside the factory is a plant and machinery, but pipelines laid outside the factory is not a plant and machinery. So this exclusion part is very important. If something is excluded from the plant and machinery, ITC will be not available. If something is included in the plant and machinery definition, and if you are receiving works contract services in relation to that plant and machinery, ITC will be eligible. So that's why here exclusion part is very, very important. You have to remember this. What will be excluded from the plant and machinery definition, that you have to compulsorily remember it. So this is what regarding works contract services in relation to an immobile property. Now we have one more thing. Sir, let us say I am not, and one more exception is also there. In case if the recipient is into same line of business, in case if the recipient of that works contract services is into same line of business, let us say I am a main contractor. I got one contract from one person to construct building. So what I am doing is I am outsourcing it to another works contractor. So I am receiving works contract service, but I am also into same line of business. That means I am another works contractor. I am another works contractor. So I am receiving works contract services to make same supply. So then also I can take input tax credit. If I am into same line of business, then also you can take the input tax credit. Understood? And one more thing, sir, let us say I am not receiving works contract service. I am doing self construction of immobile property. I am not receiving works contract services. I am doing self construction of immobile property. Sir, what do you mean by self construction of immobile property? Self construction of immobile property means I will buy the goods separately. I want to construct an immobile property. For constructing that immobile property, whatever goods I want, I will purchase that goods separately. For constructing that immobile property, whatever services I want, I will receive that services separately. That means I will buy the goods separately. I will bring the labor under my own supervision. Immobile property will be constructed. Sir, can I take ITC on that? No. Why? Because if they have allowed it, nobody will do works contract of immobile property. They will do the self construction of their immobile properties only. So that's why what they have told, either you are availing works contract services or you are doing the self construction of immobile property on your own. Even on the self construction of immobile property also, we will not let you take the input tax credit. However, here also the same 3 exceptions. In case if that immobile property is not getting qualified as capital expenditure, if that is getting charged to the statement of P&L, then you can take ITC. And if it is qualifying as plant and machinery, you are doing self construction of immobile property, but that immobile property is falling under plant and machinery definition, then also you can claim ITC. And if the recipient is not doing the construction on his own account, I am doing the construction but not for my own account, I am doing construction for others, I am a builder, I am receiving goods, I am doing construction of immobile property, but not for me, for my client, then you can take the ITC. Okay. So even self-construction of immobile property also you can't take ITC. However, 3 exceptions are there. If it qualifies as revenue expenditure, you can take ITC. If it qualifies as plant and machinery, you can take ITC. And if you are doing the construction for others, if you are not doing the construction of that immobile property on your own account, if you are doing the construction for others, then also you can take the input tax credit. Understood? So these are the blocked credits related to immobile properties. So work contract services we have covered, self construction of immobile property we have covered. Then thereafter, let us see further categories of the supplies on which ITC is blocked. 17 subsection 5 clause E we have inward supplies charged to tax under composition scheme. Let us say you are a registered person. You are buying the goods or services from another registered person, but your supplier is a composition dealer. Can you take ITC? No. Why? Because if you remember, while discussing the composition levy chapter, I have clarified on one point clearly. Composition dealer can't avail input tax credit. Composition dealer can't pass on the input tax credit. Yes or no? This point we have already covered. So in case if you are a registered person, if you are buying goods or services from another registered person, but he has opted for composition scheme, from that person, whatever purchase you are making, you can't avail ITC on that. ITC is blocked. Next, inward supplies received by a NRTP. Similarly, if there is a person NRTP, if he is coming to India and he is participating in some expo, or he is doing something, let us say for example, and for IPL matches, one foreign player has come to India to participate in that IPL match. Now he might be, as an NRTP, to make that outward supply, he might be receiving various inward supplies, but they are telling that for a NRTP, he can't claim ITC on his inward supplies. A NRTP has no fixed place of business in India, so ITC is not available on goods or services received except for tax paid on imported goods. So if this NRTP is importing any goods, on imports also there will be IGST. So on import, if he has paid any GST on imports of goods, on that import of goods, GST, whatever he has paid, on that only he can take ITC. Locally procured goods and services, he can't take ITC. Locally procured services, he can't take ITC. Imported services also, he can't avail ITC. So for NRTP, he can avail ITC on only one thing. What is it? Tax paid on imported goods. If you are importing some goods, on that if you have paid any IGST, that IGST you can claim it as credit. You can't claim ITC on locally procured goods or services. You can't even claim ITC on import of services also. Only GST paid on imported goods NRTP can avail ITC. Next, input supplies used or intended to be used for CSR activities. If some company is procuring the goods and those goods are required to be used for fulfilling the CSR activities, CSR requirements, fulfilling CSR requirements, to fulfill your CSR obligations, you are procuring some goods, you are procuring some services on which you have paid GST. Can I claim ITC of that? No. Next, inward supplies for personal consumption. That is once again related to non-business use only. If you are buying some goods and services for personal consumption of directors, for personal consumption of employees. So like that, if you are buying any goods or services for personal consumption, then also ITC will be blocked. Thereafter, free samples, gifts, goods stolen or lost. Right. So in case if you have purchased some goods, but that goods you are distributing it as free samples. If you are distributing it as free samples, no output tax liability. If there is no output tax liability, no input tax credit. Also, you have to reverse the ITC if you have already taken. If you have purchased the goods, but those goods you are giving it as gifts. If you are giving it as a gift, if there is no output tax liability, there is no input tax credit. If you have purchased some goods, those goods are lost in those goods are lost. So if the goods are lost, ITC is also lost. If you have purchased some goods, those goods are stolen. If the goods are stolen, ITC is also stolen. Stolen in the sense you have to reverse it off. Able to understand? So this is what regarding free samples, gifts or goods lost or stolen. So in case of free samples, gifts or goods lost or stolen, ITC will also be gone. And thereafter, one more case where ITC will not be available is tax paid in fraud cases, detention, confiscation, etc. So whatever tax you are paying under fraud cases, detention, confiscation, on that also ITC is blocked, but only up to financial year 23-24. From financial year 24-25 onwards, you can take ITC. Right. So this is what regarding various circumstances in which ITC will be blocked under 17 subsection 5. So we have covered 17 subsection 5. But if you remember, what did I say? Section number 17 will talk about two aspects. Section number 17 will talk about two aspects. One is blocked credit. One is apportionment of credit. One is apportionment of credit. Other one is blocked credit. Okay. So now what we have done is we are done with the blocked credit related discussion. So we have seen list of all that supplies on which ITC will be blocked. List of all the supplies on which ITC is blocked we have seen. But there is one more concept covered under section number 17, which is apportionment of credit. Sir, what is this apportionment of credit? Let us try to understand it. So what is this apportionment of credit, sir? See, in case if you are buying some inward supplies which are completely getting used for business purposes, you are getting some inward supplies which are going to completely use it for business purposes. Can you take ITC? Yes, take full ITC. Let us say if you are receiving inward supplies which you are going to completely use them for non-business purposes, which you are going to completely use them for non-business purposes. Can I take ITC? No, no ITC, not even a single rupee of ITC, you can't claim it. Let us say you are receiving an inward supply which you are going to partly use it for business purposes also and partly for non-business purposes also. You are receiving some inward supplies which you are going to use it partly for business purposes, partly for non-business purposes. So then what you should do? Proportionate ITC only you are required to avail. Proportionate ITC only you are required to avail. That means whatever GST that you have paid on that inward supplies which you are going to use it for business as well as non-business purposes, on that you might have paid some GST, but you can't avail full ITC, only proportionate amount you have to take. Now how to do that apportionment? How to do that apportionment? A question will come, no? That's what we are going to answer now. How to apportion it? That's what we are going to answer now. Similarly, one more thing if I tell you, there are inward supplies which you are going to use it for taxable supplies, only for taxable supplies. When I say taxable supplies here, it includes zero rated supplies also. When I say taxable supplies here, it includes even zero rated supplies. So whenever you are using inward supplies for taxable as well as zero rated supplies. Sir, what is zero rated supply? Exports or supplies made to SEZs. Exports you are making or supplies you are making into SEZ, they qualify as zero rated supplies. So if you are using inward supplies exclusively for taxable supplies and zero rated supplies, you can take full ITC, no restriction. And if you are receiving any inwards which you are going to use it only for exempt supply, which are going to use it only for exempt supply, ITC is not available. But if you are receiving inward supplies which you are going to use it for taxable including zero rated and you are also going to use it for exempted supplies, then what you have to do? Only proportionate ITC you have to take. Only proportionate ITC you have to take. Whatever ITC that is attributable only to the taxable and zero rated supply, only that proportionate amount of ITC you can avail. So whatever ITC that is attributable to exempt supply, that you should not avail. Similarly, in this case also, whatever ITC that is attributable to business purposes only you should avail. Whatever ITC that is attributable to non-business purposes, that you should not avail the input tax credit. Now, how to do this apportionment? How to do this apportionment? So we'll try to understand it now. So how to do the apportionment, sir? Let us see. Right. So here I have this thing. So how to do the apportionment? For that we have here, right? So simply what you will try to do here is, so I will do one thing. I will copy all this. I will copy all this 2 pages and then just 1 minute. I have to copy the page. Okay. copy. Okay. Copied them. Just give me a minute. Okay, I'm not getting it, I guess, here. So recently I have changed the app. Previously I used to use GoodNotes, but I have migrated to this. So I'm a little bit confused here. No issues. Okay, got it. Right. So apportionment of ITC. See, simply if I have to put it, first we will talk about inputs. First we will talk about inputs and input services. Then we will talk about capital goods and all. See, simply if I have to put it, we have to apportion it on the basis of turnover. So one thing we have got to know from section number 17, apportionment. So we have seen that whatever ITC that is attributable for non-business purposes, whatever ITC that is attributable for exempt supplies, that we have to reverse it, that we can't avail it. Now, how you will apportion that? First, one thing, make it clear in your mind, we will apportion it on the basis of turnover. So we will find what is taxable turnover, we will find what is exempt turnover. So on the basis of the turnover, we are going to apportion. But for the purpose of this calculation, what will be considered as taxable supply? See, simply if I have to put it, so you will have common ITC, no? Simply if I have to put it, there will be something called common ITC will be there, which is going to be used for business as well as non-business purposes, taxable as well as exempt supplies. So there will be common ITC, right? So what that common ITC, how you have to apportion it, that common ITC you have to take, that common ITC, you have to take it taxable turnover. You have to take taxable turnover divided by total turnover. So this is eligible. This amount you can avail. Or if I put it in other way around, whatever common ITC is there, that common ITC into exempt turnover divided by total turnover. This is ineligible. Anyway, I can do. So let us stick to that. Common ITC into exempt turnover divided by total turnover. That will become ineligible. Okay. So, but what is exempt turnover? What is taxable turnover? That we have to identify. So for the purpose of apportionment, what is taxable turnover? What is exempt turnover? Little bit definitions we have to change. So for the purpose of apportionment, what will be considered as taxable supply? What will be considered as taxable supplies? The usual taxable supplies, whatever we have, those supplies which will attract a rate of GST, that will fall under taxable turnover. Zero rated supplies, even zero rated supplies also will be included in the taxable turnover only. Interest or discount on advances, loans or deposits. So whatever consideration you are getting it in the form of interest or discount. Let us say, for example, you are giving a loan. On that loan, you are collecting some interest. Generally, that is exempted. But for the purpose of ITC apportionment, we will consider it as taxable supply. That is a favor actually. That is a favor. They are considering, they are asking you to consider that interest or discount on advances, loans or deposits into taxable turnover. That means that portion of ITC which is allocated to this also you can avail. That is an advantage. So practically speaking, it is an exempt supply. But for the purpose of calculation of apportionment, they are asking you to include that interest or discount on advances, loans or deposits into taxable supply only. Okay, but however, this you should not consider it for banks, financial institutions and NBFCs. For banks, financial institutions and NBFCs, this interest or discount on advances, loans or deposits will remain under exempt supply only. So only for the purpose of other than banks, financial institutions and NBFCs, interest or discounts on advances, loans or deposits will remain under taxable turnover. Then value of supply of duty credit scrips. So this is also exempt supply, but for the purpose of apportionment, we include it under taxable supply. So what is it? Value of supply of duty credit scrips. So for the purpose of apportionment, what will be taxable turnover? It includes taxable supplies. It includes zero rated supplies. It includes interest or discount on advances, loans or deposits for other than banks, financial institutions and NBFCs. Value of supply of the duty credit scrips. These all will be considered as taxable turnover. That means whatever common ITC that is attributable for this taxable turnover, you are eligible to take it. Then what will come under exempt supplies? So whatever ITC that is attributable to these exempt supplies, that will not be eligible. So now they have expanded only for the limited purpose of apportionment. They have expanded the scope of exempt supplies. So for the purpose of ITC apportionment, what and all will be considered as exempt supplies? Number one, wholly exempt supply, nil rated supply, non-taxable supply. Till here everything is same. This is what usual definition of exempt supply. This is something which I have told you in the introduction itself. What do you mean by, what is the general meaning of the term exempt supply? Wholly exempt supply, nil rated supply, non-taxable supply. But for the purpose of ITC apportionment, they are expanding the scope of exempt supplies. It includes even RCM supplies also. It includes even RCM supplies. Those supplies on which your recipient is liable to pay GST under RCM, that also you include in exempt supplies only. Sale of land. Sir, sale of land is not a supply only. No. Yes, agreed. Sale of land is not a supply only. But for the purpose of apportionment, even sale of land also will consider it as exempt supply only. So what will be the value taken, sir? Stamp duty value. Stamp duty value, whatever is there, that should be considered as value. Sale of building, where entire consideration is received after issuance of the completion certificate or first occupation. Sir, this is also not a supply, no sir. Sale of building where entire consideration is received after the cutoff date, that is also not a supply. No. Yes, that is not a supply. But for the purpose of apportionment, that also you consider it as exempt supply. That means ITC attributable to that also will be disallowed. So that also will be considered as exempt supply. And value will be what, sir? Once again, stamp duty value. Transactions in securities. Sir, securities is not a supply, is not money. Securities, you told, it is not goods, it is not services, not a supply only. Yes, agreed. But for the purpose of ITC apportionment, consider even transactions in securities also as exempt supply. Sir, what value I have to take it, sir? 1% of the sale value. 1% of the sale value. You should have sold, you would have sold the securities, no? Out of the entire sale, take 1%. That 1% you include it in the exempt supply. Activities as per para number 8A of schedule 3. Sir, what is this activities as per para number 8A? So we have that high C, we have that warehouse goods and all, we have that, no? So in that, they are telling that, oh, and not all activities as per 8A, only value of warehouse, not all supply of warehoused goods, only value of supply of goods from duty, not high C sales, warehoused goods. So only value of supply of goods from duty free shops at arrival terminal in the international airports to the incoming passengers, they will also be treated as supply. Sir, getting covered under schedule 3, sir, not a supply, sir. Yes, sir, agreed. But for exempt supplies, included in the exempt turnover. So only value of supply of goods from duty free shops at the arrival terminal. So this you have to remember. Supply of goods from duty free shops at the arrival terminal in the international airport to the incoming passengers, they will also be included in the exempt supply. Okay, sir, why it is very important? This is very important. Why? Because when you know what is exempt supply, what is total supply, then only you can do the proper apportionment. So for the purpose of ITC apportionment, this is what will be considered as taxable supply. This is what will be considered as exempt supply. Now, okay, so we got to know what is taxable supply, what is exempt supply. Now let us try to understand how to do the apportionment. How to do the apportionment, we have to understand. So in respect of inputs and input services, how to do the apportionment, we have the formula here. So we'll try to learn from this. Right. So the same format you have to follow. So in respect of common ITC attributable to inputs and input services. So you are buying some inputs, you are buying some input services, which you are commonly using it for business and non-business purposes, which you are going to commonly use it for, taxable and exempt supplies. In that case, how to calculate how to apportion the ITC. So here we have given some formulas. So first we have to start with something called T. Sir, what is this T? T means total input tax involved on inputs and input services as reflected in your GSTR 2B. So if you open your GSTR 2B, in your GSTR 2B, it will show what is the total ITC which is available on your inputs and input services. The total ITC you have to start with. From that, you have to exclude from T, from total ITC, you have to calculate the ITC which is credited to your electronic credit ledger in your GSTR 3B. What will be the ITC which will be credited to your electronic credit ledger? You have to calculate. Sir, how to do that? So total ITC we have. In that, three things you have to exclude. T1. What is T1, sir? T1 is ITC with respect to inputs or input services used exclusively for non-business purposes. Find out those inputs or input services which are exclusively getting used for non-business purposes, that you take it out. Then you determine what is the ITC which is attributable to inputs or input services used exclusively for exempt supplies, T2. Then ITC with respect to inputs or input services which are blocked. Just now we have covered 17 subsection 5. Find out what are that input or input services on which ITC is blocked. These three you have to take it out. So first you have T, which is falling under total ITC. Three things you have to identify. T1, ITC attributable to non-business purposes. T2, ITC exclusively only for exempt supplies. T3, block the credit. Take this three. Anyhow, this three we are ineligible. Those ITCs which are used exclusively for non-business purposes, I'm not eligible. Those ITC which is exclusively used for exempt supplies, not eligible. Those ITCs which are blocked, not eligible. So that's why from the total ITC, take out this 3, T1 plus T2 plus T3, calculate this total figure. What is T1, T2, T3? T1 is for inputs or input services exclusively used for non-business purposes. T2, inputs or input services used exclusively for exempt supplies. T3, ITC blocked. So this 3 you have to take it out from T. So you have total ITC. From that you do the total of this 3 and you take it out. Now you will get ITC, which is attributable, which you can claim it in the electronic credit ledger. But from that, so in this ITC, what is there? In that C1, what is there? ITC which is attributable only for exempt only for, or let me put it this way. In this C, what is there? C1, what is there? So in this C1, what is there is that credit which is used exclusively for taxable and business purposes. That is also there. ITC which is attributable for taxable and business purposes. That is there. In this also we have credit which is used for common inputs. Credit which is used for common inputs. That is what this C1. In this C1, when you have excluded non-business purposes, exempt supplies and blocked credit, you are getting one figure. So in that figure, what is there? Credit which is exclusively used for taxable and business purposes is there, and credit which is commonly used for taxable and non-taxable business and non-business purposes is there. Yes or no? So now what we should do is we have to find out the common credit, because common credit we have to apportion. We have to apportion only common credit. So that's why what we will do from that, T4 we will take it out. What is T4? ITC attributable to inputs or input services used exclusively for taxable, including zero rated supplies. So from this C1, you have to identify that ITC which is attributable only for taxable supplies, because that we should not apportion. This we are fully eligible. This ITC T4 we are fully eligible, because this is what we are using it for exclusively taxable, including zero rated supply. This you should not apportion. This you should fully eligible. So we are actually taking out common credit. What we have to apportion, that we have to find it out. So we got C1. In that common credit is also there. Exclusively eligible credit is also there. So that we are separating. From the C1, you take out that ITC which is completely attributable for taxable and zero rated supply, because this is something which we are fully eligible. So we are calculating C2, which is common credit. Common credit alone we are calculating. Common credit alone we are calculating. Now this common credit we have to apportion. Sir, how to apportion? So we will calculate two things, D1 and D2. Sir, what is D1? ITC attributable to exempt supplies. Of the common ITC, how much ITC is attributable to exempt supplies? So how to calculate common credit? You have no common credit into exempt turnover divided by total turnover. So I have already told you how to calculate exempt turnover. So by considering all that, you will calculate exempt turnover. Now you will have taxable turnover. If you do the total of both, you will get the total turnover. You will get the total turnover. So you have to apply the formula common credit C2 into this exempt turnover. So exempt turnover divided by total turnover. If you do that, you will get to know what is the ITC attributable only to exempt supplies. In case if you are also using it for non-business purposes, I should calculate common ITC which is attributable for non-business purposes. So how to calculate that ITC attributable to non-business purposes? They have told one simple method. Do that common credit into 5%. Take the common credit, multiply 5%, you will get to know what is the ITC which is attributable for non-business purposes. What is the ITC which is attributable for non-business purposes? In case if you are not using any inputs for non-business purposes, completely you are using for the business purposes only, you can skip this step. So this D2 you have to calculate only when your inputs and input services you are using it for common purpose, or when you are using it for non-business purposes also, then only you have to do that C2 into 5%. If you are not at all using a single input also for your non-business purposes, then you can skip that D2 step. Okay, so you have calculated D1 ITC which is attributable to exempt supplies, D2 ITC which is attributable to non-business purposes. Now what you should do, from the common credit you have to take out, not from the common credit here, from the C1 is there? No, from that you have to take out D1 plus D2, then you will get what is the eligible ITC. So this C1 we have no, in that ITC is there. What is this C1? As I have told, C1 contain two things. We have common credit also, we have completely eligible credit also. So now from this C1, whatever D1 plus D2 is there, this two if you eliminate, you will get the eligible input tax credit. You will get eligible input tax credit. Able to understand? So this is the formula here. In this formula, in this order, you have to remember. If you are able to understand the logic, well and good. If you are not able to understand the logic, at least you remember the steps. Just apply the steps. Just apply the steps, because I can't go even more into the logic now. If you go more into the logic, this alone concept, this one apportion thing, we have understood in our class for 3 hours. Somewhere around 3 hours we have spent on this to get the complete conceptual logic here. So here, in case I don't have enough of time, if you have attended my regular session or UOB batch, you would be able to link it very quickly, because we have solved it many number of times in our regular class. If you are watching to this me for the first time, so you might not be able to understand the logic. If you are unable to understand the logic, just remember this format. So once again, for your convenience, if I repeat the format, T stands for total credit. Find out 3 things: T1, T2, T3. Sir, what is T1? ITC attributable for non-business purposes. Number T2, ITC attributable only for exempt supplies. T3, blocked credit. From T, take out T1 plus T2 plus T3. You will get C1. Sir, what is that C1? Total ITC. In that, what will be there? Common credit is also there. Exclusively eligible credit is also there. From that, I have to take out common credit for apportionment. Sir, how to find out common credit? So from the C1, take out T4. What is T4? ITC which is attributable to inputs or input services which is used exclusively for taxable, including zero rated supplies. This is something which I am fully eligible for. I am calculating common credit which I have to apportion. So from that C1, take out this T4. You will get C2, common credit. Now this common credit, you have to find out what is the ITC that is attributable for exempt supply. How you will do? C2 into exempt turnover divided by total turnover. In case if you are using it for non-business purposes also, you have to calculate D2. What is D2? D2 is ITC attributable for non-business purposes. How to calculate it? Very simple. C2 into 5%. So you got D1 and D2. So if you could reduce that D1 and D2 from C1, C1 is there here, no? So from the C1, reduce that D1 and D2, you will get eligible ITC. You will get eligible ITC. Understood? Clear? Right. Next one. So this is what regarding inputs and input services. Sir, what about capital goods, sir? What about capital goods, sir? So let me try to explain about the capital goods also. So these are all illustrations which we have solved. So these are all illustrations. These are all the questions. Just 1 minute. Yes. This one we will do. So ITC for capital goods. In case if you are using some capital goods collectively for business and non-business purposes, and also you are using the capital goods for business for taxable as well as exempt supplies, how to apportion the ITC attributable for capital goods? For that also I have an illustration here. So this I will try to explain in brief what exactly, how to do that apportionment and all. Right. So rule 43 will actually talk about how to do the apportionment of ITC in respect of capital goods. So till now, whatever we have seen, this is something relating to, how to do the apportionment of ITC with regard to inputs and input services. Now, in like the way we have an inputs and input services, which we are using it commonly for taxable as non-taxable, exempt as taxable, business and non-business purposes, we might also have some capital goods, which we are going to use it for taxable as well as exempt. We are having sometimes we might have capital goods which we are going to use it for exempt as well as which we are going to use it for business as well as non-business purposes. Now, how to apportion the ITC with respect to capital goods? So here what they say here is, first identify capital goods which are exclusively used for non-business purposes or which are going to be exclusively used for exempt supplies. Identify capital goods which are exclusively used for non-business purposes or which are exclusively used for exempt supplies. So that ITC you can't take, completely restricted, because that capital goods you are exclusively using for non-business purposes or you are exclusively using it for exempt purposes. No ITC you can avail. Then you will have capital goods which you are using exclusively for taxable as well as zero rated supplies. That you can take full ITC. Full ITC you take, no restriction, no apportionment, nothing required. So first identify capital goods which you are using it only for non-business or exempt supplies. Don't take 1 rupee of ITC also. Then you identify the capital goods which you are using it only for taxable and zero rated supplies and also business purposes only. That you take full ITC. Now you will have common capital goods. Sir, what is common capital good? You are going to use it for business, non-business. You are going to use it for exempt as well as taxable. So now what you should do is, first you take the ITC. first you, for when it comes to this common credit, take the ITC. For this common credit, first you utilize ITC. But what you should do is this useful life for this capital good, for this common capital good, first you will capitalize it. First you will take the ITC also. So in our example, if you take this 6 lakh rupees, I will take ITC. But I will assume the useful life of this capital goods to be 60 months. I will assume useful life of this capital goods to be 60 months. So I will divide each month what will be the amount. So 6 lakh rupees of ITC I have taken, no? Divided by 5 I have to do. Divided by 60 I have to do. So that means every month, what is the ITC attributable for every month? 10,000 rupees. So this 10,000 rupees into every month I get that figure. So this 10,000 rupees into that month's export turnover divided by total turnover I will do. That much amount I will reverse it. That month's taxable turnover, exempt turnover, total turnover I will determine, and I will try to reverse that component. If I have to put it. So if you see here, so capital goods exclusively used for non-business or exempt purposes, don't take. Capital goods exclusively used for taxable zero rated fully ITC. Common capital goods, first you take ITC. As I am saying here, first to take the ITC. First to take full ITC. Thereafter what you should do? You should assume the useful life as 60 months. You should assume the useful life as 60 months. So now for that 60 months, you have to do the reversal. Why? Because these common capital goods, you are going to use it. We will assume that we will use it for 5 years. And in that 5 years, every month you will be making taxable supply also, you will be making exempt supply also. So on monthly basis, what is the ITC attributable to the exempt turnover I will calculate? That much I will reverse month on month. So if you see here, common capital goods I have capitalized 6 lakh rupees. I will assume useful life as 60 months. So every month I will get 10,000. So now let us say I have capitalized it in the month of April. So for the month of April, I will calculate what is my exempt turnover, what is my taxable turnover. Let us say my exempt turnover is 10 lakh rupees, my total turnover is 50. So on this 10,000 rupees, I will calculate the proportionate amount, 2,000 rupees. This much I will reverse. Thereafter, next month also 10,000 rupees. Next month also I will calculate what is the exempt turnover, what is the total turnover. That much amount I will calculate, this much I will reverse. June month also, once again 10,000. For that 10,000, what is the exempt turnover, what is the total turnover of that June return, that much amount I will try to reverse it. Like this, how long I will do it, sir? I will do it for 60 months. How long I will do it? I will do it for 60 months. For 60 months, I am going to do that. Able to understand? So as simple as that here. As simple as that. So when it comes to capital goods, common capital goods, what you should do, first you have to capitalize the ITC. Then you have to assume that useful life of that common capital goods is going to be 60 months. Each month calculate what will be the amount. How to calculate it? Total ITC of that common capital goods divided by 60. You will get monthly amount. Now month on month you calculate what is the exempt turnover, what is the total turnover. That ITC which is attributable on a monthly basis to the exempt turnover, that you have to reverse it. On month basis. You are required to reverse it. Just this much you will remember. So this is how you are required to do the reversal of common ITC attributable on the capital goods. Now I have one more rule for apportionment. For banks, they have given one more option. For banks and financial institutions, they have given one option. They have given one simple methodology for apportionment. So what they have told is optional method for banks. See, if you see the banks and all, what is the main business of the banks? The main business of the banks is giving loans and collecting deposits, collecting the interest. But that interest is exempt. In the exemptions chapter, if you remember, so services provided by way of giving money for use in the form of loans, deposits or advances, for which consideration is in the form of interest or discount, that is exempt supply. So banks majorly their outward supplies are exempted. Now every month, every year, they're calculating exempt turnover, total turnover, checking the comparison. So like that, it will take a lot of time. So that's why for banks, one optional method they have given. For banks, for simplicity, they have given one optional method. So what is that optional method they have given, you know? So banking companies, financial institutions and NBFCs accepting deposits, extending loans or advances may opt to avail only 50% of eligible ITC. So for banks, they have given them an option. One option, what you can do is either you follow usual method, like the way we have done till now. So you calculate exempt turnover, total turnover, apportion the amount, like that you do. Or else we are giving you one option. What is it? One simple option for banks, financial institutions. You do one thing, whatever total ITC is there, on that you claim 50%. 50% you don't claim. 50% only you avail. Balance 50% you don't avail. And that 50% is also of eligible ITC. Sir, what is eligible ITC? Take total ITC which is reflected in your GSTR 2B. From that, take out the ITC which you are using it for non-business purposes. Take out the blocked credit. So take full ITC reflected in your GSTR 2B. From that, take out the ITC which is exclusively for non-business purposes, if any. Take out ITC which is blocked. Then you will get balance eligible credit. On that eligible credit, take 50%. Directly take 50%, 50% you leave. So that simple option we are giving it to you. Able to understand? So that's what they're saying here. So if you read this point, banking companies, financial institutions and NBFCs which are accepting the deposits or extending the loans or advances may opt to avail only 50% of eligible ITC. Sir, what is eligible ITC? Your total ITC minus ITC which is allocated for non-business purposes plus blocked credit. If you take out that, you are going to get something called eligible ITC. In that eligible ITC, only 50% you claim it, balance you leave it. And ITC on inputs and input services used for non-business purposes, blocked credits, that will anyhow be ineligible. And 50% ITC restriction shall not apply to tax paid on supplies procured from another registration within the same entity. That is 100% credit of such tax can be availed. However, this 50% condition will not become applicable in case if you are receiving a supply from another distinct person under section number 25. For that input services, you can take full ITC. For that input services, you can take full ITC. In case if you are a bank, if you are receiving services from another branch which is having separate registration, so from that branch, if you are receiving any services from your distinct person under section number 25, if you are receiving any input services, there is no restriction. Not just input services, on supplies procured. That means that could be input services also, input goods also. So in case if you are receiving any supplies from a distinct person under section number 25, on that inwards you can take 100% ITC. That will not be counted in your 50% limit. Next, the option once exercised cannot be changed during the remaining part of the financial year. It is not like 1 month you are optional, 1 month you are going it by the regular calculation and all that will not be permitted. Once you have opted it for the entire financial year, you have to remain under that category only. Since interest income of banks and NBFCs is exempt and strict application of 42 or 43 would lead to substantial ITC reversal, this 50% ITC option has been provided to ease the compliances and support lending to priority sectors. Clear? Right. Next. So with this, we have completed section number 17, which is talking about apportionment and also the blocked credit. Now what we will try to do is, we will try to understand section number 18, credit in special circumstances. Credit in special circumstances we'll try to do. Okay, right. So for this also I have charts. Let me try to do it from here. Just give me 1 minute. Okay. So this also I will try to do. Sir, what is this? Got it now. Right. So what is 18? Section number 18. So 18 subsection 1 says that there are some special circumstances where you can avail input tax credit. There are some special circumstances where you become eligible to take the ITC. Sir, what are that special circumstances where you become eligible to take the ITC? There are 4 such special circumstances which have been given on which you can take the input tax credit. There are some 4 special circumstances in which you will be eligible to take the ITC. And those 4 circumstances are given under 18 subsection 1. So first case where you will become eligible to take ITC is, let us say you become liable for registration. Let us say on one date you become liable for registration either under section number 22 or 24. Either your aggregate turnover has exceeded the applicable threshold limit, or you have done something under section number 24 because of which you become liable for registration. So you become liable for registration on 1st of April 2025, and within 30 days if you are submitting an application for registration, within how many days? Within 30 days you are submitting an application for registration. Thereafter you will get the registration certificate. No, in that case, 1 day before you become liable for registration, 1 day before you become liable for registration, you will be able to take ITC of inputs which are in the form of stock, inputs which are in your semi-finished goods, inputs which are in your finished goods. That ITC you can take credit. That ITC you can avail it. So in case if you become liable for registration either under section number 22 or 24 and you submitted the application for registration within 30 days, one day before you become liable for registration, whatever inputs which are contained in your stock, whatever inputs which are contained in your finished goods, whatever inputs which are contained in your semi-finished goods, that ITC attributable to that stock only on inputs, guys. I'm telling you, only on inputs, not on capital goods, only on inputs. Whatever inputs which are in the stock, whatever inputs which are in the raw material, whatever inputs which are in semi-finished goods, whatever inputs which are there in the finished goods, ITC attributable to that stock, you can claim the ITC by filing one form GST ITC 01. By filing one form GST ITC 01. So that is one case. Second case, one more case, 18 subsection 1 clause B, one more special case where you will become eligible to take the ITC is, let us say you are not becoming liable for registration. You are not becoming liable for registration. You applied for voluntary registration. Even though you are not liable for registration, you are submitting an application for voluntary registration. So after you have submitted the application for voluntary registration, you will get the registration certificate. That registration certificate will be effective from that date only. Whenever your registration has been granted, from that date only it will be effective. One day before that effective date of registration, whatever inputs which are there in stock, whatever inputs which are contained in semi-finished goods, whatever inputs which are contained in finished goods, and whatever ITC attributable to that input semi-finished goods or finished goods, on that you can take the input tax credit. So this is one more case. 18 subsection 1 clause A will talk about new registration. You are liable for registration. You submitted application within 30 days. 18 subsection 1 clause B will talk about you are not liable for registration. You are submitting an application for voluntary registration. Thereafter, you got your registration certificate. Before the effective date of registration, one day before, whatever inputs which are in the form of stock, whatever inputs which are in the form of semi-finished goods, whatever inputs which are there in the form of finished goods, on that you can avail ITC. One more case, 18 subsection 1 clause C, which says that if you are a registered person, but you are under composition scheme, you are a registered person, you are under composition scheme, but you are getting converted to regular scheme. When you are under composition scheme, you would not have availed input tax credit. But since now you are getting converted to regular scheme, one day before that conversion, whatever inputs which are in the form of stock, whatever inputs which are there in the semi-finished goods, whatever inputs which are there in the finished goods, that ITC you can take. That ITC you can avail. Not just on the stock, even capital goods also you can take the ITC. Even one day before that conversion, whatever capital goods are there, the ITC attributable to that capital goods also you can take ITC, but not full ITC on capital goods, reduced ITC. How to calculate that reduced ITC? 5% per quarter or part thereof. From the date of invoice till that effective date, how many quarters have gone by, you have to determine. For every quarter or part thereof, 5% you have to reduce it. After reducing it, the balance ITC you can avail. Understood? So if you are converting, if you are already a registered person, you are converting from composition to regular scheme. One day before that conversion, whatever inputs which are there in the form of stock, whatever inputs which are there in the form of semi-finished goods, whatever inputs which are there in the form of finished goods, that ITC you can take. Not just that, whatever capital goods which are lying there in your stock, on that capital goods also you can take ITC, but not full ITC, reduced ITC. How to calculate reduced ITC? 5% per quarter or part thereof. Next, one more case where you will be eligible to take the ITC is, let us say you are a registered person, you are making exempt supplies, but that exempt supply has become taxable. You are making exempt supplies, but that exempt supply has become taxable. One day before that conversion, so one day before that taxable supply, exempt supply becoming taxable supply. So one day before that, whatever stock is there, which is in the form of inputs, semi-finished goods or finished goods, that ITC I can take ITC. And on capital goods also you can claim ITC, but here also you can take reduced ITC. How to calculate the reduced ITC? Once again the same, 5% per quarter or part thereof. 5% per quarter or part thereof. Clear? So there are total 4 special circumstances where you can avail input tax credit. 2 circumstances on taking registration, but in that A and B you can take ITC only on inputs. Whereas in cases C and D, where you are already a registered person but you are migrating from composition to regular, or you are converting from, or your exempt supply is converting to taxable supply, in those cases you can take ITC on your inputs. Even you can take reduced ITC of your capital goods also. Okay, but there is one condition. In all the 4 cases, whatever I have told under 18 subsection 1, they say one more small point here. Let me take you through that. So one more point they say here. Where is it? Come on. 1 year should not have passed. 1 year from the date of invoice should not have passed. So in all the 4 cases, either it is inputs or capital goods, ITC has to be availed within 1 year from the date of issuance of invoice. So for that inputs, for that capital goods, invoice would have been given from the date of invoice. If 1 year is already expired, still you can't take the ITC. In all the 4 cases, ITC has to be availed within 1 year from the date of issuance of tax invoice by the supplier. See, in all the 4 cases, this is the common point. ITC has to be availed within 1 year from the date of issuance of invoice by the supplier. So that means that inputs, that capital goods, whatever you are taking ITC, there will be invoices. No, the time from the time of invoice, from the date of invoice of that stock or capital goods, 1 year should not have passed. If they are within 1 year duration, then only you can claim the ITC. If 1 year has passed from the date of invoice, you can't claim the ITC. So this 1 year condition will become applicable in all the 4 cases. Understood? Now, one more thing here. Sir, you told in 18 subsection 1, and in 18 subsection 1, there are some cases where you are liable to take ITC. Now, reverse also could happen. Let us say you are a registered person, but your registration is getting cancelled. You are cancelling your registration. Then what will happen, sir? You are saying in 18 subsection 1A and B, if you are taking registration, 1 day before the registration, whatever inputs are there on that, you can claim ITC. Sir, but what if I am cancelling my registration? Then will I be liable to pay the amount? Yes, you will be liable to pay the amount. Sir, how much amount I am liable to pay? That we have already covered in the registration chapter. Amount liable to be paid on cancellation, 29 subsection 5 and 29 subsection 6. If you remember, even in the registration chapter also I have revised. In case if you are taking registration, you are made eligible to take the ITC. Sir, what if I am cancelling the registration? If you are cancelling your registration, you are liable to pay the GST you are liable to pay some amount under 29 subsection 5 and 29 subsection 6. What is it? ITC attributable on inputs or output tax payable. In case of capital goods, assume the capital goods useful life as 60 months. Determine what is the remaining useful life. Calculate the ITC attributable to the capital goods for the remaining useful life, or output tax payable, whichever is higher. Understood? So in case if your registration is getting cancelled, you become liable to pay the amount. When you are taking registration, they are giving credit. No. When you are cancelling your registration, you are required to pay back 29 subsection under 29 subsection 5 and 29 subsection 6. Now similarly, remaining 2 cases are there. Let us say, sir, you are saying if I am converting from composition to regular, I will take ITC. What if I am converting from regular to composition? If I am converting from regular to composition, what will be the case? Similarly, you told when my exempt supply become taxable supply, I can take ITC. Sir, what if my taxable supply is becoming exempt supply? What if my taxable supply is becoming exempt supply? Then also I am required to pay. Yes, you are required to pay. Yes, you are required to pay under 18 subsection 4 in these 2 circumstances. If your registration is getting cancelled, you are required to pay under 29 subsection 5 and 6. In case if you are converting from regular to composition, in case if your taxable supply become exempt supply, then also you will be liable to pay under 18 subsection 4. How much amount I am required to pay, sir? See here. So reversal of ITC is required when the registered person who availed ITC switches to composition scheme when his supply is getting when his supply gets wholly exempted. That means you are converting from regular to composition, or your exempt or your taxable supply is becoming exempt. Then you are required to reverse the ITC. Sir, on inputs, how much ITC I have to reverse? ITC on inputs should be reversed proportionately based on invoices. You have to calculate how much inputs are there in the stock. On the basis of invoice, calculate how much ITC is attributable to that stock of inputs. That much amount you have to reverse. Sir, on capital goods, how much amount I have to reverse? On capital goods, let us take capital goods ITC you determine. Take useful life as 60 months. Determine what is the remaining useful life and calculate the ITC attributable for remaining useful life. That much amount you are required to reverse. Okay, so point here which I want you all to concentrate here is, for availing ITC on capital goods, how to calculate reduced ITC. For availing ITC on capital goods in 18 subsection 1, how to calculate reduced ITC? Reduced ITC by 5% per quarter or part thereof. When you are required to reverse ITC under 18 subsection 4, there also you are required to pay reduced ITC only. How to calculate reduced ITC on reversal? Take useful life as 60 months, determine remaining useful life, calculate the ITC attributable for the remaining useful life. Important, my dear students. So if you have attended the ITC class carefully, this point will immediately strike. If you have not listened to the class carefully, this point will be very difficult. Listen, once again I am stressing it here. When you are availing ITC under 18 subsection 1, on capital goods, in 2 cases only you can avail ITC on capital goods under 18 subsection 1. In that case, how to calculate reduced ITC? When you are availing ITC, you can take reduced ITC on capital goods. How to calculate that reduced ITC? Take 5% per quarter or part thereof and you reduce it. 18 subsection 4, when you are required to reverse ITC, when you will be required to reverse ITC under 18 subsection 4, like as I have told, you are converting from regular to composition, or you are your taxable supply is becoming exempt, then you are required to reverse. You are required to reverse ITC on your inputs also. You are required to reverse ITC on the capital goods also. But when it comes to capital goods, reduced ITC, how to calculate reduced ITC on reversal? You have to calculate it, take the common ITC, take the total ITC, take useful life as 60 months, determine what is the remaining useful life, calculate the ITC attributable to the remaining useful life. That ITC you have to reverse it. Understood? Clear? Right. So this is what one point which I wanted to highlight. Let us see what else is there. One more point is there. 18 subsection 6. Sir, what is 18 subsection 6? So this is a special provision which says, in case if you are selling the capital goods on which you have availed the input tax credit, in case if you are selling the capital goods on which you have availed ITC, how much amount of GST you are required to pay? Even supply of capital goods is also a supply. So in case if you have purchased a capital good, at the time when you have purchased the capital good, you have availed ITC. Thereafter, if you are selling that capital good, how much ITC you are required to pay? Very important special provision. So if capital goods or plant and machinery on which ITC has been taken are supplied outward by the registered person, he must pay an amount of tax that is higher of the following. Reduced ITC, ITC taken reduced by 5% per quarter or part thereof from the date of invoice, or tax on transaction value, whichever is higher. So in case if you have purchased a capital good on which you have taken input tax credit, thereafter you are selling it, how much a GST I am required to pay? So calculate reduced ITC. Sir, what is reduced ITC? Let us say, for example, I use this machinery for 5 quarters. Let us say 1 lakh worth of ITC I have taken. I used it for 5 quarters. What is reduced ITC? If I calculate reduced ITC, 1 lakh into 5% for 5 quarters, 25%. That means 1 lakh into 75%. Reduced ITC will become 75,000. Or this plant and machinery, this capital goods, I am selling it for this plant and machinery, I am selling it for 5 lakh rupees. Applicable rate of GST is 18%. If I calculate, it will come to 90,000. Output tax payable is 90,000. Whichever is higher. Which one is higher? 90,000 is higher. This much amount I am required to pay. So this is one special provision in case if you are making a supply of capital goods on which you have availed input tax credit. How much amount of GST you are required to pay, reduced ITC or tax payable on the transaction value. How to calculate the reduced ITC? Reduce it by 5% per quarter or part thereof. So that you will get reduced ITC. That reduced ITC you compare it with tax on transaction value. Whichever is higher, that much amount you will be required to pay. Clear? Understood? Right. That's all here regarding this. And few more things we have. Transfer of ITC on account of change in constitution of a registered person. In case if your business is getting transferred, in case if you are selling your business, in case let us say you are amalgamating, in case if there is a demerger happening, sir, can I transfer the ITC? Yes, you can transfer your ITC to the recipient. Whoever is a transferee, to that person you can transfer. So if you are selling your business, transferor can transfer his ITC to the transferee. If amalgamation is happening, so in case of amalgamation, 2 entities, A Limited, B Limited getting amalgamated into one single company, whatever ITC balance lying in their electronic credit ledger, that they can transfer to the newly formed company AB Limited. Let us say one company is getting demerged, AB Limited is getting demerged into A Limited, B Limited. In that case, whatever ITC which is lying there in their electronic credit ledger, that they can transfer it to A Limited and B Limited. But in which ratio, sir? But in which ratio, sir? In the ratio of assets. In the ratio of assets, you are required to apportion it. In case of demerger, this point is very important. So in case of demerger, whatever ITC that is lying in the electronic credit ledger, that can be transferred to the resulting entities. But in which ratio it will be transferred, sir? In the ratio of value of assets. But one important point you have to remember, this transfer will be permissible only when both are in the same state. This transfer will be permissible only when transferee and transferor both are within the same state. If both are in different states, then transfer will not be possible. So if transfer of if transfer of ITC has to happen, transferor and transferee must be registered in the same state. Why? Because SGST component is there. No, one state government will not transfer the SGST balance to another state government. No, that's the logic. So that's why if transfer has to happen in all the circumstances, transferor, transferee must be in the same state. Then only the transfer could be possible. So this is what regarding 18 subsection 3. We will also have one more heading here. In case we will also have one more heading here. So 18 subsection, no, 41A we have, rule 41A we have. So what is that rule 41A is? So let us say, for example, in the state of Karnataka, I'm having a place of business. In Bangalore, I have a place of business. In Mysore, also, I have a place of business. What I'm currently doing is I'm operating both of them under single registration. Both of them under single registration, I'm operating. So now in this single registration, I have a ITC balance. In my electronic credit ledger, I have 1 lakh worth of balance. Now what I'm doing is for Mysore, I am taking separate registration. For Mysore, I'm taking separate registration. Sir, now till now my ITC balance is there under single registration, but now I am taking separate registration. Can I transfer my ITC balance to my separate registration? Yes. Within the same state, if you are taking a new registration, whatever ITC lying under old registration, that portion you can transfer it to a separate registration, which if you are taking within the same state, not within different state. Within the same state, if you are taking new registration, to that new registration, you can transfer that electronic credit ledger balance. But in which ratio, sir? Once again, in the ratio of assets. You will transfer the assets, no. Asset ratio will be there, no. For this Bangalore location, Mysore location, assets ratio will be there, no. In the ratio of assets, you can transfer that ITC balance to the separately taken registration within the same state. Clear? Able to understand? Right. So this is what regarding transfer of ITC on obtaining separate registration for multiple places of business within a same state or union territory. Clear? So with this, we are done with this thing also. Now what we will try to do is quickly we'll try to cover distribution of credit by input service distributor. Sir, what is this concept of ISD? This will try to quickly cover it. Okay, so for this also I will take the help of the notes. Come on. See, I have done the comparison here. This also I will keep it in the marathon notes. Just refer to it. It will help you out. So I've done the comparison between 29 subsection 5, 18 subsection 4, 18 subsection 6 on cancellation, on conversion, how much amount of GST will be liable to pay on inputs, capital goods and all. This I will do one thing. This I will keep in the marathon notes. Kindly do refer to that once. So I will keep it here. Kindly do refer to it. Then, so we'll try to now talk about input service distributor. ISD will try to talk about. So very simple here. See, if you take this big companies and all, they have multiple places of business. If you take big entities and all, they have multiple places of business and they will have one head office. They will have administrative offices. Let us say, for example, one company is there which is having its head office at some location. And it is also having factories at various places where actual sales and all will happen. But if you pay close attention at the head office, outward supplies will not happen. Head offices are just liaison offices. They are just admin offices. So what will actually happen in the head office? They will take care of marketing. They will take care of accounting for the company as a whole. They will do the strategy. So all that work will happen at the head office level. But head office will not make any outward supply. Where the outward supplies will happen at their branches, at their depots, that is where sale will happen. But these head offices will get various supplies in the name of head office. They get various they purchase various goods. They get various services. Let us say at the head office, they received some audit services. For the company as a whole, there is a company X Limited. They received at the head office, they have appointed an auditor. And that auditor is charging 10 lakh rupees for audit of the company as a whole. That auditor has given invoice amounting to 10 lakh rupees with 1.8 lakh rupees of GST, mentioning the head office GSTIN. Mentioning head office GSTIN. But this head office will not have any outward supply. As I have told, head offices are just admin offices. They will not have any output tax liability. So will they be able to use that ITC of 1.8 lakh rupees? No. But where outward supplies will happen? Outward supplies will happen at their various depots, at their factories, at their depots, at their branches. Actual outward supplies will happen. So now what this head office will do, they have got some invoices, they have procured some goods, they have procured some services on which they have accumulated all the ITC. But this ITC, they can't use it for their outward tax liabilities because they don't have any outward supplies only. Outward supplies will actually happen at the actual operating places, which is spread across multiple states. See, if you see here, Mumbai, Delhi, Rajasthan, Gujarat. So like that, all over India, they have the branches. That is where outward supply will happen. So now what head office will do, whatever ITC they have accumulated, that ITC, they have to distribute it to all its locations. Whatever ITC this head office is having, whatever common services which they have received for the company as a whole, so that all they will accumulate it, and that ITC they have to distribute it across its locations. How they will distribute it, sir? For doing this distribution, they have to get one separate registration called input service distributor. ISD registration is a separate registration from the regular registration. It is not normal registration. ISD registration is separate registration. Even though head office is separately registered as a normal person, for distributing the credit, they have to get a separate registration as an input service distributor. Okay. So now what they will do, sir? What they will do is whatever ITC is there, whatever common ITC is there, that ITC they will attribute it to all their locations. Whatever ITC that is attribute, whatever ITC is there, that ITC they will attribute it to all their locations. Able to understand? So this is what the concept of input service distributor. So this is what is the basic information. What is the role of ISD and all. So all this we have covered. Then separate registration. This input service distributor, like head offices, marketing offices, they need separate registration apart from the regular registration. So what is the manner of distribution? What should be the manner of distribution? See here. How ITC will be distributed is, well, ISD is distributing the ITC to its location. What principles it has to follow? Number one, ITC relating to a specific input service shall be attributable only to the particular recipient to whom the service is attributable. Sir, what they are trying to say here, let us say this head office is receiving some input service, but this input service is attributable only to Delhi. They are receiving input service or some input goods, but it is attributable, sorry, not input goods, input services. ISD is a concept only for input services. ISD is a concept only for input services. Whatever input services which are received by the head office, only that ITC on the input services will be distributed. Sir, what if there is common goods? There is no concept called common goods. Every unit has to purchase its goods respectively and they have to get the invoices in their own name. So ITC on goods will not be distributed. Only ITC on input services will be distributed. That's why the name input service distributor. Okay, right. So while distributing that input services, if some service is attributable to only one location, that amount has to be attributed only to that location. Sir, what they are trying to say here, let me put it this way. Let us say one input service distributor is there. They're having 4 locations. Location 1, location 2, location 3, location 4. They have common ITC amounting to 10 lakh rupees for all input services. Out of that, 1 lakh is attributable only to location 2. So with this 1 lakh rupees will be attributed only to location 1. Thereafter, how much is left out? Let us say 9 lakhs is left out. Out of this 9 lakh rupees, 5 lakhs is attributable only to location 3 and location 4. 5 lakh rupees is attributable only to location 3 and location 4. So that 5 lakh rupees, let us say 3 lakhs is attributable to location 3, 2 lakh rupees is attributable to location 4. That will be attributable to only those 2 locations. After that, how much is left out? 4 lakhs. Now this 4 lakhs is attributable to all the locations. Now this is a common service for everybody. Now this 4 lakhs will on some basis they will apportion it, and that will be apportioned among all the 4 locations. Let us say 1 lakh here, 50,000 here, 1,50,000 here, another 1 lakh here. So like that, they will try to distribute it. Understood? So that's what even they try to say here. ITC relating to a specific particular recipient should be attributable to them only. If an input service is attributable to more than one recipient, ITC should be distributed among such recipients in the ratio of turnover. Now the question comes, sir, you are telling apportioning. Sir, you are doing apportionment here. No, you told this 5 lakh rupees is apportionable to L3 and L4 only. How to do the apportion? On what basis? Now here is what I am clarifying the point. Now it has to be divided in the ratio of turnover in a state or union territory to the aggregate turnover of all recipients to whom input service is attributable. So you have to divide it on the basis of turnover in a state or union territory. So let us say turnover of this location is 5 lakh rupees. Turnover of this location is 8 lakh rupees. Total turnover is 13 lakh rupees. So now what is the input attributable to that 2 locations? 5 lakhs. So 5 lakhs into 3 by 13 or 5 by 13, 5 lakhs into 5 by 8 by 13. So like that, in the ratio of the turnover, I am required to apportion it. Next. A ITC pertaining to input service which is common for all units is distributed to all the recipients in the ratio of the turnover. Once again, if some input service is attributable, so this is how you have to practically work it out. So first you have to take all the ITC from that, identify the ITC attributable only to one location, specifically do that attribution only to that unit. Then you identify ITC which is attributable to only few locations. You divide it on the basis of turnover of that few locations. Then you will get ITC which is attributable to all the units, that you have to apportion it across all the units in the ratio of their turnover. Next. And both ineligible and eligible ITC is required to be distributed. Both ineligible, blocked credit, everything will be distributed. Now the recipient, what he will do is eligible ITC only he will claim, ineligible ITC he will not claim. But distribution has to happen for both. You have to do the distribution for eligible credit also, you have to do the distribution for ineligible credit also. Every credit has to be distributed, and the recipient will not take the ITC of ineligible component, eligible ITC he will take it. Next. Thereafter, now one more question will come. Sir, you are saying turnover, no? Which turnover I have to take? Which turnover I have to take? Question. Sir, you are saying I have to apportion the ITC on the basis of turnover. No. But which turnover I have to take? Monthly turnover, quarterly turnover, yearly turnover, this year, last year? Which turnover I have to take, sir? This is what here we are going to clarify here. So for distribution, we have to take turnover of the relevant period. Sir, what is the relevant period? Turnover of previous financial year. If all recipients has turnover in a state or union territory in the last financial year, you have to take the last year's turnover. That means if there is a turnover for all the units in the last financial year, take the previous financial year turnover. Sir, if in the previous financial year, for some of the units, there is no turnover. Let us say, for example, this L2 was started in this year only. Last year for this no turnover is there. Then how to do, sir? Then what to do is, in that case, if the previous year's turnover is not available, last quarter prior to the month for which credit is to be distributed. This month you are distributing, no? Take the last quarter prior to the month for which credit is to be distributed, for which details of all recipients is available. For which details of all recipients is available. Let us say, for example, I am distributing it for the month of April. Okay, so now what I should do? First, I will check last financial year. If last financial year turnover is not applicable, then I will check previous quarter. What is it, sir? January to March. Now in the January to March, I will check whether for all the 4 units there is turnover. If it is there, yes, I will take January to March. No, sir, in the January to March quarter also, for some locations I am unable to find the turnover. Then what you do? Go to previous quarter. Sir, what is the previous quarter? It will be October to December. Here, if there is turnover for all the locations where I want to do the division, I will take this quarter's turnover. So like that, if it is not there, go to the previous quarter. So like that, they use the phrase here, last quarter prior to the month for which credit is to be distributed, for which a turnover of all recipients are available. Go to that quarter where you are having all the locations related turnover. So that quarter's turnover, you take it for the purpose of apportionment. Next. So all this is okay, fine. Right. Now, few more things which I have to tell you, a few more important aspects regarding ISD, which I have to tell you is distribution, how you have to do the distribution. See how you have to do the distribution here is, let us say if the ISD and the recipient to whom the distribution is happening, if both are located in the same state, or union territory, CGST will be transferred as CGST only. SGST or UTGST will be distributed as SGST or UTGST only, and IGST will be distributed as IGST only. But in case if the ISD and the recipient both are in different states or union territories, then always IGST will be transferred as IGST only. Even CGST also will be transferred as IGST only, and SGST or UTGST also will be transferred as IGST only. This is what one simple thing you have to remember. So how to do the distribution? In case if the ISD and recipient both are located in the same state, we'll do respective transfer. CGST will be transferred to CGST, SGST or UTGST will be transferred to SGST or UTGST, IGST will be transferred as IGST. In case of ISD recipient both are located in same states, everything will transfer it as IGST only. Next. Right. Next. So then we have procedural aspects. So there will be procedural formalities like ISD has to give a ISD invoice. So I will summarize all this thing in one go. So ISD, what are the procedural formalities is, ISD has to give ISD invoice. For distribution, they have to give ISD invoice. On the basis of that ISD invoice, the recipient can take the input tax credit. Then in case if they want to increase the amount of ITC, in case if they want to distribute more ITC, let us say ISD got a debit note. They initially got invoice that they have distributed. Now they have got debit note. In the head office got a debit note. Now ITC regarding this debit note is also required to be distributed. Now what they will do? They will give ISD debit note. And that also they will try to apportion it. Let us say ISD got a credit note. This head office got a credit note. Now this even credit note is also required to be adjusted. That means credit note will reduce the amount of ITC distributed. Credit note will reduce the amount of ITC distributed. So let us say previously you have distributed credit, but now you got a credit note. So now even this credit note related ITC also have to distribute. What do you mean by distributing the ITC on the credit note? That will reduce the amount of ITC for the recipients. That will reduce the amount of ITC. See, practically what will happen is, let us say for example, in the month of March, ISD has got some invoices also. ISD got some credit notes also. Okay. So there are 4 locations which are required to be distributed. Location 1, location 2, location 3, location 4. So when they calculated invoices, fresh invoices, whatever they have got, ITC attributable is coming to 2 lakh, 3 lakh, 5 lakhs, 4 lakhs. They also got some credit note amounting to 1 lakh rupees. This credit note also they have to distribute. In which ratio they will distribute? In whatever ratio original invoice has been distributed? No. In the same ratio, this credit note also will be distributed. This credit note is relating to some invoice. That invoice credit has been distributed in some ratio. In the same ratio, even this credit note is also required to be distributed. Let us say that ratio comes to something like this. Here 30,000, here 20,000, another 40,000 and 10,000. This is the ratio in which original invoice was distributed. So now net amount only will be distributed. So here net amount distributed will be 1.7 lakhs. Here it will be 2.8 lakhs. Here it will be 4.6 lakhs. Here it will be 3.9 lakhs. That amount will be distributed. But now sometimes what will happen is, let us say for example, in one particular month, ISD is receiving invoices. Invoices are there amounting to 1 lakh rupees only. So amount distributed is, let us say 30,000, 20,000, 30,000, 40,000, 10,000. But they got credit note. Credit note amount is 2 lakh rupees. Credit note amount is 2 lakh rupees. So now what will happen here? They will try to distribute. If they try to distribute it here, let us say it is coming to 40, it is coming to 60, it is coming to let us say another 80, and it is coming to 20, something like this. So now net negative amount is getting transferred. How much? 20 negative, 30 negative, 40 negative, 10 negative. Now this negative figures in the input service distributor, they will be added to output tax liability of the recipients. So in case if the amount in the credit note is more than the invoices, that negative amount will be added to the output tax liability of this recipients. It will get added to the output tax liability of these recipients. Okay. Similarly, one more procedural formality they say here. In case if any excess amount is distributed, in case if the ISD distributes excess amount to any of the recipients, then that amount will be recovered from the recipient, not from the ISD. If any excess amount has been distributed by the ISD to any of the recipients, that excess amount will be recovered from the recipients, not from the ISD. This point also you have to remember. That's all. So these are all some this one amendment is there. So what is that amendment is? Not just a GST paid under forward charge mechanism. Even if the ISD is paying any GST under reverse charge mechanism, that also can be distributed. Even GST paid under reverse charge mechanism also can be distributed. This is what one amendment they have done recently. Next. So this debit notes, credit notes, all this we have covered. Then see, after all this, I have to tell you a few more things here. One thing is manner of utilization of ITC. You all are already aware of it. What is the manner of utilization of input tax credit? But let me make you revisit that. What will be the manner of utilization of input tax credit? So let us see. Sir, what is the manner of utilization of ITC? So one thumb rule, this is all something which are all well versed with at the CA interlevel itself. Now also once again I will try to repeat it. What is the manner of utilization of ITC? Just to follow this order. So first start with IGST. IGST input tax credit must be first utilized for IGST output tax liability. IGST ITC must be first used for IGST output tax liability. If any excess IGST input tax credit is available. So whatever ITC of IGST you have, that must be first utilized for payment of IGST output tax liability. After that, if any excess IGST credit is available, that you can use it for CGST output tax liability, or you can use it for discharging SGST output tax liability in whatever manner you want. Any ratio, any proportion. You can either fully use it for CGST, or you can fully use it for SGST, or you can divide it in some ratio, 50-50 you can do, 60-40 you can do, 40-60 you can do, any ratio. In whatever manner you want, you can use it. Whatever it is, first exhaust the IGST balance. First you have to exhaust IGST balance. So IGST credit must be used for IGST liability. If any excess IGST balance is left out, that you can use it for either discharging CGST liability or SGST liability, or in any combination. In whatever manner you want, you can apportion it. So once you have exhausted the IGST balance, then come to CGST credit. CGST input tax credit. CGST input tax credit must be first used for discharging CGST output tax liability. If any excess is left out, if any excess is there, what excess is there? CGST input tax credit. If any excess is there, that you must use it for IGST output tax liability. Even after that also, if any excess is left out, carry forward. Even after using it for IGST output tax liability also, if any excess amount is left out, that you have to carry forward it to the next month. So then after that, you come to third item. What is the third item? SGST. So SGST input tax credit must be first used for discharging SGST output tax liability. If any excess is left out, what excess? If any SGST input tax credit excess is left out, that you have to use it for discharging IGST output tax liability. Even after that also, if any excess is left out, that you have to use it for, that you have to carry forward it to the next month. And one important thumb rule here, CGST can't be used for SGST, SGST can't be used for CGST. That's all. This is what the manner of utilization of input tax credit, which you all must be well versed with. You're already, but just I'm repeating it once again. So once again, if you repeat along with me, what is the manner of utilization of ITC? First, start with IGST input tax credit. That should be used only for discharging output tax liability. After that, if any excess is left out, that you can use it for CGST or SGST in any ratio, in any combination, in whatever manner you want. First, exhaust the IGST balance. If you have exhausted the IGST balance, then only come to CGST. CGST must be used for CGST. If any excess is left out, that you can use it for IGST. If after that also excess is left out, carry it forward. Then you come to SGST. SGST must be first used for SGST. If after that, if any excess is left out, that you have to use it for IGST. If after that also, if any excess is left out, that you have to carry forward. Okay, so this is the manner of utilization of input tax credit. So few more things I would like to say it here. Two more rules I would like to explain it here. One is rule 86A. Sometimes there will be restriction on utilization of ITC. Sometimes there will be restriction on utilization of ITC. Sir, what do you mean by restriction on utilization of ITC? You have claimed ITC. GST has been shown in your, ITC has been shown in your GSTR 2B. Even under available category only, you have even claimed that ITC in your GSTR 3B. That amount was credited to your electronic credit ledger, but in the electronic credit ledger, they will restrict it. So you have purchased some goods or services from registered person. They have filed their GSTR 1. That ITC has flown into your GSTR 2B in the available category only. And you have claimed that in your GSTR 3B also. That amount got credited to your electronic credit ledger also. But after the amount got credited to the electronic credit ledger, they will keep in the electronic credit ledger under restricted category. That means the balance will lie in the electronic credit ledger, but they will restrict you from using it. It's like there is a food in your plate, but you can't eat it. It's like there is a food in your plate, but you can't eat it. So there will be a balance in your electronic credit ledger, but the officers will not let you use it. It will be restricted in your electronic credit ledger. Restriction on utilization of input tax credit. Sir, when they will play with me like this, sir? When they will put the restriction, sir? Let us see. First of all, who is the authorized officer to do it? Commissioner or an officer not below the rank of assistant commissioner authorized by him can impose restrictions on utilization of ITC in the electronic credit ledger. When, sir? If he has reasons to believe that ITC has been fraudulently availed or is ineligible. So if the commissioner or any other officer authorized by him not below the rank of assistant commissioner, if he has reasons to believe that ITC has been fraudulently availed or ITC is ineligible, even after getting credited to your electronic credit ledger also, they can put the restriction on it. So generally that restriction can be imposed in the following circumstances. What are they, sir? Number one, ITC has been availed on the basis of tax invoices, debit notes or prescribed documents which are issued by a non-existent registered person. You are getting the tax invoices, you are getting the debit notes or you are getting some other documents by a non-existent person. That person itself is not there. That your supplier itself is non-existent. Or from a supplier who is not conducting any business. That means fake person. Or without actual receipt, if the officer feels that you are claiming the input tax credit without receiving the goods and services, or in respect of any supply, tax in respect of which has not been paid to government. So like tax was not paid to the government, you are claiming it, but tax was not paid to the government, then also they will restrict it. Next, registered person is availing ITC, has been found non-existent or not to be conducting any business from the registered place. Now recipient. Here in the first point, they spoke about supplier. Second point, if you are a recipient who is a registered person, you are found non-existent. You are not there at the place of business. When the people came for verification, you are not there. Recently, this happened with one of my client. So not one of my client. After he has stuck with the issue, then he became my client. So he changed his place of business. When they came for verification at that place of business, his business is not there. He has shifted it, but did not inform. He did not do the amendment of registration. He did not do amendment of registration of core fields. So now this is the case here. They have restricted the complete ITC. Right. So registered person availing ITC has been found non-existing or not to be conducting any business from the registered place of business, or registered person availing ITC is not in possession of tax invoice, or the commissioner found that you are claiming ITC but you don't have any invoices. So in these cases, they will restrict the usage of ITC. And how long they will restrict it, sir? They can keep that restriction up to 1 year. So within that 1 year, if you want to take any action like inspection, search, seizure, if you want to do it. But up to 1 year only, you can keep the restriction. After 1 year, you should release that restriction. Now, sir, who is the proper authority for doing that, for putting that restriction? Commissioner or principal commissioner is the proper officer. Next. So here also authorities they have given. In case if the ITC which is wrongly availed or ineligible is exceeding 1 crore rupees, the proper officer to restrict the utilization is deputy commissioner or assistant commissioner. If the amount is above 1 crore but not exceeding 5 crore, additional commissioner or joint commissioner. If the amount is above 5 crore, principal commissioner or commissioner. Hierarchy. Depending on the higher the amount, the more higher level of officers will get power to do that restriction. Next. So this is what Rule 86A. Now I will talk about Rule 86B also. Now I will talk about rule number 86B. Sir, what is rule number 86B? Very simple here. Very, very simple. So let me see whether any ready notes I have for this. So all these concepts now wonderfully we have understood in our regular class. If you have attended it, this all should be striking in your mind. Rule 86B, where is rule 86B? Not there here. Okay, no issue. There is no specific notes. Anyhow, I will try to explain. So what is this rule 86B is? See, as a prudent businessman, you will make an outward supply. Okay, you will have your output tax liability. Let us say you have 10 lakh rupees of output tax liability. Now you are having input tax credit. Let us say you are having 12 lakh rupees of input tax credit. What you will do here? What you will do when you have an output tax liability, but you have enough of input tax credit, every prudent businessman, what he will do is he will try to discharge his output tax liability using his input tax credit. No unnecessary, no fool will want to pay the money from his pocket when there is already ITC available. But department told what you know, we will notify some person. If your taxable turnover in a month, if your taxable turnover other than exempt supply or zero rated supplies, if your taxable supplies in a month is greater than 50 lakh rupees, and if you are having a output tax liability, even though you have full input tax credit, you can discharge your output tax liability only up to 99% using input tax credit. 1% you have to pay it in cash. So what they have told, what the department has told, if you are such a registered person whose value of taxable supply in a month, if your taxable supply, when I say taxable supply, other than exempt supply, other than zero rated supply, even zero rated supply also you don't consider. So other than exempt supply, other than zero rated supply, if your value of taxable supply in a month, in that particular month, if your value of taxable supply has exceeded 50 lakh rupees, for that month, whatever your output tax liability is there, even though you have full input tax credit, you can't use 100%, you can't discharge 100% of your ITC using your input tax credit. You can discharge your output tax liability using input tax credit only up to 99%. Only 99% of your output tax liability you can discharge it in. You can discharge it through electronic credit ledger. Even though you have enough of balance, that remaining 1% you have to compulsorily pay it in cash. That's what they have told. So that is the nature of restriction. The registered person to whom the said rules is applicable cannot use ITC to discharge the output tax liability in excess of 99%. The balance 1% must be discharged through electronic cash ledger only. However, there are some exceptions to rule number 86B. In some cases, they have given some exemptions. To some genuine persons, they have given exemption. If you are a genuine person, even though your aggregate turnover, even though your taxable turnover in a month has exceeded 50 lakh rupees, still we will let you use 100% ITC. We will let you discharge 100% of your output tax liability using input tax credit. When, sir? When you are such a person, you are a genuine person. But how to find out you are a genuine person? In case if you have made a payment of income tax of more than 1 lakh rupees in the last 2 preceding financial years. In the last 2 preceding financial years, you should have made a payment of income tax more than 1 lakh rupee. Not just in 1 year. If you are paying an income tax of more than 1 lakh rupees in the last 2 financial years, then we will consider you as a genuine person. Since you are paying more than 1 lakh rupees of income tax, we will accept you as a genuine person, and we will not make Rule 86B applicable for you. will not make rule 86B applicable for you. That means you can discharge 100% of your output tax liability using your input tax credit. No issue, we will permit. No issue, we will permit. Provided you are a person making payment of income tax more than 1 lakh rupees in the last 2 financial years. Or if you are such a person, if you have received a refund of input tax credit of more than 1 lakh, so you are making zero rated supplies. On your zero rated supplies, if the GST department has already granted you 1 lakh rupees of refund in the last 1 financial year, enough. Income tax last 2 financial years. No sir, I did not pay income tax in more than 1 lakh rupees in the last 2 financial years. No issue. If you are such a person who is making zero rated supplies, and if the department has granted you, which department? GST department. If the GST department has granted you refund of more than 1 lakh rupees, refund of unutilized ITC of more than 1 lakh rupees in the last financial year, we will treat you as a genuine person. We will let you use 100% of your ITC. Next, one more case. Payment of output tax liability through electronic cash ledger in excess of 1% of total tax liability in the current financial year. Sir, what is it? I think for this I have an example. I guess. Yeah. So let us see here. Okay, where is it? Okay. So let us say, for example, there is a month in the month of April. In the month of April, you have an output tax liability amounting to 18 lakh rupees. But you have ITC amounting to 15 lakh rupees only. Rule 86B anyhow will not become applicable. Why? Because you don't have full ITC. So what you have done in the month of April, 18 lakh rupees of ITC, output tax liability, 15 lakh rupees of ITC only, you have 3 lakh rupees you have to compulsorily pay it in cash. 3 lakh rupees you have paid it in cash. May month, your turnover is less than 50 lakh rupees. Anyhow, rule 86B will not become applicable. You have an output tax liability amounting to 5 lakh rupees. You have full ITC, 5 lakh rupees you have used it. Next, June month came. In your June month, your output tax liability is 10 lakh rupees and your turnover is also more than 50 lakh rupees. So rule 86B will become applicable. But one exception they are saying. What is that one exception? No. Till date, what is your total output tax liability? From the beginning of the financial year, till date, what is your total output tax liability? Sorry, what is your total output tax liability? So what is my total output tax liability? 18 lakh rupees plus 5 lakh rupees plus 10 lakh rupees. So till date, my total output tax liability is 33 lakh rupees. Now, till date, have you already discharged using your electronic cash ledger at least 1% of this? Till date, what is your output tax liability? It is 33 lakhs it is coming to. Let us say for this month of June, I have full ITC. 12 lakh rupees of ITC I have. But my turnover has exceeded 50 lakh rupees. Generally, rule 86B will become applicable because my turnover is more than 50 lakh rupees. And I have to use, even though I have full ITC, I have to discharge 1% compulsorily in cash. But one more relaxation they are giving. Determine what is the tax liability till date. What is it? 18 plus 5 plus 10, 33. Till date, from the beginning of the financial year, how much you have paid in cash? I have already paid 3 lakh rupees in cash here. From the beginning of the financial year, I have already paid 3 lakh rupees in cash. So what is 1% of total output tax liability? How much it will come to? So it will come to 33,000. But till date, you have already discharged 3 lakh rupees, which is more than 1% of the tax liability. 1% of the tax liability till date. Since you have already paid till date, till date, whatever your output tax liability is there, in that, since you have already paid 1% in more than 1% in cash, for this month also will not let you come under rule 86B. Utilize full ITC. Happily enjoy full ITC. 10 lakh rupees fully you use it. Understood? So that is what the third relaxation they have provided. So if a registered person has discharged his output tax liability through electronic cash ledger for an amount in excess of 1% of total output tax liability applied cumulatively up to the said month in the current financial year, restrictions in rule 86B should not apply. Clear? Right. And also there are some specified registered persons to whom that rule 86B will not become applicable. So rule 86B is not applicable to below mentioned persons. Who are they? A government department or public sector undertaking, local authority or a statutory body. For these people also rule 86B will not become applicable even though they have a turnover of more than 50 lakh rupees and even though they are not paying income tax, even though they are not getting refund, even though till date they did not discharge 1% in cash, still these people are exempted. Unconditionally these people are exempted from rule 86B. That means they can discharge 100% of their output tax liability using input tax credit. Clear? Able to understand? Right. So that's all. With this, we have completed input tax credit chapter. With this, we have completed input tax credit chapter fully. We are done with it. Okay. Right. That's all here for today. I will try to wind up this ITC. And we have fully spent our time on input tax credit chapter, but it's the time worth spending here because such important this chapter is. I hope you would all have benefited from this. So I will wind up the session for today. Today we have exceeded the time, but no issues. It's fine. So tomorrow we'll try to continue our revision series with the subsequent chapters. Bye. Take care.